Yes, welcome to the CA Final Advanced Auditing Marathon Part 1, where I am going to cover approximately 45 to 50 marks weightage in this 12 hours marathon. Guys, trust me, you are going to witness a fantastic marathon which is going to be based on our GOAT notes. Actually, there is another intro video to the notes booking, like where you can download the notes, where you can order the notes. That intro is there. Immediately, we are going to discuss in this Part 1 these topics we are going to discuss, especially reporting. Of course, 15 to 20 marks is the minimum weightage of the chapter, where I'm discussing complete 700 and 600 series and 570 299, literally 11 standards I'm covering there. And also caro report specialized areas, entire 800 series I covered, which is newly released, updated, which is three standards. NBFC audit, which is fully amended, which has a weightage of minimum 4 to 6 marks, and professional ethics, which is most important in CA final, which will have a minimum 18 to 20 marks, fully updated. And new standard, which is 450, which is added, which might carry a weightage of 3 to 4 marks, and even 561 standard. Don't worry, it's only part 1. Again, part 2 will have few other chapters. What is covered in part 2 will be given in the next upcoming. I just want to give one intro to the part 1 related standard. So that's it. Just go ahead. You will do fantastically, really well. That's it. All the very best. So let's begin the actual marathon. And so advanced auditing CA final, we all know this paper is going to be for approximately 115. Like minimum the weightage is going to be 114 marks to 120 marks. Why? Because 30 marks you will have MCQs, 30 marks you will have MCQs, 70 marks descriptive plus 20% choice is only on the descriptive paper. So 14 marks minimum choice they need to give, 84. Total weightage is going to be minimum 114. Almost in many exams 118 or even 120 marks were also being asked. Getting it? So this is the total weightage for CA final audit marathon. CA final total audit subject. Now, this is the minimum weightage, by the way. Now, let us look at the weightage document once before we actually start this subject. What are the chapters I'm going to cover in this marathon? First, let me show you. And I am going to use in this marathon my latest GOAT notes for CA final, which is just 360 pages. The book which I'm going to use is my GOAT notes, which is just 360 pages concept notes, where the ICI content is maximum covered. Without compromising quality of ICI content, I have covered. Personally, I never recommend any short materials, all that personally, but I made this book in such a way that it is not compromising ICI standard. At the same time, very well structured the book. This particular book related PDF you can find here. This is the PDF, well structured book. I'm telling you guys, as you go watch now, as you continue watching now, you will understand how well structured it is. Now, where you can download this particular book, very simple. You can go to, there is a website called Sept for CA and CMA website. You just type CA Harsha classes on Google, then also you get this website. Go to free resources. Here you select CA final. Here you see P3 advanced auditing GOAT notes. Here you can download the PDF. You can also download the question bank and various other resources also we have given. Suppose you want to order hard copy. You can order here. CA final auditing color book 899. Suppose if at all you are there in Guntur, for example, okay, Andhra Pradesh, there we have a warehouse. You can directly buy in the warehouse, where you will get 250 rupees discount on the full set directly. For that, you just buy in the website and go to our warehouse and collect physically. Our team will give you 250 rupees refunded to you. Okay, but buying is only from the website. We don't accept money otherwise. That's it. Now, this is regarding the material which I am going to use. I think I spoke about the material. Now, what are the topics that I'm going to cover in this particular chapter? You see, this book is so neatly drafted, guys. I'm telling you, you can download the PDF and take a print also. That option also I'm providing you. That is your convenience at the end of the day. But if you want a colored super quality book, trust me guys, this kind of quality, I'll show you the kind of quality which I'm giving. The kind of quality this book is going to be is amazing. The color book quality is going to be amazing. This book will be fantastic quality. Actually in the camera, because of lighting effect, the paper visibility will not be there. You will have a fantastic quality. Already more than 1100 students in the past 20 days itself bought. I think some of your friends might have it. Just have a look into it. Now, what are the topics minimum I'm going to cover? See, we have in CA final, totally we have, 19 chapters. So, as per ICA book only, the material index order also maintained 19 chapters. Also, one more point I would like to just bring your attention. In this book, there is a PDF, there is a scanner, QR code is given. You just scan this, you will be routed to one playlist. There you will find this particular marathon, and even various other resources. Best thing, what you will find in this playlist tomorrow, after certain a week or 10 days, you will find all 46 standards related. Yes, in CA final you are having totally 46 standards. What are the 46 standards you have in CA final? Getting it? 38 standards on auditing you have. Again, within the standard, 35 standards are dealing from 200 to 700 series, 3 standards were dealing from 800 series, and then we have 2000 series, 2 standards we call them as review engagement, 3 standards you have assurance engagement, and again 2 standards we have something called standards on related services. Totally you are having 45 engagement standards, and we have one quality control standard. All put together we are having in our syllabus 46 standard, guys. But almost some 5 or 6, some 7 standards, they will not be discussed in your CA final book at all. And moreover, some 10 or 11 standards, for example, let me come back to index and show you. For example, you take these chapters. What are the chapters in your ICA book? Audit evidence, completion and review. For example, if you take these 2 chapters, in these 2 chapters some standards were covered. They were only covered in a diagrammatic form. But in exam, they will be asking in-depth question selecting from CA Inter. For example, in audit evidence we have certain standards, and completion and review. For example, in completion and review we have 560, 570, 580 standards we have. None of this is covered in depth for us. They were covered in depth in CA Inter, and these CA Inter standards is what asked in CA final. CA Inter in-depth questions are being asked in CA final. Even in the May 24 exam, one question was asked from 580 where current management is not present. That actual discussion is not there anywhere in the CA final book. It is there only in the CA Inter book. But don't worry. As I go further in the marathon, I will tell you how to get command on the entire syllabus. Like, first let me first explain you, entire chapter number 1 to chapter number 11, which will minimum occupy 50 marks. Minimum, I'm telling you guys, in all the exams in the recent past, minimum 60 to 65 marks is what tested from 1 to 11 chapters. What are 1 to 11 chapters? 1 to 11 chapters are dealing with up to 11th chapter, we are nothing but discussing 46 engagement and quality control standards. Of course, first chapter is dealing with quality control, right, which is nothing but quality control standard and SCA 220. Rest all other chapters put together are dealing with engagement standards, 46. First 11 chapters. This is a major syllabus in CA final. Now one more thing. So that we are going to cover professional ethics, which is our 19th chapter. We are going to cover professional ethics, which is 19th chapter, which occupy minimum 14 marks up to 18 or even 20. Then we are also going to discuss bank and NBFC audit, which will occupy minimum 4 marks, both the topics put together, and 8 or sometimes even 10 marks. For example, in number 24 attempt, 11 marks was tested from bank and NBFC audit put together. But on an average in the history, if you see, the average weightage from this chapter is 4 to 8 marks. Sometimes in some exams, you don't even find a question on these 2 chapters. But considering a possibility of question from this chapter, 4 to 8. Then there is a chapter called 18th chapter, SDG. So how many chapters I'm going to cover? 11, 1, 2, 3, 14 chapters I'm going to cover as a minimum assurance out of 19 chapters that we have, which will occupy minimum 80 marks to 85 marks. Even 90 marks also can come from these chapters out of 114 to 118 marks that we have. Technically speaking, 3/4 syllabus minimum I'm covering. And believe me guys, if you're perfect in this 3/4 syllabus, if you are very strong in this 3/4 syllabus, mark my word, you can write exam for minimum 80 marks to 90 marks, get exemption also. You can check with your seniors. 3/4 strategy. If you're perfect in these topics, believe me, you can damn sure score exemption. Forget about 40. Exemption. And come out of this assumption, come out of this perception called I need just 14 audit. No. Don't be in that particular assumption. I just need 40. No, always aim for exemption in audit. And I'm telling you, exemption in audit is very much practicable. Don't think that this is a theory subject. No matter how much you study, you will not understand. These perceptions and all come out. I will shatter every of your perception that you have on audit. Through this marathon, I will just break your perception on the audit subject that you have, negative perceptions you have. That's it. So and by the way, even I'm going to use sometimes the question bank also, which is completely a colored question bank, by the way. Where in this question bank we covered already, all the ICA resources, test your understanding, test your knowledge, illustrations, MTPs, question papers. You see, in this question bank we have given almost 722 questions, but I can say some 40 to 50 questions were repeated. Unique questions will be 650 questions you will find. And from where this question bank is picked from, ICA has released November 2024 edition, right? From that study material we picked all the questions. We covered past exam questions from 2022 onwards itself, and we also covered MTP RTP 2022 to November 20, now MTP 2022 onwards till November 2024. And in each chapter, if you see, you will find test your knowledge first, TYK, then MRP category we call it as MCQ, RTP, MTP, and the last category is called as exceptional questions category. The last category we call it as exceptional questions. Exceptional questions means what? There's something tricky, very tricky questions like that you will find. Further, I will give a comprehensive list of exceptional questions on April 2nd week. A separate PDF I'll give you, because even in the remaining questions also, out of 650 questions, we are around identifying 100 questions exceptional, which are approx 100 questions were there. If you just study those 100 questions enough, remaining questions you need not practice. If you practice this particular notes or some other notes which you already follow thoroughly, and if you're writing the answers completely, I will show you, I will tell you how to write a complete answer, all that in the marathon I'll be discussing. If you are thoroughly writing all this, trust me guys, you can score exemptions in audit. And one more point, kindly watch this at standard speed. Already, since it is a revision, I am intensely talking, and at a higher speed I'm talking, so you don't again watch at higher speed. Some of you, if you are feeling speed faster, you have a speed adjustment, please reduce it to 0.9, 0.8. You will feel much more calmer version. Okay, that's it. So I think I spoke about all the issues. Now this is a weightage document. You see, first 11 chapters put together, ICA itself have given a minimum weightage. This is a minimum weightage 45 to 55 out of 120 marks. So minimum 50 marks to 70 marks. That's a minimum weightage, guys. Remember, this is not something ICA follow always. They always give higher marks from this. Then we have a digital audit. Often I see many students, they go behind digital audit, which is only a 4 marks or 5 marks chapter, but almost 35-40 pages chapter this is. Ignore this, keep it at last. Keep it as a last priority. Means what? You should study at last or not at first. That's what I mean. Okay, then you see, group audit, NBFC audit, bank audit, PSU, internal, due diligence, all that. In this entire section, except PSU audit, rest of the entire category, it is easy. And what is the weightage minimum? Minimum 18 marks to 30 marks, even 25 marks. That's the minimum weightage. So in that, I'm going to cover NBFC audit. If possibilities are, I will also cover internal audit. Okay, 15 chapters it will be if I touch internal audit also. Then coming to SDG, this is again a small chapter where you will get minimum 5 marks question, and ethics, as I already told you. So the weightage which I'm going to cover, I already told you, and I'm showing you with the ICA weightage document as well. That's it. So this is the marathon which I'm going to cover. Now, without any late, let's begin our first topic, most fundamental in CA final, reporting, where I am going to cover 12 standards. I'm going to cover 12 standards in reporting topic, and we are also going to discuss CARO reporting, where the reporting topic weightage is 18 to 20 marks. Out of the 60 marks I told, right, minimum 18 to 20, sometimes even 25 marks will be only from the single chapter reporting. And trust me guys, this reporting chapter we are going to finish in 2.5 to 3 hours, with you get a clarity like never before. Trust me. That's it. Okay, just 1 minute, let me just review like how it is going just on the YouTube. I think it's going well. I think I'm just looking at the streaming. I'm just looking at that's it. Yes. So now let's begin audit reporting topic. So I already gave what I'm going to cover, what are all I'm going to cover, what is the resource I'm going to cover, everything I already told. So now let's start the first topic, that is audit reporting. So which in our book is 90th page. So I'll directly go to audit reporting. So this is audit report, nothing but reporting. You know, in this chapter we are actually going to learn how to draft an audit report. You know, this reporting topic is broadly divided into you know, the reporting topic, this is broadly divided into two parts. Even if you see the real audit report, it will have two parts, part 1 and part 2. Part 1 we are mainly discussing about standards, whereas in part 2 we are going to discuss about reporting requirements. If you look at ICI actual standard, for example, I will show you, you know, for example, just a minute, let me show you the ICI reporting specifically they have given. Yes, I'm just opening a 700 related standard. Okay, this is actually pronouncement book. In your ICS study material itself, they have given audit report illustrative formats were given in the reporting. Okay, so there the format is not so clearly given. It was little confusing in the ICI study material, so I am taking the original pronouncement related format. You see, the first and foremost thing in audit report is what? Title, where we clearly mention that this is an independent audit report. Fine. You know, we are discussing predominantly the subject from first chapter to 7th chapter point of view. In our CA final, first chapter to 7th chapter point of view, we are discussing the subject from the point of view of audit of general purpose financial statements. Most important assumption that you should take. We are discussing first chapter to 7th chapter, in which context? General purpose financial statements context. Now you see independent audit report, then we have what? To addressee. What is the second element in audit report? Addressee. I don't know how many of you know this. You have something called contents of audit report in CA final book. If at all you are not aware of it, don't think I'm talking something out of syllabus. I'm talking part of the syllabus. And drafting questions are what? Which is bit tested. Even in the November exam, a drafting question is tested. So I will show you, don't worry. Okay, contents of audit report. Right now what I'm talking about is contents of audit report. But before that, how this chapter is broadly divided into, as I told, it is divided into two parts. It is divided into, just a minute. So the subject is divided broadly into two categories. So one is reporting standards, another one reporting requirements. You know, this reporting requirement is called as other reporting requirement. This reporting requirement is called as what? Other reporting requirement. What are the reporting standards we are going to learn in this standard 7 in this particular chapter? 701, 705, 706, 710, 720, 570, 600, 610, 620, and even we are going to discuss about 299. These are the standards. 700, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 11 standards is what we are mainly predominantly going to discuss. Is there any other standard that I'm missing? Fine, we'll see. If at all comes, we will see that also. Okay, minimum these 11 standards are what we are going to discuss in this topic. Trust me guys, from these particular 11 standards, the weightage is minimum 12 to 15 marks, minimum weightage. For example, November, which is so-called tough paper, where you call it as 605 marks question is there, 605 marks question is there, and even 720 related one question is there, and 705 related one question is there. Almost I can say 14 to 15 marks were there only from this. Okay, so minimum weightage I'm telling you. Now you look at this particular audit report related one. Okay, just a minute. Yeah, so you see the audit report related one. You see audit report, if you see real audit report, it is divided into two parts. The real audit report itself is divided into two parts. First part is what, report on financial statements. First part is what, report on financials. Inside that part, what are the points you will give, opinion you will give, basis for opinion, key audit matter, don't worry, I will discuss one by one, and other information, responsibilities of management. Then we have something called responsibilities of auditor, then other matter paragraph. Other matter paragraph is nothing but 706. This is part 1 inside a real audit report. Again, you have another part inside a real audit report that is called as report on other legal and regulatory requirements. That is actually called as what? Report on other legal and regulatory requirements. This is another part in the audit report. See, I don't know how many of you have noticed at this point, you have a discussion in ICA material, whatever the material you're discussing, there is something called other reporting responsibilities. Have you seen this section? I know many of you would have seen this, but you would have not understood what exactly this section is trying to tell. Other reporting responsibilities. What are they saying? If presented in the same section, along with other elements as per standards on auditing, the report shall clearly differentiate other reporting responsibilities from that. Further, the other reporting responsibility shall be presented immediately after report on financials. Like this sentence is there in the IC book, which nobody understands. The other reporting requirement shall be presented. Where? After report on financials. That's what they did right in the format also. Other reporting responsibilities means what? You see here, what are other reporting? It includes legal and regulatory reporting. For example, the section name is what? Report on other legal and regulatory requirement. The section name, the part name is report on other legal and regulatory. You see here, report on other legal and regulatory requirements. Where it is presented in the audit report? Immediately after report on financial statements. Exactly. Getting it? Now, report on financial statements contains what sections in audit report? Opinion is one section, basis for is one section, key audit matter is one section. Apart from that, we have emphasis of matter, other matter para, all that. Like, for example, you come to our audit report format. In our GOAT notes, you just come to contents of audit report. Okay, contents of audit report. Just if you come to, okay, just a minute. You see, we have given a format of audit report here. If you see, I have specifically highlighted 4 points in the black color. These are the contents which will not be there in the 700 format of audit report. It will not be there generally. Okay, even if you see ICA book 700 audit report format, these 4 points you will not find. But what format I gave in this book is a comprehensive audit format, considering all the scenarios. For example, 570 scenario is applicable here, 701 scenario is applicable, 706 also applicable, other information is also applicable. For example, assuming these standards also applicable, then how an audit report format looks like. So this is how the audit report format looks like. Able to understand? And one point I want to tell you here, in 705, as an introduction, I gave one diagram. Just a minute, I will show you. At an introduction, I gave a diagram. In 705 standard, I gave one diagram at an introduction. This wordings are very important. What are the types of opinions a CA can give? What are the types of opinion a CA can give? Just a minute. A chartered accountant can give 2 types of opinion. We all know, unmodified opinion and modified opinion, right? Audit report is 2 types basically. This many don't know. Unmodified report, a modified report. My dear, don't confuse between unmodified opinion, modified opinion versus unmodified report and modified report. Unmodified report is different, modified report is different, whereas unmodified opinion is different. So opinion is different. I'm talking about report nature. Suppose in SA 700 audit report format is there, right? In a real company, as it is, that format is followed. That format is called as unmodified report format, where your audit report is exactly issued like 700. Suppose in the audit report 700 format you are not exactly following. What are you doing? You are including emphasis of matter para, you are including other matter para. Still, you may be giving unmodified opinion only. You may still be giving unmodified opinion. Your opinion as a whole on financial statements is unmodified only. But what happened, you are giving emphasis of matter, other matter para, which means 700 format of audit report you are not as it is following, you are modifying the format, right? So that report is called as modified report. This particular diagram is there as an introduction in 705 in CA Inter book. Getting it? This particular diagram becomes useful when we are discussing 800 revision, when we are discussing 800, 805, 810 revision. No, especially this diagram will be very, very useful for us. So modified report does not means modified opinion. If an emphasis of matter para is there, other matter para is there, we can simply straight away call it as modified report. Sir, emphasis or other matter, leave it, sir. I'm not giving it, but I'm modifying the opinion. If you are modifying opinion, then also you are not issuing audit report as per 700 format, right? When you are modifying opinion, you need to modify. You see 705 standard heading. What is the 705 standard heading? You see, just a minute. You see 705 standard heading, modifications to the opinion in the independent audit report. What is independent audit report? 700 format. In that you are giving some opinion, right? You are modifying that opinion. So when you are modifying the opinion, you are naturally modifying the format of audit report. Accordingly, it became a modified report, which means an unmodified report becomes a modified report in two scenarios. One, you are still giving unmodified opinion, but including emphasis and other matter paragraph, then the report becomes modified. Or you are also giving modified opinion, then also report gets modified. So if you are giving modified opinion, that is also, just a minute. Yeah, so if you are giving modified opinion, then audit report get modified. If you are giving modified opinion, automatically, if you are giving modified opinion, then also the report is called as a modified report. That's it. So let me continue further. So just repeat the video if at all you are having any doubt. I clearly told you every point now. So I think you're able to understand how exactly I'm going to deal with the subject. Now look at it. So what are the contents of audit report? How to prepare the audit report? Title, just now we saw independent audit report. Addressee to the members of the company. Who is addressee? Actually, in exam sometimes they may ask you only a 2 or 3 marks question on the addressee itself. How they will ask you, addressee? Write about addressee. Who is addressee? Addressee is decided by terms of engagement or law regulation under which you are doing the audit. Terms of engagement will decide. Don't directly write to the members of the company. In MCQ might come, addressee means what? It is decided by terms of engagement, law or regulation. And next, directly the first and foremost thing that we give an audit is, most important thing is opinion. The most important thing that we give is what? Opinion. Let me do one thing. Let me use only yellow highlight for convenience sake. So contents of audit report, title, addressee, auditor's opinion, auditor's opinion, just now we understood. Now, okay, now how many types the auditor can give opinion? You see here 700 format also, directly without any waste of time. Directly they're talking about opinion. You see what is there in the opinion section of the audit report? There are 2 paras here. In opinion section there are 2 paras. First para, you see, we have audited. What are they mentioning in the first para? In the opinion section, first para, what are they mentioning? We have audited the standalone financials of ABC company, comprising balance sheet, P&L, cash flow, notes, returns, so all that. Then they are giving actual opinion. In our opinion, to the best of our information, yes or no, the aforesaid financial statements give true and fair view, information required by the act in the manner so required, and give true and fair view in conformity with GAAP. Auditor gave straight clean opinion. He didn't use any negative wordings and all. In our opinion, the aforesaid financials give Companies Act related information as it is and true and fair view. So indirectly clean opinion he gave. That's why if the opinion para heading is simply side heading is opinion, we call this as, if the heading of the para is simply opinion, it is unqualified opinion, unmodified opinion, which is also called as clean opinion. Now look at the actual standard. What the standard is saying. When auditor will give an unmodified opinion, the auditor expresses unmodified opinion when the financial statements are prepared in all material respects in accordance with applicable financial reporting framework. If at all financials are prepared everywhere in accordance with applicable framework, we straight away which opinion? Unmodified. Indirectly, modified opinion is given in two circumstances. Modified opinion is given in two circumstances. For example, financial statements are not free from MMS. Financial statements are containing material mistakes. They are not free from MMS. Then the auditor will give modified opinion. The auditor issues modified opinion if the auditor concludes based on audit evidence obtained. What is it? Based on audit evidence obtained. If at all auditor is concluding, yes, financial statements are not free from MMS. Not free from MMS means what? Financial statements are containing material mistakes. If they are containing material mistakes, I will give which opinion? Modified opinion. Able to understand straight away. And there is another scenario where I will give modified opinion. One, the auditor is unable to obtain. Another scenario is there where I will give modified opinion, where if the auditor is unable to obtain evidence so as to conclude that the financials are free from MMS. See, what is the objective of audit? In CA Inter you might have understood. In CA Inter SA 200, first chapter, nature, objective and scope of audit. Objective of audit you might have understood. The auditor's objective is to obtain reasonable assurance whether financial statements are free from material misstatements, whether due to fraud or error, and report accordingly. So you need to get something called reasonable assurance in order to express a report. Yes or no? Suppose you are unable to get the reasonable assurance. You are unable to get sufficient appropriate evidence. Without getting evidence, how can I give opinion? That time you will give which opinion? Modified opinion. Now how different types of modified opinion looks like, how opinion looks like, all that we will give a brief examples, very simple brief examples. Look at this 700 here. No, the auditor has given a clean opinion, straight clean opinion. Now I will open 705 format also. Just a minute. If at all any of you feel that I'm going little fast, you have a speed adjustment, please kindly use the speed adjustment. Kindly use the speed adjustment. And if at all you want on audit report even more in-depth explanation, please watch my latest CA Inter Audit Marathon. Inside that also, first part 1 I already uploaded, some 7-10 hours video is there. Okay, inside that audit report timestamp will be there. There even more detailed explanation I gave. So this is actually a CA Inter topic which is also there in CA final, and the weightage is very high topic. That's the reason I need to start with this. Without understanding this topic, you can't understand further. Now look at 705. You see, there is one illustration in ICA book. The same illustration is given for you in your ICA study material as well. Okay, in the ICA study material also it is given. So what is the first illustration? Here auditor decided to give qualified opinion. Why? There is a material misstatement. Okay, before I go into this, let me once show you one small table. Okay, let me show you one small table. Come to 705. Come to 705. Just a minute. Yes, in 705 I have given one table. Remember I told you auditor will give modified opinion in two circumstances. Yeah, what are the circumstances? One circumstance is evidence obtained. And what you concluded? Material misstatements exist. Financial statements are not free from material misstatement. Material misstatement exist. Getting it? And you know what? They are material but not substantial. They are not pervasive. Pervasive means what? Substantial. Mainly pervasive, we generally interpret it from substantial point of view. So you found a material misstatement in financials but it's not substantial. Which opinion we will give? Qualified opinion will give. Suppose you got the evidence. You have evidence. And what you proved, based on the evidence? A material misstatement exists in financials. And remember, it is not just material. It is material, no doubt. And it is also pervasive. Pervasive means what? It is substantial in nature. Substantial. We should straight away give adverse opinion. Sir, what is a qualified opinion? Qualified is like a positive opinion only. Qualified opinion is a positive. It is something like unqualified only, but with an exception. exception. You know what I will tell? In unqualified opinion, just now I showed you 700 format. What we tell in 700 format, in our opinion, to the best of our information, the aforesaid financials are true and fair. Clean opinion we give, right? Whereas in qualified opinion, we don't give a clean opinion just like that. How we give in a qualified opinion, you know, I will show you right now. How we give a qualified opinion, you know here what exactly happened, you know, mistake. Here in this company, the company inventory is materially misstated. Where is it exactly? Yeah, inventory is misstated. Okay, the misstatement is material but not pervasive. Therefore, auditor felt which opinion is appropriate? Qualified opinion is appropriate. That's what is there in our book also, right? You know, material misstatement exists but not pervasive. Then which opinion is appropriate? Qualified opinion. Now you see how qualified opinion they're giving, how audit report they're giving. Array, same title, independent audit report, same address, just like 700 format. You know, but you see now 700 format as it is not followed. Now the report is modified. It is not simple opinion. They are using the heading qualified opinion. So the lesson is, when you are giving unqualified opinion, you can simply use here opinion wording. But if you are giving a qualified opinion, adverse opinion, disclaimer of opinion, heading itself shall reflect that. As usual, again, remember in 700 format I showed you, there are 2 paragraphs in the audit report. Sorry. There are 2 paragraphs in the opinion section of the audit report. First paragraph is what? Same, introduction is same. We have audited financials of comprising balance sheet, P&L, cash flow, all that. You know, this particular para in opinion section, first para is there, right? This is actually called as introductory para. What is this called as? Introductory para. Then the second para in the opinion section, within the opinion section, second para, you see here there is a modification. In our opinion, to the best of our information, according to the explanation, the aforesaid financial statements give a true and fair view. Are positive opinion only they gave. But you see, in between one point is there, except. You see here, except for the effect of the matter described in basis for qualified opinion section of our report. Except for the effect of the matter. What are they saying? Except a matter. Okay, except some matter. Except it is the effect of the matter. Where it is described, basis for qualified opinion section. Oh, there is another section of our report. Oh, in the same report, basis for qualified opinion section is there. Where is it? Array, below itself it is there. Basis for qualified opinion section. What is it? Just a minute. Just a minute. So, yeah. So, basis for qualified opinion section is there. So here you see basis for qualified opinion section. But before I read here, let me once again show you, if unmodified opinion is given, how basis for opinion section looks like. Basis for opinion, if at all heading is simply basis for opinion, simply opinion, which opinion it is? Unqualified opinion. You see, if unqualified opinion is given, there is only one para. Yes or no? You see here, there is only one para. What is one para? Tell me, what is basis for opinion? Array, if I am giving a positive opinion, what basis I have? There are so many reasons. That's why you give a general reason here. What is a general reason? We conduct our audit as per standards. We conduct our audit as per standards. Just a minute. We conduct audit as per standards. Okay. And our responsibilities under those standards. So we conduct audit as per standards on auditing. You just mention one statement. Okay, what you do as per standards? As per standards, no, so many responsibilities are there. Okay, what are the responsibilities? They are further described in. Auditor responsibilities for audit of financial statement section. They are further. I have so many responsibilities in standards, right? Where are they? Further described in. There is another section in the audit report. What section it is? You see, auditor responsibilities for audit of financial statements. Auditor responsibilities for audit of financial statements. Like this, a section is there, right? Below we have discussed all the responsibilities. Okay, fine. Okay, so okay, fine. So we are independent of the company, and what auditor is saying, you know, here, we have fulfilled our ethical responsibilities, and further we believe that evidence we obtained is sufficient and appropriate. Don't worry, whatever evidence we obtained, no, it is sufficient and appropriate, my dear shareholders. The above opinion we gave is based on sufficient appropriate. Auditor is giving an affirmation that he obtained sufficient appropriate evidence. He is not giving opinion just based on some minimal evidence. He has obtained sufficient evidence. He is making a statement explicitly in the audit report. Now in exam, how they will ask, you know, they will not ask you to write basis for opinion para. Of course, one time it was asked in November attempt only, they asked basis for opinion para. I will show you November attempt paper, for example. Yes, sir. You know, November attempt paper, I will show you a 5 marks paper. It's a 5 marks question which is asked exactly. So, November attempt paper, draft. Just a minute. While drafting audit report, noted that at the same time she's also finalizing audit report of separate engagement where she want to give unmodified opinion. Okay. So you are responsible for drafting engagement letter. Fine. So here they have given financial statements of complete set. The company has assigned audit of PPO. Something is there. Some question is there here. And comment with reference regarding the opinion to be given. Okay. There is another question. Just a minute. Just a minute. So this is actually 805 related one. This is regarding 805 related one. So at the same time, she's also finalizing audit report. So question number 4B. So in CA final question number 4B, I'm just showing you. I'll just show you. Wait a minute. So just a minute. So this is not a drafting question, but this is something linked with this. This is something linked with this. Just a minute. Yeah, that's it. That is actually in a 805 question. I will show you later. May 24 attempt. Yeah, sorry. It was not number 24. It's actually a May 24 question. Just open May 24 question. There is a straight drafting question which is asked. May 24 CA final paper. Okay. Now, so in exam, how they will ask you in this question, you know, I'll just tell you how briefly they'll ask you. They sometimes ask you drafting question. In sometimes how they will ask you, you know, write what are the contents of basis for opinion section. They will straight away ask you what are contents of basis for opinion. Look at. So what is basis for opinion? What are the contents? What basis for opinion para includes? Basis for opinion para includes what and all? Statement that audit is conducted as per standards. Yes or no? Reference to the section which contains auditor. You know, our responsibilities under those standards are further described in audit responsibility section. Like that one statement is there. And statement that auditor is independent of the company, it is there. Stating regarding whether auditor has obtained sufficient appropriate evidence. Yes or no? That is also there. That's it. So what are contents of basis for opinion? This is there in your CA final book. Please go through ICA book correctly. You will understand. So what are the contents of basis for opinion section? This is nothing but what is there in the CA final book. That only we are discussing. If you barely discuss like this, you don't understand. This is exactly nothing but drafting. Okay. Now what are there in the opinion section? In opinion, no, first point we are mentioning, right? We have audited, you see, we have audited financials ABC comprising so and so. Nothing but what? You know, opinion section includes nothing but the following. Include a heading opinion and identify the entity which is being audited, state that financials were audited, identify title of the financials, refer to note, specify the date and period, yes or no, identify we have audited ABC Limited, state that financials have been audited, we have audited. And you know what? This statement that we have audited, right? This statement should not be used in case of disclaimer of opinion. When you are giving disclaimer of opinion, you will not mention that we have audited. You will mention that we were engaged to audit. I will show you when I'm discussing disclaimer of opinion. And identify title of each financials comprising balance sheet, P&L, cash flow, so and so, referring to notes, and period for the period ended. All that will be there in the introduction. Look at the audit report format. You know, you see audit report format. Just a minute. You see the audit report format. You know, we have audited ABC Limited comprising financial statements, yes or no, for the period ended. Notes reference is there. Notes summary of including notes to financials, everything. Yes or no? This is what contents of opinion section. In exam they might ask you, write about what are the points auditor has to include in opinion section. You should write this answer. Any way the question can come. That's it. Now let's continue discussing 705. Basis for qualified opinion. Now you see, when I give a qualified opinion, because material misstatement is there, but it is not pervasive. Qualified opinion I'm giving. You see, when I'm giving qualified opinion, generally when I'm giving unqualified opinion, there is only one section. There is only basis for opinion section, only one para. What is that one para? We conducted our audit as per standards. Our responsibilities are so and so defined in audit responsibility section. We believe that evidence obtained. A standard para like this will be there. Right? That also came here. But in addition to this, you should also give quantification. This is a specific para in the basis for qualified opinion section. Specifically you should tell why you gave qualified opinion. What is the reason why we gave? The company inventory is carried in the balance sheet. Company inventory is misstated. What misstatement? Actually company inventory cost is 1000 crore, NRV 900 crore, but company showed in the balance sheet 1000 only. They did not show it at 900. Whichever is lower, they need to show at 900, right? But they did not show. They showed in the company balance sheet 1000 crore only. That is a misstatement. So company inventories are carried in the balance sheet at 1000 crore. Management not stated inventories at lower of cost or NRV, but only mentioned them at cost, which is actually a violation of accounting standard. So auditor qualified reason. He mentioned the reason. Until here qualified. Not only qualification. Here misstatement is related to a specific amount. The company records indicate that. You see here what the auditor is doing. Had management stated, if at all management valued inventories at lower of cost or NRV, an amount of 100 crore would have been required to write down the inventories to NRV. Some 100 crore would be required to write down the inventories to NRV. Accordingly, cost of sale will increase by 100 crore and net income and shareholder funds will decrease by so and so 100 crore. Like that, you need to quantify also. You should also quantify. Open your ICA book, same reporting topic. How there is a discussion in 705 standard. I don't know how many of you really observe all this when you're reading. That is the reason. See, you should never mug up the subject. You should understand the subject. If you really understand, I don't know how many of you are feeling now where and all this is there. If at all you're feeling this, you didn't study the subject properly. That is the reason why many students do not understand audit paper in the exam. Forget about answering. They don't understand the question itself. The reason why they don't understand the question is they don't comprehend what they're reading. So go to 705. I will show you in your 705 CA final book or in any other book that you're following. When you are giving modified opinion, I will show you how basis for modified opinion in case of modified opinion gets changed. When you are giving modified opinion, basis for opinion section will affect. How it will affect? Suppose MMS is there in financial related to specific amount. A specific amount is materially misstated. What auditor has to do? If a misstatement related to a specific amount, including something called a quantitative disclosure, the auditor shall include a description. Just now we saw basis for qualified, description of mistake. Company did not value inventory at lower of cost, description, and quantification of the financial effect of the MMS unless impracticable. If it is not practicable, if it is practicable, quantify. Yeah, inventory mistake 100 crore is there. So we quantified where and all mistake exactly happened. Unable to quantify. Suppose you are unable to quantify. Suppose quantification is not possible. If quantification is not practicable, the auditor shall state that it is not practicable. Quantification is not practicable. That point auditor has to state. Okay, just next. Suppose sometimes misstatement in the financials can be for narrative disclosure. Narrative disclosure means what? Which are discretionary in nature. Narrative disclosures are those disclosures which are discretionary in nature. What is a narrative disclosure? We will discuss somewhere in 800 2000 series. We will get a meaning of narrative disclosure. We will discuss there. Very simple. Company annual report or audit report if you take, notes to account if you take, so many standard paragraphs will be there. No numbers, just some matter. Basis of accounting, method of accounting, method of inventory recognition, method of fixed assets valuation. Like that, some narrative discussion will be there. Suppose if a mistake what you find is related to narrative disclosure, then in the basis for modified opinion section, explain how narrative disclosure is misstated. Very simple. This is talking about what actually, how basis for modified opinion para will change. Basis for modified opinion, nothing but basis for qualified, basis for adverse, basis for disclaimer. How that section will undergo changes. If at all auditor is giving a modified opinion, how that will undergo. Suppose if at all mistake is there in a narrative disclosure, in the basis for modified opinion, how narrative disclosure is misstated, you should tell. By the way, if at all you are unable to quantify, you should say that it is not practicable to quantify it. That example also I'll show you. 705, same 705, you download. Sir, and now some of you might get a doubt, sir, where can I download this document? Very simple, in our website. No, you see our website is there here, Shrestha for CSMA. So here go to free resources, again go to CA final, here advanced auditing, 700 illustrations, 705 illustrations, 800 original standards, all these three also you download. In the revision class we are going to use it. Next, okay. Almost the time is so fast it is going. Yeah, so now look at, so you should quantify. Yes or no? Qualified opinion we understood. Now look at, so suppose, no, here this is an example of adverse opinion. Why auditor is giving adverse opinion? Consolidated financials are prepared, okay. Consolidated financials are materially misstated due to non-consolidation of subsidiary. One subsidiary they didn't consolidate. Very simple. If a subsidiary was not consolidated, which items in the balance sheet, which items in the P&L will affect? Every item will affect. Assets, fixed assets will affect, current assets will affect, liabilities will affect, non-current liabilities will affect, incomes will affect, expense, every item will affect. Now tell me, in this case, I will qualify the report. I will, in fact, no, here the misstatement is the effect. The misstatement is deemed to be pervasive. When the mistake is pervasive, which opinion I told? Material misstatement, pervasive. Adverse opinion we should give. You see how adverse opinion is given by the auditor? Same heading, adverse opinion. First para is common. We audited finance. This is common. In our opinion, what are they saying? In our opinion, to the best of our information, because if you see qualified opinion, no, except word will be there. Here it is, because of significance of matter. What matter? Discussed in basis for adverse opinion section of our report. Oh, here there is a section called basis for adverse opinion. Inside that, some matter has been discussed. Some matter has been discussed. What matter has been discussed? So and so matter is discussed. Except that matter, I mean, because of that matter. Sorry, not exception word. It's actually because of this matter, the accompanying financial statements do not give true and fair. It's a negative opinion. Straight away negative opinion, adverse opinion. The aforesaid financials are not true and fair. Why? Because matter is described below. Where it is described, basis for adverse opinion section. You see, basis for adverse opinion, again it also has two paras. One para is common, the same 700 format we have seen. No, when you give unmodified opinion, this para will as it is come. We conduct our audit as per standards. Auditor responsibilities are so and so. We fulfilled our ethical responsibilities. The evidence obtained by us is sufficient. Remember, unqualified opinion is an opinion. Qualified opinion is an opinion. Adverse opinion is also an opinion. But disclaimer of opinion is not opinion. We are disclaiming the opinion. We are not giving the opinion. Many students often confuse. Disclaimer of opinion is a type of opinion. No, it's actually not giving opinion. Disclaimer of opinion. It's not disclaimer opinion. It's disclaimer of opinion. Now you see. So we mentioned, right? Now, not only this, why you gave adverse opinion, that also you should talk, right? Yeah, you see here, company, the auditor explained, as explained so and so, group has not consolidated. Okay, na? The investment is accounted on cost basis. Under GAAP, no, this should have been consolidated. So that's a big mistake. So they mentioned the reason. And you see, had, you see, quantification they're talking. Had XYZ consolidated, many elements could have been affected. The effect on consolidated financials of failure to consolidate. We didn't consolidate, failure. What is its impact? Could not be determined. Could not be determined. What does it mean? You know, when you are unable to quantify, the auditor has to state that he is unable to quantify. Yes or no? In the 705 format they showed or not? Exactly. Sometimes a misstatement you do by a non-disclosure. I don't know how many of you know misstatement definition. There is a definition for misstatement. You know, for that, no, please refer my CA Inter Audit Marathon. Part 1 I already gave for May 25 exams. Please refer that. I'm telling you guys, CA Inter Audit Marathon only, audit report topic alone is that alone. Fundamentals is there in CA Inter Audit Marathon. Let me show you right now itself. Audit Marathon, for example, so just a minute, let me show you right now how here where you need to watch for more detail. This is my CA and Audit Marathon, which I did in the, for example, I will just open YouTube, just type Audit Marathon. Most you will find this one. This thumbnail is there, right? This one you open. Here already timestamps were given. In this, fundamentals of auditing, please watch that once. Okay, it is hardly half an hour. And audit report in-depth discussion I did in CA Inter also. If at all you want more depth discussion on audit report, no, right now whatever I'm discussing, go there. By the way, here in CA final I discuss some exclusive points which are not there in CA Inter. But what I recommend you is at least watch this fundamentals portion and then come and continue watching this. That's what I sincerely recommend, kindly. Okay, I'm telling you guys, the exam paper for the upcoming exam May 25, mark my word, every question that is going to come in May 25 I will cover in this marathon. Every possible question that will come in May 25 exam I will cover in this marathon itself. Mark my word. Look at next. Sometimes so misstatement is 4 types. Misstatement can be in amount, misstatement can be in classification, presentation, disclosure. 4 types of misstatements can happen: amount, classification, presentation. Suppose a misstatement is there which is non-disclosure. Financials have to disclose something. Suppose a company has to disclose segment information, they didn't disclose. They didn't present financial statements as per applicable framework, therefore it's a violation. So what auditor has to do? If a misstatement is there by a non-disclosure, in exam they'll ask you, write about a misstatement by way of non-disclosure. Discuss with top management why, what exact information they omitted. No, what exactly? Describe the nature of matter omitted unless prohibited. Include the omitted disclosure if practicable based on the standard. So if management did a misstatement by not disclosing something, what exactly they didn't disclose, first discuss with top management, ask them to include it. Sir, they're not including, sir, financials as this amount issue. Then describe in the auditor report where basis for qualified opinion, basis for adverse opinion, some para is the right basis para. There describe what exactly they omitted. Segment information they did not present, mention that. Further, if possible, if practicable, what exactly they missed, no, you compile it and put it here if practicable. That's it. Suppose you are giving a modified opinion because you are unable to obtain evidence, or you are giving a disclaimer of opinion, what exactly you have to do. Now until now what we have seen is, we have discussed is, we have discussed about a misstatement is found, evidence is there, how to modify the para. What if we are unable to get evidence? You know what, January 25 CA Inter paper, what they asked, they asked this question. CA Inter Jan 25 paper, auditor if at all disclaimer of opinion he gave, how basis for disclaimer of opinion para gets affected? That question they asked in CA Inter. I should tell you one fact. CA Inter audit now is tougher than CA final audit. The question paper CA Inter audit is tougher. If a final student, any of you, I dare you, go Jan 25 paper. If you are able to answer 50% of the paper, mark my word, you will clear directly CA final May 25. You have good knowledge on standards on auditing. That's what I'm telling you. Jan 25 CA Inter paper, you just go and see. So advanced it is. That's it. Now, inability to obtain evidence in case of disclaimer of opinion, the discussion we will discuss again, in the next session. In the next session, I'll discuss. By the way, initially I'm doing this as a one by one session. Later, you will find the same marathon as a merged video. Okay, some 12 hours, 14 hours, some 18 hours merged video you will find. Initially you will find it as a compartments. So in the next session we will continue inability to obtain evidence and disclaimer of opinion related discussion. Okay, that's it. Once again I request you to watch all this, and if possible, before we start the next session or before you continue watching next session, kindly go and watch the fundamentals topic. Once you watch it, you will understand. Okay, that's it. Yes, let's continue the part 2 marathon. Audit reporting only. In the reporting chapter itself, we are now discussing part 2 topic. Just 1 minute. Let me once check the audio. Everything is good or not? Yeah, perfect. Yes. So without any delay, let's continue the discussion. And if you recollect, we have already completed, qualified opinion, adverse opinion discussion with respect to material misstatement found in the financial statements. Now, let me once again discuss the types of opinions. Okay, I hope you already watched, the previous part. Okay, previous continuation. I hope you're watching this continuation reporting topic. So, suppose if the auditor has already obtained sufficient appropriate evidence, material misstatement is existing and not pervasive, qualified. Material misstatement is there and which is also pervasive, which straight away give which opinion? Adverse opinion. And suppose if sufficient appropriate evidence is not obtained, he did not get the evidence. Okay, for what he did not get evidence? For one material item he did not get evidence. It's only material. But is it a substantial item for which he did not get evidence? No, it is not a substantial item. It is only a material item for which you did not get evidence, but not substantial item. You see, very clearly observe the words. Here, when evidence is there, I am using the word MMS word clearly. When evidence is not there, I am not using the word MMS. I am only using the word, is it a material item? Okay, so for a material item, I did not get evidence. Okay, it's a material item, you did not get evidence. Is it a substantial item? No, no, no. Possible effect is not substantial. The possible effect is not substantial. Then also we give which opinion? Qualified opinion. Further, we did not get evidence for a material and also substantial item. Then we straight away give which opinion? Disclaimer. And if you observe this time, if you observe this particular table, we give qualified opinion in two circumstances. We give qualified opinion in two circumstances. Two, nothing but. Okay. We give adverse opinion only in one circumstance. Disclaimer also in one circumstance. And that's why if you see the definition of qualified opinion, it has two parts. Whereas adverse opinion one part, disclaimer of opinion also only one part. The definition of qualified opinion has two parts, disclaimer has one part, and even adverse also has one part. Now let us look at when qualified opinion will be given by us. The auditor will express a qualified opinion when, already we saw in the table also, what is one of the scenario where we give just a minute, where we will give qualified opinion. One scenario is evidence is there, mistake is found, material but not pervasive. Another scenario where we give qualified opinion. By the way, I'm once again telling you, if at all you are feeling speed of my marathon, just reduce it to 0.85x. Just now I listened before I start, just now I just watched my marathon and saw 0.85x. That speed is even more fantastic, where you get even more clarity. Okay, fine. So sufficient, appropriate, not obtained, and it's a material item where I did not get evidence. And is the possible effect pervasive? No. Then also I'll give which opinion? Qualified. You see, that's why second part of the first part of the qualified opinion definition, you see, the auditor obtained sufficient appropriate evidence, based on sufficient appropriate evidence, concluded that misstatements are material but not pervasive. Like you see here, misstatements we are talking about actual mistakes. Sir, mistakes, no, do we need to see individually or aggregate? Sometimes individually itself mistake is big. Suppose no, individually mistake is not material, but total of mistakes put together is material. Then either individually or aggregate, the misstatements are material but not pervasive. Further, so when a misstatement is material but not pervasive, then we give qualified opinion. Not only that, sir, I am unable to obtain evidence. But I took one conclusion, sir. I took one conclusion. Sir, evidence I did not get. No, can I still give unqualified opinion? No, don't give. Why? Possible effect of undetected misstatement. What is it? Possible effect of undetected misstatements. What is undetected misstatement? Possible effect. Sir, I have not discovered mistake, sir. I have not discovered. You didn't discover mistake. Then how come you say mistake? No, sir. I have not discovered a mistake which is possible, sir. Which is possible. So possible effect of undetected misstatement, if at all, if at all is there, that possibility could be material but not pervasive, sir. Nothing but you are not getting evidence. For example, the company has an inventory lying with third party. The company has inventory which is lying with third party. For example, the Hindustan Unilever has some material amount of inventory with the Amazon warehouse. For example, Amazon is a warehouse which is having huge amount of material owned by Hindustan Unilever. And when the auditors of Hindustan Unilever raised a request for confirmation from Amazon warehouse, nobody is responding. And auditor ultimately did not get evidence for that particular inventory which is lying with the third party. This is a case of inability to obtain evidence. I don't have evidence. Can I ignore that inventory and give opinion directly? No, that's a material amount of inventory. Is it substantial inventory? It's not substantial amount. It's a good amount only, but not substantial amount as such. It is not pervasive. Then you have a doubt. You did not get evidence, right? What query you have in your mind? What if it is not there with really Amazon? Companies lying to us, companies cheating us, companies just giving us fake documents, all that. What if this is the scenario? That's why if at all the possibility of undetected misstatement, if at all the possibility only you check. What if it is really not there? What could be the possible effect? Sir, it is a material item, sir, but not pervasive, sir. If possible effect could be material but not pervasive, then also which opinion? Qualified opinion. Now you understood qualified opinion definitions, right? Two circumstances. Sir, I have evidence. And what evidence you have? Inventory materially misstated, sir. Cost or NRV, whichever is lower, they valued at cost, sir. 100 crore NRV they missed. NRV is 900. 100 crore mistake, sir. I have proof. You have proof. Mistake value how much? Is it material? Yes, sir, it's a material, but not pervasive. Then you give qualified. Sir, I don't have evidence, sir. The company is saying Amazon warehouse inventory is there, but I don't have evidence for that. I'm unable to conclude really whether inventory is there or not. Okay, if you ignore that, will it be a problem for you? Yes, sir, obviously, it's a material amount of inventory, but not pervasive. Then do one thing, give opinion on financials. Everything else you have evidence, right? Yes, sir, I have evidence on every item of the financials except material amount of inventory lying with third party. Then do one thing, you give qualified opinion here also. Suppose first part of the definition, you see, first part of the definition is only same given in adverse opinion also. In qualified opinion, first part of the definition is there, right? The same definition is given for adverse also with one small modification. What is it? And you see here, I will show you. Here it is what? Material but not pervasive. You see here, material but not pervasive. Whereas here, material and pervasive. Suppose, sir, the auditor, based on sufficient appropriate evidence, concluded that misstatements exist, which are material and pervasive. Then we give adverse opinion. Sir, I am unable to obtain evidence, sir. Generally unable to obtain evidence. Just now we saw unable to obtain evidence and possible effect on financials of undetected misstatements could be material but not pervasive. Then qualified. What if it is instead of but not word, end word is there? Then it is disclaimer of opinion. If major item, substantial item, I am not getting evidence in the balance sheet, how can I give opinion on the balance sheet whether it is true and fair? Are a major item, substantial item, I'm not getting evidence. How can I give opinion? It's impossible for me to give an opinion. I will not give an opinion. Now let us look that scenario. Not give an opinion. Adverse opinion we saw just now, right? Now you see how disclaimer of opinion will be given. Okay, illustration 4 in 705 standard. In your ICS study material reporting chapter itself, there is a question on this. You see, disclaimer of opinion. What is this illustration? Disclaimer of opinion due to auditor's inability to obtain sufficient appropriate evidence about a single element of consolidated. Oh, in a consolidated financials, is there? See, tell me, when a company is preparing consolidated financials and standalone financial statements, I have to give opinion. I have to give audit reports separately on standalone, separately on consolidated. There is a section called 129 subsection 4 in Companies Act, which says that if a company is preparing consolidated financials under 129 subsection 3, all the formalities that are applicable for 129 subsection 1 financials, all those formalities will apply equally, mutatis mutandis, to consolidated financials also. Yes or no? You might have seen this in CA Inter accounts and accounts chapter. So CA Inter law accounts chapter is there. There you might have seen. So on consolidated financials also I should give a separate audit report. Okay, here consolidated financials is there. Single element you did not get. A single item I did not get evidence. What will happen? Single element. Why disclaimer of opinion? That single element is substantial. You see here. That single element, the auditor was not able to obtain sufficient appropriate evidence about a single element only. And that is regarding an investment which is 90% of the net assets. Oh my god, it is only a single element, but that is substantial. Remember, I told you pervasive means what? Substantial. Sir, I have a doubt. Previously you showed adverse opinion. There one subsidiary was not consolidated. Because of that, multiple items affected, but there is no substantial item. No, hare. Even if multiple items in the balance sheet and P&L effect, because if I don't consolidate one subsidiary, every item in the asset, every liability, every income, every expense will affect. That is also substantial. Sir, then what is pervasive, sir? Pervasive can be multiple ways it can be interpreted. Like, first let me show you pervasive meaning. Okay, then we'll continue that illustration. You see, pervasive means what? Pervasive describes impact. It actually talks about impact of a mistake or undetected mistake. Pervasive is talking about impact of a mistake or undetected mistake. Okay, impact. What? That mistake, no, not confined to specific item, not confined to specific account, not confined to a specific item. Sir, it is not related to one item, sir. All the items are affected. Then also pervasive. Or you see, there is another criteria. Or pervasive when also we say if so confined. If so confined means what? Sir, specific item only misstatement there, sir. Specific item only possible misstatement is possible, sir. First one, no, in a specific item it is not. Everywhere it is there. Second point, it may be in specific, which represents substantial portion. So pervasive means generally what do we think pervasive? All items on the balance sheet affected. No, not necessarily. There can be only one item which is affected, but that one item could be substantial. Third one, pervasive can be in relation to a disclosure. When do we say pervasive? There is third criteria also. Three criteria were there to call that scenario as a pervasive. One, misstatements or possibility of misstatements are there in multiple places, not a specific item, or maybe a specific item, but which is substantial item, or relating to disclosures which are fundamental. That's why when you are seeing 570 standard, you might have seen going concern. If any issue comes, adverse opinion we give directly. Why? Going concern is something which is fundamental to the understanding of the users. Therefore, we cannot take it as granted. Going concern, we straight away give a disclaimer. Yes or no, or adverse opinion. If at all going concern, we can't verify disclaimer. If going concern is missing, we give directly adverse opinion. Fine, don't worry. Just a minute. Yes, just a minute. 1 minute. I'm just setting one small thing. Okay. Yes. Next. Now look at. Yeah. So that's about pervasive. So what are they saying pervasive? Pervasive is something that is not localized to any one or two elements generally, but impact various elements. That is one perspective. Remember, that is one perspective. It is not limited to one item, multiple items, or it may be confined to one item only, but it could represent substantial. Now look at here 705 in ICI illustration. What they gave here? Just a minute. You see what illustration they gave for with respect to one investment, which is actually 90% of the total assets of the entity. Single item only, investments. In the balance sheet, investments is there, which is just a single item, but it is 90% item. Now what are they saying? The possible effect, what auditors has concluded, the possible effect of inability to obtain evidence is both material and pervasive. Therefore, disclaimer of opinion. You see now how audit reporting is affected. Title is same, addressee is same, and heading itself disclaimer of opinion. Now you see what auditor is trying to tell here. We were engaged to audit. Remember, generally when you are giving adverse opinion, qualified opinion, unqualified opinion, you state that we have audited, whereas here you will make a statement that we were engaged to audit. Very important for MCQ. In MCQ they might test us. So the auditor made a statement like we have audited. No, that statement should not be included. Getting it? What are the contents of opinion para? In case of disclaimer of opinion, you should not make a statement that you have audited. You can only make a statement that you were engaged to audit. Predominant item in the balance sheet, you did not get evidence. Then where did you audit? Yeah, you audited some items, you verified some items, but predominantly substantial item you didn't audit. No, that's it. Now, so we were engaged to audit. That's how you reply. And you see straight away here below, you just see straight away, we do not express opinion on the accompanying financial statements. Straight away we said we do not express opinion. Why? What happened? Because of significance of matter described in basis for disclaimer of opinion section of our report. See, there is a section in our report, basis for disclaimer. Inside that some matter is described. Because of that matter I'm not giving. What matter? You see, basis for disclaimer section. You see, basis for disclaimer. Array, only one para is there. Generally, basis for adverse opinion, 2 paras are there. Basis for qualified opinion, inside that also 2 paras are there. Unqualified opinion, 1 para is there. What is that 1 para which is common everywhere? We conducted our audit as per standards on auditing. Our audit, we have so many responsibilities. Our responsibilities are further described in auditor responsibility section of our report. We are independent of the company. We fulfilled ethical responsibilities. We believe that the evidence obtained by us is sufficient and appropriate. Those statements will be there, right? I showed you in 700 standard contents of basis for opinion para. State that you conducted audit as per standards on auditing. State that you are independent of the entity. State that you fulfilled ethical requirements. State that the evidence obtained by you is sufficient, appropriate. Refer about auditor responsibility section. 5 points will be there in basis for opinion para. That 5 points will not be there if you are giving disclaimer of opinion. If you are giving disclaimer of opinion, basis for opinion should not contain those 5 statements. Simple. Then what should be there in basis for disclaimer? Straight away tell why you didn't give opinion. That reason alone you tell me. That's enough. So the group investment is so and so, which is 90%. We were not allowed access to the management of the company, so and so. As a result, we are unable to determine whether any adjustments were necessary in respect of the group. So auditor is clearly explaining why he disclaimed the opinion. Not only that, now let me discuss one more important point. There is a section here. What section? Auditor responsibilities for audit of financial statements. Auditor responsibilities for audit of financials. Remember, auditor responsibility section. Generally, when you are giving unqualified opinion, I will show you how big auditor responsibility section. You see, it will start here. You see the auditor responsibility section, array so big, almost 2 pages. But when you are giving disclaimer of opinion, remember, auditor responsibility section is same, unqualified, qualified, adverse, same lengthy, 2 pages. But when you are giving disclaimer, just 1 para, that's it, just 2 paragraphs. What is there here? Our responsibility. What is our responsibility? To conduct audit of group financial statements as per standards on auditing. Issue auditor report. Objective as per 200. However, because of the matter covered in basis for disclaimer opinion section, we were not able to obtain sufficient appropriate evidence. So our responsibility is to do audit of financials and give a report. But because of matter described in basis for disclaimer section, we were unable to obtain evidence to form a opinion. By the way, remember, we are not giving opinion. No, it is not because of something and all. We are independent only. Don't worry. We complied with all the independent. We fulfilled all the ethical responsibilities. You see how cleverly auditor responsibility section is compressed. When you are giving, see, disclaimer means what? You are not giving opinion. When you are not at all giving opinion, why people want to know your responsibilities? It's none of their business, right? It's not relevant. See, the very reason why you were appointed is to give an opinion, and you are not giving an opinion. When you're not giving an opinion, why your responsibilities people bother about? First of all, because the primary responsibility for you is to give opinion. So you see, by the way, what are all there in auditor responsibility section? You see, generally, what are all? Our objective is to obtain reasonable assurance. Reasonable assurance is a high level of assurance, but not a guarantee. Yes or no? Misstatements can arise from fraud or error. You see here, various other responsibilities you need to, you as a part of an audit, we exercise judgment, we maintain professional skepticism. Why I am reading? There is a purpose. I will show you one theory question on that, which is a direct question asked many times in exams. Identify and assess risk of MMS, obtain an understanding of internal control, appropriateness. Yes, there is a small interruption. Sudden system issue. No issue, no problem. Let's continue because multiple applications were opened actually on the system, but that's okay, not an issue. Fine, let's continue now. Just 1 minute, let me check once. Yes, sorry for the interruption. Let's continue now. So you see, when auditor is properly doing an audit and giving an opinion, he talk about audit responsibility so in depth. Identifying, assessing risk, obtaining internal control, understanding, evaluating accounting policies, and concluding appropriateness of management use of going concern. Everything he will talk. Yes or no? And he will also talk about one more point. In case of fair presentation framework, just a minute, evaluate overall presentation and structure. Evaluating overall presentation structure content. Overall presentation structure, content, including disclosures, whether financial statements are representing underlying transactions and events in a manner that achieve fair presentation. So auditor has to check whether financial statements are showing underlying transaction correctly. This point is most important in case of fair presentation framework. Sir, what is a fair presentation framework? What is a compliance framework? What is a general purpose framework? What is a special purpose framework? I already told you. Please refer CA Inter Fundamentals topic. I clearly mentioned in that. Next, and further, auditor responsibility section, audit over, we communicate with management. We also provide top management regarding that relevant ethical requirements. From matters communicated, we select some matters as key audit matter. Communication responsibilities, you know, in ICA book how it is explained. What are auditor responsibility section? What are auditor responsibility section? Come back to our 700 standard. You see, what are auditor responsibilities? You see here, whatever I showed, right? Generally, when you are giving unmodified opinion, qualified opinion, adverse opinion, auditor responsibility section will be so big. Whereas when you are giving disclaimer of opinion, auditor responsibility section, what should be there? 705 gives explanation for that. When you are giving adverse opinion, qualified or unqualified, what should be the content of auditor responsibility section in the audit report? These are the contents. So auditor responsibility is broadly divided into three categories: primary responsibility, additional responsibilities under SA, communication responsibilities. Communication responsibilities means what? In 260 standard we are going to discuss in depth about this. We are going to discuss 260 standard. You know, we have a chapter called audit evidence, all that gap chapter is there, second chapter. Inside that we are going to discuss 260 standard. There I will talk about communication responsibilities. Then what are various responsibilities of auditor? His responsibilities to obtain reasonable assurance whether financial statements are free from material misstatements or not. Yes or no? Reasonable assurance and issue audit report. Reasonable is a high level of assurance but not a guarantee. Mistakes may arise from fraud or error and are material if they can influence the user's decision. Additional responsibilities: auditor must exercise judgment, must maintain skepticism throughout the audit. Your responsibility is to identify and assess the risk, respond to the risk, get an evidence, get an understanding of control, accounting policy, going concern, evaluate presentation structure and disclosures. Presentation structure, disclosures, fair presentation framework, that time you should do that. The same thing is what given in 700 also, right? The same. Look, whatever is there in audit report only there in your ICA book, man. You are studying theoretically. This is how it will be asked in exam. Now, you know, you have not seen this question. What if auditor is giving disclaimer of opinion? If a disclaimer of opinion is given, how auditor responsibility section will be? In our book, it is given clearly in 705. In 705, you should read the subject like this. You see, I will show you. Suppose no, we are giving disclaimer of opinion, right? If we are giving disclaimer of opinion, you see here, what are auditor responsibilities in case of disclaimer of opinion? Content, this is nothing but content of auditor responsibility section in case of disclaimer. What is the content? When disclaiming opinion, the auditor shall amend auditor's responsibility section to include only the following points: a statement that auditor is responsible to conduct audit as per standards and issue audit report, and a statement that because of basis for disclaimer auditor could not obtain evidence, and a statement about independence and ethical requirements. Remember, key audit matter section shall not be included when a disclaimer of opinion is given. Sir, what is key audit matter? We will discuss that later. So when you are giving a disclaimer of opinion, auditor responsibility section will not be so big. Primary responsibility, additional responsibility, communication responsibility, all that don't need to communicate. Simply you just have to tell. You might have seen this point. I don't know how many of you have understood this when you really studied. When you originally studied, I don't know how many of you have understood this. That's why you should study, learn practically, not theoretically. Getting it? Enough. Just a minute. That's it. I'm just looking at it. Yes. Next. So Typically, right now, opinions discussion is almost done. Just one more point is there. Now, sir, okay, I understood. When we are giving unqualified opinion, simple opinion heading, basis for opinion will be there. We understood. When you are giving qualified opinion, side heading qualified, and here basis for qualified, opinion section, in our opinion, to the best of our information, except for the effect of the matter described in basis for qualified opinion section. Whereas adverse, because of significance of the matter described in basis for adverse opinion section. Whereas disclaimer, straight away our wordings of opinion, we do not express opinion because of significance of matter. Now coming to basis for disclaimer opinion section. Basis for basis for opinion. Generally basis for opinion will, in case of unqualified opinion, single para will be there. We conduct audit as per standards. Our responsibilities are like that. We are ethical. We fulfill ethical responsibilities. We obtain sufficient appropriate evidence. Like that, 5 points will be there. What 5 points? We already saw in 700 in the same goat notes. You will see contents of audit report, title, addressee, contents, below that explanation for each and every term, basis for opinion, what points will be there. Those 5 points will not be there when auditor is giving disclaimer of opinion. Basis for disclaimer of opinion will straight away talk about why you are disclaiming. But when you are giving basis for adverse opinion, when you are expressing basis for qualified, or when you are giving an unqualified, basis for adverse opinion will contain those 5 statements also. Further, if at all you are giving a modified opinion because you are unable to obtain sufficient appropriate evidence, then describe the reason for the inability. Describe why, what happened. Now we saw disclaimer of opinion. The auditor could not get investment related, some evidence he could not get. That investment represents 90% of the net assets of the company. Why he could not get that reason and all they showed in the illustration. The same illustration is what there in your book also, man. Please kindly open the ICA book and then see. You are studying. If at all your book is not having any of these points, that means the book which you are following is completely fake. Ignore that. Don't expect a simple straight question in audit. That is the reason why many students are failing in audit. Realize now, this is the standard at which they test. For your information, this question is there, right now I'm discussing. By the way, in case of disclaimer of opinion, what auditor shall not include? Auditor shall not include. Where he shall not include? In basis for modified opinion section. The auditor shall not include in basis for modified opinion section. Nothing but disclaimer of opinion means basis for disclaimer of opinion section is there, right? You should not talk about the 5 statements. Like what are they? A reference to auditor responsibility section, a statement whether evidence is obtained. Not only these 2. Actually in the ICA book they only said these 2 points, but actually 5 statements you should not include. What matters you should not include? I will show you. Wait. Just a minute. You see here, when auditor is giving, generally basis for opinion section will have these 5 points. What are the 5 points basis for opinion will have? State that you conducted audit as per standards. Refer to section that contains auditor responsibilities. State that auditor is independent and complied with ethical requirements. State that auditor has obtained sufficient appropriate evidence. All these statements you must include in basis for opinion section. When you will give all these 5 points or 4 points, unqualified opinion, qualified opinion, adverse opinion, in all these cases, basis for opinion, basis for qualified opinion, basis for adverse, in all these cases these 4 statements you can include happily. But when you are giving disclaimer of opinion, basis for disclaimer of opinion, basis for disclaimer of opinion will be, in case of basis for disclaimer, you should not include these 4 statements. You know what? This question was asked in Jan 25 of CA Inter. This question was asked in CA final in the past 3 years itself. When auditor is giving disclaimer, basis for disclaimer of opinion shall not contain certain statements. What are they? 4 or 5 marks question. Or they may straight away ask you a 4 marks question. What should be the points auditor has to mention in basis for opinion? A straight question can come. So don't take it granted. Getting it? So understand what you're reading, comprehend what you're reading, learn contextually. That's it. So with this, opinion discussion is predominantly over. Now let's once go back to 705 and finish 705 and come back. Now 705, where under what circumstances I will modify. Just now even in 700 I told, in when I will modify, financial statements are not free from MMS, or you are unable to obtain sufficient appropriate evidence to conclude that financials are free from MMS. In these two circumstances I will give modified opinion. Now types of modified opinion we already covered. Definitions: auditor disclaims opinion in a rare case. Disclaimer is not a routine case, it's a very rare case involving multiple uncertainties. Uncertainties prevent the auditor from forming an opinion. That is when auditor will give a disclaimer. Next, remember, ultimately, sir, which type of opinion, which type of modified opinion I should give ultimately? In exam, they will ask you this question: which type of modified, suppose you decided to give modified opinion, which type of modified opinion? Table you saw, material misstatement like this. But in exam, if a theory question comes, you can't write like this. No, how you should write? This one. Which type of modified opinion auditor shall give? It depends upon what is the nature of the matter. Why you want to modify? Two reasons. Any two reasons. One reason is what? Sir, evidence is there, sir. Mistake is found, sir. That is one reason. Another reason is what? Evidence is not there and it is a material item. So possible mistake is possibility is there. So what is the nature of the matter? Two items. What is the nature of the matter? Whether financials are materially misstated, is it the reason you want to modify? Or you are unable to obtain evidence, that is the reason you want to modify? Check out. Okay. Then once you decide the reason, first primary reason, you found a material mistake or you are unable to get evidence. Okay, primary reason you decided. What is its pervasiveness? What is the pervasiveness of the effect of the matter or possible effect of the matter on the financials? Remember, when do I say simply the word effect? When evidence is available. Possible effect word when I will use when evidence is not available. Able to understand? So which type of modified opinion? Sir, nature of matter, no, material mistake is there, sir, but not pervasive, sir. Effect, qualified opinion. Sir, nature of matter, material mistake is there, sir, pervasive, sir. Adverse opinion. Sir, nature of the matter, no, not mistake, sir. I did not get evidence, sir, and it is a material but not pervasive, sir. Then qualified. Material and pervasive, then disclaimer. That is what this entire, this matter, whatever this matter is expressed in the form of a diagram here to make you clearly understand. Then finally in 705 there is one more requirement. Suppose, if management imposes limitation, you are unable to get, you're unable to obtain evidence. Why you are unable to obtain evidence? No, management imposed limitation. Very simple. Management is not permitting you, they're not cooperating you. If that is the case, if after accepting the audit, you might have studied in CA Inter 210 terms of engagement, before accepting the audit, if at all management imposes limitation, you will not do the audit, you will not at all accept the audit. What if you accepted the audit and now management is imposing limitation? In such a case, the auditor shall request the management, please give me, cooperate me, I will do the audit. You request them. Management is refusing. They are not removing limitation, they are still restricting you, they are not giving you information which you are asking for. Communicate to higher level management, those charged with governance. Determine alternative procedures can be performed. See whether alternatively can you obtain evidence or not. Sir, third party I want to talk, sir. Company is not permitting me at all. Third party is not, I want to talk with third party. Sir, our inventory is lying in some godown, sir. Company godown is at a remote locality. We are unable to go there. Management is not telling me how to go there. They're restricting me to go there. Do one thing. See whether can you get evidence regarding inventory there in the godown which is at remote location, right? Can you get that evidence through CCTV camera access or some other way? Just try that. For example, you are unable to obtain sufficient appropriate evidence even through alternative process. Sir, alternative also not there. Management is restricting. Alternatively also I am not getting evidence. Ultimately I did not get evidence, sir. What I should do? Okay, you did not get evidence, right? Do one thing. What is its possible effect? What is its possible effect of undetected misstatement? Sir, it is material, sir, but not pervasive. Then do one thing. Proceed audit. Give a qualified opinion. Say that they did give evidence. In basis for qualified opinion section, mention that limitation. Sir, it is material and pervasive, sir. They are not at all letting me verify even a single document. Then how can I give opinion? If at all you are unable to give opinion at all, you are unable to do audit at all, directly resign, withdraw from audit where possible. Resign. Sir, resignation not possible, sir. I am a listed company auditor. Resignation is not possible. then disclaim the opinion. If resignation is not possible, give a disclaimer of opinion. Simple. You must give audit report. You didn't do audit. Yes. You don't have opinion. I don't have opinion. Then do one thing. Give disclaimer of opinion. Over. Now you see, sir, like you said, no, withdrawal is not possible. Where, sir? Resignation, where it is not possible? For example, just 1 minute. For example, yeah. For example, in a listed company, no, as per LODR regulations, no, if I want to resign within 45 days from end of a quarter, suppose a quarter started, quarter 1, April 1st to June 30, quarter over, then I want to resign. After completion of the quarter, you want to resign. From the end of the quarter, within 45 days, you want to resign. You must give a review report or audit report for that quarter and then resign. You can't resign just like that on any day you want. Sir, I want to resign, sir. Before 30 June, I want to resign. Happily go and resign. Happily go and resign. No problem. But 30th June crossed. Quarter 1 completed. Now you want to resign, which comes within 45 days from the end of June 30. Then give review report. Suppose if at all you want to resign after 45 days from the end of the quarter, you must issue audit or review report, either audit report or review report for that quarter as well as the next quarter. And you know one more thing, an auditor who has done 3 quarterly review reports, then auditor shall issue full audit report before resignation. I think those of you who are already watching my EVO fast track class or regular class, here I have discussed some more in-depth point. But from basically this is enough. From revision point of view, this is sufficient. But remember, whatever points we discussed in our fast track class, please you stick to that explanation. This is enough from revision students point of view. Next, and further, when you're resigning as an auditor from a unlisted company, especially for unlisted company, when you're resigning, you should give a resignation letter to the company management, right? In the resignation letter, you should clearly mention professional preoccupation. You cannot mention that. You cannot mention professional preoccupation. What does it mean? I gave a resignation letter to the company saying, sorry sir, I accepted accidentally. I actually have so many other works, so professional, I'm very occupied. That is the reason I'm resigning. That is not a valid reason. Every one of you might know SQC. In that, one of the element of quality control, acceptance and continuation of client relationship. Inside, one of the point is you should consider capability, time, availability of resource. Only then you should accept the audit. If you accept an audit without checking your preoccupied commitments, that's a guilty of professional misconduct. It's an SQC violation. Under professional ethics, you can be treated as guilty. Clause number 9, part number 1, schedule number 2. In that, you failed to comply with gap SQC, you failed to comply, they can punish you. So when you're accepting audit itself, you should check whether you have sufficient time or not. After accepting audit, when you're resigning, no, you should clearly tell the management why you are resigning clearly. Don't escape by saying I'm already having various other works, that's why I'm resigning. So ICAI has given an announcement where an auditor resigning, especially from unlisted company, you must provide clear reason why you are resigning. Sir, for listed company, no need to give like this. For listed company, can I mention this reason? It's not about listed company. For listed companies, SEBI guidelines have already given resignation related formalities. That's why ICAI is speaking about unlisted company. That's it. ICAI is talking about unlisted company only because listed company already SEBI gave guidelines. That's the reason. So many students misinterpret here. For listed company, this reason can be mentioned. That's wrong. For listed company, how to resign, SEBI has already given guidelines that you will follow. For unlisted company, when you're resigning, when you're giving reason to the company or ICAI, you cannot mention professional preoccupation as a reason. MCQ, it can be asked. This is also MCQ, it can be asked. Finally, before withdrawal, you want to resign, resignation is permitted, you want to resign, you resign, no problem. But some audit you might have done, a little bit of verification you might have done, some mistakes you would have found out. No, if at all you found any mistakes, no, just to communicate management the mistakes alone and then resign. Before withdrawing, the auditor shall communicate to the top management any material mistakes identified during the audit that would have caused you to give a modified opinion. Some mistakes you would have found, no, which because of that also you decided to give modified opinion, right? That will impact your opinion, right? Those mistakes communicate to the top management before you resign. That's it. Then finally, I think entire 705 is over. And here there is one important point: other considerations related to adverse opinion disclaimer in the recent number 24 exam related to this 805 question they asked. In SA 805 they have asked one question. When I'm discussing 805, I will tell you very simple. What is this, sir? For example, no, I'm giving adverse or disclaimer of opinion on the financials. Auditor is expressing adverse or disclaimer of opinion on financials. Now, in that audit report, there are some restrictions. What restrictions? The audit report shall not include unmodified opinion on a single financial statement or specific element, all that. What does it mean? Let me keep it pending and I will discuss it. Emphasis of matter paragraph 706. Then we will continue discussion on this. Okay. Reason for restriction. See, very simple. You are giving adverse opinion on financials. Adverse means what? They are not at all true and fair. Disclaimer means what? I don't have opinion. In the same audit report, you should not talk about any single financial statement or specific element or account by giving unmodified opinion. In the same audit report, where you said everything is wrong, where you said you don't have an opinion at all, adverse or disclaimer you gave in the same audit report regarding one item of the financial, you cannot give unmodified opinion. Indirectly, what does it mean? You know, emphasis of matter paragraph you cannot use when the auditor is giving adverse opinion or disclaimer of opinion. That's what it indirectly means. Sir, how emphasis, sir? If you remember, emphasis of matter paragraph means what? It's a paragraph in the audit report where I highlight matter presented or disclosed in financials. Rightly presented, rightly. Appropriately presented, appropriately. You just see emphasis of matter paragraph definition. What is an emphasis of matter paragraph? Emphasis of, I'm discussing right now 706 guys. 706 EOMP alone we will discuss and we'll wind up this session. Then other matter paragraph we'll discuss in the next session. Okay. Emphasis of matter paragraph. Emphasis of matter paragraph is a paragraph in the audit report. Okay, it's a para in audit report. Oh, okay, what is it? It is referring to a matter. Okay, what matter? Which is appropriately presented or disclosed in the financial statements. Oh, in the financials, some matter is presented or disclosed. Okay, that we are referring in audit report. Like, why, sir? Okay, okay, fine. Let me complete. That in auditor's judgment is important for fundamental understanding of the users. From auditor point of view, in the financials, some point is there which is very important for users. I am highlighting that point and that para is called as emphasis. Very simple. For example, no, I will show you Air India related audit report. Okay, for your information, I'll just show you. So Air India related, you know, annual report. This is very old annual report, 2021 related one. So 2021. 2020-2021 related. You see this annual report, you know, you just see here 1000 pages annual report is 1000 pages annual report. Who will read, guys? And inside that balance sheet, P&L, financial statements, how many pages? I'll show you. You see, you know, balance sheet starts at this 112 page and balance sheet will end almost at 200th page, almost 100 pages notes to accounts. Balance sheet, P&L, cash flow notes, everything put together almost 100 pages. Now tell me, as an auditor, should you read the entire balance sheet, P&L, cash flow notes, or you also read on a sample basis? Array, you are signing balance sheet, P&L, man. You must read 100% of the notes to account, balance sheet, P&L. You can't have, you know, a sample basis. You can't read it on a sample basis. You have to read 100%. Okay, sir, I will read it. Now, when you're reading entire this notes, no, definitely you would have felt some important point you would have found out, right? Yes, sir. Like, for example, I will show you independent audit report is there, 57th page it is there. Just a minute. You see, this is the audit report of Air India. Remember, title same, just like our book title, to the members of the company, report on financial statements, qualified opinion. The auditor gave qualified. Same para, we have audited financial statements of the company, yes or no, in our opinion, to the best of our information. You see here, except for effect of the matter described in basis for qualified opinion section of our report, yes or no, the aforesaid financial statements are giving true and fair view. Then again, you see, Just a minute. Yeah, then basis for qualified opinion. Air India auditors gave a qualified opinion. Basis for qualified opinion, they're telling about various reasons why they gave a qualified opinion. Then again, we conducted our audit as per standards on auditing. All the 5 statements were there, you see. Then material uncertainty related to going concern. I'll come back to it later, man. Emphasis of matter. What is emphasis of matter? We draw attention to note number 29, which is dealing with some COVID related issue. Note number 26 relating to some penal charges. Note number 49 deferred tax asset. Note number 46 so and so, so and so, so and so. And at the end of the para, at the end of the emphasis of matter, last line, our opinion is not modified. What is he saying? Emphasis of matter para side heading he kept. Okay, auditor put a side heading emphasis of matter in the audit report. Okay, what is he doing? We draw attention to. Okay, note number 24, note number 29, note number 26, note number 46 in the financials. Oh, in financials, no, there some points were there. He is drawing attention. So I'm reading audit report, this audit report. Immediately what I got to know, oh, I need to go open and those note points and see. Why I need to see? Is there anything wrong? No, no, no. Our opinion is not modified. Auditor is clearly saying nothing is wrong inside that. Then why are you highlighting? They are important. They are fundamental for understanding of financial statements. That's why you need to read them. Oh, emphasis of matter paragraph. Emphasis, highlight. See what am I doing right now? Highlight. Yes or no? Emphasis of matter paragraph in the audit report is a para where auditor can highlight some information presented or disclosed in financial statements. Some information is presented or disclosed in financials that auditor can highlight. When auditor can highlight, you see, only when the matter is appropriately presented or disclosed. What does it mean? You know, that matter is rightly presented. For example, you see usage of emphasis of matter para. Emphasis of matter para can be included only for a particular matter. Note number 26 you want to highlight, then note number 26 should not have a modified opinion. Means what? On note number 26 you should not give any modified opinion. That should be true and fair. That is appropriately presented. That is appropriately disclosed. Which means in financial statements, if any note point is rightly presented or rightly disclosed, which is free from MMS, you already have evidence for that. That only you can highlight under emphasis of matter para. And that matter is not decided as a key audit matter. It is also not decided as a key audit matter. So a financial statements, balance sheet, P&L, cash flow notes, you know, it contains some matter which is important according to you to the users. That's why you see once again the definition. Emphasis of matter paragraph is a para, yes or no, which is appropriately presented or disclosed in the financials in auditor's judgment, is important for fundamental understanding of the users of the financials. From auditor point of view, it is fundamental for users understanding. Now what are the examples of emphasis of matter? What are all I can highlight? You can highlight about uncertainty. Air India highlighted about COVID. You can highlight about catastrophe. You can highlight about subsequent event. You can highlight about early application of accounting standards. For example, for my company, Ind AS does not apply, or I'm preparing balance sheet P&L as per some other format, and I mentioned that details in notes to account. Highlight that. This is what we do in 800 standard also. You know 800 standard amended, right? New 800 standard. What 800 standard says, you know, put emphasis of matter paragraph in audit report. Draw attention to basis for accounting. Draw attention to basis for accounting. Fine. We will discuss that in 800 series discussion. Immediately after this audit report chapter, we will be beginning 800 series. There we will discuss. Next. How should you present? In exam they will ask you this question: what is emphasis of matter? How to use emphasis of matter para? They will ask you question like this. What you will write? This answer you should write. How do you present? Just a minute. What is the manner of presentation? What is the manner of presentation? Include the para in a separate section of the auditor's report. See, Air India, no, they did the same, right? In a separate. What Air India did, you see here? How Air India did this? Just a minute. Yeah, here it is there. How Air India did this? You see, in audit report, separate side heading is given. Yes or no? Okay, include the matter in a separate section of the audit report. Okay, which contains the word emphasis of matter. Express the matter being emphasized and give reference. Air India, are they giving reference? Yes, sir. State that your opinion is not modified in respect of the matter. At the end, no, Air India auditors are saying, no, they are saying that our opinion is not modified in respect of the above matter. Accordingly, Emphasis of matter paragraph is not a substitute for modified opinion, not a substitute for disclosures in the financials, not a substitute for 570 material uncertainty reporting. They will tell you for what scenarios emphasis cannot be used, circumstances where emphasis cannot be used, where emphasis cannot be used, if at all modified opinion is required on that matter, or it is to be highlighted under material uncertainty related to going concern, or a disclosure is required in financials which a company did not disclose. In all these cases, emphasis cannot be used. That's it. Emphasis of matter paragraph discussion is completed. So emphasis is used to draw attention to the matter which is presented or disclosed in financials, which is fundamental to users understanding. It is fundamental to users. Who feel it is fundamental to users? Auditor felt that. In auditor's judgment, it is fundamental to users understanding of the financial statements. That is emphasis of matter para. That's it. Are you clear? Emphasis of matter. Then we have, so then finally again coming back to SA 705 once again, whenever you decided to give a modified opinion, you cannot straight away give the final audit report, sign and give it to the management. No, never. The auditor shall communicate with the top management, those charged with governance, circumstances leading to modification. Why you are modifying and wordings of the modification. How are you modifying? Nothing but if you are giving modified opinion, you should always tell management that you are going to modify the opinion, why you are modifying the opinion, circumstances, all that, and how is your wordings. If management agree that, then only go further modification. Further, a similar requirement is there in emphasis also. If emphasis of matter paragraph is expected to be included, auditor shall communicate with the top management, including wordings of the para. Simple. You want to give unmodified opinion as per unmodified report format in 700, no need to communicate with management, directly issue it. But you want to modify the report by including emphasis of matter or by modifying opinion, you must communicate priorly to those charged with the governance. I will discuss more about modifying audit report, all that in 260 standard. I don't know how many of you remember 260. One of the significant matter is what? Significant matters to be communicated with the management, right? Those charged with governance. You recollected? Are you able to recollect? One of the significant matter, circumstances that affecting circumstances that leads to modification of report issued by auditor. That is one of the matter which is a significant matter to be communicated with those charged with governance. I know you are unable to sync because you have never understood the auditing subject thoroughly properly. Except those who are attending my fast track class or regular class or previous who watched my marathon, many students I can very confidently tell they don't really understand audit subject. They see the audit subject in a different way. Believe me guys, you are going to witness true subject and also getting a command on the entire learning. Believe me, I will make you, by the end of this entire marathon sessions of some 18-20 hours, I will make you super strong in audit conceptually. That's it. Just surrender to this. Okay, that's it. Okay, so let me wind up this particular session and we'll continue in the next session. Other matter paragraph, key audit matter. Then what? In this particular chapter, we are going to discuss 710, 720, 600, 610, 620, 299, 570. So much discussion is there. In fact, just a minute. You see, there are so many contents of audit report. There are so many contents of audit report. Right now, what we completed, title, addressee, auditor's opinion, how basis for opinion para works, that also we completed. Auditor responsibility section we completed. Emphasis of matter paragraph we completed. So we are now learning how to draft audit report, technically speaking. Only these elements we completed. Only these elements we completed. There are, what is 570? What is 701? Other matter para. Remember, other matter para is different from other information para. Okay, so report on other legal regulatory requirement, signature of auditor, place of signature, date of audit report, you did so much is there. Another 1.5 to 2 hours maximum. This topic along with 600 series will be over. Full 700 series, 600 series, 570, 299. So total approximately 700 series 6 standards, 600 series 3, 5, 570, total 11 standards we are completing in this chapter, where the weightage of this 11 chapters and caro all that put together, the weightage of this particular chapter is 50 into 20 marks minimum, where you are getting full clarity, decent amount of clarity and command within just 3 to 4 hours of discussion. That's it. Okay, yes, we'll continue other matter paragraph in the coming session. That's it. Yeah, let's begin the discussion. In the previous session, we have already completed emphasis of matter paragraph, and just 1 minute, uh, relating to other matter paragraph we need to discuss now. So yeah, let's proceed further. So relating to other matter paragraph we need to discuss now. The emphasis is already completed. In SA 705, there is one point which is covered in SA 705. Suppose if auditor has given adverse opinion or disclaimer of opinion, if auditor has given adverse or disclaimer in the same audit report related to financial statements, you should not talk unmodified opinion in the same audit report. Means indirectly, emphasis of matter paragraph shall not be used in the audit report where we give adverse opinion or disclaimer. More in depth on this we will cover discussion in 805. There you can understand, even in the number 24 exam, this particular point is tested. Okay, yes. So now let's begin with the let's continue with the other matter paragraph discussion. So what is an other matter paragraph? You see here the other matter paragraph is there, already emphasis will be completed. What is other matter paragraph? It's a paragraph in the audit report, that is also a para. It is referring to some matter other than not presented or disclosed in financials. For example, if a matter is referring to something which is presented or disclosed, if I want to talk about a matter which is presented in financial statements, if I want to talk about that in audit report, emphasis of matter paragraph is there. But I want to talk about something which is not presented or disclosed in financials. I want to talk about some matter which is not presented or disclosed. Like, what is that matter? That is something relevant to users' understanding of. Users need to understand about audit, auditor's responsibility, auditor's report. If I want to make the users understand about audit, auditor responsibility, auditor report, not about financial statements, fundamental issues. If at all I want to make the users understand about the financial statements, which is fundamental to them for better understanding, that's emphasis. If I want to make the user understand about the audit, auditor's responsibility, auditor's report, if I want to make them understand, then other matter paragraph. Very simple. Best example I'll give you, one of the finest example I'll give you. For example, just a minute. So for example, State Bank of India, everybody knows State Bank of India Limited. This is a banking company, right? Now State Bank of India Limited, it will prepare two sets of financial statements actually. Consolidated financial statements, standalone financial statements. Standalone financial statements means head office of State Bank of India, and how many branches? Approximately 25,000 branches. Approximately 25,000 branches of State Bank of India and head office put together, they will merge it so that standalone financials of State Bank of India will be prepared. Listen to this example. We are going to discuss about SA 600 also right now. 299 we are going to discuss. 706 we are going to discuss. Then consolidated financials. What is consolidated financials? Standalone financials of holding company plus standalone financials of subsidiary companies and associate companies and joint ventures. Those financial statements are called as what? Consolidated financial statements. Standalone financials means what? Head office plus all the 25,000 branches. And if you see this composition of this 25,000 branches, only 6,000 branches are being audited. 19,000 branches were unaudited. 19,000 branches were not audited. Again, more importantly, for SBI Limited, the main auditor is there, right? I hope you might have already heard in 600 principal auditor, other auditor. I hope you know 600 standard using the work of other auditor. Who is a principal auditor? Who is other auditor? What do you mean by that? Just look at. Now, principal auditor of State Bank of India, actually 12 joint auditors were appointed. State Bank of India is having principal auditor where 12 joint auditors were appointed. Remember, 12 joint auditors. These are all principal auditors of State Bank of India. Let me call them as Mr. P or CAP. He's a principal auditor. Let's call this entire 12 joint auditors as P, principal auditors. Now, these principal auditors has to give audit report separately on consolidated financials, audit report separately on standalone financial statements. Now, but the consolidated financials, they are giving audit report, right? They only audited holding company, man. They didn't audit subsidiary companies. Subsidiary companies were audited by, yes, subsidiary company auditors. Let us call them as, yes. Same way, principal auditor, no, they will audit only 20 branches. Top 20 branches of State Bank of India will only be audited by principal auditor. Rest 6,000 branches approximately were audited by Mr. B. B refers to branch auditor. Now, to the public, whose audit report is given, these 12 joint auditors put together conducted an audit, right? That audit report is given to public. For branch auditors, no. 6,000 branch auditors gave audit report, right? That will not be given to public. 6,000 branch audits report is not given to public. Even subsidiary company auditors reports and all will not be there along with holding company. They will be there in the respective company, MCA website you go, you can download, or maybe respective company. For example, SBI Life Insurance is there, SBI Mutual Funds is there. They are subsidiary companies of State Bank of India. They gave separate annual report, audit report, all that. There it will be available. Along with consolidated financials, what will be given? Only audit report given by the principal auditor. Now tell me, I am an auditor. What auditor is doing here? Principal auditor giving an audit report on consolidated financial statements. His audit report is given. Same way, principal audit report is giving an audit report on standalone financials. This is what will go to public. And the moment when the public see this audit report, what they will think? Oh my God, principal auditor has conducted so many companies audit. Principal auditor has conducted the entire bank audit. They will think like that. But actually, in reality, who has conducted branch audits? Branch auditors. Same way, in consolidated financials, subsidiary companies is also included, right? Who audited the subsidiary companies? Subsidiary company auditors, yes. Public don't know that. Suppose tomorrow if a fraud, some fraud was detected in State Bank, everybody will start questioning P only, principal audits only. But actually, the fraud happened in a subsidiary company where principal auditor has not audited, and the fraud happened in branches which is not audited by principal but audited by branch auditors. Now, division of responsibility has to be stated. Remember, subsidiary company auditor, holding company auditor, both are two different auditors for two different companies. Both are statutory auditors, correct or not? Yes or no? Sir, how did principal auditor gave an opinion on consolidated financials? How come he gave? Because subsidiary companies he didn't audit. No, yes, he didn't audit. He gave an opinion based on subsidiary companies auditors report. Subsidiary companies auditors gave unqualified opinion, so he felt since subsidiary companies gave unqualified opinion, he has an unqualified opinion on holding company. Subsidiary company auditors also gave an unqualified, he gave totally unqualified opinion. Same way, on the standalone financials, all the branch auditors gave unqualified opinion. I have an unqualified opinion on top 20 branches, head office audit and all. I am only doing. I have unqualified opinion. They are also giving unqualified. I am giving unqualified opinion. But public believes that, public thinks that since I only gave the opinion, I am the one who is signing the audit report. They might think that I only have complete responsibility. I only conducted entire audit. I should tell the public that, dear public, please remember, yes, you are reading my opinion only. I only gave audit report, but my opinion on 6,000 branches is based on their auditor's report. My opinion on subsidiary companies, my opinion on consolidated financial statements is based upon not only my audit, but also based upon subsidiary companies auditor's report. So please make a note of this. Like this, I want to tell to the public where I can alert the public regarding this. Other matter paragraph. That's it. That is how other matter paragraph is used. You see, other matter paragraph, we want to explain the users. We want to explain the user something relevant to the users. We want to explain, just a minute. We want to explain to the users something relevant to the user's understanding of auditor responsibilities. I want to specifically tell that I am not responsible for certain things. So through other matter paragraph, we will tell that. Now look at, not only auditor responsibility, I want to tell them about something about audit and auditor's report. I think you might have aware of joint audit concept, and some of you would have seen this point. Joint auditors will give common report, correct? All joint auditors come into a common conclusion and give a common report, remember? And Suppose if one of the joint auditor want to give a separate audit report, like for example, State Bank of India has 12 auditors, right? One auditor want to give adverse opinion on the State Bank of India. Maybe according to him, there are severe misstatements, pervasive level misstatements according to him. So he decided to give adverse opinion. He want to give adverse opinion. And remaining 11 auditors want to give either qualified or unqualified. This fellow alone want to give adverse opinion. Tell me, is he bound by majority remaining 11? Should he follow must and should 11? No. You might have seen a joint auditor is not bound by majority. For example, in 299, I think here itself somewhere we have already given 299 standard also we mentioned. Just a minute, I'll show you. 299, you see here, reporting by branch, reporting by joint auditors. We all have seen this. A joint auditor is not bound by majority. If there is a difference of opinion, disagreeing joint auditor can issue separate report. In that case, each joint auditor, look at this, should refer each joint auditor's report should refer to the other joint auditor's report. So joint auditor's report should talk about other. Very simple. Now here 11 auditors put together giving one audit report, and one joint auditor is giving one audit report. Two audit reports are going to the public. Immediately public will have confusion. Which audit report to believe? You also might have, sir, which audit report then public has to take, sir? Very simple. Remember, one joint auditor is giving adverse opinion, right? He is giving adverse opinion. In basis for adverse opinion, he will tell his own reasons why he is giving adverse. Remaining 11 joint auditors, they are giving unqualified opinion, and they have some reasons of their own. Public will see the reason which you gave in basis for opinion para, and they follow accordingly. Whichever is convincing for them, they will follow. You don't have to worry about what public they have to believe. You are giving reasons. That's why you are giving. Why are you giving basis for qualified opinion, basis for adverse opinion, basis for disclaimer? Why are you giving reasons? So that you may feel material and pervasive. Public may not feel. Somebody in the public, as some stock market aggressive trader, may not feel that it is very material and pervasive. So for that reason, we have to give basis for opinion also. You might feel material misstatement or pervasive, but public or somebody in the public may not feel the same exactly. So for that reason we should give. Now joint auditors, each joint audit report should refer to other joint auditor. What does it mean? 11 joint auditors together give one report, right? They should tell, look shareholders, there is one more auditor's report is there, please refer to that. Same way, that one auditor who gave separate report, right, he should also he should also tell to the shareholders, see shareholders, you are seeing my report, there is another report called 11 joint auditors together gave one report, please refer to that. Where they will refer? Other matter para. Where they will refer? Other matter para. So you see, in other matter para, there is one more term is there in other matter paragraph. What is the term in other matter paragraph? Just a minute. So in other matter paragraph, you need to talk about auditor responsibility, you need to talk about auditor's report. That's what the auditor's report exactly mean. Right now, for example, I will show you what a practical document. I will show you State Bank of India report. So this is a State Bank of India report, annual report. Okay, this is State Bank of India annual report, 23-24 related. 24-25 report is not yet come. 24-25 financial year report will come in May month, May 2025. By then your exams of May will also be over. Okay, fine. Anyhow, look at this. This is a State Bank of India annual report. So in this, I want to directly go to standalone financial statements. You see, this is standalone financial statements of State Bank of India. Just a minute. Let me go to the consolidated financials. So above that, this is consolidated balance sheet. Above this balance sheet, there is an audit report on standalone financials. Nothing. Standalone financials, first balance sheet, P&L notes again. Then audit report on standalone financials is given. This is audit report of State Bank of India. You see, this is the auditor's report on State Bank of India. Standalone financial statement. See how lengthy the audit report. You see here, report on audit of standalone financial statements. This is the State Bank of India audit report on standalone financial statements. Independent auditor's report. Yes or no? Now again you see here. Again you see straight away which side heading? Opinion, which means State Bank of India auditor gave an unqualified opinion. And if you see what they have audited, we have audited. By the way, who have audited? I will show you who have audited also. You see this audit report is signed by, so lengthy this audit report is, you see this audit report is signed by how many auditors? Array, UD number is there. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I told right, 12 joint auditors were there. 12 UD numbers were given. 12 joint auditors together gave only one audit report. Just for the sake of example, in joint audit, I took 11 and 1. It's actually single audit report only they gave. But one of the auditor, if at all he wants to give a different audit report, he can give that also. That option is also there. Now you see, you see other matter paragraph. Right now we are actually discussing about what? Other matter paragraph. What are they saying in other matter paragraph? You see, see, actually this audit report is given by 12 joint auditors, means principal auditor. Principal auditor is telling in other matter paragraph. What is he telling? We did not audit. See the wordings. We did not audit financial statements of 6,000 branches. Okay. Whose total assets? These branches know the assets values are 23 lakh crore. And these branches revenue is 1.7 lakh crore. Okay. The financial statements of these branches have been audited by branch auditors, whose reports have been furnished to us, and our opinion relating to the amounts included in respect of these branches. With respect to these branches, amounts are there no in the balance sheet and P&L is purely based on the branch auditor's report. Indirectly, what are we telling? Look, you are reading my audit report on the standalone financials, but standalone financials has 23 lakh crore worth of assets, 1.7 lakh crore worth of revenue. That is not audited by me. That is audited by branch auditor. Why are you telling this? You are telling the public that you are not responsible for this. If at all tomorrow any fraud happened in these 6,000 branches, you are not answerable. They are accountable. That's what you are telling. Division of responsibility. Now, in fact, in the recent in 2024 August, NFRA has discovered one fraud with respect to a coffee day, where KPMG firm is the auditor, where the firm was levied 10 crore penalty. The engagement partner was levied approximately 50 lakh penalty. And SQC standard, you might have seen, engagement quality control reviewer, he was levied 25 lakhs penalty. And what the NFRA told, that firm, NFRA has said that, NFRA in the order mentioned that BSR and Co does not comply with the 600 standard requirement. Now let us understand beauty of 600 standard. By the way, before I further go into it, so other matter paragraph, I hope you understood. You see, again, opinion section, you see, we have audited, same introduction. You see again, in our opinion, to the best of our information, the financial statements are showing true and fair. Array, same para, what we have seen. And here you see, central offices, 17 head offices, top 20 branches were audited by us. Whereas 5,999 Indian branches, 35 foreign branches, totally 6,034 branches were audited by branch auditors. Indirectly, we are telling to the public that we are not responsible for branches which is audited by branch auditor. So that's the important observation. So other matter paragraph is mainly used to describe auditor's division of responsibilities. Now, let us now first understand SA 299. First, let's understand SA 299. Then immediately we will go for, SA 600. Now, State Bank of India is conducted. State Bank of India audit is being conducted by State Bank of India audit is being conducted by joint auditors, 12 joint auditors. What is joint audit? We all know. Appointing 2 or more individuals or 2 or more firms or 2 or more, a combination of individual and firm, for conducting audit of the financials. We call it as what? Joint audit. Generally, it is popular in larger entities. Under 139 subsection 3, subsection 2, subsection 3, subsection 4, rotation of auditors provision is there, right? There, one of the explanation is there. Members may take a decision that audit will be conducted by more than one auditor. Sometimes you might get an MCQ. Under Companies Act, joint audit concept is silent. Is it true? Absolutely not. Actually, joint audit is not discussed anywhere in the section directly, but in 139 subsection 3, as a footnote in the explanation in one of the explanation or proviso, shareholders were given a power to appoint auditor the shareholders were given a power to appoint more than one auditor. Indirectly, through this section, joint audit provision is discussed in Companies Act. Now, what is the responsibility of joint auditor? Okay, sir, joint auditors were appointed. What's the responsibility? Very simple. They need to divide the work and then do. When joint auditors were appointed as an auditor, each joint auditor will not do entire work. The joint auditors, 12 joint auditors were there, right? They will divide the work between themselves. How they will divide? They will divide the work. Each work will be divided amongst joint auditor. Accordingly, a joint auditor is responsible only for the work allocated to him. How the work is divided? Based on assets and liabilities, based on income and expenditure, based on geographical identified units, based on period of financial statements. Getting it? Like some joint auditors will be focusing on income, some will be focusing on expenditure, some will be focusing on some business units, some will be focusing on other units, some will be focusing on north area, some will be focusing on south area. Joint auditors will divide the work based on their mutual discussion. Next, There are certain cases where combined responsibility will be there. Many a times this was asked as a 4 marks question. Under what circumstances joint auditors will have combined responsibility? Very simple. Audit work is not divided among joint auditors, and the work is performed collectively. Decisions are taken collectively by joint auditors in common areas. Matters is brought to joint auditors attention. All the auditors got to know some point, and all of them agreed upon that. Then only they are combinedly responsible. And ensuring financials are as per statutory requirement. See, statement of 12 joint auditors are signing on the balance sheet P&L, right? So they need to ensure that balance sheet as per the correct format. Balance sheet is as per 3rd schedule of the Banking Regulation Act, and they are responsible for presentation disclosure as per applicable framework. They need to ensure that accounting standards are followed. And audit report, no, all the joint auditors together giving common audit report, they are responsible to ensure audit report is as per SA 700 705 as per proper auditing standard. And further remember, while deciding nature, timing, extent of procedure, each joint auditor is responsible for determining nature, timing of their assigned area. When the auditors divide the work between themselves, no, each joint auditor can decide their responsibility respectively. They need to plan their own works. Other joint auditor will not help you to plan your work. See, common areas all of you together will plan, but respective individual areas, each joint auditor only has to responsible. He is only responsible for determining nature, timing, extent. Nature, timing, extent means what? Audit planning, nothing but audit procedures, nothing but, okay, for their assigned areas. They must individually assess internal control system, whereas for common areas, joint auditors collectively decide what are the nature of procedures, timing of procedures, extent of procedures for common areas. Okay, so however, remember, even in common areas also, once joint audit is decided, very important point, executing these procedures correctly remain individual responsibility. For example, no, joint auditors decided the work, and common area is there, and they plan the common area, how each joint auditor has to work in the common area part. They decided one of the joint auditor in the common area, he decided to verify so and so. For example, purchases we decided to verify commonly, or for example, take State Bank of India itself. Loans and advances is a common area. Let us assume in loans and advances, credit worthiness of the customer, whether it is correctly checked or not, one joint audit firm took the responsibility. One joint auditor firm took responsibility to assess credit worthiness, whereas another joint auditor, common area, entire loan is a common area. Another joint auditor is responsible for valuation of security. Another joint auditor is responsible regarding disbursement function. Now, my responsibility within the common area I fulfilled. These joint auditors, they didn't fulfill their responsibilities. Now tell me, since it's a common area, am I answerable for their work also? No. So even in a common area, procedures performing is individual responsibility. Remember this point. You have a practical question. In our question bank, I think we have already covered. In the question bank, we already covered. Just now, I will tell you. Wait a minute. So you see here. Yes. In respect of common area, you see here, there are some questions which we have given in our question bank. Test your understanding 5 is there, which is a very good question. In respect of common areas, joint auditors are responsible for joint auditors are responsible for nature, timing, extent of planning, agreed process. The responsibility lies on the concern. In the given case, audit procedure related to operating effectiveness over computer operations, including backup and all, is a common area. However, audit procedures relating to testing controls over batch processes were actually performed by the so-and-so associate, although these were planned jointly. In case any lapses, the respective firm is only responsible. It's a test your understanding question in ICI book. This is there. By the way, 299 standard is actually discussed in the 3rd chapter or 2nd chapter, gap chapter. Okay, it is not covered actually in the audit report, but we kept it as part of audit report topic for the sake of convenience. For example, in this book, you see 299. For example, you see in this book, you see responsibilities of joint auditor. Original it is discussed in which topic? You see, which is there as part of the gap 2nd chapter. In the ICA book, it is given for you in the 2nd chapter. So in the 2nd chapter, I mentioned 299. What I told you, discussed in audit reporting. So in the audit report, we have covered here. Able to understand? Now let's continue. So I hope you understood regarding common area. Common area means it's not that if one joint auditor made a mistake, everybody is held responsible. No, in the common area also, the work will be divided between the joint auditors. Each steps, common areas will be divided into multiple steps. Each step will be performed by one of the joint auditor. By the way, I'm reminding you, if at all you feel fast, you have a speed reduction option. Playback speed you can reduce and you will get more clearly. I am ensuring each and every word is clearly pronounced by me. Okay, it is your turn. I am doing extreme hard work, man. Okay, that's it. You reduce the speed and then listen. You will understand. You will get the point which you have never got the clarity. Getting it? I bet the kind of clarity that you receive in this marathon is next level. Next. So that's it. Further, no. Joint auditors, no, if at all. Just a minute. Joint auditors, no. If joint auditors plan to modify the opinion in the audit report, if at all they want to give a modified opinion, they must inform to top management and reasons. We already saw 705. If at all we want to give a modified opinion, we have to communicate to top management. Similarly, if at all they want to include emphasis of matter para or other matter paragraph, even that also we have to communicate along with wordings. Similar point is already given in 706 also. Yes or no? Then coordination. In exam they will straight away ask you a 4 marks question. Coordination. Common area, they might ask you they may ask you regarding they must straight area. Joint responsibilities, a 4 marks or 5 marks question. And deciding nature, timing, extent of joint procedures by joint auditors, a straight 4 or 5 marks question can be asked. And next, coordination. What is the coordination? Proper coordination is essential. Proper coordination is essential. If any matter is identified which is affecting other joint auditor, immediately you must communicate them before the date of audit report. Important for MCQ. Then entitle. By default, a joint auditor can trust other joint auditor. For example, other joint auditor came and told, yes, my portion is completed, boss. You should not verify. You need not verify. You can trust that he has done proper duty. Tomorrow, if at all he didn't do properly, he is only answerable, right? You are not, right? So why are you worrying? So in joint auditors, division of responsibilities, that don't worry. Then further. So remember, this entire matter I can't explain right now. So I told you the gist of this coordination point, what exactly it talks about. You please read on your own later. Now, special consideration, most important in this joint audit. A 5 marks question might come directly. A 5 marks question might come directly. What are the special considerations? Very simple. From each joint audit firm, State Bank of India, 12 auditors were there, right? From 12 auditors, engagement partner from each audit firm, key team members must be involved in planning the audit. Further, all the joint auditors must jointly establish the overall audit strategy. Further, all joint auditors should together develop a joint audit plan. You know, in exam sometimes they'll ask you, what are the points to be considered in a joint audit plan? A 4 marks question might come. Joint audit plan, when you're developing, no, you clearly address division of areas what, common areas what, reporting objectives. Remember, reporting standards, reporting requirements, reporting objectives, 3 different terms. Do not confuse, do not interchange. Reporting standard means 700, 701, 705, 706, 710, 720, 800. All these are reporting standards. Reporting requirement means CARO 2020 Companies Act reporting 143 subsection 3, that is. Reporting objectives means SA 300 standard talks about reporting objectives. We will be discussing reporting. You will have a discussion on reporting objectives in SA 300. You open your 3rd chapter, audit planning strategy. Ascertain reporting objectives is one of the factor for overall audit strategy. Reporting objectives means what? In that discussion is there in that chapter. Please go and see the reporting objective. Reporting objective means communication related responsibilities. And further, result of preliminary engagement. This is also covered in 3rd chapter. Preliminary engagement. Procedures as per 210, procedures as per 220, relevant ethical requirements. These 3 put together, we call it as preliminary engagement activity. What is preliminary engagement activity is there in the 3rd chapter, audit strategy chapter. That's it. And assessment of resources required. So a joint audit plan has to be developed after considering assessment of resources, after considering preliminary engagement, after considering reporting objectives, after considering division of areas and common areas, and significant factors shall be communicated between joint auditors. Further, risk assessment must be done by each joint auditor and communicated to other joint auditors. Joint auditors finally should document planning, audit procedures, nature, timing, extent, and perform it. And finally, joint auditors should obtain a common engagement letter. Nothing but we will give a common engagement letter. Management has to sign it and give you a common engagement letter back. Okay, and common management representation letter. Sir, what is a management representation? We will discuss in upcoming revision. 580 standard will be discussing. There I will talk about written representation. Next, work allocation. Ultimately, division, common area. You decided, right? Work allocation document is there, right? That work allocation document, each joint auditor should have a copy, and that copy shall also be communicated to those charged with governance. That's it. 299 over. Easy. Next, 600 I will discuss. Going concern, I'll come back to it. Wait, don't worry. Going concern, I'll come back to it. SA 600. You see, actually, what is SA 600? It's SA 600. We need to discuss it. Discussed along with this chapter. In this chapter only you should cover, but actually it is covered in audit strategy chapter. SEA 610 also, it is to be discussed in this chapter only, but it is covered in audit strategy chapter. Now let's go to SEA 610, 600, 620, all that. Now I will cover only 600 topic ma. Again 610, 620 later I will be covering. So what is SEA 600? You see here. So I'm going to SEA 600. Right now we have understood one point. Remember, SEA 600. SEA 600 is covered as part of our third chapter. In our book, it is there in the third chapter, audit planning and strategy. For more clear purpose, 41 is the page number. Those of you who are reading this goat notes, 40 number. What is this SEA 600? Using the work of another auditor. Using the work of another auditor. Just 1 minute. Just 1 minute. So using the work of another auditor. So who is using the work of whom? Just now I told you State Bank of India 12 joint auditors using the work of 6,000 branch auditors in respect of standalone financials. Same 12 auditors using subsidiary company auditors audit report in case of consolidated financials. Nothing but you are using work of other auditor. Other auditor is a component auditor. From consolidated financials point of view, many students don't understand this definition itself. I will prove it right now. Component, other auditor, principal auditor, definitions. This itself many students don't understand. What is a component? You see how cleverly it is drafted. Division branch is a component, and subsidiary joint venture other entity is also component. Arey, what are they? Division and branch are from standalone financials point of view. Subsidiary joint venture is from consolidation point of view. Tell me honestly, how many of you know this difference? Standalone, the component definition, division and branch is a component from standalone point of view. Subsidiary joint venture is consolidation point of view. How many of you know, sincerely know it? Please give it as a comment. Okay, so component means division and branch. Okay, whose financial information is included in financial information audited by principal auditor. Or a subsidiary company financial statements are included. Financial information is included in consolidated financials, which is audited by principal auditor. Same way, 6,000 branches related financial information is included in standalone financials, which is audited by 12 joint auditors. Exactly, that's what component. Now, who is the principal auditor? He is an auditor responsible for reporting on the entity. You see, entity financial information. Principal auditor is reporting on entity information, and this entity information includes financial information of components, which is audited by other auditor. Then who is other auditor? An auditor who is responsible for information of the component, which is included in financial information audited by principal auditor. So component auditor is one, other auditor is the auditor of component whose financial information is included in financial information audited by principal auditor. That's it. That's how the definitions of principal auditor, other auditor, component is drafted. Now you see the standard starts with the most important clarification: division of responsibility. The principal auditor is not responsible for work of other auditor unless there is a reasons to doubt about their reliability. If a principal auditor has a doubts about their reliability, then only you need to verify them. Otherwise you don't have to. You are not responsible. If the principal auditor relies upon other auditor as a part of the audit, he must clearly state division of responsibility in the report indicating extent of work done by other auditors. That's why State Bank of India, other matter paragraph, we have not audited 6,000 branches, which is audited by other auditors. These branches will have 23 lakh crore worth of assets, 1.7 lakh crore worth of turnover, that is audited by other auditor. So you should clearly state that. In exams straight away they will ask you, write about division of responsibilities, all that. You know, generally auditor is ultimately responsible for forming, expressing opinion. However, you can rely on the work of others if adequate skill and care is exercised. When you're relying upon work of independent statutory appointees, especially if you're relying upon other statutory auditors, for example, you must clearly state such reliance. Where you will state enter this division of responsibility, other matter paragraph. Other matter paragraph. How many of you really understood other matter paragraph truly like this? That's it. Next, who said auditing is a theory subject? It's a very practical subject. The point is people ruined it by making it boring, by not explaining, by not discussing the subject in a true sense. Now, acceptance as principal auditor. What is acceptance as a principal auditor? What is acceptance as a principal auditor? Just a minute. What is acceptance as a principal auditor? You know, NFRA levied cafe coffee day KPMG a penalty, right? Because KPMG violated this particular clause. You know what exactly? You know, a company approaches you as a principal auditor. A company approaches you for conducting the overall company particular audit. Just a minute. A company approaches you to conduct audit of the entire company. You should not blindly accept. You know, there is a standard called SQC. As per that standard, there is a procedure. I hope you might have seen this. Acceptance and continuation of client relationship. Okay. So, and if at all the company is calling you for appointment as an auditor, immediately you should ask this company, sir, what exactly the company is doing? Are there any subsidiaries? Suppose if the company has subsidiaries, where predominantly business happening, you should see. Sometimes no. Holding company might not have any business. Subsidiary companies only might have major business. If at all subsidiary company is what majorly conducting the business, and if that subsidiary company is being audited by another auditor, not you, holding company is just a namesake entity, you should not accept the audit of holding company. That is what acceptance of principal auditor guidelines says. You know, this particular point was asked in 2022 attempt in November or May, or 2023 attempt it was asked for a 5 marks question, right, about acceptance as principal auditor. So the auditor must assess whether their participation is sufficient so that they can act as a principal auditor. So can I act as a principal auditor for this entity? First of all, check out whether my participation is sufficient, like how much materiality of the portion audited by me, how much knowledge I have about the component, what is the risk that I am covering in the component, whether principal auditor need to perform additional work so that my participation becomes significant. So you need to check these parameters before you accept as a principal auditor. Further, once you accepted, okay, you understood, are a materiality major portion I am only going to audit, our company audit, our holding company is where major business is happening, major financial transactions are happening holding company, and significant portion you are doing audit. Your audit of holding company implies, it represents significant audit is being performed by you. If at all this kind of clarification, if at all this kind of conclusion you took, you accept as a principal auditor subject to SQC guidelines. In SQC there are some other procedures for acceptance and continuation of client relationship. So after verifying those guidelines, you can accept it. Now once you accepted, there are some procedures, principal auditor's procedure. And you know what, you know, in the recent number 24 paper, this third point is what tested. Procedures to be performed when using the work of other auditor. When you are using the work of other auditor, this was tested in the recent November. By the way, my dear, please come out of this assumption, sir, in last exam it is tested, means this time it will not be tested. No, nothing such. I say do not have any such pattern of testing. There is no such pattern. Getting it? So don't be in this all blind, unnecessary, useless logics. Focus on proper learning. Any paper you can handle, mark my word, any paper you can handle. The kind of clarity you have right now, whatever I'm discussing, now you go back and revise the subject, you feel very fantastic, you feel more connected to the subject, revision becomes quicker and faster, your confidence level improves. Now, procedures to be performed when using the work of another auditor. So what are the procedures to be performed? Very simple. At planning stage, you know, the principal auditor should perform procedures to ensure adequacy work of done by other auditors. At planning stage, advise them how other auditors work is going to be used by you. Inform other auditors what are the areas requiring special attention. Advise other auditors about accounting, auditing requirements. Branch auditors, no, component auditors may not aware of reporting requirements. So tell them, hey, hello, for this company CARO is applicable, so you also give a CARO report. I should only tell them. You know, the principal auditor, no, not only telling them all this, I can review procedures performed by them. So I can ask branch auditors, dear branch auditor, what are all works you did? I can do one thing. I will send a questionnaire or checklist to them, and I will ask them to fill and send back, and they need to compulsorily do it. If at all I still have doubts, I can visit the other auditor, and whether I will visit, I will get a questionnaire, how far I will review other auditors, review written summary of procedures of other auditor, whatever he works he did, know how much I will review, nature of review, extent of review, that and all depends upon circumstances and competence of other auditor. Generally, if the other auditor is chartered accountant, you generally don't do all this. If other auditors are chartered accountants, you will not do all this. That is what even Coffee Day, BSR and Co chartered accountants, KPMG told in NFRA to NFRA. But NFRA did not listen. What NFRA said, you know, you must review other auditors' procedures. Internationally, this is what principal auditors has to do. Our Indian auditing standard is not in compliant with international standard, but you must do audit as per international standard also, right? So like that and all they did. Finally, Consider, suppose no other auditors have found something significant findings they made, like in the sense some big issues were found, some big material misstatements were there. If then principal auditor can discuss audit findings and other matters with other auditor and management of the component. Additionally, principal auditor can also apply supplementary procedures to verify records and financials if necessary. These supplementary tests, no, they can be conducted directly by principal auditor, or supplementary procedures I will ask other auditor to perform these supplementary procedures depending upon the situation. So if I ask any supplementary work to do for other auditor, the principal auditor can tell other auditor supplementary procedures. And if you remember 805 standard, it says one point, exclusion. In 805 standard applicability, if you see exclusion, one point is there. It does not deal with procedures performed by other auditors at the request of principal auditor as per SA 600. No, principal auditor is asking other auditor to do supplementary test. No, I asked him to do supplementary test on trade receivable. Does it become audit of specific element as per 805? No. Audit of specific element as per 805 is an audit request by client to the auditor. That is different. Here I am asking other auditor to perform a specific element related some procedure. That just because I am asking him to perform or verify some specific element, that doesn't mean 805 special engagement and I will have to pay, some client has to pay some additional fee to him. No, not that. The procedure which I am asking him as per SA 600, he is duty bound to do that. Further, can a principal auditor ask other auditor working papers? You can ask, no problem. But you can't demand. If at all other auditor says, sorry boss, I will not give you, you can't demand. If you have any doubts in branches, no, any transaction, you go and do. You have a right to visit the branch, no, you go and do, verify, no problem. Suppose if other auditor is not professionally qualified, in some cases other auditor may not be professionally qualified. For example, if the component is a foreign country component, foreign branch, that auditor his procedures might not be something matching as per Indian standards. Then finally, principal auditor shall document. A straight question like this might come in exam. By the way, any question, for example, no, in exam they'll ask you write about consideration of significant findings of other auditor, and especially what is the responsibility of principal auditor if other auditor is not responsible. They will ask you these two. This they will ask you for 3 marks question, this they will ask you for 2 marks question. Anyway they can ask. Finally, what are the documentation principal auditor has to maintain? What are the documentation principal auditor has to maintain? Look at this. Principal auditor's documentation requirement. The principal auditor must document audited components list. What are all the components audited by component auditors? List you document. And what conclusions you have taken? Document. Example, recording discussions with the other auditors. What are all the review of procedures you did? Suppose, however, if sufficient evidence confirms compliance with quality control policies, need not document reasons for limiting procedure. Suppose you felt that other auditors and all done proper works and all quality as per your quality control policy also, you were satisfied. Maybe you have not done much procedure. You can limit your procedures. Getting it? Generally, in reality, we don't review their works and all. We simply document how many components company has. 6,000 branches. 6,000 branches. So names of those auditors alone we will document it. Next, if other auditor report is not unmodified, what does it mean? Suppose other auditor gave a modified opinion, the principal auditor shall also document how that modification is addressed, specifically qualification and adverse remark when forming your own report. That's why you see in 143 subsection 3 there is a point, I think clause number B or clause number C. Have you received other auditors report? If so, have you considered it appropriate? They will ask you in 143 subsection 3. Maybe if possible I will cover that reporting requirement before Caro. That's it. So in exam any of this can be asked. Can a principal auditor has a right to visit and examine accounts of a component? Yes, he has a right to visit a component. Principal auditor has to assess competence of another auditor before relying on another auditor work. Principal auditor must evaluate their competence, especially if he is not a member of the institute. In Coffee Day scam, in Coffee Day case, NFRA questioned KPMG, why did you not check subsidiary company auditor's competence? What KPMG replied, sir, subsidiary company is a chartered accountant. As per SA 600, I don't have to check their competence because they're members. Under 600 standard, I have to check the other auditor's competence only when there is only when he is not a member of the institute. That's it. Next, coordination. They may ask you straight question. Write about coordination between principal auditor and other auditor. Proper liaison, proper coordination is necessary between both the auditors. This involves written communications. Other auditors should cooperate with principal auditor, alerting them any important findings which will be important for principal. Same way, principal auditor should also notify the other auditor any important matters that affect other auditors' work. So principal auditor sometimes may require other auditor to answer a questionnaire. Getting it? Finally, sir, other auditor gave a modified opinion, sir. What principal auditor has to do? Suppose, no, State Bank of India, I am 12 joint auditors. We are all 12 joint auditors, you and me, for example. We decided unqualified opinion is correct, but branch auditor's report contains adverse opinion. What should I do? Should I also copy adverse opinion? No. Branch auditor gave adverse opinion, qualified opinion, considering materiality levels at branch point of view. You should see what reason they gave adverse opinion. See what is the reason's weight. In the overall company, you should see the weight. Suppose branch auditor gave adverse opinion. You felt that that is material pervasive at branch level. That is immaterial at company overall level. You can ignore it. You can still give which opinion? Unqualified opinion. You see, if other auditor issues a modified report, principal auditor must assess whether it impacts their report, whether it is impacting overall company. The principal auditor should document how they dealt with qualifications of the other auditors. And if principal auditor, for example, cannot use the work of other auditor, you are not getting their audit reports, company is not cooperating you will give a qualified opinion or disclaimer of opinion unless the branch is immaterial. Suppose if the branch itself is immaterial branch, it is not at all a significant branch at all, and that report you did not get, you don't have to worry. If it is a material branch, significant branch, their audit report you are not able to obtain, you don't know what is happening in that branch, you will give on the overall company qualified opinion, adverse opinion, as the case may be. In exam they will ask you straight away this question itself, write about audit reporting by principal auditor, or if other auditors report contains a modified opinion, what principal auditor will do, or write about auditors reporting requirement in case of using other auditors report. So like that they will ask you. So this part you need to write. That's it. 600 standards over, 299 is over, 600 over. Now let me go back to 706. Let me go back to 706. You see, you see here 706. Now once again you see 706 heading. What 706 exactly says? What is 706? Other matter paragraph. Emphasis already completed. Other matter paragraph is a para in the audit report which is referring to a matter not presented, not disclosed in financials, but relevant for users' understanding of audit, relevant for understanding audit responsibility, relevant for understanding auditor's report. That paragraph is called as other matter paragraph. Yes or no? That's it. Other matter paragraph, how we should include? Include OMP in the audit report if not prohibited by law. They will ask you when other matter paragraph can be reported, under what circumstances other matter paragraph shall not be reported. Like that they'll ask you. If there is a prohibition in law, you should not report, or if that matter you decided as a key audit matter, then also don't communicate it under other matter para. For other matter paragraph also you must communicate it in a separate section in the audit report. Just now I showed you State Bank of India audit report. Other matter paragraph is given as a separate section, side heading to it. That's it. 706 is over. Right now if you check, 700 is mostly completed. Technically speaking, 705 is completed, 299 is completed, 600 is completed, 705, 706, 600. 3 standards we completed predominantly, which are actually big standards, technically big standards. 700 also half is actually completed. Now let us now look at, let's again go back to 700 contents of audit report. You see the contents of audit report, what are all that we completed, right now, other matter paragraph is completed, emphasis of matter paragraph is completed. These are the sections in the audit report we now have already completed. Now let's understand material uncertainty related to going concern 570 standard. What is SA 570? Material uncertainty related to going concern. Now directly 570, actually 570 standard is there as a part of, you see, it is there as a part of your completion and review chapter. In ICA book, it is there in completion and review. We also kept here, but it is covered in audit report chapter for a better discussion. So that's the reason we will be discussing as a part of audit report chapter. You see here. Just a minute. Yes, going concern. I have given one comprehensive diagram. I bet you will not find such a kind of comprehensive diagram for this in for 570 so clearly. Actually, this diagram is developed based on SA 570 CA intermaterial. In CA final, you have a SA 570 discussion and completion and review chapter, right? That is not at all discussed properly. Very basic level it is discussed. So that's why I selectively applied some judgment, my judgment, and brought some content from CA inter book also and kept here. This entire matter you will not find in CA final 570 standard. You will not find this matter in CA final book. But beyond what is discussed in this, sometimes in exam they're asking. So that's why I balanced everything and gave you content accordingly. But still, I maintained my total book size less than approximately 360 pages. Okay, fine. So what is this SA 570 is about? Just a minute. I will rotate the page. 1 minute. Yes. So you see SA 570. What exactly 570 is about? 570 standard is talking about what? Going concern. What is meant by going concern? By default, every company generally prepare their financial statements using going concern assumption. What is the importance of going concern assumption? Because of going concern assumption only, fixed assets are shown at cost minus accumulated depreciation. If at all going concern assumption is not there, fixed assets must be shown at NRV. You know what is the consequence of fixed assets showing at NRV? Most of the property, plant and equipment except land, most of the property, plant and equipment, what is shown based on carrying value. For example, Ford Motors is there, Ford company, their carrying value is how much? 10,000 crore. What is the realizable value? 750 crore. That's how bad it will be. Fixed assets, plant and machinery. For example, Reliance is there, Jamnagar factory they have. The Jamnagar factory historical cost is 4 lakh crore. After accumulated depreciation or before accumulated something, 4 lakh crore. If at all they have to sell this factory to somebody, no ready-made buyer will be there. Hardly 5,000 to 10,000 crore is what will fetch that machinery and all, excluding that land. That's the value. But then why are we showing fixed assets at historical cost then? Because we don't have intention to sell. What do you mean by not having intention to sell? You without selling, what you will do? I am running business, man. I will run the business and recover this over next 10 years. And then I will recover more than this. That's why in accounting standard 28 impairment, recoverable value compute. If at all recoverable value is more than carrying value, no impairment. If recoverable value is less than carrying value, impairment loss. Impairment is nothing but something similar to going concern adjustment also. Able to understand? Yeah. So as an auditor, you have to check whether company is using, see, very simple. Suppose I'm the auditor of Reliance company, they are using going concern assumption. I need to check, can they use it? For that, you need to check whether company is stable or not. Company is stable or not. For example, a company, a company going concern. Okay, let me do one thing. What exactly auditor has to do in this entire standard? What exactly auditor has to do? First, ask management whether they are doing preliminary assessment or not. Just a minute. Yeah. Ask management whether they did preliminary assessment about going concern, because they are the primary party who is responsible to do going concern preliminary assessment. Sir, they did their going concern assessment. They did ask them, do they identify any symptoms? Events and conditions means nothing but what? Symptoms. What symptoms, sir? Events and conditions that cast doubt on going concern ability. Events and conditions that cast significant doubt on going concern ability. Sir, what do you mean by events? I hope you remember. Events and conditions are broadly divided into 3 types: financial indicators, operating indicators, other indicators. Remember these 3 points. I hope you remember, my dear. I will show you, don't worry. Ask management, are there any events and indicators like this? Check out. Management said, sir, we identified, sir, events and conditions. Yes, sir, we identified the events. Now you need to perform further audit procedures. In the SA 570, this is also called as additional audit procedures. This is also called as what? Additional audit procedures. Sir, management identified going concern issues. Some events and conditions identified, symptoms are identified. Getting it? Perform additional procedure. Why you have to, what you have to do? Are events there, symptoms there? Why you need to perform additional work? to determine, see this, very important observations, to determine whether material uncertainty exists or not existing. Sometimes no. See, for example, no, before I proceed further, let me show you indicators. You see, examples of events and conditions casting a doubt on going concern. One of the event is financial event. For example, net liability position is there. The company is having accumulated losses. They have a net liability position. They have something called net liability position. They don't have a profit. Their total financial position is negative. Getting it? Fixed borrowings, so they are approaching maturity. No proper renewal. Renewal is not possible. Short-term borrowings for long-term investments. Withdrawal of financial support from creditors are not supporting. Operating cash flows are negative. Ratios are adverse. Operating losses. Assets and all value deteriorated. Arrears or discontinuation of dividend. Creditors we are not paying on time. Non-compliance with loan. Conversion from credit to cash on delivery. Failure to obtain financing for a new product. I want to launch a new product, but I'm not getting finance anywhere. Then operating. These are all financial symptoms. These are all financial symptoms that company may not continue in future. Company cannot continue the business because financially they're poor. Operating events. Management want to liquidate. Loss of key management. You know what? In May 24 exams, they have asked one question on management want to liquidate. You know, the emphasis of matter paragraph related question they ask. I will tell you, don't worry, I will show you. You know, loss of key management, loss of major market, labor difficulties, shortage of important supplies shortage, material shortage. Many companies across the world are facing semiconductor chip shortage, because of which some particular industries are badly affected. Emergence of highly successful competitors. For example, right now there is a news that Starlink Elon Musk is coming to India, and Reliance Industries filed a petition with the government that fair competition must be there. Getting it? The same Reliance company killed competition, but fine. See, Mukesh Ambani is one of the patriot. I have a very huge respect for him. He's a patriot, no doubt about it. Because of, you know, Reliance Jio only, I can proudly tell you, I can confidently tell you, India was able to handle COVID situation. Fine. Anyhow, that's a different story altogether. Fine. There will be other symptoms also going concern. Non-compliance with capital regulatory requirements. You know, if an NBFC does not comply with the capital requirement, every one of you might have seen NBFC capital requirement ratio 15% of risk-weighted assets. Banks 9% of risk-weighted assets. So non-compliance with capital norms. For example, Paytm payment bank. I hope every one of you, Paytm payment bank 2024 January, their license was removed, cancelled. Why? They didn't comply with KYC norm. Pending legal action against the company could lead to claim where company cannot meet. Changes in law which will adversely affect the company. Uninsured catastrophe, underinsured. Some catastrophe happened, we don't have insurance, everything is lost. All these symptoms show me I cannot continue my business. So what auditor has to do? Come back to this diagram. What auditor has to do? You first ask a company, sir, you did assessment of going concern. Management, you ask. Yes, they did. Did they identify events and conditions? What events? Show them the list. Any of the symptoms present? You also check. Sir, presented, sir. Further procedures you must do. Oh, events and conditions are there. Why? No, events or conditions are there. Can you straight away say company is closing tomorrow? You can't say that. You need to perform additional work to decide whether material uncertainty there or not. Whether material uncertainty is there or not, you need to decide by performing further procedures. Further procedures are called as additional. By performing further procedures, after performing, you will get a clarity. Sir, what is further audit procedure? I will come back to it later. Once you perform further audit procedure, you will get a clarity. Yes, material uncertainty there, sir. No, sir, material uncertainty is not there. For example, Tata Motors is having a loss. Just because they have a loss, negative operating losses they have, negative operating cash flow, can you straight away say Tata Motors is closing tomorrow? No. So in some companies, symptoms will be there, but that will not result in material uncertainty. It is not uncertainty about future. Material uncertainty means what? In future, uncertainty is there, which is so big. That is material uncertainty. For Tata Motors, there is a loss. Does it mean Tata Motors is having material uncertainty? No. Suppose, sir, material uncertainty is not existing, sir. Material uncertainty is not there. No problem. Material uncertainty is not there. Oh, material uncertainty is not there. But company has symptoms, no? Yes, company has symptoms. Is the company liable to disclose the symptoms in financial statements as per Schedule 3? Check out. Schedule 3 applicable framework. Whether applicable financial reporting framework require disclosure of symptoms, events or conditions? Sir, no sir. In India, nowhere in the world you have to disclose about the symptoms. You can straight away give which opinion? Ultimately, unmodified opinion. Sir, material uncertainty not there, sir. But under the framework where company prepare financials, no, we need to disclose the symptoms. Oh, financial reporting framework require disclosure of symptoms even though going concern there is no issue. Did the company disclose? Yes sir. Unmodified. Sir, they didn't disclose, sir. Something which they require to disclose, they didn't disclose. It's a material misstatement. Modified opinion. Simple. Sir, the point is, events or condition is there, right? I verified, I performed further audit procedure, right? I performed further audit procedure, right? I discovered material uncertainty. What is that? For example, Air India you take. Air India you take. I will show you Air India audit report. Okay, what exactly happened Air India audit report, I will show you. Now, you see here, Air India audit report. You go independent audit report. I will directly show you. You see, independent auditors report. You know what auditors told here? You see here, the company had an accumulated net loss. Sorry. The company incurred a net loss of 77,000 million, nothing but 7,000 crore. In March 2020, 1920 financial year, company had a net loss of 7,000 crore and company current liabilities are exceeding current assets by 54,000 crore. Accumulated losses are 70,000 crore. In spite of this, see, you see, tell me if this is the position, they don't have bank balance, they have a negative. Material uncertainty exists. Yes or no? It's a loss picture and it is also uncertain. We don't know how long the company will continue. Nobody knows it. But you know what company did? In spite of these events, in spite of the situation, which may cast a doubt on anybody looking at this position, company cannot continue. They will say, but the management is of the opinion that going concern is still appropriate. Oh my God. In spite of this, company is feeling going concern is good. Why? In view of support from government of India. Because government of India is supporting, company decided to go for going concern. As long as government support is there, they don't have any problem. My question here, how long government will support? Directors are not answering. When I perform further audit procedure, no, they said we are running successfully, sir. Yeah, I have that. There is a loss, there is a negative position, there is a negative working capital, but still we are running successfully. I asked them one question, how long government will support? Directors were quiet. They said, no sir, we are also doubtful. This is material uncertainty. The moment government withdraw the support, you will close the business, right? This is material uncertainty. Now, if material uncertainty is there, if material uncertainty exists, auditor has to check. Okay, material uncertainty is there. Is still going concern appropriate? Air India said appropriate, sir, right now, because government of India is supporting. Material uncertainty is existing. Still company is feeling going concern is appropriate. Fine. Tell the company to disclose everything honestly in the financial statements. Air India auditors, Air India, no, management is so humble, so honest. They disclosed this true position in the balance sheet. Going concern is appropriate, they chosen, right? Even though there is a material uncertainty, yes or no, even though material uncertainty exists, they chosen, going concern appropriate, right? That situation they disclosed honestly. You give unmodified opinion because they disclosed everything honestly. I know going concern is bad, Air India position is bad. That is not the basis for our opinion. Did they disclose it correctly in the financials? Yes. Unmodified opinion. Sir, they didn't disclose, sir. They are playing hide and seek. Like they are showing going concern is very good, as if nothing happened. Material uncertainty is there, sir, but they're not showing anything like that. Then give a qualified or adverse, because financials are misleading. Now suppose you see going concern is appropriate and they disclosed it. What they disclosed? Material uncertainty they disclosed and chosen going concern appropriate. You give unmodified opinion. But tell me, you are giving unmodified opinion on Air India, right? it will show the it will convey the public that nothing is there in this company, everything is good. If you give unmodified opinion regarding going concern, if you did not talk about going concern in audit report, public think that everything is good. But there is a big issue, material uncertainty point is there in financial statements, big issue is there in the financial statements. Everybody in the public has to see that note point. Yes or no? What you will do? Emphasis of matter para. No. Actually, emphasis of matter para is correct. You can highlight there, but don't highlight it. Emphasis of matter para you will use for highlighting going concern uncertainty. In which standard, emphasis of matter para you will use for going concern, in which standard, 2410 and 2400. In a review standard, you will use emphasis of matter para to highlight going concern issue. But in audit, in case of audit of financial statements, going concern issue shall be highlighted under material uncertainty paragraph. What is the paragraph? Material uncertainty related to going concern para. Yes, one more element in audit report is completed. You saw audit report format, contents of audit report. One of the content is what? Opinion, basis for opinion. Below that, what is there? Material uncertainty related to going concern. When that para will come in audit report? Very simple. The company is facing material uncertainty. In spite of it, they choose and going concern appropriate. You also felt okay because government is supporting. You also can't deny. But how long they support, that is what doubtful. But for that, company honestly disclosed in notes to accounts also, as long as government support, as long as government is supporting, we will happily continue. The moment government stops supporting, we will withdraw. So that is what company also openly told. So material uncertainty para, and you will give unmodified opinion, and you will highlight that issue in the material uncertainty para, because this is a very important issue. This is a highlighting issue. Material uncertainty related to going concern para in the audit report is there, right? That's a highlighted para, just like emphasis only this also. That's why you see in Air India, at the end, our opinion is not modified. Same point you will mention in emphasis also, our opinion is not modified. Same you will mention in material uncertainty also. Why? Material uncertainty relating to going concern para is also emphasis of paragraph kind only. Remember. That's it. Sir, for example, material uncertainty is there, sir. It's not Air India situation, sir. Company is already bad. Company operations are already stopped. Company loans and all matured already. People are questioning already. The company is not at all doing any business. Sir, going concern is inappropriate, not at all appropriate. It is material uncertainty is existing, sir. Not only uncertainty, it's actually going concern is inappropriate straight away. Going concern inappropriate. How the financials are prepared? Sir, they're not disclosing this, sir. They're not disclosing this. Financials are prepared going concern basis. Straight away adverse opinion. Sir, going concern is not appropriate, right? Honestly, company disclose it, sir. Very honestly, they disclosed it, sir. Then you again give which opinion? Unmodified. Company going concern is not good. And in spite of it, they honestly disclosed. And you know what? Financial statements also, they prepared using liquidation basis. There is one point, I think some of you might have seen this. Suppose going concern is not appropriate, and not appropriate point they showed in financials, and still they prepared financials using same accounting standards, GAAP and all historical cost. Again, you should give adverse opinion only. Just because they show going concern inappropriate openly in the financials, that doesn't mean accounting is right. Accounting must be, if at all going concern is not appropriate, accounting must be on liquidation basis. If at all accounting they didn't do on liquidation basis, you will give adverse opinion. Even though they may show going concern inappropriate and all in the financials, that and all doesn't matter. Getting it? So going concern not appropriate. And is it disclosed in the financials? Disclosed it, sir. Not only that, they accounted financial statements on liquidation basis, realization value basis they accounted. Then give unmodified, highlight the same in emphasis of matter para. This is what asked in May 24 exam. Even in the question bank, I will show you. For example, in the question bank, just a minute. You see here, Delhi branch. For example, yes, this is the question exactly which is asked. This is the question. In your ICA book, completion and review chapter, you go to completion and review chapter, or maybe you can come to audit report chapter. In our question bank, it is 164 page. In May 24, they asked this as a drafting question, my dear. I showed in the previous session drafting. No, I think some of you might have felt why drafting and all. Drafting question is asked in the May 24 exam for 5 marks. You see, you need to write independent audit report opinion para, you need to write basis for opinion para, you need to write emphasis of matter, you need to write about the going concern situation, which I told. You know what happened in this company? You know, a company has incorporated one branch in Delhi and they decided to close that branch. Going concern is missing. And what company did? You know, the company correctly disclosed about the matter. Getting it? What they did actually here, you see, the company correctly disclosed the matter regarding the intention. Further, you know, they disclosed everything correctly. Okay, so incorporated above matter everything, and values are also, the assets and liabilities are carried at values likely to be recovered. NRV values are they valued. So auditor will give unqualified opinion. You see, unqualified opinion you give, and basis for opinion you will mention, and in emphasis of matter you will draw attention to Delhi branch which management is closing, basis of accounting and all you will highlight it here. That's it. 570 standard is almost over. Getting it? Now I want to show you one point here in Air India. Sir, going concern, some students, many will ask me, sir, Air India auditors give qualified opinion. No, you said material uncertainty when going concern, is there unqualified opinion should be given? My dear, please use brain. Little bit brain is required. Okay, qualified opinion here they gave on some other issues. Here they made 3 issues, right? Going concern they didn't qualify, they qualified on some other. On going concern they gave unmodified opinion only. Please interpret opinions and all correctly. In some standards, no, they say modified opinion means on that matter modified opinion. It is not about in the audit report modified opinion. Please, I hope you understand this point. That's it. So now look at the going concern. Ultimately, you know, I will finish this. So that's it. With this, that diagram is understood. If at all you understand this diagram, 99% going concern you understood it correctly. You know, in going concern, auditor has to do risk assessment. What is risk assessment? Auditor has to consider whether events and conditions exist. For that, what you will do? Whether management performed assessment. They performed. Discuss the assessment. Get the workings. Just a minute. Yeah. So get the workings of the management. Management identified events. Management identified events and conditions that may cast a doubt. Evaluate management plans and all. Management has not performed assessment. Discuss with management on what basis they did use going concern. Suppose they didn't do assess at all. On what basis you use going concern? Ask them. And remember, if at all any events are found, if at all any events and conditions are found related to going concern, just a minute. If at all any events and conditions are found related to going concern, actually I'm using my Windows system. I need to again use my MacBook. That is best actually. Okay, because this is slightly hanging in between. Fine, anyhow, not an issue. So audit procedures, if events and conditions are identified, you need to do additional audit procedure, right? Nothing but what? You know, ask management what are their plans for future action. You ask management what are their plans for future action. Evaluate likelihood of management plans. Just a minute. So additional procedures I told, right? Events, conditions identify, additional procedure you should perform. Additional procedure you should perform for what? To determine whether material uncertainty there. How do you determine whether material uncertainty? Ask management plans for future action. Analyze the cash flow forecast. You know what? In the recent CA Inter, they asked this C point as a 5 marks question. How they asked? You know, they gave one big case study. Cash flow forecast you need to analyze, right? Give 2 examples. These 2 points they asked, and additional procedures objective they asked. This question they asked in CA Inter Jan 25 for 5 marks. Similar way they can ask you in final also. What is the objective of performing additional procedure? To determine whether material uncertainty exists by performing additional procedures. By performing additional procedures, you can decide additional, you know, everything is there or not. Now look at. Just a minute. Yes, you see here. So any other information additionally available. Last time management did assessment, now you are once again doing assessment. Additionally any data is there, check out and get a written representation. Management said, sir, yes, I agree, sir, some bad position is going on for the company, but we have these plans upcoming, so with that we will revive the company like anything. All that they're saying, request representations regarding their future plans, actions, all that. That's it. So reporting, I already just now covered in diagram. Going concern is inappropriate, but financials are prepared using going concern. But auditor's judgment is inappropriate. Adverse opinion. Sir, going concern base is appropriate, but material uncertainty exists. And is it adequately disclosed in financials? Yes, sir. Unmodified in the going concern aspect. Separate section in audit report. No material uncertainty related to going concern. Draw attention of the auditor. Draw attention to the relevant note point. State that material uncertainty exists. Also state that your opinion is not modified. You see, all these points statements were there in Air India as it is. Suppose no material uncertainty not disclosed. In the above diagram also I showed already. Express a qualified opinion or adverse opinion. In the basis for qualified opinion, state that material uncertainty exists and company is not disclosing correctly. Sometimes no management has to do assessment, right? Preliminary, they are unwilling to make assessment. They didn't make assessment. Give a qualified or adverse opinion. Generally, sorry, disclaimer of opinion. Suppose no management made assessment, but they didn't make it for 12 months. I will show you one more point here. For how long? Period of assessment for how long? Minimum 12 months they need to make an assessment. If management assessment is for less than 12 months, please request to extend it to 12 months. From balance sheet date next to 12 months, whether company going concern is proper, management has to assess. If at all they are not, if at all they did only for 6 months and you asked them please increase it to 12 months, management is not accepting it, then you will give disclaimer, because they need to do primarily going concern assessment and show you the workings. If they did not do going concern assessment and showed you the workings, how will you know it? Disclaimer. And more in-depth about 570 discussion is there in my CA Inter Audit Marathon. Please refer there if possibility is there. Okay, there I covered even in-depth 570 standard, because in CA Inter it is covered very in-depth. That's it. 570 is also over. Now once we'll go back to audit report, once again you see here contents of audit report. If you recollect, what are the contents of audit report? Just now we covered material uncertainty related to going concern. Now key audit matter. Now let's look at key audit matter. But by the way, responsibilities of management. What are responsibilities of management? You might have studied in CA Inter, SA 210. SA 210. Responsibilities of management. What? Responsible for preparing financials as per applicable framework. Management is responsible to provide the auditor information, explanation, unrestricted access to person, that only. So nothing big challenging in responsibilities. Now let us discuss key audit matter. Just another 15 minutes, key audit matter will be over. 701 will be over. Remember, right now we completed 700 major portion completed, 705 completed, 706 completed, 299 completed, 600 completed, 570 is also completed. Now we are going to discuss about 701. 1 2 3 4 5 6 7 standards will be completed by this 701. Now what is a 701? Key audit matter. I will show you Air India audit report itself, where they have used some key audit matter. I will show you key audit matter. You see, Air India auditors itself have used key audit. Even State Bank of India auditors also have given key audit matter. Like what exactly they're saying here? Key audit matter, introductory language. Key audit matters are those. Just 1 minute. Papa. So strainful. Actually morning, my EVO fast track class is going, CA final. So almost that is 5.5 hours class. Now in the evening 1.5 hour. Now again, now I'll have to go for gym. So 8 to 9 I'll go for gym. Again coming back from gym. Again at night 10 o'clock I'll be doing this revision class. So full packed. Daily 8-9 hours I'm discussing. I think you can see my voice now. So now let's continue. Key audit matter. What is a key audit matter? Key audit matters are those matters in our professional judgment were of most significant in audit of financials for the year ended 31st March 2024. Okay, so they're very important matters from professional judgment of the auditor for the current period. These matters were addressed in the context of audit of financials as a whole while forming opinion. Oh, these matters are already verified in audit. Okay, then fine. We do not provide separate opinion. By the way, look, I'm only telling you what are important matters below. I am not giving any separate opinion. So don't think that I'm giving separate opinion. Auditor is alerting at the beginning itself. You see what key audit matter, how key audit matter they're saying. Presentation alone observe. How key audit matter they mention, you see. What is key audit matter? Some classification of advances. In banks, you might have seen in bank audit. Income recognition, asset classification, IRAC norms. Banks has to classify assets, standard asset to non-performing, substandard to doubtful, loss. Regarding that, auditor felt in State Bank of India, asset classification is a key audit matter. You see, advances is actually major item in the balance sheet, so they classified advances as a key audit matter. Okay, it's a key audit matter. Okay, what? how the matter was addressed in the audit, how auditor addressed that matter in the audit, how auditor addressed it in the audit. In audit, what they did, they're telling you, oh, our audit approach towards loans and advances is like this. These are all steps we performed in audit. Oh, in key audit matter, what they're showing, loans and advances is a key audit matter. And in audit, we did like this, we verified like this. Indirectly, in key audit matter, what auditors are telling? Auditors are simply selecting some important issues in their audit, and they are just telling what exactly issue it is. And in left side, you see left side, they are telling what exactly the matter. On the right side, what they are telling, how they verified that matter in the audit. Indirectly, it is like very simple. You went to a restaurant, you ordered food, you got the food on the table. Chef also came towards you. He is now telling you, first, sir, don't eat first. I will tell you what exact. This food is a most important item in our hotel, sir. This is the most best selling item, sir. This is the most important item. We spend a lot of time on making this item. And you know how I cooked this? So I first, I switched on the stove. I poured oil. I poured vegetables. I did some fry, all that, and then deep fried, roasted, and then I added some masala, all that. Restaurant chef is coming and telling you all this. As a customer, what do you feel? Arey, why are you telling all this? I ordered food, I want food, let me eat the food. Why are you telling about your cooking process? Exactly. Key audit matter, auditor is also telling to the shareholders how he is doing audit on important items. How key audit matters para is useful to the shareholders? Technically it is not useful. Simply we are just telling to the shareholders how we generally perform our audit. We are showcasing our skills to the shareholders. You see now, what is a key audit matter? You see now. Just a minute. I will straight away show you. You see key audit matter. Just a minute. Yes. You see key audit matter. What exactly auditor is doing? Communicating key audit matter in the independent auditors report heading. To whom this audit matter is applicable? All listed companies compulsorily they need to show key audit matter. That's why A&D audit report you will find, SB audit report you will find. Or suppose listed company, okay, it is not listed. Is key audit matter required? If law or regulation says it is compulsory. Luckily in India there is no law or regulation. Or auditor can communicate key audit matter at public interest. Further, most important point, sir, if auditor is giving a disclaimer of opinion, communicating key audit matter is prohibited. Disclaimer when you will give, man? You will give disclaimer of opinion when you could not conduct the audit properly as a whole. Major items you didn't audit, you are not getting evidence. When you are not auditing major items, when you did not audit majorly, how do you know which is important matter? That's why key audit matter is prohibited. What is the purpose of key audit matter? Purpose, very simple. I will show some matter, and how I will do audit, I will just simply show. Enhances communication value, offer additional information to the users to understand the entity and areas of significant judgment, important management judgments, important areas in the company and all. I will tell the users. It provides transparency in auditor's report by providing insights about the audit. So in audit, no, I'm giving you insight how I do in audit. All that I'm just telling you, just like a restaurant chef is coming and telling you how he is cooking. Communicating, remember, communicating key audit matter. Don't be clever here, okay? If at all you need to give a modified opinion, give modified opinion. If some matter is materially misstated, cleverly don't communicate here. Key audit matter is not a substitute for modified opinion. Key audit matter is not a substitute for disclosure in financials. Key audit matter is not a separate opinion. Key audit matter is not a substitute for 570 material uncertainty. You know right now already. 570 material uncertainty means what? You know. Okay, sir. Once again tell me, what is key audit matter, sir? Emphasis key audit, other matter para, what is the difference, sir? Emphasis. Listen carefully here. Stop your thinking. Listen to this first. Emphasis means highlight. What are you highlighting? You are highlighting balance sheet P&L note, some point is there. You are highlighting that point in the emphasis of matter para. A shareholder, please read note number 40. That is emphasis. Other matter para, hey shareholder, 6,000 branches, no, I didn't audit, their report is given to me, so that's how I gave the opinion. Hey shareholder, joint auditor, another joint auditor, he gave a separate audit report, please refer. Key audit matter. Hey look, in company, no, I did audit, some important audit area is loans and advances. So loans and advances is 60% of the total assets. This is how I verified loans and advances. Difference is found, na? Now you don't have confusion between key audit matter, emphasis, no. Many students will always confuse between key audit matter. Array, key audit matter means what? You see the presentation in audit report. What is the matter? How they audited. Emphasis means what? Highlighting in the balance sheet and P&L notes. Other matter is what? Telling about other auditor responsibility, telling about joint auditors report, all that. Again, if you have confusion, I can't do anything. Okay, I tried my level best and showed you with practically. That's it. Next, determining. Sir, okay, sir. How do I know whether some matter is a key audit matter? It's a professional judgment. Professional judgment means what? Common sense. Common sense. Sir, auditor, no. I don't have common sense, sir. Tell me, how should I select? Very simple. Areas of higher risk, where significant management judgment involved, where high degree of estimation uncertainty is involved. Impact of significant event or transaction. Key audit matter can be selected from area of high risk, where significant judgment is involved, or you can select a key audit matter from the area where significant event or transaction happened. Examples: impairment, provisions, valuation of financial assets, financial instrument, matters related to revenue recognition, taxation in banks and loans and advances, asset classification, all that. What is the manner of communication? Just now I showed in State Bank of Audit report. Straight away 4 marks question will come. Factors for determining key audit matter, 4 marks questions will come. Under what circumstances key audit matter shall not be communicated, a 4 marks question will come. Purpose of key audit matter, straight away 4 marks question will come. Definition: key audit matters are those in auditor's judgment were most significant in audit of financials of current period. These matters were selected from various matters communicated with top management. What are all you will communicate with top management? SA 260 standard we will be discussing. Next. Finally, what is the manner of communicating? Key audit matters are described in a separate subheading, in a separate section in the audit report. SBI, separate section. Introductory language. Introduction, what we will give? You see here, introduction, what we will give? Key audit matters are those matters in our professional judgment. Yeah, same. Key audit matters are those in our judgment were of most significant. These were addressed in the context of audit. The auditor does not provide a separate opinion. You studied all this earlier also, but you don't know why you studied this. Now I showed you how they will be presented in real audit report. Now you understood. If there is no key audit matter, suppose no, it's a listed company, sir, but there is no key audit matter. Literally there is no key audit matter, sir. What should I do? Put heading, give introduction, and specifically mention that there are no key audit matters. Sir, it's a private limited company. No need to put key audit matter section itself. Listed company, compulsory key audit matter. But you decided not to communicate. Then say that there is no key audit matter. That's it. SA 701 is also over. That's it. SA 701 is also over. I am telling you guys, you will not get a clarity like this in audit, never before. I hope you are now able to witness what kind of clarity is required in audit, so that you can comprehend the subject very clearly. That's it. Okay, 701 is also completed. Almost 7 standards be completed, technically speaking. Now I'll go back to 700 standard once again. Okay, 700 standard once again. What are all we completed? So key audit matter, everything is completed. Right now other information, 720 is pending, 710 is pending, 610 and 620. If those 4 also completed, 11 standards will be completed. Report on other legal and regulatory requirement. This is nothing but Caro 2020, dude. Nothing much. Further, signature of the auditor. So what is the signature of the auditor? Signature, place of signature, date of audit report, UD number. So what are they? We will see here below. Below I have given detailed information. Just a minute. Yes, you see here, auditor responsibilities below, it will be the signature. How signature of the auditor should be? How signature of the auditor should be? A minute. How signature of the auditor should be? Yes, signature. So what is the signature? It is signed by engagement partner in personal name. If at all, the CA is the individual chartered accountant. Suppose he is not practicing on his name. He has a firm, sole proprietary firm or partnership firm, whatever it is. Firm is what? Then firm name shall also be mentioned along with the personal name. Membership number, FRN number shall also be mentioned. And that's it. Place of signature. Generally the city where the audit report is signed. Date of audit report. Tell me, financial statements has to be approved, no, by the management. Financial statements approved by the management. 31st March is the date of financials. Financials are approved on 10th May. Audit report date shall be either 10th May or later date. Can I give audit report before approval date? No. Why? Approval of financials means what? These are the balance sheet and P&L finally signed by management. This is what given to public. On that only you should give audit report. No. So date of audit report shall not be earlier than financial statements approval date by the corresponding authority shall not be earlier than the date on which you obtain evidence and UDIN number. All certificates and reports from 1st July onwards UDIN is compulsory. Then prescribed layout for audit report. This is not required. Sometimes what is the audit report which is conducted as per standards on auditing and international standards? Actually these are all relevant because in one of the exam they asked, but since it's a revision class I can't cover everything, so understand. Then supplementary information. What is a supplementary information? I will do one thing. I will discuss the supplementary information along with the 720 standard other information. So that's it. Right now I will conclude this particular session. In the continuing session, okay, I will discuss 710, 720, 610, 620 and CARO 2020. With that, reporting chapter will be over, where 11 standards we covered. CARO 20 marks weightage is covered. You know how much time we hardly spent till now? With including the next session put together, it will be hardly 4.5 to 5 hours. 20 marks portion is completed already. That's it. What else is required? This kind of accuracy, just check out, guys. This kind of understanding do you have earlier? Only based on revision class, this much understanding I'm giving you. Getting it? That's it. I am taking lot of stress here to convey most of the information in a clear, crisp manner with practical examples in a marathon in the shortest amount of time. That's it. Okay, so let's wind up the session and we'll continue again after a break. Okay, yeah. So let's continue the balance audit report topic. And if you recollect, we have already completed 7 standards. In the previous sessions, we have already completed 7 standards, almost 7 standards we completed. Like, just a minute. Yeah. So we completed almost 11 standards, right? Yeah. So now let's continue discussion of the remaining standards that were there as part of the syllabus. So now let's begin 710 standard. Yeah, first let's go to 710 standard. Just a minute. 710. This is one standard which is very tricky and where many students often have confusion. On 710 is one standard where generally many students have confusion. Okay, immediately after 706 it will be there. Why again search? So 710. What is 710 standard is about? You look at the standard 710, it is talking about comparative information. That's it. 710 is talking about something called comparative information. What do you mean by comparative information? Very simple. You see any balance sheet P&L, you will find last year figures also, right? Along with current year figures, you will also find previous year figures in schedule 3. Comparatives we call. So comparatives, whatever you find in schedule 3 financials or bank balance sheet you take, any company balance sheet you take, you will find last year figures, right? That is called as, very simple, we call it as what? Comparative information. And you know, from auditor's point of view, this comparative information is broadly categorized into 2 types. From auditor point of view, this comparative information is broadly classified into 2 types. Corresponding figures. One type is corresponding figures. Another type is comparative financial statements. Mark my word, guys. 99% of the CA final students do not aware of what exactly comparative financial statements are. They don't understand the standard typically. They only understand corresponding figures, and once they read comparative financial statements topic, they miss the connection. What exactly it is talking about? Comparative financial statements is something, by the way, tell me, you know, comparative, by the way, the standard is exactly dealing with what? Comparative information. What is auditor responsibility for comparative information? The auditor's responsibility will be different in the auditor's responsibility will be different for corresponding figures, and auditor responsibility is different for comparative financial statements. In both the cases, responsibility of the auditor will vary substantially. Very simple. In a corresponding figures approach, just 1 minute. Yeah. So in a corresponding figures approach, Tell me, generally we give opinion, right, in the financial statements. We give opinion, right, on the financial statements. We give opinion on the current year figures or last year figures or both. Tell me, suppose no, we just saw Air India audit report, we saw SBI audit report. We give opinion only on the current year figures. Why the hell we give opinion on last year? Last year they were audited, right? Yeah, that is nothing but corresponding figures approach. In a corresponding figures approach, we do not give opinion on the last year. We only give opinion in our audit report, and our audit report is exclusively dealing with what? Exclusively dealing with current period figures only. On corresponding figures, we don't give opinion. Whereas in a comparative financial statements approach, auditor's opinion refers to each period presented in financial statements. In a comparative financial statements approach, auditor's opinion will be given on each period. For example, a company is preparing restated financial statements. Suppose a company is preparing restated financial statements. For example, the company accounting policy has been changed, and now the company is going for public issue, and the company is for the first time applying Ind AS. So they are restating the financial statements as per Ind AS for the last 3 years, and they are presenting a comparative financial statements which will have 3 years figures. And the auditor was appointed for that particular financial statements audit, where auditor has to audit all the 3 years and give a single audit report where all the 3 years opinions has to be given. Tell me, do we see this kind of audit format anywhere in your life? Like you have done articles, you have seen anywhere do you see this? No. Comparative financial statements is generally a special purpose financial statements. Comparative financial statements are generally what type of financial statements? Special purpose. And comparative financial statement is very popular in United States. It's not popular in India. That's it. In India, comparative financial statements approach we don't use. In India, we don't use comparative financial statements approach. The audit approach in India is corresponding figures approach. The auditors will only give opinion on current period figures. This is the main standard. In exam, they'll ask you, write about nature of comparative information. Straight away 4 marks, many times asked. Nature of comparative. There are 2 approaches to comparatives. By the way, the nature depends upon the applicable framework. How the financials are prepared, the applicable law and regulation decide the nature of comparative information. It is often either corresponding figures or comparative statements. The approach is to be followed is specified by law. Now look at, just a minute. Yes. Just 1 minute. Yes. So what is a comparative information? Here let us you see. Comparative information is nothing but amounts and disclosures of prior period. Remember, standard heading is comparative information. Extension is what? Approaches of the auditor. Heading is comparative information. But the remaining 2 terms, corresponding figure, comparative financial statement, is an approach of the auditor. Comparative information is what the actual standard is talking about. So in the comparative information, what is the approach of auditor? Corresponding figures are comparative financials. What is the approach? It is decided by the framework under which you are doing audit. Simple. Now, what is the audit procedure for comparative information? Very simple. We have to ensure that generally when comparative information is presented, see, forget about corresponding figure, comparative financial statements, forget about that. If comparative information is given, what is the auditor's procedure generally? What we do regarding comparative information? We shall verify whether the required comparative information is appropriately classified and agree to prior period amounts and disclosures. Whether last year comparative information, whatever we presented, right, company presented, right, is it matching with the prior period approved audited balance sheet? Check out. See consistency of accounting policy. Last year in the financials, what accounting policy followed? This year, what accounting policy the company is following? Is it consistent? And whether changes are properly accounted and disclosed. Further, suppose no, in a comparative information, material misstatement is there. In comparative material misstatement means what? Last year financial statements contains a material misstatement. determine whether that result into a material misstatement in current period. This is generally opening balance. If it contains material mistake, it will naturally affect the current period financials, right? But sometimes no, in a opening balance last year it's a material mistake, but in current year that mistake may not be material. That's why if last year comparative information contains MMS, see whether in the current period it is also MMS or not, check out. Further, if prior period financials were audited by same auditor, oh, last year also I am the same auditor and I found a material misstatement in the last year. First no, I will not talk about current period audit. If I find a last year misstatement in last year financial statements, I found a mistake. First I will try to rectify that mistake by following SEA 560 procedure. You might have seen in SEA into SEA 560. If any events identified by the auditor subsequent to the date of auditor's report, any events that happened prior to the date of audit report, and if at all a fact came to knowledge of auditor after the date of audit report, you discuss with management and you will ask them to amend the financials. Perform 560 procedures if possible. If possible, perform 560. Sir, 560 I'm unable to perform, sir. We are unable to decide it we are unable to perform as a subsequent procedure. In that case, that time, no, I will tell you what exactly to do. Here we will be discussing. Okay, fine. Finally, after you do all this procedure, what procedure? Verify whether comparative information agreed to last year, whether accounting policies are matching or not, whether changes are accounted or not, whether material misstatement is in comparative which is having a material impact on the current year or not. If at all prior period statements were audited by the same auditor, you are only audited, and 560 requirements. Finally, get a written representation for every period referred in the auditor's opinion. Generally, in a corresponding figures approach, auditor's opinion will only cover current period figure. Auditor's opinion will not talk about last year figure. So if at all I'm giving opinion on current period figure, then I will get a representation that all the current period figures were correctly accounted and disclosed. Finally, I will get a specific representation regarding any prior period item disclosed in current year P&L. Suppose the company has accounted prior period items in the current period. I have to ask management, please give me a specific representation that all the prior period items were correctly accounted and disclosed. I want a declaration. So I will ask a representation. Directly in exam, they'll ask you this question. Write about audit procedures for comparative information. 4 marks. Fine. This is generally for comparative. Sir, corresponding figures, exactly what is the reporting requirement? I understand until now corresponding figures means only current period figures we will talk about. We will not talk about last year figures and all. Okay, reporting requirements for corresponding figures are exactly what? You know what? In the recent January 25 CA inter exam, forget about final year, your final, right? CA inter exam, they asked about comparative financial statements. They asked about comparative financial statements in CA inter exam. Till date, even in CA final it was never tested, but in CA inter it is tested. Honestly, I'm telling you guys, today CA inter audit paper is tougher than CA final audit paper. The standards at which, the level of depth at which at CA inter now questions are being tested is very advanced. Okay, fine. Anyhow, when I'm discussing that point, I'll tell you. Now, audit reporting regarding corresponding figures. Sir, what we report in corresponding? Just now you told, no. Corresponding figures means we only report on current period. We don't talk about last year figures. So should I have to report about corresponding figures? Generally, no. You see, by the way, corresponding figures means what? Corresponding figures are nothing but comparative information only. That is comparative information only, where prior period amounts and disclosures are presented as part of current period financials, and these prior period figures, no, you should read only along with the current period figures. The detailedness, last year figures, what detailed you will show, how much depth you will show, it is decided by the relevance to current period. This is corresponding figure. Now, auditor's opinion. What is auditor's opinion? Just a minute. What is auditor's opinion? Generally, auditor's opinion on auditor's opinion shall not refer to corresponding figures. Actually, on corresponding figures you can remove it, on corresponding figures, this you strike off. Okay, fine. So generally, auditor's opinion shall not refer to corresponding figures. However, there are 4 circumstances. You see, except in the following cases. This is tried question was asked in CA final. Under what circumstances auditor's opinion may also refer, or auditor's report may also refer to corresponding figures. Generally, auditor's opinion or auditor's report do not refer to corresponding figures, but under what circumstances corresponding figures will also be discussed by auditor in the audit report. There are 4 circumstances where we talk about corresponding figures also in the current year audit report. We talk about corresponding figures. We talk about last year financial statements. We talk about that in the current year audit report. When? First point, last, from bottom I will come. 1. Prior period financials, no, not audited by me. Previously another auditor was there, he audited. So there is a disclosure requirement. What is it? Under other matter paragraph. Where? Under other matter paragraph. What you have to do? If prior period financials were audited by predecessor auditor, other matter paragraph, in the current year audit report, other matter paragraph, state that financials were audited by predecessor auditor for last year. What opinion he gave? Why? Suppose last year he gave modified opinion. In the basis for qualified opinion, adverse opinion, disclaimer, some opinion he gave, no, that basis, copy that matter and report it. Date of the predecessor auditor's report. Sir, last year some other auditor has audited, sir. Very simple. Who audited? Give that information. What opinion gave? Information. Date of the report. That's it. Second, another scenario. This is one situation where prior period financial statements related information I will refer. Another situation, sir, prior period financials were not at all audited, sir, which means opening balance is not audited. Then if prior period financials were not audited, state the same in other matter paragraph that corresponding figures were not audited. This statement does not reduce responsibility for opening. Just because you're saying last year figures were not audited, that doesn't mean you're exempted to verify opening balance. As per 510 standard, you should still get opening balances, sufficient appropriate evidence. Second scenario. Third scenario, sir, material misstatement is existing, sir, in prior period, and on which no last year auditor gave unmodified opinion, sir. Prior period financials contain a material mistake, and on that no last year it was not discovered. Unmodified opinion is given. Is it corrected in current period? Check out. Verify whether the mistake was corrected under the financial reporting framework in current period. Check out. If not corrected, sir, last year mistake is there. Last year auditor gave unqualified opinion. That mistake is carry forwarded now. Now it has a material impact. It is corrected. No problem. If it is not corrected, you express a qualified or adverse opinion on the current period financial statements. That's it. So indirectly, if a material misstatement is there in the prior period financial statements on which unmodified opinion is given and which is not yet corrected in the current period, if the impact is severe, you will give qualified opinion on the current period figures, because there is a carry forward of the mistake from the opening balance. That's it. That is the third scenario. Fourth scenario where corresponding figures related, opening balance related, comparative information related will be covered in our current year audit report. Unresolved prior period modification. Unresolved prior period modification. What does it mean? Last year, no, prior period auditor gave a qualified opinion, disclaimer or adverse. And why? What reason? That remained unresolved in current period. Same reason is continued in the current period. Then modify current period opinion. You please modify current period opinion. Why? Last year auditor gave a modified opinion. That reason why modified opinion was given exactly carry forwarded now also. Whereas here, no, in the B point, no, last year auditor gave unmodified opinion. So here it is different. B point, mistake is there, but he did not find it. He gave unmodified. You discovered mistake in the last year now. That time this point, sir, last year mistake is there, auditor discovered, he already gave a modified opinion, and the reason, no, management did not rectify later. Same reason present now also. Now current period also you modify the opinion. Current auditor shall modify the opinion if previous audit report contains a modified opinion and the matter remained unresolved, provided in the basis for opinion section, in the basis for modified opinion para, refer both current period figure and corresponding figures in the basis for modification para if unresolved matter materially affects the current period figure. If at all, last year auditor gave modified opinion, and it is materially affecting in the last year, and the same is carry forward in current year, not yet resolved. In the current year also it is materially affecting. Modify on the current period financial statements in the basis for qualified or adverse opinion in the current period. No, refer about current year figure, last year figure, say that there is a mistake like this and it's a material in the financial statements. Not material. For example, matter is not yet resolved, but in the current year it is not material. But in the current year, it is not a material. Last year mistake is that last year balance, last year opening balance is materially misstated. But it is not material in the current period. In the current period, business has become so big that mistake became very small. But current period figure, you have to compare with last year figure. No, current year is free from material mistake. Why free from material mistake is there on current year, but that's not material. So current period figure is free from MMS, but last year figure is containing material mistake. Comparability is affected now. So if at all unresolved matter is material in current period, you will qualify current period. If it is not material in current period, sir, not material in current period, sir, explain. Current period opinion is modified because unresolved matter is affecting comparability of current with the prior period figure. That's it. Getting it? So that's it. So yeah, Vamsi, somebody is saying it is like a CA inter class. It's CA final syllabus, Vamsi. You don't know syllabus, CA final syllabus. Fine. So that's it. So this is regarding corresponding figures. Next. Now, audit reporting for comparative financial statements. In the recent CA inter exam, Jan 25, it was asked. Remember, in CA final also they can ask you, obviously. So therefore, now audit reporting for comparative. For comparative, no, auditor's opinion shall refer to each period for which financials are prepared. I told you, comparative financial statements is not a general purpose financial statements, not a general purpose framework. This is not popular in India at all. It is popular in US. Now further, no, sometimes what happens, you are the same auditor. Last year financial statements you gave some opinion. This year again, company requested you to audit last year figures also. They requested you to audit once again. No. And what happened, last time when you audited last year figures, that time you gave unqualified opinion. This time again when you are auditing, you got modified opinion. Are same auditor, no? Why are you giving two different opinions? Last time you gave unqualified, this time you are giving qualified on the same figure. What happened? If auditor's opinion on prior period financials differs from previously expressed opinion, disclose reasons in other matter paragraph in the current period on the comparative financial statements. Simple. Next, sir, prior period financial statements. Just a minute. Prior period financial statements were audited by predecessor auditor. This is a small, simple disclosure requirement here. Prior period financials were audited by predecessor auditor. Same disclosure. In other matter paragraph, state that they were audited by predecessor auditor, type of opinion, date. Suppose material misstatement is existing in prior period financials on which previous auditor gave an unmodified opinion. Same point is there, no? Communicate with management and notify the previous auditor if possibility is there. If prior period statements are amended, no, predecessor auditor issue new report, no, current auditor reports only on the current period. That's it. You don't have to report on the comparative financial statements. But generally, this is not reality. This is not practical. Comparative financials, when you were appointed specifically, you should give opinion on all the years. That's it. And if prior period figures were not audited, same corresponding figures, what reporting requirement applies? Same reporting applies here. In exam, what is most important is corresponding figures is most important. Comparative financial statements not that important. For your information, now immediately you might say, sir, just now you told in CA inter this question was asked. No, why? What is a guarantee that in CA final they will not test comparative financial statements? What is a guarantee? You know what? In CA inter, though they asked comparative financial statements, the question was wrongly asked. Their intention is corresponding figures. They by mistake use a comparative financial statements in the question paper. And suggested answer, they gave only this answer. Suggested answer, they gave only this particular point and this particular point. That's it. So corresponding figures is only important. And I request you to listen once again this particular standard so that you will get more clarity. That's it. 710 is over. Then I will go to 720. 720 standard. What is 720 standard? What is auditor's responsibility? What is auditor's responsibility related to other information? What is other information? For example, I will show you Air India audit report or SBI audit report. I will show you. You see SBI audit report, almost 364 pages here. 364 pages SBI audit report. You see, what are the, annual report, annual report. SBI annual report, you say 360. What is SBI? What are the products offering? Financial legacy, ratings, awards, environment, people, community, governance, central board of directors, members, local committee, direct report, CG report, business responsible report, then financials, notice, initiatives. So much is there in the annual report. And you see here, I will show you, total assets are 61 lakh crore. deposit 49 lakh crore. Some financial highlights they are showing. Now, what if, look at this question carefully. I am reading this annual report. I got this annual report. I saw total assets number here. I saw income number here. I saw interest income all that here. And I thought everything is genuine and I proceeded further. Then I saw balance sheet P&L where the balance sheet total assets value is not this. Some other value is there. Immediately as a user, what I will feel, array, company annual report is showing 61 lakh crore, balance sheet which is signed by auditor is showing some other number, which is correct. People will get a doubt, right? Exactly. To answer these kind of scenarios, only 720 standard has been brought. What 720 standard they are saying? What is the objective of the auditor? Check whether material inconsistency is there between other information and financial statements. Sir, first of all, other information means what? Remember guys, other information is different from other matter paragraph. Other matter paragraph is different. Other information is different. So I am talking about other information. What is other information? You see, definition is given. What is other information? Other information can be financial information, non-financial information. It is included in annual report. Remember, other information is included in annual report, but does not include financial statements and audit report. It won't include financials and audit report, except financials and audit report remaining. For example, State Bank 365 pages annual report is there. Inside that, no, 200 pages is financials. Rest 150, 160 pages is other information. That's it. Okay, now what is audit responsibility here? I need to read the other information. I need to read annual report. I need to take annual report. Read annual report. Whether other information numbers, financial statement numbers matching or not, check out. So, is there any inconsistency between other information and financials? Is there any inconsistency between other information and my knowledge about the company audit? Respond. If inconsistency is identified, report accordingly. For example, no, other information total turnover, balance sheet P&L total turnover not matching. I need to go further investigation, which is right. Sometimes, no, other information might be wrong. They wrongly mentioned a wrong amount. Balance sheet P&L I already audited, which is right. If this is the case, what auditor has to do? Exceptional cases, other information is right. In our balance sheet P&L, which I thought all these days true and fair, is wrong. How do I discover this mistake? Basically, P&L account and other information not matching. When they're not matching, I investigated. When I investigated, I found that P&L account numbers, balance sheet account, financial statements are materially misstated. I found what auditor has to do. Exactly is what the standard is dealing with. Now, what is an annual report? You just read this on your own. Okay. Now, what is the audit procedure for other information? Very simple. What is the procedure? You know, I will show you what exactly auditors will do for other information. Okay, I will directly show you what exactly auditors will do for other information. For example, you go to State Bank of India, standalone financial statements. You know, here you see other information paragraph will be there. Now, this is actually IFC report. Yeah, other information here it is there. Yes, below that, where is other information? Responsibilities auditor. Yeah, information other than financials and audit report, that is called as other information. No, information which may be financial, non-financial, other than financial statements and audit report. So what board of directors are saying here? You see, the bank board of directors is responsible for preparing other information. Okay, other information is what? Some CG report, that and all is there. What is our in connection with our audit? What is audit responsibility? Our responsibility is to read other information, identify whether is there any inconsistency with the financials and our knowledge obtained during the audit. If we have, if at all, if based on the work we performed, if at all other information that we obtained, you know, we conclude that there is a material misstatement of other information, we are required to report. What are they saying? Suppose, no, when we are reading other information and you know, financials, when we are comparing, if at all we found any mistake in other information, balance sheet P&L free, they are free from MS, they are right. Other information, if it is wrong, we have to communicate here. That point auditor is communicating in other information section of the auditor's report. Now look at our book. So what is the auditor's responsibility here? What is auditor responsibility here? Just a minute. What is the auditor's responsibility here? So what is the auditor responsibility? Just a minute. Yeah, it's there. So what is auditor responsibility? The auditor must obtain other information. First, get it. Discuss with management. Sir, what are all the documents you are including annual report? Ask them. Obtain final version of the document before you give audit report. Yes, before you give audit report. For example, if some documents are available after, suppose management, sir, first you give audit report, sir, we will give other information later to you. Then get a written representation that other information, once it is ready, they will give it to you first, then only they will publish here. Then, okay, management gave you annual report. Before you sign the audit report, they gave you annual report. Read it. Why are you reading it? Other information, check for inconsistency. Inconsistency with what? Other information, check with financial statements. Inconsistency, other information with your knowledge and indications that other information is materially misstated. For example, inconsistencies you found. You should determine. There is some small interruption happened. I'll continue. Other information. Yeah. So other information which I'm discussing, actually there is a small interruption. Yeah, I think now it is clear. Yes. So I think you understood it. Sudden interruption was there. Just once again, 1 minute. I will use my Mac system related one. Let me finish this one particular topic. Next chapter onwards, I will use my Mac setup. I think Windows setup is not. This is actually a very high configuration laptop, i7 laptop with 16 GB RAM, 4000 graphic card, 4050, 4060 graphic card, very high configuration laptop. I don't know why it is crashing. Okay, sometimes it happens. Okay, fine. So what auditor has to do? Just now you saw. So what auditor has to do? Read other information. Why you need to read? Inconsistency. Are there any inconsistency with financials? Are there inconsistency with auditor's knowledge? Are there indication that other information is misstated? Like generally no. Inconsistency is there. Other information, some inconsistency is there. Okay, what auditor has to do? Discuss with management whether misstatement is there in the financial statements. Discuss with management and see whether misstatement is in other information, or determine whether financials are misstated, or see whether you need to update your understanding about the company, because after reading other information you got to know so much additional details about the company. If you know about this, all these details before itself, you would have done audit in a different way. Your risk perception about the company changed a lot. Finally, sir, misstatement is in other information, sir. Other information, financial statements, they are not matching. Misstatement is in other information. The actual misstatement is in other information. So what auditor has to do? Suppose misstatement is in other information, request management to correct it. Management agree to correct, confirm the correction. Management refusing to correct, communicate with top management. Misstatement is identified before date of audit report. If not corrected, consider impact in audit report. Withdraw from the engagement if at all other information is materially misstated and company is not correcting it, which means integrity of the management is doubtful. All these days you are trusting them and doing audit. Who knows? So if misstatement is identified after the date of audit report, if at all corrected, perform necessary procedures. If at all misstatements are not corrected, 560 action we should take, because other information is given to you after the date of audit report and you found a inconsistency between other information and audit report, and this inconsistency between other information and audit report, if you investigate, you found out that other information is only materially misstated, then 560 procedure you need to perform. 560 means what? After audit report date you found some fact, yes or no? So ask management to once again send a revised annual report. If not, you take back the audit report. In the other information section you modify that. Suppose financial statements are materially misstated. If auditor identifies a material misstatement in financials, they should respond appropriately. Finally, what is the audit reporting requirement? What is the audit reporting requirement? The auditor must include a separate section called other information in the audit report. This section should include a statement that management is responsible for the other information, identification of other information obtained before the date of audit report. For listed entities, other information, anything obtained after date of audit report, statement that audit opinion does not cover other information, no assurance is given, and the auditor shall describe auditor responsibilities like reading, considering, reporting. Very simple. Don't think it is very theoretical. Here it is there. In reality, you see, the management is responsible for other information. The other information includes so and so items, all that. Yes or no? And our standalone financial does not cover so and so. in connection with our audits, our responsibility is to read other information. Yes or no? And we do not express any form of assurance on other information. Our responsibility is reading only. Based on our work, if at all other information contains mistake, we have to report that matter. And finally, State Bank of Auditors said what? We have nothing to report here. So what is the description? What is mentioned in other information section? In exam, they'll ask you like this. They'll ask you, write about auditors reporting requirement for other information, 5 marks. Or they may ask you, if other information contain material misstatement, what auditor has to do? A 4 or 5 marks question they'll ask. Yes or no? What is the audit procedure for other information? 4 or 5 marks question. What is audit reporting? First auditor has to tell that. What is the other information? A statement that management is responsible. State Bank of India, you see, bank's board of directors is responsible. Identification of what is exactly other information, tell. A statement that your opinion does not cover other information and you're not giving any assurance on that. A description that auditor responsibility relating to consideration of other information. If information obtained, this point is not required. That's it. For example, ultimately, material misstatement is in other information. You requested a company to correct it. They are not correcting it. You will give unmodified opinion only. You will not have any, because here mistake is in other information, man, not financials. When you will give modified opinion, when financials are materially misstated, you will give modified opinion. Here the other information is materially misstated, so you will still give which opinion? Unmodified. But report this mistake in other information para. Sir, MMS is in financial, sir. I requested management to correct it. Modified opinion you will give directly, because mistake is in financial statements. That's it. 720 standard is completed. That's it. Okay. Those of you who are watching merged version, no problem. Those of you who are watching independent videos, no, actually live was cut in between. So watch the previous video. You will find, go to my channel here, Harsha live. You will find individual videos. Okay. So watch before this video, some video will be there. So that you watch continuously this video. 720 majority discussed in that particular topic already. That's it. That's it. So with this, 720 standard is completely done. We are still left with 2 more standards only, 610, 620. We are left with 2 more standards, 610 and 630. 610 and 620. 610. Using the work of internal auditor. What is it? Using the work of internal auditor. Just a minute. So, this topic is explained in our book in Audit Planning and Strategy Execution, but reference for this is given as part of reporting. We have to discuss 600, 610, 620, all the 3 as part of audit report topic only. That is when you get a very good understanding. Fine. Now, just 610. What is the 610 standard is all about? What exactly the 610 standard is all about? Yes, just a minute. Just 1 minute. So 610, using the work of internal auditor. The standard divides internal auditor. Who is using the work of whom? External auditor using the work of internal auditor. Now you see, most important point here, external auditor responsibility. What are they saying here? External auditor responsibility, you see here. So external auditor has complete responsibility, sole responsibility for the opinion expressed. The responsibility is not reduced because you are using internal audit function or direct assistance. Just because you are using internal auditor, you cannot blame him tomorrow. Okay, you are only responsible. But if you recollect SES 600, if you recollect, external auditor has a divisible responsibility, because branch auditor is also external auditor, you are also external auditor. In SA 600, for branch audit, subsidiary company audit, component auditor only responsible. You are using their report. But here, if you are using internal auditor report and trusting that and you are giving opinion, if tomorrow internal audit report went wrong, you can't blame him. You can't tell people that go and ask internal auditor, I believed him. You can't. Internal auditor work, if at all you're using, you are only ultimately responsible. So the external auditor is, first of all, there is no compulsion for you to use the work of internal auditor. It is absolutely your discretion. Okay, so standard started with directly, you are only 100% responsible. Now what exactly the standard is giving, what the standard is doing, standard is giving you guidance. What guidance standard is giving? Determine, how to determine can internal audit function be used or not. You know, actually the standard divides internal audit function into two categories. Just a minute. So internal audit function can be used, internal audit function can be used in two ways, type 1, type 2. Internal audit function can be used in two ways. One is type 1 and type 2. Type 1, using work performed by them, they already performed the work and you are taking those workings. Type 2, direct assistance. What is direct assistance? No, you are taking internal auditor into your team. Internal auditor is there, no, suppose company has some 150 internal auditors, very big listed company, they have 150 team members. Suddenly when you go for audit, no, your team members are not sufficient. You expected some work is there, 30 days work you expected, but suddenly now the work is increasing to 50 and company directors are saying, sir 50 days and all not possible, sir, you please finish in 30 days. Sir, I don't have staff, my articles all together 20 members we came here, so we don't have enough staff, you told. Then directors gave an option, sir, do one thing, sir, our internal auditors, some of them very competent, they are all CS, sir, you can take them into your team, they told. You decided to take them into your team. That is called direct assistance. So what auditor has to do in case of direct assistance? What auditor has to do in case of direct assistance? Just a minute. You come directly to direct assistance first. External auditor, usage of internal audit function staff for direct assistance. By the way, you know, in number 24 paper, this question was asked. This question, documentation. This was asked. What is the basis for decision on use of internal audit work? On what basis you decided to use their work? Who reviewed internal audit work and what is the date and extent of review? Written agreements from management, working papers prepared. This is nothing but documentation. This was asked in November 24. 5 marks question, in compulsory question they asked. Anything they can test, every attempt, 610 standard, 620 standard, 600 standard, almost in the entire 700 series and 600 series, 570, pakka some question will be there. Audit report, the weightage is 50 into 20 marks, as I already told. Fine. So documentation, we'll come back to it once again later. So using internal audit function, internal auditors are called as internal audit department or internal audit function. Using internal audit function staff for direct assistance. Direct assistance means what? You know, direct assistance refers to use of internal auditors to perform audit procedures under direction, supervision and review of external auditor. Under my direction, under my supervision, under my review they will work. Just like my articles, know how my articles work under my direction, supervision, review, the company's internal auditor staff will work under my direction, supervision and review. Getting it? That's why it's called direct assistance. They're directly part of my team now. Now, you know, can I take direct assistance? Yes, standard is permitting you, no problem at all. You can take direct assistance. If not prohibited by law, the external auditor shall, you can take direct assistance. But when? Check their competence. Are they competent? Are they have enough training? You know, they are internal auditors. You are a chartered accountant. They may not be a chartered accountant sometimes. So see whether they're competent or not. Second, see whether they are objective, in the sense they are independent. Do they have objectivity or not? Especially see whether any threats to their objectivity, threats are there for their objectivity. For example, no, threats means what? Look at organization status. In the organization, what is their status? Check out. Just a minute. Yeah, in their organization, what is their status? How organization policies are supporting their objectivity. See whether do they have any family relationships in the company. See whether internal auditor have any personal relations with the people working in the company. Are they having any association with the branches or departments of the company? Check out. By asking this, you will understand whether they are independent or not. They are internal, okay, but still they may be independent. No, check their objectivity. Check their unbiased nature. See whether they are unbiased or not. See whether they are competent or not. Suppose no, you decided there are significant threats to objectivity. You decided no, they are not objective and they are lacking competence. You shall not use internal auditor, direct assistants. Direct assistants don't take if they are lacking competence, if significant threat to objectivity is there. Do not use internal auditors for direct assistance. Simple. Okay, sir. I checked, sir. They are competent. Two members, no, they are competent and they are objective, unbiased. Like, I can happily take them into my team, sir. Can I take them? Yes, take it. Now, can I allocate work to them? Allocate, but don't allocate the following works. External auditor shall not use internal auditors for direct assistance for procedures. This question was also asked. Restriction on scope of work from direct assistance. You take them into your team, no problem. You give them works, no problem. But the following works, don't give them. Which works you should not give them? Works, audit procedures involving significant judgments, don't give them. You only do, or your own team is there, right? Give them. Audit procedures related to higher assessed risk of MMS areas, no, some high risk is there which requires significant judgment, don't delegate them. Remember, though they are objective, though they are competent, at the end of the day they are management staff. Don't give them high risk works, high judgment works. Don't give them the work which already performed or planned to be performed by management, or which they are already performing and reporting to management. Some works, no, they already worked on it. The same work you want to delegate once again, don't give it. Relating to decisions, external auditor shall make under 210, sorry, 610. Under this standard 610, no, the stat auditor has to make some decisions, right? What decisions? Type 1 work, can I use their work or not? Type 2, can I take direct assistance or not? Like this decisions and all, who should take? You only should take. Suppose, no, company internal auditor is part of now your team. Now you are asking him, hello dear internal auditor, I have to take some decisions as per 610. In 610 I need to check so many things. Can you decide on behalf of me 610 related decisions? That you should not do. That you should not delegate him. Under 610 standard, whether to use internal auditor or not, whether to take direct assistance or not, some works will be there which you only has to do. You can't delegate them. So these 4 types of works you should not delegate. Straight away 5 marks question will come. Fine, sir. I evaluated competence, all that too. I took them into my team and I gave them certain works. I have not given severe works. Now they completed work, sir. What should I do? Review the work performed. External auditor shall direct, supervise, review. When you are doing this, no, recognize that they are not independent. Review audit evidence which they got. They performed, no, just like how your articles, no, when they performed the work, you verify what documentation they made, right? Same way their documentation also verify. Ensure internal auditors who provided you direct assistance, no, obtain sufficient appropriate evidence. Finally, enter into written agreement. Before you even start the work, a formality is there. A formality is there. You know, what is a formality? Before using internal auditor for direct assistance, the external auditor shall obtain from management, from internal auditor, written agreements. What written agreement? Written agreement from management that they will allow internal auditor to work under by direct assistance. And whatever period they're working with, you know, they will not intervene. Get from management one agreement. Same way, internal auditors who are coming into your team, right? From them also written declaration you take. What? They maintain confidentiality. Get a declaration that they will maintain confidentiality. It's a promise. Get a promise that they will inform me any threats to their objectivity. Suppose after they come into my team, no, management is poking them from behind. Hey, what is happening? All that. They should immediately come and tell me that management is disturbing them. That's it. I should get type 2 work means this. You know, there is a question on this question bank. For example, just a minute. You see here, there is a question. So some questions were there on 610. One question is a fantastic question. Direct assistance related question. Yes. Some formalization, some question is there. I'll just show you. Okay, not this. I think here you see the question. You see here one question how they asked. What are the activities to be performed by statutory auditor prior to using internal auditor? Activities. Before I use internal auditor and direct assistance, what activity I need to perform? This is a newly added question in internal audit chapter. This actually internal audit chapter is there. Inside that chapter they have added a new question. So what is the formality? So you see here, what formality, what activity you need to perform? Nothing but obtain written agreement. One from management, one from internal auditor who is providing direct assistance. So the same point is given as an activity. This is nothing but written agreement point is nothing but activity to be performed. Activity to be performed by external auditor before starting the work with internal auditor. That's it. Clear? Then now let's discuss type 1. Let's discuss type 1 work. Type 1. Type 1 means what, you know? I am not taking them into my team. They already worked on it. Suppose, I want TDS reconciliation. For example, GST, TDS, Provident Fund reconciliation I want to do. And GST, for example, the company has 15 states. 15 branches were there in 15 states. 15 into 12 months, 180 returns. Into 2 returns monthly. 360 returns they are filing in a year. And I need to verify as part of Caro whether company is paying GST correctly or not. I need to verify entire 360 returns, so much data I need to verify. But luckily, internal auditors have already prepared one big Excel sheet, reconciliation sheet they already prepared. I want to use that work. Can I use it? Yes. But before using, check 3 parameters. What are they? Objectivity, competence. Do they have a systematic, disciplined approach? See, in internal audit, direct assistance, no, this point is not there. Why it is not there? Because in direct assistance, you are not using their work. You are using them only. You will give them how to, you will tell them how to work. Whereas in type 1 work, no, you are using their work. When you are using their work, you should know how their work culture is. So, the objectivity. What is the internal audit function, organizational status and relevant policies? Are they supporting objectivity in organization? The organization, what is their status? How organization policies supporting their objectivity? What is the level of competence of internal audit function? Internal audit is the right. What is their competence? Refers to knowledge and skills. Do they have proper skills and knowledge? And whether internal audit function, are they applying a systematic and disciplined approach including quality control? Yes or no? So just to check whether are they applying systematic and disciplined approach including quality control. Do they have established quality control policies and procedures? Check out. You shall not use, external auditors shall not use IIF work. 3 cases. Objectivity is not adequate. Sufficient competence is not there. They does not apply systematic disciplined approach including quality control. Don't use them under type 1. Don't use their work. Dangerous for you. Sir, for example, I decided, sir, competence is good, sir, objectivity is good, they have a systematic approach, sir. Can I use the work? Yes. What kind of work you can use? What is the nature and extent of work? This itself a 4 marks question. By the way, this itself, what are the factors the external auditor shall evaluate? This itself a 4 marks question can come. Suppose you decided to use. What nature of work you can use? To what extent you can use? Remember direct assistance, there it is clearly told, if internal auditor is not, significant judgments, don't delegate them. Significant risk area, don't delegate them. So big areas, risk areas and all, don't delegate. Similarly here also. So external auditor considers nature and scope of work performed by internal auditor or planned to be performed by them. So what work they are performing or what they are planning to perform, first I need to consider that. And examples of work that can be used. So what are the works that I can use as an external auditor of internal auditor? Testing internal controls, substantive procedures involving limited judgment, inventory physical count. Suppose I want to do inventory physical count, I can take internal auditors. I can take their counting related works and all. Tracing transactions. I want to verify some transaction books. So for that I don't have that much time, so I can ask him, please you verify. They already traced transactions and all, prepared reconciliation reports, all that, and then they kept ready. Take that work. Testing compliance with regulatory, compliance with law, GST reconciliation, TDS reconciliation, Provident Fund reconciliation, and components are there. Company has subsidiary companies, branches which are not significant to the group. Reviewing the financial information, the component financial information which is not a material component, they already reviewed and prepared review reports and all that you can use. Next, so the external auditor always remember, when you are using their work, it should always, management of the company should feel that you are still working. Management should not get an assumption that external auditor for everything is asking internal auditor work only. What external auditor is doing, they should not feel that. External auditor shall evaluate whether using IAF planned work, you planned to use his work, right, would still result in you sufficiently involved in audit. Check out. Don't give an assumption, don't give a perception to the management that you are using too much internal auditor. So remember, external auditor shall make all significant judgments in audit. You cannot depend on internal auditor. The more judgment is required in planning and performing audit, you should only make. More judgment is involved in evaluating evidence, you should only make. Assessed risk of MMS is higher, you should only do that work. IAF objectivity is not adequately supported. He is not having proper objectivity. He is not having, he is having lower level of competence. In all these cases, external auditor only shall involve more. Suppose, sir, okay sir, I decided in some so and so works I decided to use sir. Now use his work. How to use his work? First discuss planned use of IAF work. First discuss with him, dear internal auditor, you are doing all these works, right? I want to use so and so works from you by so and so timelines. Read the reports of internal audit function, understand exactly what kind of works they are doing, what findings they did, what are all the related findings, and perform the procedures. Now they gave you GST reconciliation, no? Will you see and directly copy in your documentation? No, you need to verify that workings whether correct or not. The external shall perform sufficient procedures on the internal auditor's work, whether it is adequate or not. You should check whether work of IF is properly performed, sufficient appropriate did they obtained, conclusions are they reaching correctly, whether the reports are proper as per the results which they obtained in the audit procedure. Now it depends upon the amount of judgment, to what extent I review their workings. I'm taking, I should review the workings, to what extent. It depends upon how much judgment is involved, what is the risk involved, what is their objectivity, what is their competence. Suppose it involves low judgment, it involves, for example, just a minute, suppose it involves low judgment, it involves low risk, objectivity is very good, competence is also very good, I may not verify too in depth about his workings and all. That's it, 610 over. So now look at the objective of the standard. Now you will understand, what is the objective of the standard, what the standard is telling you. It will help you to determine whether work of internal audit function type 1 direct assistance can be used or not. If at all you decided in which areas, to what extent you can use, especially type 1, no, whether internal audit work is adequate or not also you have to check. Adequate means what? You take their working, see whether their workings are sufficient for you or not. Type 2, how to direct them, how to supervise them, how to review them, that guidance and all is given in the standard. Just now we covered, that's it. Now you read this once again, then you watch once again this entire 610 related video and read this once again. I will bet you will get a clarity like never before. That's it. Now finally the last standard in reporting chapter. Actually 600, 610, 620 were not as part of reporting chapter in CA final book. In our CA final reporting, in my reporting 7th chapter, 5 standards I have kept in reporting chapter: 299, 570, 600, 610, 620, which are belonging to other chapters, but I kept as part of my book, getting it in 7th chapter. Okay, so that's, I'm just for the convenience sake we are discussing. Now 620, using the work of auditor's expert. What is the standard is dealing with? Using the work of auditor's expert. Just 1 minute. Yeah, using the work of an auditor's expert. First of all, who is an expert, in auditing standards and all? Expert means a person having a skill or talent in any field other than accounts and audit. Accounts and audit is not an expert. From our point of view, accounts and audit, we are already experts. From our point of view, expert means what? Who is expert in something else, not accounts and audit. Now this expert is two types: management expert, auditors expert. Management expert means what? Whose work is used by management company in preparing financials. Suppose if the work is used by auditor to obtain sufficient appropriate evidence, then we call him as auditors expert. Auditors expert is again two types: internal expert, external expert. Who is internal expert? Auditors internal expert. In my firm, I have one fellow who is a lawyer. He is working in my firm only. He is internal expert. External means what? I consulted some known lawyer in the city. He is not part of my firm or network firm. He is external expert. Now, who is an expert? Expert is an individual or maybe organization with expertise in any field other than accounts and auditing. If that work is used by auditor for getting evidence, we call him as auditors expert. If that expert work is used by management for preparing financials, we call it as management expert. What is the standard exactly dealing with? Actually using the work of an auditor's expert. Auditors expert work, how to use, you see this, just a minute. You see this applicability. So what the standard says, by the way, sole responsibility. Again, the auditor has sole responsibility for the opinion, even though you are using auditor's expert work. So you can't blame him later if at all something went wrong. Okay, that's it. And again, suppose management expert already done some work and you are using the same workings, no problem. Sir, first of all, expert wise, sir, insurance companies, they need to create some provisions for employee benefits. Normal companies also may need to create provision for employee benefits based on statistics, all that, some complex calculation, all that. Actuary support they will take, and accordingly they will recommend a provision, and that provision is what companies maintain in the books of accounts. Whether that provision is correctly calculated or not, how do I know? Because I also don't know how to calculate that provision. I need help of an expert. Now already company said, sir, management, we already hired an actuary, sir, he is an expert, credible person, they said. Now see, what exactly? Now what is the objective of the auditor? First let us discuss and then we'll come back to that example. To decide whether to use an auditor expert or not, the standard is giving guidance on whether you can use auditor expert or not, to ensure that expert work is adequate. Okay, if at all you are using auditor's expert, you should know whether his work is correctly done or not. Examples: valuation of financial instruments, tax issues, actuarial calculations, interpretation of contract, estimation of oil and gas reserves, insurance companies claims incurred but not reported, provision calculations, so many. Then what is the need of an expert? What determining need of an auditor's expert? An auditor may need an expert in areas like understanding entity, assessing risk, designing audit procedure, evaluating evidence. You see, all the stages of audit are covered: understanding the entity, assessing the risk, performing the procedures, getting evidence and evaluating. All the stages in audit. What are the stages in audit? Understanding the entity, risk assessment we do, then we plan and perform audit procedure, then we get evidence. Any stage of the audit you can use the expert. Remember, an auditor can use expert. First of all, do auditor require an expert? It depends upon how much understanding auditor has on that field. Generally, you can understand any field related data by experience in auditing those entities, or having some education qualification in that field, or through a professional qualification like formal course, or by discussing with another auditor who already performed similar work. For example, provision for gratuity. It requires some complex calculation assumptions and all. In a company, imagine there is a company called TCS. It has 7 lakh employees. 7 lakh employees related provision for gratuity. Every year so many will be joining, so many will be leaving, so many will be joining, so many will be leaving. So complex. Some statistics and all you should keep in mind. So some actuary is there. He worked on provision for calculation, all that for the TCS. So you should know whether you can understand this provision correctly or not, or you need an expert help. So that you need to. So how do you know general? How do you understand about other field? Generally we get understanding of some other field by doing audit of that entity, or education qualification in that entity. For example, I got certification course on provision calculation for gratuity. So through that I can become expert in provision calculation, or I can discuss with fellow auditors who already performed that work. If at all no, I am understanding like this, I may not require an expert. Suppose no, I am not having all these sources, then I want an expert. Further no, should I directly hire an expert? Should I directly hire an auditor expert and ask him to work everything once again and tell management number in the balance sheet P&L is correct or not? Should I hire and then ask him? No need directly. Don't do that directly. Auditor may consider first management used expert. Array management already used management expert for calculating provision. In that time, at that time, no, when already management used a management expert, no, see the nature, scope, and objective of his work. Whether he is an employee of the company or third party, check out. See, just a minute. See, management has any control or influence on his work, check out. Check is the competence and capability. Check whether that expert is subjected to any technical performance standard, like just like you are liable for auditing standards, he is also liable for some standards. Check out that. Suppose no, management expert is liable for some technical professional standards and regulatory body. He is very competent. Management do not have any influence. He is moreover a third party, and he is his objective and scope is very wider and clear, very correctly, crisply designed. You can depend on his report. Why again go for auditor's expert? Unnecessary expenditure, waste of time and money and resources. Sir, management expert, no, he is employed by the company, sir, and he does not have a proper competence, sir. Management influencing him like anything, sir. He is not subjected to any technical professional standards, sir. He is not a member of any recognized body also, sir. Then you may decide to go for outside expert. You will bring the expert to calculate provision for gratuity in the company. Now, so the auditor will consider whether expert is a management expert, if whether management has already used the management expert, whether the matter is complex, is there a risk involved, high risk involved, what is the experience with that expert, and is there any alternative way you can get evidence. Suppose you felt I don't have any alternative, the only way I can get evidence on so and so calculation is through expert, and you felt that you don't have experience in this particular field, you felt that risk is very high, the matter is very complex, management expert is not competent and all, you felt, then you will decide what, let me hire our own expert. As an auditor, I will hire one expert, and then I will give him entire data from the company. He will calculate provision for gratuity and give me a report. That report I will compare with what company provision has calculated. If at all this report and that company calculation is not matching, if I feel our actual report is correct, I will tell the company, please adjust the financials because they are materially misstated. If company is not adjusting, I will give modified opinion. Fine. That's what we are now going to see that. Now, just a minute. For example, and obviously one important factor, even a standard is giving some clarification. Audit procedures are influenced by auditor's expert work. If I hire an expert, definitely my procedures get influenced. Why? I need to wait until his report is completed. So my nature, timing, extent of audit procedure, when deciding nature and timing extent, auditor's procedure will affect more extensive work I may have to perform, especially when the matter is complex and subjective, and auditor does not have prior experience with that expert, and auditor expert is performing, which is integral part of the audit, and auditor expert is external to the firm, not subject to firm quality control policies. What does it mean? See, suppose if at all expert is my internal expert, I know very well how he will work all that. Okay, I don't have to much think about all this. But if he's an external expert who is not subject to our quality control policies, who is not subject to our quality control policies, our firm quality control policies not subject to, means what? He is not part of our firm. So how he work, what is his work culture, we are not aware of it. At that time, I may have to extensively verify his work. I may have to extensively perform procedures. So in exam they'll ask you, under what circumstances more extensive procedures are required when auditor is using auditor's expert? When the matter is complex and subject to judgments involved, when you don't have a prior experience with that expert, and when the expert is performing procedures that is integral part, when the expert is not subject to firm quality control policies and procedures. So this they can ask you, or they can ask you, when management has used a management expert, what points you will consider? 4 marks question they'll ask you. Or they might ask you, what are the factors auditor will consider when deciding to use an auditor's expert or not? It depends whether company used a management expert, is it complex or risk involved, what is the experience you have, alternative. These are the factors that will help you whether to go for auditor's expert or not. Suppose you decided to go with auditor's expert. Just a minute. Suppose you decided to go with auditor's expert, your audit procedures will extensively affect. Extensive procedures you need to perform because you are using auditor's expert. When This question they can ask you further. Now again, okay, fine, I understand. Now, should I hire expert directly? No. Again, look at his competence, look at his capability, see what is his objectivity. You know he is a competent, all that. This expert might have relationship with the company where you're auditor. So look at the auditor shall evaluate competence, capability. In case of external expert, inquire whether he has any relationship with the company. Ask, do they have financial interest, business and personal relationship, all that. Suppose if relationship exists, discuss with the expert what safeguards can be applied so that he can work correctly. When whether expertise is liable for any technical standards. Relevance of the expert's competence to the audit matter. What is the relevance of the expert competence to the audit matter? Very simple, very simple. I want a lawyer's assistance. In this company there is a pending litigation relating to income tax case law which is pending at Supreme Court. The company showed it as a contingent liability, yes or no, and I want to take a legal opinion whether it's a really contingent liability or real liability. What is the probability that our company will win the case? So I want to take a legal opinion. I want to consult a lawyer. Now I went and consulted a lawyer who is not competent in this field, in this specialty. He is a lawyer, he is a criminal lawyer, he is not specialist in tax. So when you want a lawyer, again inside that who is the right person also you should check. That's it. And remember, evaluation about expert is a continuous process. Next, once you decided to bring an expert, agreement. This is asked many a times in the question bank. Almost all the questions, you just search with 620, you will find so many questions. Okay, so many. Every of this, guys, every box in my book, every box is tested as a question in the past. Trust me. Now, the auditor must agree. When you're recruiting, who is recruiting? Auditor's expert, auditor only recruiting. So auditor must have an engagement letter with expert. Nature, scope and objective. What is the roles and responsibility of auditor and expert? Communication and timing and reporting. So when and all we will communicate, by what time you should finish report, all that. Confidentiality requirement. I should tell expert that, see, you have to maintain confidentiality because I'm giving you my company data to you. That's it. Now just 2 minutes, just 2 minutes. God, so hectic. Yes, finally we recruited expert, agreement is entered, everything is fine. Now you got the data from the company, accounting data, all that you gave to the expert. He already worked and gave a report. Now you need to check the report. Evaluating adequacy of the work of the expert, 4 marks or 5 marks question. What you need to check? See whether expert findings, he gave a report of findings, are they reasonable? First check out. Inquire what exactly work he did. Look at his working papers. See, observe what exactly work he is doing. Confirm with third party. Take second opinion also. Once again, take second. He gave provision of the company is wrong directly, so take second opinion. Okay, confirm with third parties. Perform analytical, re-perform. He has some calculations and all in workings. Do re-perform calculation. Discuss with another expert if at all possibility is there. Discuss the report with management also. And see reasonableness of the assumptions. If at all any source data is used, no. Suppose expert is using some data, how far that data, just a minute, how far that data is relevant, just a minute. So if at all expert is using some source data, how far the data is relevant. Yes, you see, yeah. So how far the data is relevant, reliable, comparable, all that. Then finally, suppose you felt expert worked, gave a report, somehow you felt that report is not adequate for the purpose of audit, somehow you felt that report is not adequate for the purpose of audit. Agree for further work, ask him to do further work so that you will get a proper working. You also do further audit procedure or engage another expert. If at all that work is not adequate, you are not getting clarity, it's a very big item in the financials, engage another expert. If at all auditor cannot resolve the matter, there is a limitation on you, you may express a modified opinion. Finally, reporting. You will give unmodified. Suppose no, after using expert work, you felt that company provision calculation, everything is correct. Unnecessarily you doubted. After expert report, you got everything is correct. You decided to give unmodified opinion on that matter. Should you talk about expert name in the audit report? No need. Why you talk? Unless it is mandatory in the law. In India, there is no law which says it is mandatory. Suppose no, expert gave one value which is completely different from company value, and you feel that company valuation is incorrect, expert value correct. You asked company, please rectify. Management said, no, we will not rectify. Now financials are materially misstated according to you based on expert report. Now you want to give a modified opinion. In the basis for qualified opinion, basis for adverse opinion, you need to tell the reason why you modified, right? Now people have to understand you modified because of expert report. At that time you can refer about expert name, reporting on audit report. Can I report about expert? Can I refer about expert name in the audit report? You can refer about expert name when you are giving modified opinion, so that people understand why you gave a modified opinion. Just because I'm referring his name in audit report, does it mean he is also responsible? No. The reference to expert does not reduce auditor responsibility for the opinion expressed. That's it. 620 standard is also over. So you see, what is the structure of the standard? Once again, what is the structure of the standard? Who is an expert? Who is the management expert? All that. Then they decided auditor was only ultimately responsible. Then they spoke about when expert is required, when your auditor has other field understanding, expert may not be required. And when you're deciding to use audit as expert, what points you will consider? If management has already used management expert, what points you will check? And you know very well, if you are using audit as expert, no, you are bringing audit as expert, your procedures will substantially affect, and you need to evaluate his competence, all that. Then recruit him, enter into agreement, you know, allocate the work, he did the work, check the workings adequate or not. If the work is not adequate, take another expert, ask him to work more, you also work more, and finally reporting. Simple. You rewatch once again this particular 620 related section, you will command like anything. You know, until now we finished 12 standards. As a part of audit report topic, we covered the minimum weightage I'm telling you as 15. Minimum weightage is 15 based on whatever we covered in the past 4.5 hours. Minimum weightage I'm telling you. Then in audit report topic, we have left pending with one more topic called CARO 2020. Important topic is CARO. There is 143 subsection 3 is there, but that is not that important at CA final level. CARO is important. You know, for CARO, what I'm asking you, CARO is exactly same in CA final and CA inter. I already did CA inter CARO. Just one thing I will show you. Okay, I will show you directly CA inter CARO. Okay, suppose if you just type audit marathon, most you will find mine only. Okay, you will find this one. Okay, which I uploaded 2 weeks back. Inside this, you know, you go here, timestamps will be there. Inside this you see CARO 2020, almost 1.5 hours I discussed. See, watch that CARO 2020, fantastically I covered. Same in CA inter, what is there in CA final, what is there, exact. The material also same, guys. CARO 2020 material is same in CA final and CA inter. ICA book also same. So that alone you watch in CA inter. That's it. Audit report topic is completed. The next topic, 800 series. Okay, we'll continue the next session. Continue the next session. 800 series I'm talking. 800 series is completely updated. 800, 805, 810 completely updated. After 800 series, 2000 series, 3000 series, 4000 series, then I will talk NBFC audit, bank audit, or maybe professional ethics I will start. Depends. That's it. With this, right now audit report chapter I'm concluding. That's it. Take care. And please before continue watching next chapter, if possibility is there, revise audit report fully whatever we covered and come back. That's it. And I think one small point I want to clarify. Supplementary information point in 700. Many students often have confusion. Supplementary just a minute. Yeah, what is supplementary information? I think this many I thought of I will just conclude on this. Supplementary information, very simple. Sometimes companies, they will give you additional financial information along as an extension to financial statements. In addition to financials, they'll give some additional financial information. Suppose you felt like that is also looking like forming part of the financials, you felt that is integral part of the financials, your audit opinion should cover supplementary information also. Simple. auditor's opinion should cover. Sir, that is not integral, sir. That is some additional information management is giving, some non-financial data management is giving along with financials. That's not integral at all. See whether company clearly differentiating it from financial statements. Clearly are they different? Suppose no, they mentioned supplementary information with the heading unaudited supplementary information not forming part of financials. Like that they kept a heading and then giving some extra matter. No problem. Sir, company is not clearly differentiating, sir. It is showed as if it's a extension to balance sheet P&L, sir. If this is not the case, request management to differentiate clearly. Management refuses, so they are not differentiating. Auditor identify the supplementary information and say that that is not audited. You know, very simple. When supplementary information is not integral part, SA 720 standard will apply, because this is treated as other information. That's it. So what is integral, what is non-integral? Example, direct question might ask you 4 marks. Write about auditor's responsibility relating to supplementary information. This is covered under 700 standard in our book. You know, in our book page number 95 it is covered. That's it. You open audit report topic in our book, you will understand what are all we covered in this particular chapter. Everything in a very neat manner I clear. You watch this marathon right now. Once again, you watch entire audit report topic and go and read this. You will see a different perspective. And from here on, I'm telling you guys, 800 series, 2000 series, 3000 series is just a cake catwalk to you. It's very easy for you. That's it. Okay. Yeah. Let's begin the 800 series revision class. And I know many of you are waiting for this particular revision class, 800 series especially. Okay, but before watching 800, I request you to finish audit report topic and then only watch this. Don't directly start with 800 series revision, because audit report topic is basis for entire standards discussion, especially 8000 series, 2000 series, most important audit report. Audit report without understanding 800 series, you can't comprehend it. Fine. Now, you know, like many students are worried on 800, 805, 810, sir, so much of amendment happened. What happened? Nothing. The amendment, if I tell you, you will laugh. The amendment that happened in 800 and 805, main amendment is the audit report format is changed. The main amendment that happened in 800, 805, 810, the main amendment is audit report format has been changed. Just 1 minute. Just 1 minute. Yeah. Yes. So, by the way, so audit report format has been changed. That is one major amendment. Another amendment that happened is, earlier, no, in 800, they used the word one exception, excluding internal financial controls over financial reporting. That is now removed. Indirectly, 800 scope is now extended to cover IFC also. Generally, we auditors give on adequacy and operating effectiveness of internal financial controls only as part of general purpose financial statements audit. We generally do not give opinion on IFC. We generally do not cover IFC reporting requirement as a part of special purpose financial statements. We all know entire 800 series is talking about special purpose financial statements. 800 is talking about special purpose framework, whereas 805 talking about single financial statement and specific element. 810 talks about summary financial statements. Okay, so IFC is all these days, we think what, before this 800 got amended, it is applicable only in the context of general purpose financial statements. There only we give opinion. Whereas in special purpose financial statements, the standard itself originally excludes that. Which one? IFC. Now that exclusion is removed. Therefore, now 800 standard as a part of 800 audit, when you are doing special purpose financial statements audit, you also can give, if terms of engagement specify, you may also has to give opinion on internal financial controls over financial reporting. That is one amendment. Only these two amendments. Third one more amendment which they brought is emphasis of matter paragraph. In SEI 800, no, earlier we may not use emphasis of matter paragraph. There is something called basis for accounting section in the old audit report format of 800. I don't know how many of you are able to comprehend this. That's why I'm telling you, audit report is fundamental for understanding 800 series. Okay, without understanding audit report topic, if at all some of you are reading 800 series directly, if at all without reading audit report, you are doing a big mistake. You are doing a big mistake, I'm telling you. Audit report without understanding, because no, the reason why 800 standard itself is changed is to comply with the 700 standard, guys. To comply with 700 only, 800 standard has been changed. Okay, fine. So, emphasis of matter paragraph is compulsory now if you are giving an audit report in accordance with 800. If at all you are giving an audit report on, special purpose financial statements, emphasis of matter paragraph is compulsory, where you have to talk about basis for accounting. Fine. Don't worry. I understood. Some of you are unable to comprehend. Don't worry. First, let us look at 800 original audit report format as per the pronouncement book of ICA. Don't worry. I already told you where you can download all this in the part 1 video. I mean, at the introduction to audit report itself, I told already. You see, this is one of the illustration, an auditor's report on complete set of the financial statements of the entity, okay, other than listed entity, which is prepared in accordance with financial reporting provisions of a contract. By the way, before I further go into, we all know the frameworks, the financial statements of an entity are either prepared using general purpose financial statements or special purpose financial statements. Any of this can be used, yes or no? If special purpose financials means what? Special purpose framework. Our entire standards, right from 200 to 700 series, all these standards predominantly by default talking about general purpose financial statements. Suppose if at all I am doing audit of special purpose financials, means the client prepared special purpose financials and they appointed me as an auditor for special purpose, then 800 standard also applies. For your information, if you see 800 standard heading, if you see, for your information, 800 standard heading, if you see the heading of the standard, special considerations, audit of financial statements prepared in accordance with special purpose financial statements. If audit of financials, okay, which are prepared in accordance with special purpose financials, what you need to do, specially what you should consider, which means when you're auditing financial statements which are prepared using special purpose framework, specifically what you should consider only 800 talks about. Generally, what should I consider? If at all I am auditing financials prepared in accordance with special purpose framework, special purpose financial statements audit, generally what should I consider? Here 800 talks only about special considerations. General consideration it is not talking. Sir, if I am auditing financial statements of special purpose, if I am auditing special purpose financials, generally what should I consider? Same. 200 to 700 series is applicable. Most important observation. When you are auditing special purpose financial statements, you have to still follow 200 to 700, all the guidelines you have to follow. Specially anything else that you need to follow? Yes, 800 will tell you what specially additionally you need to follow. So 800 is exclusively applicable for special purpose financial statements. Whereas the standards on auditing that we learn right in our normal auditing standards is 200 to 700 series. They are applicable predominantly for general purpose, and these principles can also be applied on special purpose financial statements. This is point number 1 which you need to understand. Without understanding this, you cannot understand 800 series. How many of you you really observe this point? I'm not sure, but if at all you learn something new point, just put it on a chat box or below comment as a video. It will be, your appreciation really matters. Okay, fine. Now look at, so first I will directly show you. Let us do one thing. I will not even discuss 800 first, because 800 I will come back at last. First I will discuss 805 standard. Right now whatever I gave is okay, we'll do one thing. We'll continue 800. We already started. No, we'll continue. Why to disappoint you? Fine. 8 illustration 1. Remember, between 800, 805, 810, 800 is only appears little tough because of the terminology used, special purpose financials, all that. Whereas 805, what is 805 actually talking about? 805 is talking about single financial statements. It is actually talking about single financial statement or specific element which may be prepared using general purpose framework or which may be prepared using special purpose framework, doesn't matter. But there it is a single financial specific element that may be prepared using general purpose framework or special purpose. Suppose If the single financial statement is prepared using special purpose framework, then 800 is also applicable. That's what the main point. Further, 810 is dealing with what? Summary financial statements. Okay, summary financial statements are generally drawn from general purpose financials, or summary financials may also be drawn from special purpose financials. If at all summary financials are drawn from general purpose financials, 810 plus remaining standards you have to keep in mind. If it is drawn from special purpose financials, 800 also you should keep in mind. Remember, 800 is not a substitute for remaining standards on auditing. 800 is only a complementary standard. That's why the standard starts with what? Special considerations. That's it. This is the basic introduction to enter 800, 805, 810. Now let's enter into the actual standard. Now before I start the actual standard, I just want to show you one audit report. You see how the audit report looks like on an 800. You know, this is the report where this is the amendment. Yeah, this is what the amendment in 800, not something easy as all the prepositions. Many students are, when I see amendments book on 800, what are all highlighted in 800 amendments is not that is not significant at all. The significant amendment is audit report format is changed, contents of audit report has been changed. That is a major amendment in 800. Guys, please come out of any particular any other misguidance that you are having, if at all. See the old audit report format of 800. This is a new audit report format of 800. This is now aligned. This audit report format is now aligned with the 700 format. Earlier 800 audit of special purpose financial statements, when we give an audit report on special purpose financials, we used to give as per 1718 before. Up to 1617 financially, we have old audit report format where introduction we will give, then management responsibility, then audit responsibility, then opinion, then basis for opinion. Like that we will give old format. Whereas from 1718 onwards, SAS 700 is revised, where first you will talk about opinion. That amendment which happened in SAS 700 in 1718, right? Corresponding amendment they brought in 2024 in 800 series, which is now applicable for the first time for May 25, September 25, Jan 26 exams of CA final. Okay, straight away opinion. Same, we have audited financial statements of so and so. In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are prepared in accordance with provisions of a clause. This is what the framework, this is what the special purpose framework. Here financial statements of the company were prepared as per provisions of a particular clause, particular thing. That is what the main basis. We conducted our audit as per standards on auditing. You see, they simply said standards on auditing. They didn't tell you 800 clearly. Means all the auditing standards will apply even when we are doing audit of special purpose financial statements. And our responsibilities are further covered under audit responsibility section. We are independent of the company. We have fulfilled code of ethics. We believe that our evidence, the evidence obtained by us is sufficient and appropriate. My dear guys, the same content is what we even covered in audit report topic, reporting chapter 700. Same exact format. Go and check. That's the reason I'm asking you to first watch audit report reporting topic. Okay, do not directly jump into this particular 800 topic. Now, emphasis of matter para. The next one is what? Emphasis. This is one important paragraph, most important. This is one major amendment. Right now, the 800 standard says you must compulsorily use one para called emphasis of matter. This is also called as alert paragraph. Under this 800 standard, this is also called as alert paragraph. Why? In the audit report, we have to compulsorily highlight on what basis the special purpose financial statements are prepared. What exactly the special purpose in that? Company, when they prepare special purpose financials, in the notes to account, they will clearly mention what is the basis of accounting. Exactly. So, that basis of accounting would have been already highlighted by the management, right? You should highlight that in the audit report. We draw attention to note number, and at the end, you see, our opinion is not modified here. So we are just highlighting what is the accounting method they followed. What is the basis for accounting for the special purpose financials? We are just highlighting that. And you see here, we not only highlight basis for accounting, we also talk about restriction on distribution and usage. What are we talking about? Our report, you see, Our report is purely this, our audit report we are giving, right? Independent audit report on special purpose financials. This is only for the company and other company, should not be used by other parties. And so we are alerting people, others don't use. This is exclusively prepared for the company, means we are telling that this audit report and the special purpose financial statements are restricted for distribution. They are not meant for public distribution. They are not meant for everybody usage. That alert we should highlight in the audit report. This is compulsory. Remember, sometimes no restriction on distribution and usage may not be required. We will discuss that also in the 800 topic. Then finally we will talk what are management responsibilities and what are auditor responsibilities. Auditor responsibilities are again exact same as it is, which is covered in 700. Responsibilities of auditor is divided into 3 sections: primary responsibility, additional responsibilities under SA, and communication related responsibilities as per 260. Finally, the firm, signature of the auditor, UD number, membership number, place of signature, date. That's it. This is how audit report on special purpose financial statement is amended, because of which Institute amended 800 series entirely. Audit report formats were updated in 800, 805, 810. In all the 3 standards, audit report formats were updated. This is the major amendment. In 800, earlier, the scope, what is the scope of 800? We used to audit special purpose financials excluding IFC. IFC we don't report. Now that exclusion is removed now. By removing exclusion of IFC, now when you're doing audit report, when you're giving audit report on 800, you can also give opinion on internal financial controls if terms of engagement require. That's it. Now look at the actual standard. So what is the scope of 800? What are the matters that are addressed in 800 standard? They talk about accepting, how to accept the engagement, how to plan and perform the audit, how to form an opinion, all that. So 800 is talking about when you can accept this engagement, how to plan and perform this engagement. So first of all, what is the meaning of special purpose framework? What is a special purpose framework? General purpose framework means what? Special purpose. I already requested, at the time of reporting chapter beginning, kindly watch CA Inter fundamentals time step. I told you to watch CA Inter marathon fundamentals topic. I requested everyone. There I clearly spoke about what is general purpose, special purpose. Once again I will discuss. What is a special purpose framework? It's a financial reporting framework. How it is designed to meet needs of a specific user. Very simple. A third party company, for example, you want to get a loan from a particular bank. Okay, and the banker has asked you gave them all your last 3-4 years general balance sheet P&L, general purpose balance sheet P&L, you gave them. They accepted it. Banker also requested one more balance sheet P&L. You know how? Sir, please prepare last 3 years balance sheet P&L on cash basis. They asked me. For example, they asked you. The company is requested by the banker to prepare balance sheet P&L using cash basis of accounting. Generally, is it generally accepted policy for the company to prepare on cash basis? No. But now for the purpose of banker, they are preparing on cash. Now banker has given one guidelines on how to prepare financial statements using cash basis. What methods of depreciation they need to follow. What methods of revenue recognition they need to follow. Banker given the guidelines. As per the guidelines, the company has to follow. This is called financial reporting framework of a specific user. Getting it? Now this framework, banker, that can be a fair presentation framework or that can be a compliance framework. If banker tells you some rules and tells the company prepare financials exactly as per this, don't deviate at all, then compliance framework. Suppose if he tells the company, banker tells the company, please prepare financials as per these rules, and gives flexibility. If some of the methods of depreciation, methods of accounting and all is not suitable for the company can choose suitable methods accordingly. That kind of flexibility is given by the bank. Then we call it as fair presentation framework. Then what do we call it as? Fair presentation framework. Now, so special purpose framework, this is the one which determines form and content of the financials. What exactly constitute completes it. Banker will tell you whether he want balance sheet P&L notes or he want cash flow statement also. Banker will tell you what exactly the complete set of special purpose financial statements. The special purpose framework only will decide. Okay, next, examples. We have given examples here. Preparing financial statements as per cash basis, preparing financials as per contract, all that. What is special purpose? It is for specific user. General purpose will answer general purpose financial statement, general purpose framework, no, that will address financial information needs of wide range of users. And what is financial statements exactly in a special purpose? The term financial statements in this SCA refers to complete set of special purpose financials. What is complete set of special purpose financials? What is complete set? Generally, for general purpose financials, what is complete set? Balance sheet, P&L, cash flow statement, changes in equity, notes to account. This is complete set. For special purpose financials, what is complete set? Determined by the specific user. He will decide what exactly complete set. You and me cannot argue on that. Then obviously financial statements by default include related notes. Then now the most important part of the the standard is, this is one. Of course, this is important question. Of course, by the way, there is no change here, man. Whatever is there in the old 800, the same 800 is the same content is there. Even here also, this entire content, meaning of SPW, what are the areas addressed, everything is almost the same, almost the same. Now, considerations when planning the audit, this is also same only. I told audit report format alone is the major change. And in 800, no, earlier scope and objective is there, right? Scope used to exclude IFC. Now IFC is also covered as part of 800. Of course, IFC we will give opinion only when client requests us, only when the terms of engagement request us. Now, first of all, in 800, 805, 810, and even in our SCA 210, if you recollect, 210 standard, you remember, see into terms of engagement. In all the engagements that we accept, no, whenever we are accepting an audit engagement of anything, general purpose financials auditor, special purpose financials auditor, single financial statements audit, summary financial statements audit, we should always see whether the framework is acceptable or not. The company prepared some financial statement, right? Complete set financials, single financials, special purpose financials, specific element, summary financials, doesn't matter. We as an auditor first see on what basis they prepare. Is that framework acceptable? That you should check. What is an acceptable framework? What is an acceptable framework? Very simple. In case of special purpose framework, user's requirement is the key factor in determining acceptability. Now company prepared financial statements as per cash basis. I'll ask the company, how you prepared? Sir, banker gave the instructions, sir, exactly as per that they prepared. Then that is acceptable framework. Suppose banker gave some methods, company is following some other methods. Banker clearly said deviation is not permitted. Company deviated like anything. That is not acceptable framework. If at all special purpose financial statements are prepared by not using acceptable framework for them, I will not accept that audit. I will not accept that engagement. Further, applicable financial reporting framework, the special purpose framework, the special purpose framework may be set by authorized standard or recognized organization. Right now, nowhere in the world there is a recognized body for special purpose financials. But considering the future needs, the standard itself initially addressing. Sometimes maybe in future, a special purpose financial statements related body might be established. If at all they gave any guidelines for special purpose financials, that might be acceptable framework. It is presumed acceptable. If at all there is any standard setting, if any recognized or authorized organization for special purpose financials, then that is also presumed to be acceptable. Sometimes special purpose financial statements may be a requirement in a law and regulation. If at all the company is preparing special purpose financials as per law, for example, best example, as per SEBI, when a company is going for issuing public, when a company is going for public issue, the company has to present financial statements as per Ind AS. For that, the company has to prepare restated financial statements. Of course, restated financial statements, which may be general purpose only, because the prospectus is being issued to so many, yes or no. But there, for restatement, SEBI has given certain guidelines. SEBI has given certain guidelines on restatement of financial statements, all that. Now, if at all a law and regulation set up guidelines for preparing financial statements, by default, those guidelines we presume acceptable. See, the point here is what? Suppose if a company prepared financial statements as per specific user requirement, and the user is not a standard setting body, and the user is not a particular law and regulatory authority, we'll generally get a doubt, whether this requirement is correct or all that. But if a standard setting body or authorized body or authorized organization, if they give a framework, we assume that is proper framework because they're competent body. If a law and regulation give a framework for special purpose financials, we by default assume that that's a proper framework. Sometimes what happens, if financial reporting standards And moreover they are supplemented by legislative requirement. You need to check for conflict. Suppose if there is a standard setting body which also gives special purpose rules, and law and regulation also gives special purpose rules, and the company has to prepare special purpose financial statements as per third party requirement. If at all conflict is there, auditor has to take prescribed action if conflict exists. Remember, the most important focus point is we only think about user, not the law, not so and so standard setting body. Are user request? Tell me, special purpose financials, is it mandatory for a company to prepare every year? No. Special purpose, only when there is a special purpose we will prepare, otherwise why the hell we will prepare? That's it. The framework also sometimes maybe because of a contract. In our example right now, we are discussing bank loan related contract. So here the company preparing special purpose financial statements as per the requirement of the banker. Now in that case, whether the framework, company prepared financials using the banker's requirement, right? Whether the framework is acceptable or not, acceptability is decided by attributes of the acceptable special purpose. Whether the framework shows attributes. Attributes means what? Importance of each attribute is determined by auditor's professional judgment. Very simple. Banker told one of the main attribute, sir, prepare on cash basis. Banker told inventory valuation use weighted average. Banker only told, sir, machineries and all please depreciate using WDV. Banker only told furniture buildings and all depreciate on SLM basis. These are all various attributes of special purpose financial statements. Which attribute is most important? Whether the financial statements are prepared as per that attribute or not, that I need to decide based on my professional judgment. Very simple. Sir, the company prepared special purpose financial statements. Whether the special purpose financial statements prepared by the company using some rules and regulations, is it acceptable or not, I need to check. Only when they are acceptable, I will accept the audit of that special purpose financials. If at all the framework is not acceptable, I will not. When do I say financial reporting framework is acceptable? What are the factors I will see? Financial information needs of the user is the most important factor. Applicable financial reporting framework from standard setting body, any law and regulations or body. If there is a conflict, I need to resolve the conflict, or if there is a framework in provisions of a contract, that I will see, and I need to apply professional judgment. What are the important attributes in the special purpose financial statements? That's it. And finally, suppose you decided, yes sir, the financial reporting framework is acceptable. Now proceed audit. Now plan and perform the audit. Now here you can comply with 200 all the ethical requirements including independence. Remember, this is an assurance engagement. Audit of special purpose financial statements is an assurance engagement. First of all, whatever the works that we do, right, we broadly divide the works into two types. All the engagements, assurance engagement, non-assurance engagement, correct? Assurance engagement is again two types: on historical financial information, other than historical financial information. On historical financial information, we have two types: reasonable assurance, limited assurance. Reasonable assurance is called as audit, limited assurance is called as review. Other than historical financial information, if at all we are providing any assurance, we simply called as assurance engagement. Non-assurance is called as related services. Non-assurance is called as related services. Yes or no? Now audit standards, these are two set of standard, 200 series to 700 series. 35 standards we have, 3 standards we have which are dealing with 800 series. So this 800 series we are discussing now. Okay, now look at it. So when you are doing audit of special purpose financials, we need to comply with ethical requirements. We should also comply with all relevant standards on auditing here also. Now in special purpose financials, when I'm auditing, I need to determine materiality. I need to plan the audit. 300 planning principles I will use. I need to decide materiality. 320 I will have to do risk assessment. 315 I will use. I will have to obtain audit evidence. 500 I will use. I will have to get a third party confirmation. 505 I will use. Array, all the auditing standards I will use, man. When I am doing audit of special purpose financial statements, I will be using all the auditing standards. By the way, if at all you are feeling speed, reduce the watch speed. You will understand very clearly each and every of my word, because I'm pronouncing every word clearly, just that I'm going at a faster pace. That's it. Next, now remember, what are the special consideration? Some of the requirement of standards on auditing in an audit, okay, may require special consideration by the auditor. For example, 315 SA 315, the auditor should understand the entity, whether accounting policies are correctly selected and applied. For contract based financials, auditor must understand management interpretation of the contract. Suppose banker, no, he gave some methods of accounting. See how management is interpreting correctly or not. Sometimes no, an interpretation is significant. Why? alternative interpretation is also possible, which has a material difference. Suppose banker told one method of valuation of inventory. That method, no, it has two implications. In two ways it can be done. Getting it? Two ways it can be implemented. Because of these two methods, the numbers will drastically differ. So auditor has to very carefully analyze if at all financials are prepared as per provisions of a contract, whether interpretation is correctly done by the company or not to prepare the financials. And remember, 320 standard also we should apply. And remember, generally for general purpose financials, how to decide materiality, 320 will standard will decide. But for special purpose financials, no, management may agree threshold, below which misstatement will not be considered. Management will agree with third party. In special purpose financials, materiality sometimes will be decided by third party. Just because existence of materiality by third party, just because third party decided, that does not relieve you to apply 320 requirement. Even if a third party decided, even a provisions of a contract decided materiality level already, you should still consider 320. You should also consider whether when you are performing the audit, you decide performance materiality as per 320, all that. Overall materiality third party would have told, but performance level and all you only decide. Revision of materiality you do as audit progresses. So materiality threshold, sometimes in exam, no, they will only ask you regarding this. Write about special considerations for standards on auditing when you are planning and performing an audit. Application of some of the standards requirement is important. The auditor has to consider, for example, 315, 320, and 263 examples they give. 260 means what? Suppose, if you find some important issues in special purpose financials, you have to communicate significant matters to those charged with governance. And remember, sometimes, when for general purpose financials and special purpose financials, responsible party for those charged with governance may be different. Remember this point. In such a case, you should determine the appropriate person within the entity's governance structure to communicate. So who is the right person in the entity governance structure to communicate regarding special purpose financials? And one more point you should remember, the auditor for the company general purpose financials and the auditor for company special purpose financials might be different. That is also one more possibility. Yes or no? If at all top management is involved in managing the entity, who are the right people? You should please identify and communicate to them only accordingly. Then when reporting on special purpose financials, please follow 700. I told you, remember, revised 700. This is the main amendment. This is the main amendment in the standard. And further, finally, description of applicable financial reporting framework. In the audit report, you should describe about what exact framework they followed. Generally, just now I showed you audit report at the beginning 800. We don't directly disclose about what framework they followed. We emphasize, we give an emphasis of matter para, where that para will highlight, a note point which is presented in the financial statement, special purpose financials, which contains basis for preparation. Look at. Revised 700 requires the auditor to evaluate what 700 standard says actually, whether financials are adequate at describing the framework. You see Tata Motors, you see State Bank of India, any financial statements, they will talk about basis for accounting. Same way, special purpose financial statements also shall talk about basis for accounting. In the notes to accounts, initial 3-4 points talk about basis for accounting only. Getting it? In case of contract based financials, significant interpretations must be disclosed. In case of the special purpose financials are prepared as per the contract, all the interpretations of the contract must be clearly disclosed in the financial statements itself. And in case of special purpose financials, the auditor report specifically should include what is the purpose for which the financials are prepared, who are the intended users, all that auditor. That's why how this auditor is including emphasis of matter paragraph auditor is using. There he is putting basis for accounting, restriction on distribution and usage, like that heading we saw. Yes. Further, key audit matters can be communicated. This is one amendment. Earlier 800, this point is not there. Now new 800 has this point. If you open and see 701 key audit matter, that is key audit matter applicability. If you see, key audit matter is applicable only for audit of complete set of general purpose financial statements, they will say. Whereas Here 800 also talking about 701. Then why? In key audit matter is applicable only for audit of general purpose financial statement, that to complete set financial statements, right? Then how come 800 can contain SA 701 reference? You can use it, no problem. 800 standard says if at all the auditor want to communicate key audit matter in the audit report on special purpose financial statements, no problem, you communicate. In such a case, SA 701 guidelines you follow, that will also will apply same way. Sometimes the company which prepared special purpose financials, along with special purpose financials, other information will also be given to the banker. Other information will also be given to the third party at whose request special purpose financials are prepared. In such a case, auditor has a responsibility to read the financial statements and compare with other information and identify inconsistency. See, everywhere you discuss about audit reporting, 700, 720, I told you, first you should watch audit reporting chapter and then only you should watch specialized areas. If at all you have not understood 700 series correctly, believe me guys, 800 series is a nightmare for you. 2000 series is a nightmare for you. You can't understand 800, 2000, even 3000 series you can't understand properly. If at all you do not have auditing standards, especially 700 series knowledge. That's why whenever I always revise marathon, first I start with reporting, because that is a base for predominant standards understanding. Now, finally, other information. So SA 720, that is also applies when you're reporting on special purpose financials. The reports are designed for owners and stakeholders, whatever their annual reports. In case financials are prepared using special purpose framework, the users are who? Specific users for whom special purpose framework is designed. If they are given other information, auditor has to apply 720 related processes here also. And the auditor may include other matter para in the audit report on special purpose to refer to audit report on complete set. That is auditor's choice, may include. You are giving audit report, right? For example, I showed you here audit report. You see here there is no other matter paragraph. If auditor want to include other matter paragraph, he can include other matter paragraph. What he will talk about? He will talk about auditor's report given on the general purpose financial statements. For example, general purpose financial statements audit report contain modified opinion, and I want the specific user to compulsorily see that audit report also. How can I highlight? That is not something there in the financial statements. That is audit report I want to highlight. I already tell. If I want to talk about some other audit report, other matter paragraph is the base. Yes or no? In exam they will ask you, write about usage of other matter paragraph in the audit report on special purpose financial statements. The auditor may include, an MCQ might be given. It is optional only, not compulsory. MCQ might come. Is there any compulsory requirement for the auditor to include other matter paragraph? Not compulsory. But remember, emphasis of matter paragraph is generally compulsory. Emphasis of matter paragraph is generally compulsory. We will get it. Alerting readers. So alerting readers, what is the alert? Special purpose financials can be used only for the purpose for which they were prepared. Other than those that they were, other special purpose financials sometimes may be used by users for purpose other than the intended purpose. To avoid misunderstanding, auditor includes emphasis of matter paragraph in the report explaining that financials are based on special purpose may not be suitable for others. That's what I showed in the real audit report. Yes or no? This is illustration. You see, we draw attention to so and so. The financials are prepared to assess the company for special purpose, and this report is used only by them, should not be used by others. Alert paragraph. This is called as, what is this called as? Alert paragraph. And finally, SA 706 requires EOM paragraph to be placed in separate section of the audit report. That's why you see in this case they have presented it in a separate section in the audit report. That's it. So this is one amendment. Okay, this is one amendment. Sometimes special purpose financial statements are restricted for distribution and usage. Like, the special purpose financial statement should not be kept on a public domain. It is a private, confidential. In such a case, the auditor may indicate that auditor report is only for a specific user, like it is not available for restriction on distribution. The alert paragraph may be expanded to include a restriction on distribution. That's what you see. They did not simply alert emphasis. They did not simply say basis for accounting alone. They expanded and included restriction on distribution and usage. So look at that. So the alert paragraph may be expanded to include restrictions on distribution or use, where heading will be modified accordingly. That's why you see heading is given accordingly. I will show you one more illustration in the same ICA book. Here you see emphasis of matter, basis for accounting. Where is restriction on distribution? Because in this particular circumstance, no, it is not restricted for distribution, it is not restricted for usage, anybody can use it. But still, these financial statements are not suitable for other purpose. I need to alert paragraph, I need to tell the users this is not useful for somebody else, I need to tell that point. And if at all I want to say that this is only for so and so party's purpose, not for others, then that is called restriction for usage, restriction for distribution. That's it. The standard is completely over. Example of emphasis of matter para. I am telling you guys, this is high possibility. 800, if at all a question comes, this is the high possibility. A 5 marks or 4 marks question will come. Write about restriction on distribution or use for audit of special purpose financial statements. So they may ask you like this one specifically. So that's it. 805 is over. Now, what are the possible questions in exam? Write about alerting readers that the special purpose financials are prepared as per special purpose framework. A 4 marks question on this might come. Or they may ask you, write about description of applicable financial reporting framework in case of audit report on special purpose financial statements, that they may ask you. Or they may ask you, what are the special considerations for standards on auditing when audit of special purpose financials are being done. This point you need to write 4, 5, 6 points you need to write. A 5 marks question might come. Or they might ask you, what are the considerations when accepting an audit of special purpose financial statements. Or finally, they may ask you, what is the meaning of special purpose framework and what is the scope, forming an opinion and reporting on financials. Here, no, earlier used to have other than IFC will be there. Now that IFC other than is removed. That's it. SA 800 is over. That's it. I think I have given you enough clarity on 800. That's it. Now, straight away, let's continue SA 805. SA 805. Let's begin 805. Just 2 minutes, okay? Just 2 minutes. I will begin 805. I'll just have water. And I'll be very happy if you give your comment or something, invested a lot of time. You read once again, you just listen once again the standard. Read the standard 800, then listen once again. You see the clarity that you will get. Yes. What is 805? Audit of single financial statement and element. More specifically, you see, I have used a shortcut here in the heading, but in exam when you're writing, you should always write full forms. Just 1 minute. You should always write full forms when you're writing in exam. What is the shortcut I used? Single financial SFSE. What does it mean? SFSE means, you see, S, F, S, E. E means actually specific element. Though I highlighted only E, it's actually specific element. Single financial statement and specific element. What does it mean? Very simple. Suppose a company prepared, for some special requirement purpose, they prepared only cash flow statement. And they requested you to audit the cash flow statement and give a report on that. Purely cash flow statement audit. Not complete set financial statements audit. Single financial statement audit only they requested you. Now this cash flow statement, they might prepare using general purpose framework or they might prepare using special purpose framework. Generally, we all know cash flow statement we prepare using indirect method. Suppose here, company prepared cash flow statement using direct method for some banker requirement. Getting it? Then the cash flow statement is prepared as per specific user requirement. In such a case, special purpose framework is followed. 800 also apply. Which means, if a company prepared a single financial statement or account or item of a financial, remember, single financial statement or specific element account item. Specific element itself includes account. Specific element itself includes item. Even though the heading, specific element to account to item of the financials, like that heading is there. Audit of single financial statement, specific element, comma, account or item of the financials. Even the heading is there, specific element itself means account. Specific elements itself means item. Please remember that. Now, okay, sir. Yes, sir. Okay. They are auditing. Yeah, they are auditing a single financial statement. So, yeah, what is it exactly? If at all the single financial statement is prepared using general purpose framework, just apply 805 directly. Proceed. 200 series to 700, what are all applicable? Apply. And 805 apply. Suppose if the single financial statement or the specific element is prepared using a specific requirement of a third party, not general purpose framework, a special purpose framework is used to prepare single financial statement or specific element, then 800 requirement also apply. Now, you know what exactly most important point in this particular standard? You know, first of all, what is a single financial statement? Single financial statement is something which is different from complete set of financials. In this particular 805 standard, we use something called SFSE, single financial statement and specific element. We also use something called complete set of financial statements, CSFS. What does it mean? Complete set of financial statements. That is one more word which we will use in this particular standard. Now, so for example, a cash flow statement is considered as a single financial statement, or sometimes no, in the standard no, audit of single financial statement comma specific element. You may be auditing only a specific element also. What do you mean by audit of specific element? The term element, what is it? The term element of financial statement refers to an element, a particular account or a particular item of the financials. For example, trade receivables or cash and bank balances, liabilities for claims incurred but not reported, net tangible assets, disbursement in relation to lease property, externally managed assets, and incomes of a private pension plan. In exam, they might ask you, what do you mean by specific element in light of 805? Give you examples. Directly a 3 marks question can come, and descriptive. Getting it? Specific element means this. Now, most challenging part is what, you know, in this particular standard. It's not actually challenging. The most important point that you should understand is what, you know, acceptance. Can you accept considerations? Like if at all you got a request from a client, sir, you need to do single financial statement audit or specific element audit, what you need to consider? Can you blindly accept? You need to consider certain elements. Only after considering various elements you can accept it. Most important element is practicability. Suppose a client is asking me to do audit of reserves and surplus. He requested me to do audit of reserves and surplus. Client is thinking, you know, our reserves and surplus only 4-5 items are there inside that: capital reserve, revenue reserve, revaluation reserve, P&L surplus. Only 4 or 5 items is there. Auditor will hardly take 2 days time. He will audit and then give a report, he thought. But reserves and surplus has one account, sub account. P&L balance is there. P&L, if at all I have to tell whether reserves and surplus is true and fair. The client asked me whether reserves and surplus is true and fair or not. He's asking me. I have to then verify whether P&L balance is true and fair. If I have to verify P&L balance is true and fair, I need to do P&L audit. If I have to do P&L audit, I need to do sales audit, purchase audit, income audit, expense audit. Oh my God. If I have to do sales audit and expense audit, I need to first understand entity and its environment. Sometimes a company might think it's only a specific element, but doing audit of that specific element requires enormous effort from the auditor's side. So especially this difficulty is when, you know, I am not the auditor of complete set. First, suppose, you know, the company approached me specifically for specific element audit or single financial statement audit, where I am not their general auditor. I am not the auditor of complete set. Especially the time I must determine whether audit of single financial statement or element is practicable or not. Remember, most important principle being a chartered accountant is, whenever you are auditing a specific element, single financial, special purpose financials, general purpose financials, complete set financials, your fundamental duty is to comply with all the relevant auditing standards. If a company is asking you to do a specific element audit, see whether you can comply with all the relevant standards on auditing or not. Is it practicable? Moreover, you are not the routine auditor of the company for complete set. You are not the complete set auditor. You are specifically asked for single financial statement and specific element audit. See whether all the standards on auditing can be complied or not. Further, auditor must comply with ethical requirements and all the relevant standards on auditing, including independence. The auditor must comply with each standard unless a particular essay is not at all relevant. Okay, and especially if auditor is the one who is not audited complete set, you may lack knowledge of the entity and environment. Internal controls you may not have. You may not have the evidence about general quality of accounting, how qualitative entity accounting records. You generally will not have evidence on that. As a result, auditor may require additional evidences to support or verify evidence from the accounting records. Sometimes, no, audit work will be disproportionate to the element. Company thinks it is just a reserves and surplus, but you know how much background work you need to do. Some SES may require audit work that seems disproportionate. For example, the company is asking me to do only balance sheet audit and then give opinion. Whether balance sheet, no, balance sheet contains fixed assets at historical cost. A company can show balance sheet fixed assets at historical cost only when going concern is proper, which means I have to verify going concern also. So yes, example, SA 570 may be impracticable for small element audit like accounts receivable. Getting it? For example, fixed assets audit. A company prepared a statement of fixed asset and they want me to audit that and then give an opinion. Statement of fixed assets, some values they shown, impairment, everything they shown. All these values will have some relevance only when going concern is there. So even though I may audit fixed assets only, but 570 requirement I need to comply, which is very difficult for me. So if audit of single financial statement and specific element is impracticable, in our book, no, wherever single financial statement and specific element is used, guys, whoever is following this particular GOAT notes, especially, please do not write shortcuts in exam. If an audit of single financial statement and specific element is impracticable, please discuss with management and see whether any other type of engagement is possible, or increasing the scope of the audit, or increasing the duration of audit, and then tell the management and do the audit accordingly. So considerations for accepting, considerations when you are accepting a single financial statement or specific element audit. Most importantly, SA 200 says all the relevant standards you have to apply. Even when you're doing single financial statement audit or specific element, all the standards will apply. This applies even if you're not the auditor of complete set. So when you're not auditing complete set, practicability is the biggest question, and you should comply with ethical requirements. You should also, and especially if you're not engaged to complete set, you generally lack understanding of the entity. You does not have evidence about quality of accounting records, because of which additional corroborative evidences and all you should obtain. And some SAS, no, they may require you to work, you to get evidences which is disproportionate to what you're auditing. Yes or no? If at all SFSU audit is impracticable, like, doing this alone is not possible within 2 days. If the client is asking 2 days, doing this is impracticable as per the client requirement. You discuss with management and see, increase the scope of engagement, or see whether any other type of engagement is possible or not. Now, by the way, okay sir, fine, I accepted the engagement. Before even accepting, I consider all this. One more thing, what I consider, acceptability of the framework. Sir, they prepared single financial statement, cash flow, or they prepared a balance sheet, or they prepared a specific element using some requirements of a particular contract they prepared. Now you need to see whether the framework which they used for preparing single financial statement and specific element, right, some rules and regulations they followed and prepared, right, how far they are acceptable. See, what is the requirement? First of all, why are they preparing single financial statement? Why are they preparing specific element? Some third party requirement. See, what is it requiring exactly? That is the basis. So SA 210, no, the standard 210 says you need to determine acceptability of, you need to determine acceptability of financial reporting framework which is used in preparing special purpose, preparing the financials. In case of single financial statement and specific element, auditor must check whether the framework followed enables adequate disclosures to help intended users understand the information correctly conveyed. The effect of material transactions events on the information conveyed. See that in case of single financial statement and specific element, see whether the financial statement prepared, element prepared, is it addressing the user needs or not. That you need to check. Sometimes, even the management prepared single financial statement and specific element, right? That single financial statement and specific element may follow a framework established by some authorized standard setting organization. So if at all an authorized standard setting organization framework is followed, check that. Okay, the auditor checks if framework will include all relevant requirements for adequate disclosure and presentation. See that single financial statement they prepared along with notes, right? Specific element they prepared along with notes, right? By the way, guys, notes to accounts is a byproduct for everything. Whether it's a single financial statement, notes will be there. Specific element also, notes will be there. By default, notes will be there everywhere. Yes or no? So see whether the notes to accounts contain clear disclosure of all framework related guidelines. Now, considerations when planning the engagement. What are the considerations? But before this, I will directly go to forms of opinion. In the number 24 exam, they asked this question. You know which question they asked in number 24? The 16th point. In our book, this is 16th point. This is most important in this particular standard. In fact, I should have started with this actually, but it's okay, no problem at all. Just a minute. You see here, forming of an opinion. Come to concept number F in 805, reporting considerations. Inside that come to 16th point. Okay, Very simple. First, let us understand reporting aspect of 805. Then we will discuss about remaining elements of 805. You know, for example, we are auditing single financial statement or specific element. Now we need to give an audit report. When we are giving audit report, suppose you obtained evidence that single financial statement is correctly prepared, everything is true and fair, or it is prepared as per the provisions of a contract, which may be a fair presentation framework or which may be compliance framework. The single financial statement is prepared as per the framework, the specific element is prepared as per the framework, everything is rightly done. Okay, very good, you give opinion on that, no problem. Now my question is, which opinion auditor should give? Can an auditor give an opinion on, very simple, very simple. Let me show you this one. For example, no. For example, just a minute. For example, no. Complete set of the financial statements, it contains a modified opinion. For example, or else let me be more clear, even though, audit report on complete set financial statements. This audit report, no, either I gave or some other auditor would have been given. It doesn't matter. Audit report on complete set financial statements, it contains case number 1, qualified opinion or emphasis of matter paragraph or material uncertainty related to going concern, or other matter paragraph or other information para as per 720. The audit report on complete set contains this additional data. Now you are giving audit report on single financial statement and element, right? What is your reporting responsibility? You see what the standard says. For example, if the auditor's report on complete set financial statements includes a modified opinion, emphasis or other matter, material uncertainty related to going concern, or just a minute, material uncertainty related to going concern, just 1 minute, it is just loading. Yes, material uncertainty related to going concern or uncorrected material misstatement of other information. For example, other information is materially misstated which is not yet rectified. That point is there in the general purpose financial statements audit report or complete set financial statements audit report. This point is highlighted by the auditor. Then auditor shall consider, which auditor? Auditor of single financial statement and specific element. He shall consider implications of that. These implications are the right, that these implications, what is the impact of them on single financial statement or specific element and auditor's report thereon. Generally what we do, we are giving audit report on single financial statement and specific element, right? In this audit report we highlight other matter paragraph. Inside this other matter paragraph we tell the third party, please, dear third party, please refer to audit report on complete set of the financial statements which contains qualified opinion, emphasis, other matter, something. Remember, here some modified opinion is what you need to consider. Its impact, especially if the modified opinion is adverse or disclaimer, that is even more severe. If at all audit report on complete set of the financial statements, the auditor gave adverse opinion or disclaimer of opinion, what about him? Can he give unqualified opinion on single financial statement? This is the question exactly asked. This is the question which is exactly asked in the number 24 exam. This is what which is asked for 5 marks question in number 24 exam. By the way, with respect to this, there is no amendment at all. And if you recollect, in 705 revision also I told one point. Considerations. When auditor gave adverse opinion or disclaimer of opinion on the complete set, what are the considerations, additional consideration? I told one point. Emphasis of matter paragraph shall not be used, like that I told. That point here I am now going to once again touch. Very simple. Suppose, if audit report on complete set contains a modified opinion or qualified opinion, modified, let us use the word modified of this. What is its impact on single financial statements? You should consider. What is its impact if you feel this modification is some very important reason and you felt that third party for whom we prepared single financial statement and specific element, third party must and should read this. Then In the other matter paragraph, especially if it is a qualified or these points, I can highlight, I can tell them to refer that audit report also. Suppose no, on complete set financial statements, audit report contains adverse opinion or disclaimer of opinion. You know what is the situation? Now tell me, okay, complete set financial statements related audit report contains adverse or disclaimer. Okay, I agree. Now you are giving audit report, no? On what? Are you giving audit report on specific element? Are you giving audit report on specific element, or are you giving audit report on single financial statement? If at all you are giving audit report on single financial statement, you should also give adverse opinion or disclaimer of opinion as it is. Sir, you know, this is complete set financial statements audit. This is an audit report. That's a different engagement. Here we are doing audit on of single financial statement, which is also different engagement. If at all complete set financial statements auditor gave adverse opinion, should I also give adverse opinion here? Yes, because single financial statements by default assumed as major item of the complete set. On the complete set financials, single financial statement is assumed as a major item. Look at this. Now look at this. Just a minute. Look at this. The auditor shall not express unmodified opinion on single financials. Don't express unmodified opinion. Even sorry, okay, fine. I mean, okay, fine, it's okay, no problem. If at all adverse opinion or disclaimer of opinion is there on the complete set, because single financial statement is considered as a major portion. Once again we will come back and read this. After finishing this, then you will understand this word, even word, why they used even word. I mean, first you need to understand this situation. Sir, actually no, complete set financial statements audit report contains adverse opinion. I agree. But sir, what is the reason for adverse opinion? Investments of the company were substantially materially misstated. So auditor gave adverse opinion. But actually, right now we are doing specific element which is fixed assets, sir. Right now, the company called me to give audit report on specific element which is talking about fixed asset. Previously, complete set financial statements contains adverse opinion. I agree, sir. The complete set financial statements auditor said they are not at all true and fair. I saw basis for adverse opinion section, sir. What auditor told, investments is materially misstated and pervasively misstated. He didn't talk about fixed assets, sir. Now can I give on fixed assets unqualified opinion? Because it's a separate audit report, it's a separate engagement, it's not the same report. It's a separate audit, separate report we are giving. That we are giving on fixed assets. Earlier audit report contains adverse opinion on investments. That is the reason why adverse opinion is given. The adverse opinion is not dealing with this specific element, sir. Can I give now unqualified opinion on this specific element? Yes, 3 conditions. What are the conditions? 3 conditions. When auditor expresses adverse opinion or disclaimer of opinion on complete set financials, but he is considering it appropriate to express unmodified opinion on a specific element, this is allowed only if 3 conditions are satisfied. This is what number 24 exam question. The auditor is first of all not prohibited by law. There is no prohibition in law. For example, actually there is no prohibition, okay? And unmodified opinion is expressed in audit report that is not published together with audit report containing. Okay, now we are giving unmodified opinion in the audit report on single element, specific element, right? This audit report and specific element should not be published along with complete set financial statements and that audit report where adverse opinion is there. That audit report, this audit report don't publish together. Why? If at all both are published together, one auditor is saying adverse opinion, everything is bad, and this auditor is saying this is true and fair. Which one to believe? Public will have confusion unnecessarily. And most important condition, specific element does not constitute major portion. The specific element on which you want to give unqualified opinion, right, in a separate audit report, that is not a major item. For example, sir, actually I am not, this is actually what unmodified opinion on single element. More importantly, better than single element, I will use the word specific element. Here I am giving an audit report on specific element only. So if can I give, very simple, complete set financial statements auditor's report contains adverse opinion disclaimer. Can I give an unqualified opinion on the specific element here? Yes, 3 conditions. This is not prohibited. This audit report and thus audit report is not published together. Remember, this is a separate report you are giving, which is not published along with that, and the specific element is not a major item. I understood, sir. Sir, but actually here, no, in this case, no, it's a single financial statement, sir, not a specific element. Now I am giving an audit report on single financial statement, sir. What about this? Here, if at all you are giving an audit report on single financial statement, the standard straight away says, the auditor shall not express unmodified opinion on single financial statements if it is not even though you are not publishing together. Sir, we are not publishing, even though single financial statement is considered major portion, or if specific element is considered as a major portion. If single financial statement or specific element is considered as a major portion, then on that you should not give unmodified opinion if at all the complete set financial statements auditor's report contains adverse or disclaimer of opinion. This is the most important observation. Getting it? That's it. Further, so by the way, this point is what, adverse opinion disclaimer. This point you see, when auditor expresses adverse or disclaimer of opinion on the complete set financials, you see this point I'm highlighting now in yellow. In the same audit report, SA 705 does not allow auditor to include unmodified opinion on a single financial statement or specific element. What does this mean, sir? This is very simple. That's what 705 I told. For example, I gave adverse opinion on the financial statements in complete set, and I'm highlighting one thing called emphasis of matter, and I'm saying that balance sheet is true and fair, not permitted. Trade receivable is true and fair, not permitted. Are you getting it? If you are giving adverse opinion on the complete set financial statements or disclaimer of opinion on the complete set financials in the same audit report regarding one specific element in that complete set or a single financial statement in that complete set, you should not give unmodified opinion in the same audit report. That is what they're saying. Sir, what if I'm giving a separate audit report, sir? If it is separate audit report on specific element, yeah, you can give unmodified opinion. Even complete set financial statements contains adverse opinion. In a marathon, I cannot talk beyond this because it's taking so much time already. Yes, that's it. Almost 805 is almost over. Main theme of the 805 is over. Now, forming of an opinion. What is there in the forming of an opinion? Here, when you are forming opinion, you follow 700 guidelines only. When you are forming an opinion, 700 talks about how to form an opinion. There are some evaluations to be made in 700. Same evaluations here also you make. And here also you are required to apply reporting requirement of other standards if at all applicable. And the auditor must ensure that single financials or specific element provide proper disclosure to the intended users for understanding material effects of all that. SA 570 also you apply. Yes or no? Key audit matter. Sir, in a single financial statement, can I give a key audit matter? Actually, key audit matter applicability is for complete set only. Can I use 701 here also? You can use, no problem. Guidelines you use, man, no problem at all. For audits of listed entry, 700 requires communication of key audit matter, which is in line with 701 for general purpose financials. The key audit matter, if at all you want to use here also, you can use here also, no problem. 720, for example, along with single financial statement prepared by the company, specific element prepared by the company, along with the single financial statement, specific element, company is also giving some other information. That time you should apply 720 procedure. And auditor signature. Audit report on single financial statement must be signed by either the auditor or engagement partner. Must include membership number and firm registration number. Must include membership number and firm registration number. Then most important, you see here, this in exam straight away they can ask. This in exam they can ask you 7th and 8th point. Write about they'll ask you a case study. Write about consideration of implication of matters included in the audit report on complete set financial statements when reporting on. Write about consideration of implications on matters in audit report on complete set financial statements while reporting on audit report on single financial statement specific element. Like that they will ask you. This involves professional judgment. whether a matter is relevant. Suppose on complete set financial statements, audit report contains modified opinion, emphasis of matter, other matter para, material uncertainty, other information. Whether are they impacting single financial statement audit, specific element audit, you should consider professional judgment. You know, there are some factors. There are some factors here you can use. What is the nature of the matter in the audit report on complete set? What kind of matter it is exactly? How severe it is? Is it relating to this specific element? Check out. Okay, how it relates to single financial statement that you are auditing and specific element that you are auditing. What is the pervasiveness of the matter in the complete set, and what is its impact on the single set, single financial statements, and the difference in periods between complete financials and complete set of the financials are prepared for 1 year, whereas single financial statement here is prepared for 3 months, 1 quarter only. That also you see. And what is the time lapse? Complete set financial statements is prepared almost 4 months ago for 24-25 year or 23-24. Right now we are preparing single financial statement for 23-24 only, but after 1 year we are preparing. So whether that incident is relevant now or not, check out. For example, suppose the auditor gave a qualification on trade receivable in complete set financial statements related one. It likely impact single financial statement and specific element relating to accounts receivable. Suppose if I am auditing accounts receivable only, auditor also gave a qualified opinion on account receivable, it highly impacts. For example, I am doing audit of statement of P&L, or I am doing receivables audit. In a single financial statement, P&L audit I am doing, or I am doing trade receivable audit. But whereas on complete set financials, on long term loan there is a qualification that least impacts. So even when matters from complete set audit report do not affect the single financial, auditor may include them in other matter paragraph. I told you, remember. So, sir, audit report on complete set financial statements contain so many information, sir, modified opinion, all that. In single financial statement specific element, that report is going to be given to some banker or somebody, sir. It is better we tell them to refer that also, right? Yes, better. So auditor may consider necessary to refer about complete set financial statements related audit report. Where you will refer? Other matter paragraph. That's it. Other matter paragraph of which audit report? Single financial statement specific element related audit report will be there, right? Inside that other matter paragraph. That's it. And for audit of both single financials and complete set, the auditor should give separate report. That already we saw. And remember, single financial statement element must be differentiated from complete set financials. If single financial is presented with complete set, suppose if a banker is given complete set as well as single financials together, see that both are differentiated adequately. Yes or no? The auditor must differentiate the opinion clearly, and don't issue the report until the differentiation is made. Most important, they may ask you in exam, implications of matter. Write about implications of matter in the audit report on complete set financial statements on the audit report to be given on single financial statement and specific element. That's it. That's it. Next, almost predominant standard is over. Form of opinion, whether it's a fair presentation framework, a compliance framework, how are you preparing single financials, at whose instance you are preparing single financial specific element, they will decide what is the framework. Okay. So what is the factors? Can I give audit report on single financials or specific element under fair presentation framework? Can I give an audit report like that? For that, no. Whether framework explicitly talks about complete set, very simple. Single financials you are preparing, let's only P&L. Are you preparing using only the same schedule 3? Check out. Same reporting requirements, check out. If so, you may use fair, you may consider it as a fair presentation framework. Whether single financials or specific element, are they complying fully requirement of that framework? Whether are they including necessary disclosures, fair presentation disclosures? Whether are they disclosing beyond requirement of the framework? Just a minute. Are they disclosing, are they providing disclosures beyond requirement of the framework? Check out, like a single financial statement, management is giving additional disclosures for fair better understanding. So give it, see that whether departure from framework is permitted so that fair presentation can be achieved. When you're preparing single financial specific element, banker gave certain rules. You can deviate the rules also if at all they are not true and fair. If at all deviation is permitted for achieving fair presentation, then you can use which form of opinion? Present fairly, true and fair words and all can be used. That's it. Then actually in our fast track and regular batch, we discuss so in depth all the fair presentations, all that at beginning we discuss, and in audit report, this actually 800 series we discuss almost for 8 hours here. 6.5 to 8 hours we will be discussing, 6.5 7 hours or 8 hours we'll be discussing. So big topic, this is not a small ordinary, but I'm trying my level best to give you clarity in the revision marathon. Okay, now finally, when you're planning and performing audit of single financial statement and specific element, getting it, all relevant standards must be adapted. The auditor need to determine who is the right person in the governance structure to communicate regarding single financials, because for complete set financials and single financial statement, the responsible people in the organization may be different. Similar point in 800 also we saw, who is responsible person and those charged with governance regarding special purpose financials, they may be different from complete set financial statements. And sometimes if at all I am only audited complete set financials, I can happily use the evidence obtained there even for single financial statements audit. When auditing single financials alongside complete set, the auditor can use evidence obtained from complete set also. However, you must still get evidence for specific element that you're auditing clearly. Okay, now further, most important, when you're auditing single financials and specific element, if at all there is any interrelated item also you must audit. That's why I told reserves and surplus. Company appointed you for reserves and surplus audit, you should give whether reserves and surplus are true and fair or not, you should give opinion. P&L you should audit accordingly. So individual financials which are part of complete set, many elements are interrelated, so audit of single financials element cannot be considered in isolation. The auditor need to perform verification of interrelated items also. So when you're doing audit of single financial statement or when you're doing audit of specific element, interrelated items also you must consider. Then materiality, obviously materiality determined for single financial statements generally be lower than complete set. This will affect the audit procedure and evaluation of uncorrected misstatements. Absolutely one of the most important point. Materiality level for complete set is different, materiality level for a specific element is different. Generally for a specific element and single financial statement, materiality level can be lower than the complete set financial statements, especially if the specific element audit, materiality level will be lower. That's it. So the standard is over. So what the standard is briefly talking about, getting it, it is talking about what is a single. By the way, remember, if a single financial statement or specific element is prepared using a special purpose framework, then 800 also applies. That's it. Okay, and 800 does not apply, sorry, 805 does not apply to reports from component auditors. If you remember 600 standard, when I'm telling you, the principal auditor can ask a component auditor for supplementary procedures to be performed by component auditor on some specific elements. Just because principal auditor is asking other auditor to perform on some areas of work, we cannot straight away call it as 805 engagement. Is it 805 engagement? No. When do we say it's an 805 engagement? A client requested you to do audit of specific element or single financials and give a specific report on it to the client, so that the report will be given to some third party. Then only 805 apply. Suppose if principal auditor is asking component auditor, dear component auditor, can you verify inventory and then give me a just a statement on it. That cannot be called as 805 engagement. That's still 600 part of it. It is part of 600. I told this point in 600. Please go and see. Supplementary audit, supplementary test requested by principal auditor to component auditor. There I told you. That's it. 805 is also completed. Okay. Then 810. Now we'll go to 810. Engagements to report on summary financial statements. I hope 800, 805 you are having superb clarity. I hope so. Okay, now we will discuss about engagements to report on summary financial statements. 2 minutes. Okay, I'll just have water. I hope your clarity has been enhanced substantially by me now. Please listen once again, you will get more clarity. Yeah, we'll continue. Engagements to report on summary financial statements. In summary financial statements, directly first thing that we need to understand is, first of all, it's, you see, it's not, they didn't say audit of summary financials. 805 800, you see, audit of financial statements prepared using special purpose framework specific considerations. 805, you see, audit of single financial statement, or just a minute. Yeah. So audit of single financial statement or specific element, item, or account of the financial statement. Here you see, they're not using the word audit of summary financial statements. They are only talking about reporting on summary financials. Who should report on this? The same auditor who did complete set financial statements audit. Who has done complete set financial statements audit? The same auditor only can give report on summary financials. Sir, a company exclusively called me to report on summary financials, sir. I didn't audit the complete set. Their auditor is different. I should not accept the engagement at all. Simple. Look at what is a summary financial statement. Summary financial statements reflect same historical financials only, which are derived from audited financials. In this standard, they use SFS and AFS word. SFS means summary financials, AFS means audited financials, which can also be called as main financials, from where summary is drawn. Summary financial statements also reflect historical, derived from main audited financials, but with less detail. But remember, the summary financials also provide structured representation of entity resources and obligations at a point in time or changes during the time. Different laws may use different terminology to describe these summary financials. For example, abridged financials, condensed financials, summary financials, different laws and regulations will give different meanings to it. Summary financial statements is very popular in US. Okay, it is not popular in India. It is very popular in US. Okay, in India also there are some companies which prepare summary financials, but remember, summary financial statements are not prepared as per general purpose framework. Basically, sorry. Summary financial statements are not prepared as per GAAP. I mean, under GAAP there is no requirement for summary financials. Now, by the way, these summary financial statements, they may be a summary of general purpose financial statement, or they may be a summary of special purpose financial statements. Anything it can be. Suppose a company prepared special purpose financials, from that a summary can be prepared. A company prepared general purpose financial, summary can be prepared. For example, a foreign holding company which has a subsidiary across various countries, or our Indian company has some subsidiaries across some 100 countries. Now we want to verify, financial statements of those countries. Are those financial statements, are each financial statement is 100 pages, 150 pages. Management don't have that much time, so they may ask these foreign companies, subsidiaries, please prepare summary financials and send me. Now when they're sending summary financials, whether the summary financials are correctly derived, whether they are correctly derived from the original financials. See, original financials or audited, audit report is there. So I know whether original financials are accurate or not by reading audit report. I can understand. Summary financials they prepared, because of my request they prepared summary. Whether the summary financials are also correctly reflecting main information of audited financials, I don't know. So I asked the same company, look, you give me summary financials, also give an audit report on that. So I don't want to blindly believe on summary financials. I know main financials are audited. Whether main financials are true and fair or not, audit report I will see and I will get an idea. Summary financials, how do I know whether they are right or not? I know summary is a derivation from main financials. They are just a derivative of main financials. You derived from main financials, but whether you derived correctly, whether summary financials are correctly given or not, how do I know? Moreover, summary financial statements, how to prepare? There is no accepted framework. Is there any criteria? The company will prepare summary financial statements. For example, tell me, how do we prepare general purpose financials for a normal manufacturing company? We use Schedule 3 criteria. Division 1, Division 2, Division 3, some criteria we use. There is an applicable criteria here. Established criteria is there. For summary financials, is there any established criteria? No. Management only developed. What exact summary? What should be the content of summary financial statements? How summary balance sheet should look like? Summary P&L, how it should look like? What points will be there in the notes to accounts? Summary cash flow. The formats and all, management only designed. So I need to be very careful whether summary financial statements are reflecting key summary, important summary of main financials. I need to understand whether summary financial statements will give me a clear picture. Most important, summary financial statements are never a substitute for audited financials. You should not read summary financial statement isolated. That point also the standard tells you. Now look at the auditor should accept an engagement to report on summary financials only when he audited the main financial statements from where summary financial statements are derived. If an auditor who has not audited summary financials, main financials, and if at all you are exclusively called to report on summary, you generally will not have understanding whether summary financials are correctly reflecting everything, because you didn't audit the main financial statements. Able to understand. Next. So what is the requirement? Why this requirement? Without auditing main financials, you will lack knowledge to report on summary. Therefore, don't report on summary financials if at all you didn't audit main financials. So before accepting the engagement, what auditor has to do? Here, they may ask you both the questions. While accepting an engagement, what are the points auditor has to, you were requested to report on summary financial statements. What are the points auditor has to take into account while conveying acceptance on summary? You can accept only if you audited the main financials. Determine acceptability of criteria. Okay, summary financials prepared. You only audited complete set financial statements. From there only summary financial statements are prepared. See on what basis they were prepared, which criteria they used. See whether the criteria is acceptable or not. Get an acknowledgement from management that they are responsible for summary financial statements. Agree with management what form of opinion to be expressed on summary financial statements. Here we don't give any opinion whether they are true and fair or not true and fair, like that. Unmodified, qualified. No, we don't give all that. Straight away I will show you on summary financial statements. Wait, how we give opinion on summary financial statements? Very simple. Two scenarios we will divide. Audit report on summary financial statements. Summary financials. How do we give? For example, by the way, I will report on summary financials only when I am the one who reported on audited financials. Only then I will give report on summary financials. Suppose I verified summary financials. I accepted the engagement. I verified summary financials, and you know what? Summary financial statements are consistent with audited financial statements. They're matching. Summary financial statements are reflecting without compromising the quality. Suppose you are following a flowchart material or short notes material. So right now you are following my GOAT notes. You compare with ICA material. Our GOAT notes is a fair summary of ICA material. You just compare with ICA material, you will feel entire ICA material points are covered here. Entire that content is covered intact without compromising the content. It's a fair summary of ICA material, which is actually 1000 pages, whereas my material is 360 pages. Getting it? So summary financial statements are consistent. After you verified, you felt that summary financial statements are consistent with audited. If they are consistent with audited financials, which opinion you should give on summary financial statements? Unmodified opinion. Directly unmodified opinion. Most importantly, unqualified opinion, clean opinion, where you will say, yes, summary financial statements are consistent with audited financials. That is one way you can give opinion. Second way, summary financial statements are a fair summary of audited financials. Like that also you can talk. Any of these two phrases you can use. When summary financial statements are consistent with audited financials, auditor's opinion can draw like this. Yes, summary financial statements are a fair summary of audited financials. Summary financial statements are consistent with audited financials. Any of these two wordings you can use. Suppose summary financial statements are not consistent with audited financial statements. By the way, guys, this is not yet completed. Only one part of it I told. Look at the second part. Suppose company prepared summary financials. They are not matching audited financials. Audited financials have more details. There is so much of, for example, audited financial statements has trade receivable, where the breakup is given clearly, where 90% of trade receivables are more than 3 years outstanding, overdue. But in summary financials, they presented trade receivables less than 6 months, more than 6 months. 90% of trade receivables they classified under more than 6 months. Actually, more than 3 years is nothing but more than 6 months. More than 6 months includes more than 3 years also. But when I say in the balance sheet or notes to accounts, trade receivables are outstanding for more than 3 years, trade receivables are outstanding for more than 6 months, both of them will they give same perception to the user? More than 6 months, we think okay, 6 months crossed. More than 3 years means, oh my god, 3 years onwards outstanding. You know, audited financial statements contains trade receivable more than 3 years. Like this, many items are there in the audited financials like this, but summary financial statements are cleverly, they're hiding it. Summary financial statements are not reflecting fair summary of audited financials. Summary financial statements are not consistent with audited. I will straight away give adverse opinion on summary financial statements. Don't believe summary financials. I will straight away tell summary financial statements are not consistent with audited financial statements. I will straight away give adverse opinion. That's it. Sir, summary financials, they are prepared consistently with audited financial. Whatever is there in the audited financials, no, the matter exactly neatly presented in summary, sir, without compromising quality. Now tell me which opinion I should give. It depends upon on audited financial statements which opinion you gave. Sir, on audited financials, no, we give unqualified opinions, or we give qualified opinions, sir, or we have emphasis of matter paragraph, other matter paragraph, other information para, material uncertainty related to going concern, that and all were there, sir, on audited financial statements. Okay, we gave unqualified, qualified. That is one scenario. Another scenario, sir, on audited financials, no, we gave adverse opinion, or the auditor gave a disclaimer of opinion on audited financial statements. Then what you should do, on summary financial statements, do not express opinion. Do not express opinion. Right away. Sir, audited financials were there. I am the one who audited. I gave adverse opinion on them, like they are not at all true and fair. Or I gave a disclaimer that no, I did not audit at all. I did not audit, so I'm unable to give opinion. Now company is asking me to give an opinion and report on summary financials also. What should I do? Don't give opinion. Arey, main financials itself is wrong here. What about the summary? There is no use about the summary. Summary financials are useless because main financials itself is wrong. That financial statement summary only this is right. Main itself is wrong, man. Summary should not be used by anybody. So don't give opinion at all. Don't unnecessarily give an opinion and give an assumption to the user that they can use this. Don't let users use summary financial statements if at all the summary financials are derived from audited financials which contains adverse opinion or disclaimer of opinion. So this is a reporting requirement under 810. Sir, audited financials, it contains unqualified opinions or qualified opinion, emphasis, other matter, all that. Well, then what about this? Then you can say summary financial statements are consistent with audited financials. You can give that, no problem at all. And also draw attention to qualified opinion, qualified opinion, emphasis of matter, other matter, material uncertainty related to going concern, other information, uncorrected material misstatement in the audit report on summary financial statements. Say that they are matching, say that they are consistent, say that they are present fairly. You will give unqualified opinion on summary financial statements, like you say that they are consistent with audited financials. And also draw attention to auditor's report on complete set financial statements. I will show you summary financial statements related audit reports. For example, so this is audit report on summary financial statements. So big actually. 5 illustrations were there here. Just a minute. So there are 5 illustrations here. You see here 5 illustrations. Report of independent auditor on summary financial statements. Opinion. Straight away. In our opinion, the accompanying summary financials are fair summary of audited. So he said a positive opinion. The summary are matching with audited. What is the summary? The summary financials, no, they do not contain all the details. So the summary financials and audited financials do not reflect. The summary financial statements, even subsequent events, all that is fine. The audited financial statements and our report thereon, specific heading the auditor is keeping. You see, this is like an emphasis of matter paragraph. Summary financials, see, you see how audit report, first we are talking about opinion on summary financials. Then you are explaining what is exactly summary. Then you are explaining about audited financials and what report you gave on that. We expressed unmodified opinion. Material uncertainty point is there in our audit report, and key audit matters we communicated in our audit report. Please go through that. Indirectly we are communicating to shareholders, indirectly we are communicating to the user who is getting this audit report on summary financials. Look, audited financial statements contains audit report. Inside that, key audit matter is there, emphasis of matter is there, going concern point is there. Please go and see that. And auditor responsibility, our responsibility is to express opinion whether summary financials are a fair summary or not, yes or no. And here I should very clearly tell, look at this, what I'm highlighting. Reading summary financial statements audit report is not, you see this, is not, I'm just highlighting, is not a substitute for reading audited financials. Please, reading summary financials and this audit report is not a substitute for reading main financials and the audit report. You should read main financials also. This is only complementary in nature, not a substitute in nature. Getting it? I should alert like this. Suppose no, adverse opinion is expressed on audited financials. Now what it is? Report on summary financials. When auditor gave adverse opinion on main financials, denial of opinion. I will not give opinion on summary. Why, sir? What happened? Summary financials are correctly prepared now as per audited. I know they are correctly prepared, but audited financials itself is wrong. Something, the source itself is wrong, that is something not reliable, and you are preparing a shortcut material which is from irrelevant source. What is the point of talking about this? Exactly. Okay, so the summary financial statements, getting it, as a result of adverse opinion on audited financials, it is inappropriate to express opinion on summary financial statements. The summary financial statements do not contain all the disclosures, audited financial statements and our report thereon, and management responsibility. So what are the contents of audit report on summary financial statements? Let's go to contents of audit report on summary financial statements. First go to this, let's go to contents of audit report on summary financial statements. Where is it? Yes, here. Audit report on summary financials. This is also modified. Yeah, by the way, 810, what is the amendment? This only the amendment. First, title, mention that it's a report on summary financials. Addressee, mention. First, identify summary financials. Yes or no? They identified. Then identify audited financials. Sir, what is identifying summary financials and audited financials? Here you see the summary financials are so and so, audited financials are so and so. Summary financials are derived from audited financials. Identification of summary and identification of audited. Then opinion they are giving, actually you see here. Then opinion, clear expression of opinion. Then you should give a disclosure statement regarding, you should give a disclosure statement in the same opinion section. Then you should talk about reference to, wait a minute. Then you should talk about reference to audited financial statements, then management responsibility, then audit responsibility, then signature of the auditor. You see this? Yes or no? The same format is followed, right? Opinion, here itself they're talking summary financials, all that, and here itself they're talking about subsequent events. Then summary financial statements means what? Audited financials and audit report means what? Then management responsibility, then auditor responsibility. Array, who said auditing is a theory subject and boring subject? People made like that. You studied like that. You see the illustrations and then read this, you get fantastic clarity. Imagine in a revision class itself I'm giving this kind of clarity. Imagine my 7.5 8 hours discussion of this chapter in a faster regular batch. The kind of clarity, you don't get just clarity, you command it in a different way. By the way, I'm not promoting about my course, I'm just telling you what level of clarity and what level of dedication with which I teach the class and what kind of knowledge the student gets, I'm telling you. Please tell your juniors, while selecting an audit faculty, select the right faculty who can give the right subject. I will solve in the class, we solve this, we discuss different types of MCQs, how it can come, we solve in the classroom how different ways these questions can be asked. And we also solve our question bank, wonderful question bank, which consists of 700 questions. Some repetitions will be there, pakka 650 questions will be there. Fine, anyhow. Now look at this. So, yes, that's it. Now look at this, reporting. This is what the most important part of the standard. Summary financials are consistent with audited. Okay, first I will come back to it later. First I will see the second part of the reporting requirement. Just a minute. Suppose summary financials are inconsistent with audited, directly we will give adverse opinion. The auditor will adverse opinion, will express adverse opinion. I will show you that example also. Next page is only this only. This one you see. Adverse opinion on summary. When, because of significance matter, the accompanying summary financials are not a fair summary. Adverse opinion. If summary financials are not matching with audited, we straight away give adverse opinion. Okay. So, for example, sir, summary financials are matching, sir. Now what to do? Suppose summary financials matching. What opinion on audited financials auditor gave? Qualified opinion he gave. In such a case, auditor report on audited financials includes a qualified opinion or emphasis of matter para or other matter para or MUC or MU material uncertainty para, key audit matter or 720 related uncorrected MMS in other information discussion is there in audit report, and summary financials are matching with audited financials or they are a fair summary of audited financials as per applicable criteria, then auditor report on summary financial statement state that auditor report on AFS includes qualified opinion and describe the basis for qualified opinion. All that, where you will describe this, I showed you illustration. Audited financial statements or audit report there on, like this I'll put a separate heading. There I will talk about our qualified opinion, everything I'll talk. Suppose adverse opinion or disclaimer of opinion is given on audited financials. The audit report on summary financial statement shall state that audited report on AFS contains adverse or disclaimer and describe the basis for adverse and disclaimer and state that because of adverse opinion on audited financials, it is inappropriate to express an opinion on summary. So denial of opinion on summary financial statements. That's it. Now let's understand the remaining parts. Restrictions on distribution. Sometimes summary financials might be restricted for distribution. That time you will use alert paragraph, just like in 800. Emphasis of matter paragraph, you will use draw attention to criteria based upon which summary financials are prepared. And restriction on distribution usage. If auditor report on audited financials has restricted distribution or alert users, that statements are prepared as per special purpose. Yeah, most important point. Suppose summary financial statements are derived from complete set financials audited, which are special purpose framework. If at all main financials are special purpose framework, naturally it will have an alert paragraph, right? Restriction for distribution and usage. Summary financial statements also should have alert paragraph. If main financial statements related audit report has an alert paragraph regarding restriction on distribution and usage, summary financial statements related audit report should also have restriction on distribution and usage. That's it. Comparatives. If at all, summary financial statements also contains comparatives, 710 comparative related will apply. Suppose along with summary, unaudited supplementary information is presented. Supplementary information requirement I already discussed in 700. Please, just a minute. Please go back to 700 and come back and then read this. Next. Just a minute. My next session onwards, I will use my Mac system only. Okay, I'm using Windows system for convenience purpose, but somehow this is not working correctly, this particular app. Okay, fine. So finally, sir, summary financial statements are given. Summary financial statements are given in a particular document, sir. Okay, the auditor must read the document containing summary. Other information, this is nothing but other information. 720 requirement. If auditor identify inconsistency, tell the management all that. Now auditor association. Sometimes company will give summary financials along with main financials, and summary financials they were not reported on that, we didn't report, but company might tell others that auditor has already reported on that. What auditor has to do, see whether audit report is also included or not. Audit report is not included in the document where summary financials are given, request the company to include the audit report on summary financials because you gave a report. Suppose management is refusing to report, take appropriate action. Suppose auditor is not engaged, suppose you did not engage at all, summary financials you did not report at all, see that management is referring your name only in the context of audited financials, they are not using your name in the summary financial statements context. Suppose if management is not behaving like this, okay, take appropriate action. That's it, take appropriate action to prevent. So this is the theme. Just listen once again, you will understand. Next, What about subsequent events? You know, audited financial statements, they were approved on 10th May 2025. For example, 2025 only, let us assume. Whereas summary financial statements were approved on 10th June 2025. Do we need to cover subsequent events between this? Not at all. Summary is just derived from this, no? So, when you are giving audit report on summary financial statements, you should tell the people that events occurring after original audit report date is there, right? 10th May. We didn't cover that in summary financial statements also, because this, remember, this is a summary of that only, yeah. Just because you are preparing summary financials at a later date, subsequent event definition will not apply. Remember, are we auditing summary financials separately? We are only verifying them whether they are as per audited financials. That's what. Able to understand? That is what this point is mainly talking. In exam, they will ask you, write about timing and events subsequent to the date of audit report on audited financials and what is its impact on summary financial statements. They may ask you this. In exam, they may ask you, write about auditors association on summary financial statements. They may ask you 5 marks question on this directly. Or in exam, write about information, other information in the document containing summary financials. They may ask you a 5 marks question on this. Or they may ask you comparatives, 3 marks question, unaudited supplementary information, 3 marks question. Both together they might ask you. And most important in this, reporting when summary financial statements are consistent. This is what most important. And they may also talk about date of audit report. What is the date of audit report on summary financials? The date of audit report on summary financials shall not be earlier than the date of audit report on audited financial statements. Yes or no? It should not be earlier than the original audit report date. Summary financials audit report date shall be later than the original audit report date. Not only that, summary financials related audit report date must be later than management approval of the summary financial statements date. That's it. Okay, this itself they can ask you as a 3 marks question. That's it. In our actual class, we discuss all this. That's it. Form of opinion, how you can give any of the two, any one of the following you can use. Yes, summary financials are consistent, this way you can tell, or summary financials are a fair summary, like this also you can tell. Any one is permitted. Sometimes law discusses about what opinion wordings to be used. If at all law related wordings if I am using, no. If at all it is giving confusion to the reader, no. See whether additional explanation is required. Give additional explanation so that your opinion will not be misunderstood by others. Suppose if additional explanation cannot avoid misunderstanding or cannot mitigate, do not accept the engagement to report on summary financial statements. Next. Most importantly, write about nature of this is most important process. What you should do on summary, what procedures? First, you should check summary financials, are they clearly disclosing that they are summary? They should not pretend like they are main. When summary financials are not accompanied by main financials, evaluate whether they are describing. Summary financials should clearly tell from where people can access audited financials. And summary financial statement should clearly disclose applied criteria. Auditor will compare summary financials and with main financials whether they are agreeing or not. We will recalculate numbers, all that, and I will see whether summary financials are prepared in accordance with applied criteria. You see, here they are talking about disclosure of applied criteria. Here they are talking about disclosure. Here they are talking about compliance, whether applied criteria is properly followed or not, and whether consider purpose of summary financials, why summary is prepared, and whether summary financials are clearly addressing that purpose or not. Availability, make sure that those who are given summary financials were also made available to audited financial statements. That's it. Management responsibility. Sometimes in exam they'll ask you, write about management responsibilities for summary financials, 5 marks question. They will give you like a case study and then give this question. So that's it. So what is applicable criteria? Generally criteria, if authorized standard setting body is there, you can accept it happily. If at all there is no established criteria, management will develop the criteria. Suppose if summary financials are prepared using some framework which is unacceptable completely, do not accept that engagement. Suppose if law makes it mandatory for you, sir, criteria is not correct, sir, but SEBI says I need to report, then do not state that 810, do not use about 810 discussion. Terms of engagement should clearly mention that fact. Then that's it. Acceptability of criteria. Before accepting the engagement, the auditor check whether criteria is acceptable. This itself can be asked as a 5 marks question. See, there are many possibilities of questions from this particular standard. There is an increased risk that summary financials will be more misleading if there is no established criteria. So whether criteria is acceptable or not depends upon nature of the entity, why the summary financials are prepared, what is the information need of the user for whose purpose we are preparing summary financials, whether the criteria will ensure, or whatever the criteria company is following, will it ensure summary financials are not misleading. Check out. That's it. In exam, they will ask you a 3 marks question on factors determining acceptability of applied criteria. What are the factors? Nature of the entity, purpose of the financials, information needs, criteria, whether it is misleading or not. That's it. 810 is also completed. Within 1 hour 45 minutes, almost only 800, 805, 810 put together, approximately less than 2 hours we finished. With I can tell you, I think I can openly tell you, I don't know how many of you have seen my earlier regular or faster class, I don't know, but if at all you're watching me for the first time this particular topic, I can confidently tell you, you have got more clarity than before you have on these 3 standards. I bet I am right on this. That's it. We'll continue next topic in the next continuation. Okay, that's it. We'll close this particular session. And by the way, I hope you enjoyed thoroughly this 800 series. By the way, first 700 series, 12 standards I covered in reporting. So if at all you're watching a merged video of this, first to finish remaining first 700, then come to these timestamps. That's it. Okay, so next we'll be discussing about 4000 series, 2000 series, 3000 series. That's it. Then I'll be discussing ethics. Then I'll be discussing NBFC audit and bank audit. That's it. Yeah, I started the live stream. So now we'll begin NBFC audit discussion. And I hope in the previous sessions like 800 series, 700 series, all that I hope you are very confident with. Okay, so now let's enter into the topic NBFC audit. And you know very well, there were a lot of amendments in NBFC audit chapter. And even in the recent MTP1, also, one practical question has been asked. In the May 2025 MTP1 Series 1, a practical question has been asked regarding capital requirement adequacy ratio computation. Don't worry, we'll be working on that. Okay, now, so audit of NBFC. What is audit of NBFC? So first of all, what is an NBFC? You know, an entity becomes NBFC based on what activity they do. First point, there is something called principal business criteria. Any entity you take, any organization you take, what are their financial assets identified? Very simple. In NBFC, you know, take their balance sheet. So in NBFC, the balance sheet is presented in the order of liquidity, financial assets, non-financial assets, like that they present. What is the total of financial assets identified? What is the total assets identified? If the financial assets is more than total assets by 50%, I mean, if the financial assets are more than 50% of total assets, and income from financial assets is more than 50% of the total income, if these two conditions are satisfied by any NBFC, naturally it will become by any entity. If these two conditions are satisfied by any entity, we will call this as NBFC. This criteria is called as principal business criteria, or criteria to qualify whether an entity is an NBFC or not. More than 50% of the total assets are financial assets, more than 50% of the gross income is from financial assets. And further, any enterprise, my dear, any enterprise it doesn't matter whether it's an LLP, it doesn't matter whether it's a partnership firm, it doesn't matter whether it's a private company, public company, it doesn't matter. Any enterprise which is satisfying this criteria, they must register as a first company under Companies Act. Then they should immediately apply for RBI for registration. As per 45 IA, every NBFC must obtain certificate of registration from RBI, provided their minimum net owned funds are 25 lakhs, which is a law limit. Again, immediately, don't confuse. Sir, I know. Minimum net owned funds are 2 crore, and for certain NBFCs, the minimum net owned fund is 10 crore. Getting it? I'll come to it. This 25 lakh limit is a statutory limit. Under 45 IA Act limit is still 25 lakhs only. But later with RBI notifications, the limit has been increased to earlier. The limit has been increased to 2 crore for certain NBFCs, whereas for remaining all other NBFCs, 10 crore is the limit. Actually, original notification actually talks about 10 crore limit for only few categories of NBFCs like Facto, microfinance institution, investment credit company, like that. But in our ICA material, no specific discrimination is given. Right now, directly any NBFC which is applying for registration, any NBFC which is applying freshly for registration, they must have a minimum net owned funds of 10 crore. That's the basic condition. Only if an NBFC satisfies 10 crore net owned fund criteria, right now RBI will give registration. Further, I told, right, 2 crore net owned fund criteria is there for certain NBFCs. Which NBFC is? NBFC peer to peer, NBFC's account aggregator, NBFC with no public funds or customer interface. If at all there is an NBFC which does not have any public access, which does not have any public funds access or customer interface, and it's a peer to peer lending platform, account aggregator. Wait. I know. You have little confusion right now, sir. Directly net owned funds we are discussing. What is it? Net owned funds alone first we will discuss, then we talk about various exemptions on an NBFC and classifications of NBFC. Then once again you get back and see the revision of NBFC for revision of this particular NOF. Whereas for NBFC IFC and NBFC IDF, actually please space here, NBFC IDF, the net owned funds requirement is 300 crore. Very simple. What is the net owned fund requirement for NBFC? For NBFCs which are freshly applying, 10 crore. For NBFCs which are peer-to-peer account aggregator, NBFC not having public funds access or not having customer interface, the amount of net owned funds required is 2 crore. That's it. And you know what? First of all, what are various types of NBFCs? RBI classified NBFCs into basically two types: deposit taking NBFC, non-deposit taking NBFC. Once upon a time, these NBFCs are again, right now NBFC classification is based on the scale of business they do. There is something called scale based regulations released by RBI. Based on the scale of business NBFCs do, right now NBFCs are broadly classified into 4 categories: base layer, middle layer, upper layer, top layer. Now top layer is something which is always empty. Top layer is always empty. RBI only will have to keep, guys, right now there are 9,000 plus registered NBFCs with RBI right now. As per the latest RBI, you just open list of NBFCs with RBI, you will get an RBI link PDF. You just open 9,000 plus NBFCs were there. And there are many types of NBFCs. What are they? Investment credit company. An NBFC can do infrastructure finance. An NBFC can do core investment activity. Further, regarding core investment company, there are some exemptions and all available. I will come back to it later. NBFCs are broadly classified into 4 categories: base layer, middle layer, upper layer, and top layer. Basically, top layer is empty, and upper layer, top 10 NBFCs are by default comes under upper layer. Top 10 NBFCs by default they come under upper layer. Now the discussion is, sir, which NBFC comes in which layer? Base layer, which NBFCs will come? Upper layer, which NBFCs will come? If at all you are clear on these 2 elements, you are done. You are done with classification. Many students often confuse on classification of NBFCs between layer. You don't have to study. Are your 4 layers are there? No, 2 layers only you have to study. Upper layer by default, top 10 NBFCs by asset size. Top 10 NBFCs in India by asset size, they straight away come in upper layer. Top layer, 0. No NBFC is there right now in top layer. RBI will select an NBFC from upper layer to top layer if at all risk is very high in a particular NBFC. Right now, until date, RBI has not selected any NBFC in top layer. So technically, top layer, upper layer is nothing much to discuss. Now the discussion is between base layer and middle layer. Which NBFCs will come under base layer? Which NBFCs will come under middle layer? Straight away. First middle layer you see. Sir, the NBFC is accepting deposits. Straight away middle layer. Is the NBFC accepting deposits? Yes. Straight away middle layer. No question about it. No sir, it is not accepting deposits. Then it's a non-deposit taking NBFC. Okay. What is its asset size? It's 1,000 crore and above. The asset size of the NBFC is 1,000 crore and above. Then also that NBFC straight away comes under middle layer. So, and a deposit taking NBFC and non-deposit taking NBFC with asset size 1,000 crore and above, straight away middle layer. Sir, it's a non-deposit taking NBFC, sir. In such a case, asset size is less than 1,000 crore, then straight away it will come under base layer. This is the primary rule. But there are certain NBFCs which are activity based. NBFCs which are carrying out specific activity. Like, you see, right now, what is the classification between base layer, upper layer? What we understood right now, asset size 1000 crore and above, less than 1000 crore, deposit taking, and non-deposit with 1000 crore and above asset size, straight away middle layer. Less than 1000 crore asset size, non-deposit taking NBFC, we straight away classify under base layer. That is normally. However, for certain NBFCs, they are always base layer. What are they? NBFC peer to peer. Their asset size doesn't matter. NBFC account aggregator. Asset size doesn't matter. Non-operative financial holding company. Sir, what is a non-operative financial holding company? There is a difference between core investment company, non-operative financial holding company. In India, there are only 3 non-operative financial holding company. One company is Bandhan Holdings. There is a company called Bandhan. You know Bandhan Bank, right? Yeah. Bandhan Holdings, there is a company that's a non-operative financial holding company. Core investment company is also an investment company. Non-operative financial holding company is also an investment company. But non-operative financial holding company, they are permitted to invest. They are permitted to invest only in financial sector like banks and NBFCs. They can only invest in financial sectors, banks, and NBFCs. Whereas core investment company, for example, Tata Sons Private Limited is a core investment company. They can invest in any enterprise. They can invest in any enterprise. When do we call a particular company as a core investment company? Minimum 90% of their total assets, minimum 90% of their total assets are represented by investments. If investments occupy minimum 90% of the total assets, we straight away call it as what? Core investment company. Fine. So that's core investment company versus non-operative financial holding company. Often many students do not have clarity on this. Peer-to-peer means what? Very simple. It's like an Amazon app where lender will register, borrower will register. Both of them will register. Lender will post about loan options. Borrower will post about loan requirement. Borrower credit assessment, everything will be done by the NBFC peer-to-peer. Lender will credit to the borrower. Accordingly, he'll get the income. Peer-to-peer is a platform. Account aggregator is one such platform where entire your information will be available at one place. Your information will be given access to banks and all by these NBFCs. NBFCs without public funds, NBFCs without customer interface. These NBFCs always come under base layer. Then there are 5 categories of NBFCs. NBFC, deposit taking, a core investment company, infrastructure finance company, standard primary dealer, and standalone primary dealer, housing finance companies. These 5 categories of NBFCs straight away will come under middle layer. Their asset size we don't see. These 5 NBFCs will straight away come under middle layer. Now what about remaining NBFCs? Remaining NBFCs, I will see deposit taking or non-deposit taking. Deposit taking middle layer, non-deposit taking asset size 1000 crore and above middle layer. Non-deposit taking asset size less than 1000 crore base layer. Over. That's it. Over. This entire classification is over. As simple as such. If you have a doubt, once again read. That's why here once again that activity based is explained. Top 10 NBFCs by asset size come under upper layer. Top layer is basically empty. RBI will bring any NBFC in upper layer to top layer if at all there is a significant increase, substantial increase in systematical risk. That's it. Classification of NBFC is over. Further, most important, government owned NBFCs, they always come in either base layer or middle layer. Sir, government owned NBFCs, sir, asset size is so big. Still, they will never be placed in upper layer. Government owned NBFCs, they always come under base layer or middle layer. And further, once upon a time, NBFCs are referred as with various classification. NBFC, deposit taking, NBFC deposit taking. NBFC non-deposit taking, systematically important. NBFC non-deposit taking, non-systematically important. Once upon a time, NBFC rules, how an NBFC will be categorized, just a minute. Just 1 minute. Once upon a time, NBFCs are broadly classified into 2 categories. Deposit taking NBFC, non-deposit taking NBFC. The non-deposit taking NBFCs are again classified into 2 types. Systematically important, non-systematically important. What is the criteria for systematically important, non-systematically important? Asset size 500 crore. If the asset size is 500 crore and and above, they're all systematically important NBFCs. If the asset size is less than 500 crore, they're non-systematically important NBFC. Whereas right now, how NBFCs are classified based on asset size of 1000 crore. Getting it? Now, earlier, no, RBI has given so many notifications. What notifications? NBFC, Reserve Bank, the non-deposit taking, systematically important deposit taking guidelines or regulations. Same way, NBFC, Reserve Bank deposit taking regulations, directions. Actually, they're called as directions. Okay, directions. NBFC auditors report directions, like that multiple directions and all were there in our book once upon a time. Now they removed all that. Now what department is what RBI is saying? Dear deposit taking NBFCs, non-deposit taking systematically important NBFCs, no, now onwards please call them as middle layer or upper layer as the case may be. Whereas once upon a time we have non-deposit taking, non-systematically important NBFCs, right? Now onwards call them as base layer. They are simply telling, earlier we call non-systematically important non-deposit, no, now call them as base layer. Getting it? Deposit taking, non-deposit systematically important, no, call them as middle layer. Simple. Even look at, just 1 minute. Even, sir, there is an NBFC, sir, which is systematically important, but asset size is less than 1000 crores, sir, between 500 to 1000. Why? Once upon a time, systematically important, non-systematically important, what is the criteria? 500 crore. Now base layer means what? Less than 1000 crore is a base layer. What about there is an NBFC which is actually, as per old time, systematically important, but now it is 750 crore. Yes or no? Now here you are saying what? Systematically important NBFCs are called as either middle layer or base layer. But what about an NBFC which is systematically important, having 750 crore asset size? Even then still be called as middle layer, upper layer, because the asset size is 750? No. If the asset size is less than 1000, then you please call them as base layer only. Simple. Right now, whether an NBFC is a deposit taking or non-deposit, deposit taking, straight away middle layer, upper layer. Non-deposit taking, asset size less than 1000 crore, systematically, non-systematically, doesn't matter, base layer. Asset size is more than 1000 crore, straight away we will classify it as middle layer. That's it. Listen once again, you will get more clarity what I told. And you know what? Net owned funds requirement I told, right? What is the net owned fund requirement for NBFCs right now? 2 crore. For newly going to incorporate NBFCs, what is the net owned fund requirement? 10 crore. By the way, there are some NBFCs where current net owned funds requirement is like the RBI has given three NBFCs related specific detail. 3 NBFCs. These 3 NBFCs, if at all they are applying for registration now, 10 crore is the direct net owned fund requirement right now. Sir, these are already registered, sir. Right now they are having 2 crore net owned fund, 5 crore net owned fund, and for example, investment credit company, micro financial institution, and factor. Right now, earlier they have, this is the net owned fund requirement, sir. Now by 31st March 2025, please increase it to accordingly. This is called gliding path. This actually called as a gliding path. By 31st March 2027, whether you are a factor, micro financial institution, investment credit company, you must have a net owned funds of 10 crore. That's it. With this net owned fund requirement, classification of NBFC is completed. One of the major chunk is completed. What is the difference between NBFC and a bank? NBFC is also doing financial activity. Bank is also financial activity, but banks can accept demand deposits. NBFC cannot accept demand deposits. So NBFC cannot accept demand deposits, but can accept term deposits. NBFCs, no, they cannot have a payment and settlement system and cannot issue checks drawn on itself. For example, when I open a bank account in a bank, I will be given a checkbook. If I deposit in a bank, suppose with NBFC, I have some term deposit, I have some fixed deposit. Okay, can they give checkbook to me? No, they can't, because NBFC cannot do payment and settlement. That's it. And with the banks, I don't know how many of you know this. If you have a bank balance in a bank, your deposit is protected up to 5 lakh rupee. If at all bank became insolvent, there is a credit guarantee corporation, deposit insurance credit guarantee corporation, that insurance is there. Deposit insurance credit guarantee corporation, up to 5 lakhs insurance is there in case of banks. This facility is not available to NBFC. That is the reason why NBFCs offer higher rate of interest, because risk is high with NBFCs. And you know what? Banks and all has to lend minimum to priority sectors some amount. NBFCs are not required to lend to priority sectors like banks and all. There is no minimum requirement to lend to priority sector. All that clear. Next, now most important part of the discussion, capital requirement. This has an amendment, very big amendment. You know, whether it's a bank or NBFC, all of them has to maintain something called capital requirement adequacy ratio. Every bank and NBFC, even insurance companies, you know, insurance company, for your information, they must have minimum 100 crore capital in order to start insurance business. NBFCs must have net owned fund is one criteria. In addition to the net owned fund, the capital requirement for an NBFC shall also be 15% of risk weighted assets. Risk weighted assets, for your information, I'm classifying it as RWA. So every NBFC must maintain a minimum capital ratio of 15% of the risk weighted asset RWA. Minimum, that's a minimum capital requirement. Very simple. Let me give you one diagram here, okay, where you can understand that particular thing. Okay, please make a note, ma. This PDF cannot be given to you because it's difficult for me to maintain entire this, all that you know, exporting everything. So I'm just scribbling randomly. Don't ask for this PDF. Kindly please make a note if at all you find something valuable. Pause the video and make a note of it in your book itself. Right now, what is the capital requirement adequacy ratio? Remember, they may tell you capital requirement ratio or capital requirement adequacy ratio, whatever it is. What is the capital requirement ratio for NBFC? 15%. If you remember bank audit chapter, it is 9%. For banks, it is 9%. 15% of risk weighted assets. Sir, what is risk weighted assets? Very simple. Risk weighted asset is nothing but risk weight multiplied by asset items. Okay, they will give some risk weights. We will see the list of the risk weights. Asset values will be there. You multiply that, you will get risk weighted assets value. On that value, multiply with 15%. You will get what is the capital required. And you know what? In financial sector, capital is broadly classified into two tiers, tier 1 and tier 2 capital. Tier 1 capital is called as high quality capital. Tier 2 capital is not a high quality capital. And you know, within this 15% of risk weighted asset, tier 1 capital can be up to 10% of risk weighted assets only. Nothing but out of 15, 10 means what? 2/3. Minimum 2/3 of the 15% of risk weighted assets. Indirectly, that is expressed as 10% of risk weighted assets. That should be tier 1. Balancing figure can be tier 2. Whereas gold based, if an NBFC is lending against gold jewelry, they must have a tier 1 capital of 12% of risk weighted assets. This is the minimum requirement. Now, what is tier 1 capital? What is tier 2 capital? Now, look at this. Tier 1 capital means what? Tier 1 capital means owned funds. Tier 1 capital includes owned funds reduced by, from own funds value they'll give you, reduced by investment in other NBFCs and group companies. Investment in other NBFCs, you might have, this NBFC might have made investments in other NBFCs and group companies, right? Don't reduce full investment straight away. Identify investment in excess of 10% of the own funds. Very simple. What to do? Suppose in exam they'll give you a problem. What you need to do? Just a minute. What you need to do? For example, you know, owned funds are there. For example, owned funds are 1000 crore. Investment in subsidiary and other NBFCs is equal to 250 crore they made. Now, how much you should reduce? 250. Wrong. That's wrong. You should reduce only 150. You should reduce only 150. Sir, how come, sir? You reduced by investment, they said, right? No. Reduced by investments in investment in subsidiary and other NBFCs in excess of 10% of own funds. 250 crore invested minus 10% of own fund is how much? Own fund is 1000 into 10%, 100 is equal to 150. In exam, they will give you investment made in subsidiaries 250 crore. They just like that they gave 250. Then you should identify 250 minus 10% of own funds, balance. Sometimes in exam, they'll give you straight away 150 crore value, nothing but investment in subsidiaries or investment in subsidiaries and other NBFCs, which is in excess of 10% of net owned funds. Therefore, tier 1 capital, how much? 850 crore. Remember, not only this, tier 1 capital also includes perpetual debt instrument. Tier 1 capital also includes what? Perpetual debt instruments. Perpetual debt means perpetual. We will not redeem it at all. Perpetual debt instruments can be there as a part of tier 1 capital. And how much can be as part of tier 1 capital? Suppose NBFC issued some perpetual debt. NBFC issued some perpetual debt. That perpetual debt will be classified into tier 1 and tier 2 both. Perpetual debt will be classified into both tier 1 and tier 2. How much of the perpetual debt comes in tier 1? You know, perpetual debt issued by non-deposit taking NBFC up to 15% of the aggregate of tier 1 capital, whatever the capital amount as on 31st March of the last year, is there, right? Last year tier 1 capital information you will have. On that 15% you apply up to that amount. In this year, perpetual debt can be there as a part of tier 1 capital. For example, last year, just a minute, last year, previous year, last year, tier 1 capital is 1000 crore. Okay, right now we have 250 crore perpetual debt. Now, out of 250 crore perpetual, tier 1 how much, tier 2 perpetual debt how much? This is the question. Tier 1 perpetual debt can be up to 15% of tier 1 capital of last year. Last year capital is 1000 crore into 15% is equal to 150 crore. Sir, but total perpetual debt is 250. No, excess perpetual debt is classified as tier 2 capital, where 100 crores will come as tier 2. You see here. What is tier 2 capital? You see here. Excess perpetual debt beyond tier 1 limit, that you will classify as a tier 2 capital. Further, a base layer NBFC cannot have perpetual debt in tier 2 capital. Here also a base layer NBFC cannot have perpetual debt in tier 2 capital. Base layer should not have a perpetual debt. Further, what is a tier 2 capital? So which means tier 1 capital means two things: owned funds minus investments in excess of 10% of the owned funds in subsidiary, reduce, plus tier 1, perpetual debt to the extent of 15% of the tier 1 capital of the last year. You will get tier 1 capital total. Tier 2, preference share capital, which is non-convertible. Revaluation reserve discounted at 55%. Actually discounted at means what? Revaluation reserve will give you value in the problem. You will have to multiply it with 45. Wait, sir, MTP 55 they did. Wait, I'll tell you. So revaluation reserve into 45% is equal to some value you will get. That value is part of tier 2. 45 discounted at 55 means, tell me, 100 rupees discounted at 10% means 90 rupees, right? Which means 100 minus 10 you do. Same way, if revaluation reserve is 100, discounted at 55 means 100 minus 55 is equal to 45. This is right approach. But MTP1 contains a wrong answer, where they consider revaluation reserve discounted at 55, right? They multiplied it and they took some value as multiplication, which is actually wrong. Okay. Now in exam, what should we write, sir? You write MTP answer only. In an alternative, within bracket you put alternative. Discounted at 55 means 55% shall be reduced, 45%. Accordingly, tier 2 capital will change. Like that you put. Then general provisions and loss reserves, including provision created for standard assets. I don't know how many of you know this. NBFC's loans and advances. No, see, basically NBFC gives loans and advances. These loans and advances are broadly classified into standard, substandard, substandard, doubtful, and loss assets. So standard assets also NBFCs have to maintain some provision, some 0.5% or 0.25%, like that, some provision they need to maintain. Okay, so including the provision for standard asset, general provisions all put together, they will be treated as tier 2 capital. Technically, provision is a amount set aside. So technically, it is also something like a cushion capital. It is also called as a cushion capital. How much? Max 1.25%. Suppose the company in the problem they said provision amount so and so amount. You will not take full amount of provision under tier 2. You will only take up to 1.25% of risk weighted assets. By the way, those of you who got my printed book, in that this particular point, this particular risk weighted asset 1.25% point, and this excess of 10% owned funds point, these 2 points actually I skipped that time intentionally, but later since MTP1 gave a problem, we considered and added it back again in the PDF. And I already made a video why we skipped intentionally earlier and why we added it now. I already made a video regarding corrections, one video almost 3-4 days, 5 days ago itself I made a video. That's it. So this point, those of you who are wondering how come in my printed book it is not there, if at all GoatNotes notes you're watching it is not there, just these 2 points you please add. Okay. If you're having any doubt, just go to our website, Sept for CSMA, free resources. Inside that, select CA final, GoatNotes notes category you take. Corrigendum I already gave. Just download that corrigendum, you will understand. Able to understand. That's it. Now, or else you're watching this video, right? There is a playlist, QR resources playlist. On the top, you will find that rectification. You just watch that and rectify. Then hybrid capital instruments, that is also tier 2 capital. Subordinate debt is also called as tier 2. And remember, total tier 2 capital can never exceed tier 1. If at all tier 2 capital is more than tier 1, capital requirement ratio is not satisfied. Now, let's solve one MCQ. sorry, let's solve one MTP question straight away. Straight away we'll start one MTP answer, MTP question. Yes, you see here. So this is the MTP question. Okay, in this we have one practical question on this capital requirement testing. This capital requirement testing only we have some practical question. You see here, this is the practical question 4A in NBFC 4A. There is a company called Q Limited, which is an NBFC classified under scale based regulation framework. It is required to maintain a minimum capital ratio of 15% of the risk weighted assets. Okay, the company has provided following information of tier 1 tier 2 capital. Owned funds, oh, 1000 crore. Very simple, directly let us apply own funds in our calculation. Let us apply our calculation. Okay, own funds, how much is the own funds? 1000 crore. Okay, next, investment in shares of other NBFCs and group companies. Investments in shares of other NBFCs exceeding 10%. Oh, after crossing 10% only 150, we can straight away reduce this 150. 850 is tier 1 capital, not full capital, it's part of tier 1. Next, perpetual debt instrument issued by total. Oh, total perpetual debt is 120. Within this, tier 1 how much, tier 2 how much, we need to find out. Perpetual debt up to 15%, perpetual debt up to 15% of last year tier 1 capital can be part of current year tier 1 capital, right? We will see last year tier 1 capital information. They have not given last year tier 1 capital information. So I will take an assumption, this entire 120 crore, I will take an assumption that this entire 120 crore will be part of tier 1 capital only. This entire 120 crore will be taken as part of tier 1 capital only. So 120 tier 1, total tier 1 capital is 970. We'll see, is there any other tier 1? I think these two only. Tier 1 capital is 970. Now, preference shares, which are not convertible. Obviously, non-convertible preference shares are how much? Tier 2 capital. So tier 2 capital is equal to 80. Again, revaluation reserve. Remember, revaluation reserve, you need to discount at what rate? 45%. How much is the revaluation? I mean, 55% is a discount rate. So 200, actually in the answer they gave 55%, which is actually wrong. The right answer is 45. Discounted at 55 means only 45 you should consider. But let us calculate as per 55 logic only. 110. Then general provisions and loss reserve. 50 crore is there, which is general provision, but you can't take full amount. You can take general provisions and all. How much? 1.25% of risk weighted assets. How to calculate risk weighted? Don't worry, in exam 99% they will give you risk weighted assets. 8000 into 1.25%. So generally 1% is equal to 80 crore. 1.25% means 100 crore. Yeah, correct. 100 crore. So only 100 crore general reserve I will consider. Then general provision and reserve I will consider 100. Oh, sorry. Only 50 is given. Up to 100 we can consider. Since it is only 50, I will consider only 50. Then hybrid capital instrument 90. Subordinate debt 140. That's it. So therefore, total capital is how much? 190, 240, 330, 330 plus 40, 370, 470 crore is there. Which means total tier 1 capital and tier 2 capital how much? Let us do one thing. Total tier 1 and tier 2 how much? Tier 1 970, tier 2 470 is equal to 1300, 140, 1440. That's it. Now, whether capital requirement ratio is satisfied, minimum how much will be required? 1440. You see how to calculate ratio. Total capital fund how much? 1440 divided by risk weighted assets how much? 8000 into 100 is equal to what is the percentage that you are getting? Approximately 18% you will get. Approximately how much you will get? 18%. That's it. That's the answer. Okay, you see the answer in the NBFC. So they did almost in the similar way. So first they calculated tier 1 capital, then tier 2 capital, then they calculated how much. Here actually in NBFC, no, this point is wrong, ma. The answer which ICI gave, no, they multiplied with 55. It's actually 45. Please remember, it's actually 45. Write an alternative answer if at all the same question comes in. See, ultimate May exams. Getting it? Now here you see again they did one more wrong. Here you see capital adequacy 1440, right? They took only 1400. I told right. ICI book contains so many mistakes. Okay, that's it. So finally our answer is 18%, which is correct. That's it. Whereas minimum capital ratio is only 15. So 18% is maintained. Yes or no? That's it. And moreover, within this 8,000 crore into 10% must be risk weighted assets. 800 crore must be tier 1, right? Our tier 1 is 970. So the 10% criteria is also satisfied. That's it. That's it. So with this capital requirement adequacy ratio, one more important provision is also completed. Now, what is a risk weighted asset concept? I told you, balance sheet assets and liabilities values will be given, assets values will be given, multiplied with risk weight. This risk weight you apply. Okay, in this I request you to remember these risk weights. Consumer credit loans other than consumer credit loans, which is categorized as a retail loan. All retail loans given by NBFC except housing loan, education loan, jewelry loan, microfinance and self-help group loans. Except them, remaining all other loans, risk weight is 125. Credit cards, risk weight is 125. Indirectly, all unsecured loans, risk weight is 125. Okay, whereas fixed assets, complete risk weight is 100. Whereas, government guaranteed advances, central government risk weight 0. State government loan we gave, state government gave a guarantee and loan we gave. There is no default at all. 20 only risk weight. Already default started more than 90 days over. Risk weight is 100. Or default started but default is less than 90 days. Risk weight is 20. These risk weights alone you remember. Maybe an MCQ might come on this. That's it. Now finally, just 1 minute. Yeah. Now let us understand income recognition asset classification norms. Every NBFC shall recognize their income on accrual basis only. However, for non-performing assets, income is recognized on cash basis. For non-performing assets alone, income is recognized on cash basis. Cash basis means what? Only when the amount is actually collected, it will be recognized. Further, an NBFC, every month, banks and NBFCs, every month they recognize on accrual. What is NPA norm generally in banks? 90 days is the NPA norm. You might have learned in CA intro also. Suppose, I am recognizing interest every month on accrual, but actually customer is not paying EMI. But until 90 days, I can't classify it as NPA, right? So up to next 3 months, I am recognizing on accrual. After 4th month started, customer did not pay even now the first month EMI. Yes or no? More than 90 days crossed, EMI did not pay, interest he did not pay, 90 days crossed. Now the asset became NPA. But what about already recognized interest income? 3 months I recognized on accrual. And there is one rule, right? Income on NPA is recognized only on actual realization, right? But I already recognized on accrual basis before it became NPA, but I didn't collect anything. Now it became NPA, right? You recognized income, right? On accrual, right? Reverse that income. Further, remember, every NBFC shall classify whatever the loans they have given into 2 categories. Standard asset is 1 category. Remaining categories are called as NPAs. NPA means what? NPA is again subclassified into 3 categories: substandard, doubtful, loss. Getting it? Now you know what? Once an asset is going into NPA, can I upgrade it to standard asset again? Only if it satisfies conditions for upgradation. Every NBFC and RBI has given upgradation rules. Only if a particular loan satisfies that upgradation rules, asset can be upgraded. Otherwise, it cannot be upgraded. Now, what is an NB? What is a standard asset? What is a substandard? What is a doubtful? What is a loss asset? But first, before I discuss substandard, all that, first standard asset means what? No default is there. No default at all. No problem or risk is there than a normal business risk. There is no risk, no problem, and there is no default in repayment of principal or interest or both. That's a standard asset. When an asset becomes NPA, an asset is considered as NPA if it remains overdue. If it remains overdue for more than 180 days. Just 1 minute. An NBFC is considered as, a particular advance given by NBFC is considered as NPA if the interest is remaining overdue for more than 180. In case of term loan, installment is overdue for more than 180. In case of demand or call loan given by the NBFC to another NBFC, overdue is more than 180. Interest on short term loan or advances more than 180. Due from sale of assets, NBFC sold some assets. Okay, from that amount is not yet received, overdue period is more than 180, NPA. Any credit facilities, bills purchased and discounted, overdue for more than 180, NPA. Lease rentals, hire purchase entities, NPA directly more than 180 days. And remember, every NBFC has to classify, every NBFC, by the way, here, this F point, more attention. By the way, I mean, I skipped this one of the point. Now let me tell you, you might have heard one point. NPA classification is borrower wise, not loan wise. Suppose, I am a Muthoot Finance or I am a Bajaj Finance. You borrowed one housing loan from me. You also borrowed one personal loan. You also borrowed car loan. Car loan EMI you did not pay, more than 180 days crossed, overdue. By the way, this 180 days limit is revised to 90 days. That discussion also I will tell you. There is a gliding path on that. There is a gliding path on that. I will come back to it later. Okay, now, just a minute. Yes, just 1 minute. Yeah. Yes. Yeah. So you might have seen. So if one car loan became NPA, automatically remaining two loans also we will classify it as an NPA. That is what this F point. Any credit facilities became NPA when, any other credit facilities become NPA when any of the above credit facilities have an outstanding overdue of more than 180. If above facilities have, means above 5 facilities are there, right? Above 5 facilities are there, right? If any of the above 5 facilities become NPA, then any other credit facilities of the same borrower will also become NPA. That's it. And remember, this 180 days norm is there, right? Now for all NBFCs, by 31st March 2026, they need to classify based on 180 norms to 90 days norm. Now remember, overnight if RBI implement this, many NBFCs balance sheet and all will badly affect. So what they did, they gave a gliding path. By 31st March 2024, implement it to 150 days. By 31st March 2025, which is already completed, 120 days. So which means for 24-25 year NBFCs, they should classify whether an asset is NP or not based on 120 days norm. For next year, 31st March 2025, they need to classify based on 90 days norm. If you see, capital gliding path is there, net own difference gliding path. There, originally the RBI has given guidelines on 31st March 2023, 31st March 2025, 2027, 2 years gap is there for NOF, capital glide. Whereas for NPA classification, the time gap is 1 year, 1 year. Exactly. So that's how you can easily remember. Okay. The gliding path, some students, they asked me, sir, how to remember, sir, different dates and all, whether how to remember. Very simple. For NPA classification gliding path, 1 year only they have given relaxation. Whereas for NOF, suddenly how come you bring that much of loan? Suddenly own funds, 2 years gap they gave. So 31st March 2023, that time guidelines were released. By 2025, you need to increase it to 5 or 7 crore. By 2027, you need to increase it to 10. That gliding path for microfinance institution, factors, and ICC, infrastructure credit company. Whereas for NPA classification purpose, 180 days norm, please reduce it to 150 days for 31st March 2024, reduce it to 120 by 31st March 2025, reduce it to 90 days by 31st March 2026. That's it. And next, remember, there are already some existing NBFCs before the scale based regulation. Earlier, this NBFC norm is applicable based on systematically important and non-systematically important. Systematically important, deposit taking, non-deposit taking NBFCs, 90 days. Remaining NBFCs, 180 days. So what are all NBFCs which are already following 90 days? For them, no change. They always have to follow 90 only. Next. Now, okay, NPA it became, sir. Now, once it became NPA, straight away a loan which is NPA will be classified as a substandard. An asset which is NPA up to 18 months, it is straight away called as what? Substandard. For middle layer NBFCs, it is not 18 months criteria. Next 12 months, once it became NPA, up to 12 months it is part of, up to 12 months it is substandard. Up to 12 months. And further, there are some other loans which are also treated as substandard. A loan or asset whose terms were renegotiated, rescheduled, then next 1 year till satisfactory performance, next 1 year of satisfactory performance, until 1 year we'll put on observation. Next 1 year they're following and complying with rescheduled terms properly, then we will classify it as standard asset. But for next 1 year we will classify it as a substandard asset. So substandard asset, two assets. A loan which became NPA up to 18 months base layer substandard, and up to 12 months for middle layer substandard. Whereas rescheduled loans up to 1 year of satisfactory performance substandard. Then doubtful asset. What is a doubtful asset? If at all substandard 18-12 also completed, now it is entering into 19th month or 13th month from substandard category, straight away we classify it as a doubtful. Then loss asset. This is something a bank has to manually do. The internal auditors, external auditors, RBI or the bank, if they identify some doubtful asset as a loss asset, they will classify from doubtful asset to loss asset. Now why we need to learn this asset classification? Because the NBFC has to maintain a provision. They need to maintain a provision for loss assets. No, if you want to keep the asset in the books of accounts, trade receivable or loan amount you want to show, then create 100% provision. Sir, I don't want to keep, sir, anyhow it's a loss. Write off. Either keep 100% provision or write off. Suppose if it is a doubtful asset, first I will come back for standard asset. Sir, it's a standard asset, sir, no NPA, no default at all. Still, for standard assets, create a provision of 0.25% of outstanding amount. Whereas for NBFCs which are part of, which are other than upper layer, they said. So for upper layer, what is the regulation applicable? In our syllabus, it is not there. For upper layer, what is the regulation applicable? In our syllabus, it is not there. Just 1 minute. Yeah. So NBFCs, the provision of standard assets, how much? 0.4%. NBFC, for middle layer and all, the provision is 0.4. For base layer NBFC, 0.25%. And remember, generally when a provision is created on NPA, the provision is netted off. Total loan how much minus provision how much, balance how much we will show. But standard asset provision we should not net off. We will show it under liability side. How we will show it under liability side? Contingent provision against standard asset. This can be asked as an MCQ. Be careful. That's it. Then, and remember, now what is the provision for substandard category? Straight away 10%. In case of banks, it is 15%. For NBFC substandard asset, straight away 10. What about doubtful asset? Unsecured portion, 100%. Secured portion, first 1 year in the doubtful category, 20%. Next 1 to 3 year, 30%. More than 3 year, 50%. Remember, this is the total amount of provision. It is not each year this much provision. By the time D1, D2, DT, we call them as what? D1, D2, D3. If the asset is in D1 category, total provision on that asset must be 20. If the asset is in D2 category, on that loan, total provision till date must be 30% of the outstanding. If the asset is in DT category, total provision must be 50, which means, from substandard 10, right? If at all it is going to D1, we will add another 10 so that 20% will come. Suppose if it is going to D1 to D3, D2 category, for example, then we will add another 10, we will make it 30. Suppose if it is going to D3 category, we will add another 20, we will make it 50. Suppose if it is going to loss asset, we will add another 50, total provision will come 100%. It's an incremental approach. It's not straight away 20 plus 30 plus 50. No, it's actually 10 plus 10, 20 plus 10, 30 plus 20, 50. From here to loss asset, it will be plus 50, directly 100. That's how the provision has to be calculated. Remember, in our question bank, we have given certain questions in NBFC audit. You can make use of that question bank and solve it. Next. Finally, almost major part is over. Audit procedure part, I'll come back to it later. In that, only key points I will discuss. Not every point I'll cover, only key points I'll cover. NBFCs and banks will have some frauds. Banks and NBFCs have to report regarding details of fraud to RBI. In a year, there will be so many frauds. When the NBFC is reporting to fraud, when the NBFC is reporting fraud related data to RBI, they need to classify what type of fraud it is. For the purpose of classification of types of frauds, the frauds are broadly categorized into following. Type number 1, misappropriation and criminal breach of trust. Fraud through forged instruments, that is another type of fraud. Unauthorized loans given to some customer, that is another type of fraud. And cheating and forgery, another type of fraud. Irregularities, foreign exchange, and any other type of fraud. Even this fraud reporting applicable for foreign branches of Indian NBFCs. Further, negligence and cash shortage. Negligence. Negligence means there is no intention, unintentionally something happened. That is also classified as fraud. Cash shortage. Cash shortage means sometimes cash shortage will happen. Nobody has stealed it. Sometimes accounts will not tally. Cash shortage is there. Or some temporary, something accountant forgot to record some payment. This cash shortage also you will record it as fraud. Yes, you will treat it as fraud if intention is proved. If the intention is proved. However, if the cash shortage is more than 10,000, intention doesn't matter. Intention doesn't matter. Straight away treated as fraud. The following cash shortages are always frauds. If the cash shortage is more than 10,000, always a fraud. Sir, cash shortage more than 5,000, sir. But cashier did not report that. Management auditor inspection officer detected this. Then also we classify it as a fraud. General rule is what? Cash shortage is not a fraud unless intention is proved. However, more than 10,000, pakka fraud only. Intention there or not, we don't see. More than 5,000, but cashier did not identify this. Manager identified this. Management identified. Auditor identified. Then also it is treated as fraud. That's it. Classification of fraud is completed. Next. Now, in this, there is something called audit procedure. What is the audit procedure for NBFCs? In your ICI book, there is a TYK question. There is a test your knowledge question given for peer to peer. In our MTP also we have given peer to peer. For example, I'll just show you P2P. Yes, there is one question here we have given. You see, in ICA book they have given something called test your knowledge. Test your knowledge. NBFC peer to peer, test your knowledge of ICA, in a test your knowledge question in ICA book. This is actually we have given in our question bank. So for peer to peer, what you will understand in the business, this is separately given as an additional topic in test your. Please read this without a failure. Okay, that is most important. From here until the end of the chapter, I will only cover important points. So steps in NBFC is what? First, understand the business of the NBFC, whether principal business activity and all satisfied or not. Look at the internal control system of the NBFC. Just one minute. Verify registration with RBI, whether NBFC has a minimum net owned funds of 10 crore or not. See whether they got a proper registration certificate or not. Check it out. Next. And you know what? NBFC which is accepting public deposits. What is the audit procedure for NBFC which is accepting public deposits? What is the audit procedure for NBFC accepting? This itself straight away will come for 4 or 5 marks question possibility. Many students neglect this. Please remember. What auditor has to verify? An NBFC can accept public deposit only when there is a credit rating. Only then when there is a credit rating from approved credit rating agency. Accordingly, there is a limit on the deposit to be accepted. So check whether deposit limits are as per the credit rating. Interest and brokerage calculated correctly. Maintenance of deposit register in every NBFC which is accepting deposit, even in companies 73 to 76 section, every company has to maintain deposit register. And see that every you see Nidhi company has to maintain 10% unencumbered term deposit in, yes or no? What is that? Nidhi company has to maintain liquid assets. Bank has to maintain SLR, CRR. NBFCs have to maintain liquid assets. So they need to invest in approved liquid assets. Getting it? And they need to timely file returns with RBI regarding liquid assets, regarding all the deposits, all that. And further, in case credit rating, most important, this is asked many times in exam. Okay, in case credit rating is upgraded or downgraded, deposits will be adjusted, especially when the credit rating is downgraded. Credit rating will be given B, B++, A plus, like that ratings will be given. Accordingly, limit of deposit, how much you can take, will be given. Suppose a higher rating is there, you accepted higher deposit. Now the rating has been reduced, you should refund to the deposit holders. You should adjust them within the time frame. Sometimes in MCQ they'll ask you, if there is a downgrading in the deposit, auditor has to check whether the deposits are adjusted within the time frame. That's it. However, there is one more point. There is a minimum investment grade. There is a minimum rating requirement to accept a deposit. First of all, suppose if the credit rating is downgraded below investment grade, then it is not just adjustment. Severe consequence. Stop accepting deposit. Do not renew. Whatever existing deposits are there, right? Run till maturity. Report to RBI within 15 working days of downgrading below minimum investment grade, and don't renew without depositor's consent. That's it. So this is directly they can directly ask you this. Then one more thing the auditor has to verify is prudential norms. Income recognition, whether income is recognized on accrual, on NPA only cash basis or not, asset classification, standard, substandard, and provisioning for bad and doubtful debts, capital adequacy, all that. And all that, very easy. Okay, next. Next, just 1 minute. I hope you're all enjoying. Huh? Yes. So that's it. Next, audit checklist. What is the audit checklist for NBFCs? This audit checklist example is given from the point of view of ICC, NBFC Infrastructure Credit Company. From that point of view, audit checklist is given. Now, what is this? What is the audit procedure? Okay, in audit checklist, no, for ICC point of view, no, first to know almost few points they have given from investments point of view, whereas from here, like 13th point of view onwards until the end, investment credit company. This is investment credit company means first they will be investing and they will also give loan. From investment they get interest, from loans they'll get interest. So this is a company business is like that, investment credit company. So for investment credit company, what they will do, they will get from investments dividends and bonds. In exam they might ask you only this point, write about investment in investment credit company, audit of dividend and interest income, your general accounting principles only. This itself can be asked as a 3 marks or 4 marks question. Please be careful. Further deposits, loans are given. So very simple, whether this investment credit company are they giving loan only after proper sanction, whether security is verified or not, whether balance confirmation and all you can get. If at all bill discounting is there, discounting charges are correctly accounted or not, you check. Banks and NBFCs, they will have something called maximum limit. They will have something called how much maximum to a particular borrower can be given a loan, or to a particular entity, how much I can invest or how much I can give it as a loan. There is a limit. See whether that limit is satisfied or not. Further, one point, if at all an NBFC is investing in debentures and bonds which are unlisted, it is treated as term loan. Important for MCQ. Okay, and next, that's it. So loan classification and provisioning and all proper or not for ICC general. This is not a much complicated point which you can see on your own. Most important, already important aspects we completed. Another important point is reporting by audit. This is one point where many students don't understand. Reporting requirements, audit reporting requirements for NBFCs. In this straight away I will come and tell you. First to know, here, what is audit reporting requirement? Auditor has to give a report to Board of Directors as well as Reserve Bank of India. What auditor has to give to Reserve Bank of India? You see, I will first discuss about Reserve Bank of India. Okay. Obligations of auditor to submit an exception report to RBI. Obligation of the auditor. These actually miscellaneous points we said. These 2 points are actually relating to reporting to Board of Directors. Okay, these 2 points are actually relating to Board of Directors, but miscellaneous points, not that greatly important. That's the reason we kept it last. But this third point, reporting to RBI, most important. This report is also called as something called exception report. This report is called as something called exception report. What is this report is talking about? If at all auditor identified that one NBFC has not complied with the provisions of NBFC law. Chapter 3B provisions of RBI Act is nothing but NBFC provisions. If auditor identified non-compliances with the provisions of RBI Act, or if auditor has identified NBFC's acceptance of public deposit directions, if auditor identified that an NBFC has not complied with NBFC acceptance of deposit rules, actually it is not complied with the RBI Act, not complied with NBFC deposit directions, NBFC scale based regulations, 3 set of rules, RBI Act, deposit taking directions, scale based regulations. If these 3 were not complied, so you need to check non-compliances with all these 3. You need to check non-compliances with all these 3. Then auditor shall report the details of that non-compliances to RBI. Remember, you should only mention to RBI contraventions. You should not include regarding any compliances and all. That's it. This is report to RBI. And further, generally you need to give a report to Board of Directors. especially if the NBFC is not accepting deposits. What you need to give a report to board of directors which is not accepting deposits? What report you should give? Generally, if an NBFC decided not to accept deposits, they first have to pass a board resolution that they will not accept. Verify whether board resolution is passed for non-acceptance of deposits, and see really have they accepted deposits. Check out. And every NBFC has to comply with prudential norms, right? Asset classification, income recognition. Check that and see that the NBFC is maintaining capital adequacy ratio. This is a non-deposit taking NBFC. See net owned funds and capital adequacy ratio, are they maintaining or not? Are they complying with minimum capital ratio? And they need to submit an annual statement of capital funds and risk assets and exposure, risk asset ratio and all to the RBI within certain time limits. See whether they are maintaining capital asset ratio, see whether they're maintaining capital requirement ratio, and whether they are filing the forms with RBI or not. And if at all NBFC is classified as microfinance institution, check out as per master direction. Is the NBFC liable to be classified as a microfinancial? See whether it is classified correctly or not. So in exam they'll ask you, write about reporting by auditor to board of directors. Reporting by auditor to board of directors in case of NBFCs which are not accepting public deposits. Sir, NBFC is accepting public deposits, sir. What auditor has to verify? Remember, already we have seen audit procedure point, we have seen accepting public deposit, liquid assets statements, exactly same points will be there. Auditor has to check, various criteria and report to board of directors about compliances and non-compliances. Simple. Finally, by the way, this reporting to RBI board of directors and all, you need to report, right? Where it is told, RBI has given one directions called FOSR directions. Remember, this is important for MCQ. Filing of supervisory returns directions 2024. RBI has given filing of supervisory returns directions 2024. As per that direction, as per these directions, there are some matters for every NBFC you need to report. What matters? Whether certificate of registration is valid or not, principal business criteria satisfied or not. In case whether are they eligible to hold certificate of registration, are they still satisfying or not? See whether NBFC meet net owned funds requirement, and most importantly, statutory auditor certificate they need to obtain. NBFCs must obtain a statutory auditor certificate. NBFCs must obtain statutory audit certificate and file it with the RBI. What is the statutory audit certificate should contain? Yes, the company is engaged in NBFC activity and the company is eligible to hold certificate of registration. Like this, they need to give a confirmation. Auditor has to give a confirmation. I need to give a certificate. I need to give a certificate. Yes, the NBFC is actively involved in principal business. They have a valid registration certificate. Like that, I should give a statutory audit certificate. The SCAC, this certificate must be submitted to RBI regional office within 5 working days of signing the audit report. Once auditor signs the audit report, right, of the NBFC, within 5 days SCAC certificate has to be submitted to RBI regional office, but not later than 31st December. After audit report is signed, within 5 days send it, but maximum within 31st December you should send it to RBI. And the format of statutory auditor certificate regarding NBFC, getting it, that is given by directions 2024. That directions you follow. That's it. And finally, Caro, I already told. Caro already told. It is. I told you. Please refer CA Inter. Inside that I clearly told. There is a clause number 3 in Caro regarding investments and guarantees. Inside the totally 6 subclauses were there. Subclause A, subclause E, they do not apply to NBFC. I clearly discussed in Caro point where I told refer my CA Inter marathon. I already told in reporting chapter. In the reporting timestamp you will find. Then clause number 16 in Caro. This also I hope you are already aware of it. This is not a big deal. Next, finally, what about accounting standards applicability? Every NBFC, they have to comply with Ind AS. They have to prepare financial statements in compliance with the Ind AS, yes or no? And further, in Ind AS there are 2 divisions, actually 3: division 1, division 2, division 3. What is the difference between division 2 and division 3? The differences are very simple. Mostly they both are same, but the following exceptions they have. What are they? NBFCs can present the items of balance sheets in order of their liquidity. Disclosure of other income and expenditure. NBFCs can disclose other income and other expenditure exceeding 1% of the total income. Whereas for division 2, no, 1% of revenue 10 lakhs. 2 criteria were given, whichever is higher. And disclosure of debts due from LLPs. If there is any LLP in which a director is having, is a partner or a director. I mean, if NBFC director is a partner in one LLP, if at all we need to receive any amount from that LLP, that should be shown separately under receivables. Further, Most important point, if at all there is any receivable by the NBFC and if there is a high risk in that, it should be separately disclosed. And most importantly, NBFCs can present the balance sheet and all in order of their liquidity, financial assets and non-financial assets. That's how they present. Generally in balance sheet, normally non-current assets and current assets. Here it is financial assets and non-financial assets. Then I think in this, there is no much complication, technically speaking. And finally, statutory reserves and all they need to maintain. They need to separately disclose in notes about statutory reserves and conditions attached, all that. So these are some minor differences between division 2 and division 3. Actually, many of these divisions are not really valid technically in reality. That's it. With this, NBFC audit is completed. Just 1 hour 3 minutes hardly. 1 hour hardly. And see the kind of clarity you got right now. I hope you all thoroughly enjoyed this NBFC discussion. Okay, I'll be happy if you leave comments below. That's it. So take care. Continue the next session. Okay, we'll continue the next session after some time. Yeah. So we'll continue professional ethics revision. And I hope every one of you have already gone through the 700 series, 800 series, NBFC audit, all that which I've already completed. Okay, then you watch this professional ethics. After professional ethics, we'll finish related services standards and prospective financial information and 402 3402 standard. I'm going on a particular priority wise. Just 1 minute. Yeah, everything is perfect. Yeah. So without any delay, let's enter into the chapter professional ethics. And you all know this particular chapter weightage is minimum 18 marks. The weightage from this chapter is minimum 18. Even in a worse scenario, 15 marks weightage is pakka. And in ethics, we are going to discuss the entire ethics in 4 parts. One is, first we are going to discuss about something called code of ethics. Then we will be discussing about CA Act. Nothing but you already have seen this, like branch office provisions, yes or no. A CA in practice cannot use some other designation, disciplinary mechanism, schedule 1, schedule 2, that entire that CA Act. Then we have something called council guidelines, where the code of ethics, CA Act and council guidelines are mandatory for any chartered accountant. Finally, we have something called self-regulatory measures, which is actually recommended self-regulatory measure. The name itself says. So these are actually, recommendatory in nature. Now, so directly, without any delay, directly jump into the concept. First, we'll discuss about fundamental principles. Believe me, guys, next 2.5 3 years, whatever you're going to spend on this chapter, getting it, mark my word, the kind of clarity that you get on ethics is uncomparable with the previous whatever the clarity you have. Having said that, one disclaimer I want to give. In professional ethics, many students will often have confusion between various judgments, because at one place firm name can be mentioned, at another place firm name cannot be mentioned, at one place firm name can be mentioned, at some other scenario in a similar scenario firm name should not be mentioned. Like that, so many cases, some inconsistencies they will be there. Yes or no? I think you might have definitely faced this scenario when you're discussing professional ethics, especially when you're studying professional ethics. That is because that's an inherent. In professional ethics, slight vagueness is there at certain provisions. Wherever it is there, I will give you why exactly. What is the reason behind that vagueness? I will tell you the reason very clearly. Don't worry. Now, fundamental principles. I know immediately most of you, sir, this is not at all important. Hello, check number 24 attempt. You know what was asked in number 24, professional competence and due care. Check, go and check it. 5 marks or 4 marks or 5 marks question. Go and check May attempt question. Confidentiality, is there, right? Inside this, they have asked the 6th point. What are the factors for checking confidentiality? This was asked as a 4 or 5 marks question. Don't neglect, boss. Every topic is important. And in the November attempt, the one diagram which every one of you ignore, disciplinary action, that was tested in the November exam, number 24. Don't ignore any particular topic in any chapter. Either study the full chapter or ignore the full chapter if you want to reduce the syllabus. That's it. Fine. Anyhow, I will make a separate video on 3/4 strategy for the May 25 students. So straight away, what are basic fundamental principles for any profession? Integrity. Integrity means what? Honesty and straightforwardness. Since it's an easy topic, I'm straight away giving you the gist of the topic, and then we'll proceed further. Very simple. The theme of the principle is you should not sign the reports which contains false or misleading statements, the reports which are furnished recklessly, or the information is misleading. Those kinds of reports and all you should never sign. You should not associate. However, if you express a modified opinion on these kinds of report, again you are not treated as guilty. You are not considered as a breach. Simple. Then objectivity. We all know objectivity means what? You must not compromise your judgment just based on the relationship that you had with the client, and you should avoid all the relationships where there is a conflict of interest, where there is an undue influence or bias. Often some students ask me, sir, in Companies Act, my grandfather is a director, sir, but in Companies Act, if at all officer is a relative, we should not accept the appointment. And officer relative definition relative definition do not include grandfather, sir. Can I accept it? Principles, you understand. Law, you should always interpret based on the intention, not just based on the letter. That's professional ethics says what? You should avoid all kinds of relationships where there is a bias. Principle based approach you should follow when you're interpreting law, when you're interpreting ethics, not just based on rule based approach. Then professional competence and due care. Again, immediately some students, sir, last time it was asked, no, so why to discuss again? There is no guarantee that next attempt this will not be repeated. Don't be in that foolish thought where if a question comes last attempt, this time it will not come. Never be foolish like that. Okay, there are many occasions where questions were repeated in FR, audit. Even when I'm studying law and all, there's so many repetition. There is no such pattern which I say follow. Competence means what? Here two ingredients were there, you see. Competence means what? Attaining the competence, maintaining the competence. Competence means what? Very simple. Any service that you are providing as a chartered accountant, it must be competent. It must be with the skill, knowledge. It must be based on latest technical professional standards. Yes or no? And this is competence. Whereas another one is due care. What is due care? Due care refers to acting diligently. You must act diligently, carefully. Now, competence, more in-depth explanation. Professional competence is talking about attaining the competence and maintaining the competence. When you're providing any service, you must exercise solid, sound judgment. You must apply professional knowledge, which is latest, all that. If you recollect, you have a standard called SQC. Even in the SQC, what they say, when you're accepting a client relationship, one of the ingredient is integrity of the client. Second is what? Competence. The second thing that you should check when you're accepting the client relationship is competence. Competence is most important thing that you should check, and you must maintain competence through continuous awareness. You have to be continuously awareness through technical, professional, business developments, all that. Diligence means what? Acting carefully, thoroughly, on time. Most important. Suppose if you accepted one client IT return at the last minute and you did not file it on time because client came in the last minute urgency, for example, you can't blame the client. You only be liable because you accepted that you will file within due date and you didn't do that. So if you are failing to honor your work commitment on time, that means diligence you are violating. Getting it? So by the way, not only that, even people who are working under you should receive appropriate training and supervision. It is your responsibility to make sure your articles, your paid assistants, everyone are trained properly. Remember, tomorrow you are going to be a chartered accountant. You have to follow all these fundamental principles which are very necessary for our profession, being a chartered accountancy, where our service is being used by public at large. And next, confidentiality. Most important, we even have CA Act which says that clause number 1, part number 1, schedule number 2, this schedule is also talking about confidentiality. Even council guidelines, they are also talking about confidentiality. Yes or no? Fine, look at. A professional accountant shall comply with principles of confidentiality whether you are in practice or in employment. Many students often confuse. Principles are applicable only for practicing CS, not for employees. No. If you are a member of the institute, this entire chapter is applicable. Maybe one or two parts in schedules will not apply, but rest of the entire chapter is applicable even if you are in employment. The moment you are a member of the institute, that's enough. Getting it? And remember, professional accountant should not disclose confidential information without authority unless there is a legal requirement. Client confidential information, you should not use it for your personal advantage. Even in your social surroundings, like within your family also, you should not share client information. And remember, confidentiality shall be maintained not only current and future employers or clients, even past employer, post employer relationship, post client relationship also, you must not disclose client information to third party. And you know what, there are some exceptions to confidentiality. When you can disclose client information to third party? One, required under law, compulsory you need to disclose, or there is a professional duty for you. For example, NFRA is conducting audit quality review, that time you need to disclose. Or it is permitted by law, in the sense it is not prohibited in law, and client is also permitting you, then also you can disclose. Finally, examples where you will disclose, where you have professional duty. What is the example? If somebody asks you where you have a professional duty to disclose, what is professional duty or right to disclose? Peer review, quality review, regulatory investigation, or in order to comply with technical professional standard. For complying with standards, you can disclose. Example, engagement quality control review. Before you sign the audit report, you can disclose your working papers to engagement quality control reviewer. It is to comply with a standard. That's it. And sir, I'm in dilemma, sir. Should I disclose it or not? I'm in a dilemma, sir. Like, I'm vague. The law is not clear. The client is also saying your wish. So I'm in a dilemma whether to disclose it or not. Very simple. If at all you disclose, any party's interest could be harmed. Check out. Either third party or client, anybody's interest could be harmed or not. Check out. Whether all the information now is substantiated. See, when you're disclosing something, third parties will believe it when you are disclosing, because you're a chartered accountant. So if you're disclosing something, third parties thinks that they're correct. So see whether the information that you're disclosing to third party, first of all, that is true and fair or not. Check out. And what type of communication, how are you need to communicating, like written, oral, how are you communicating, and to whom it is addressed. Check out. And whether the recipient to whom you are giving this information is a competent person. Check out. For example, you got an intimation from income tax department to show some working papers related to some client, or to show some information to some client in the income tax department. You can't give that information to the security guard, or you can't give it to some tech person who is not the assessing officer. Simple. When you are sharing information, whom you are sharing, is the right person? How are you sharing? That is important. And anybody's interest will be affected, that you should see. And whether the information that you're sharing is noun information and substantiated. Don't show gossips, don't share gossip, something you heard about client which you don't know correctly. If somebody is asking, don't share without knowing substantiatedly whether it is correct or not. Simple. These are the factors which is asked in May 24 exam. Getting it? So what are the factors that auditor has to consider when deciding whether or not to disclose confidentiality? Remember, first of all, if at all there is a compulsory requirement in law, you don't have an option. You don't have to even check the factors. You have to disclose. Finally, professional behavior. What is professional behavior? You should not engage that harms integrity of the profession, reputation of the profession. You should not engage in anything. Tomorrow if you are caught in drunk and drive case, very severe drunk and drive case, for example, or you made a huge accident, people will not tell by your name. If at all you are a CA, a chartered accountant made an accident, like that they make. Indirectly, ICA's reputation is at stake because of our actions. Yes or no? So you must behave professionally, not only in professional context, even in social context you must behave, because being a member of the institute, people will have highest values towards you. Next, you should not bring disrepute. If at all you are bringing disrepute to profession, no, it is treated as other misconduct. It is treated as what? Other misconduct. Under part number 4, clause number 2, schedule number 1, clause number 2, part number 4, schedule number 1, it is treated as other misconduct. Okay, fine. Now you should not make exaggerated claims about the services you offer. Even in SQC they say, before accepting a client, whether you can honor that work or not, you should check out the qualifications you have. Without having some qualification, you should not say I'm triple qualified, I have CPA, I have SEMA London. No, you should not say that. Experience, if at all you are experienced only for 3 years, you should only say that you are 3 years experienced. Yes or no? And disparaging others, you should not criticize others. You should not make degrading statements about others. Direct or indirect advertisement, being a CA profession, lawyers, CS, we all have certain guidelines. We should not advertise against ICA guidelines. Council has given certain advertising guidelines, only those guidelines we should follow. And if at all in the course of your profession, if you come across any conflict in fundamental principle, very simple, seek consultation. Talk to the client. Sir, I can't accept your work because I'm having a conflict. Talk to the employer where you're working, governing members, exercise judgment, resolve the conflict. If you're unable to resolve, disassociate from the matter. Then independence is also one more important. Objectivity and independence, they both are synonymous to each other. Independence is most important. What is independence? Your decision is not affected by judgments of others, influence of others. If you take some decision, it is purely your conscience. And what is the approach towards independence? Very simple. First, I need to identify threats to the independence. I need to evaluate the threats, whether the threats are in acceptable level, whether they are, what kind of threats are they. Can I address the threats by reducing them or eliminating them? If so, accept the work, accept the client. Like, there is a body called IFAC, International Federation of Accountants. They identified our independence compromises in 5 different ways. 1, self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. For example, familiarity threat. I think even somewhere in the SQC, ethical requirements, how to handle familiarity threat. In SQC standard, you might have seen a senior partner, for a listed entity, the partner will be rotated once in 7 years. Why? To avoid familiarity threat. In fact, with the familiarity threat only, SQC standard drafted one point. Anyhow, after the ethics, preferably I will start SQC and SA 220 because it has a 5 marks weightage, 1 hour discussion hardly. Okay, enough. So that's familiarity threat, intimidation threat. Now, what are they? Self-interest threat. What is it? For example, I have direct interest in the company, I have shares in the company, or I am depending so much on the client. For example, I don't know how many of you have seen self-regulatory measures. In that, I need to disclose to ICAI names of my clients where I am the auditor, where the fees received from the client is more than 40%, more than 20%, public interest entity client more than 20%, and a non-public interest entity more than 40. Out of my total fee, how much I'm receiving from them, I need to disclose it to ICAI. However, that disclosure is not required if the fees amount is not exceeding 20 lakh rupee, and this disclosure is also not required if at all the client is a government entity. Okay, fine, you will see that in the self-regulatory measure. And close business relationship is there with the client. You are having a business relationship. That's why 144 section says you are prohibited to audit a company where you are having any business relationship and you are having concerns about losing a client. That is the reason you should not depend on the client. Next, self-review threat or potential employment with the client. That's why you have in council guidelines one point. What point? That says fees charged for other services shall be less than or equal to audit fees. In other words, audit fees, if at all it is less than fees charged for other services, you should not accept the audit. The audit fees must be the major factor for you. Then contingent fees and all you cannot accept. We have a clause number 10. Remember, clause number 10. A CA is prohibited to accept fees as a percentage of profit or contingent in nature. Fine. Self-review threat. Self-review means what? Earlier, you only took a decision in the company being in a manager role, and now the company appointed you as an auditor. Means your own directions, your own decisions in books of accounts, you are only reviewing. That's a self-review threat. Getting it? There are certain examples given. Please go through it. Remember, do not neglect. This is not a tough topic. That's the reason I'm speeding up little bit. Whereas we have actual discussion little while later. In 5-10 minutes we'll start actual discussion. Of course, this is also very important. This is equally important. Advocacy, where you are promoting client position to level where people think your objectivity is compromised. People perceive that you are nowhere applying your mind, you're just blindly supporting the client. Just 1 minute. Yeah. So it appears to the public that you're not at all using your mind. You're blindly supporting the client. For example, you're acting as an advocate for an assurance client. You're providing audit services and the client is actually facing a litigation. You're acting as a mediator between the client and third party and you're trying to settle a dispute. That's an advocacy threat. Okay, in this process, you may lose your integrity, you may lose your independence, all that. Getting it? Next, familiarity. What is a familiarity threat? Very simple. This is a threat because of long relationship with the client, long outstanding. That is why to address this kind of familiarity threat only we have rotation of auditors provision under Companies Act. In addition to that, for listed companies, SQC says once in 7 years partners has to be rotated. The partner has to be rotated once in 7 years. A partner cannot have like continuous association for more than 7 years as an engagement partner. Like for example, close relationship with client, director, officer. My best friend is a director in a company. If it's a familiarity threat, if at all you cannot exercise independence correctly, don't accept the audit. Long association of senior personnel with the client. To prevent this threat only, SQC says once in 7 years. You are accepting some gift from client. Intimidation. Intimidation is a threat where the auditor will be deterred from acting objectively. The auditor will be blackmailed, where the client may say dismiss you, removal you, all that, or the client might the client might blackmail you with a litigation, or the client want to reduce your work and also reduce your fee, or a promotion you will not get. Client tomorrow offered you to give some new works, it will not he will not be given. He will be blackmailing you. Blackmailing and bribing the auditor, both are intimidation. Then the second step is what? First, identification of threat, just we saw. Now evaluation, then addressing. Evaluation, you see, what is the, every auditor will face some threat, man, no doubt about it. Threats will be there. Evaluate the threat. How do you evaluate? Whether a reasonable and informed third party, a third party who has a reasonable knowledge of our profession, auditing, accounting, this relationship, clients, ethics, who has knowledge of this, will he think my independence is compromised? Check out. Do a third party test further. So another party, like this is a consideration by professional accountant, where another party also would reach the same conclusion. A client has asked me to accept one audit, and in that client, some of my relatives are working, but they don't come under relative definition under Companies Act. So I'm in a dilemma whether to accept or not. Ask a third party who has a knowledge of this, tell him this entire facts and situation. Will he also think, what opinion he will get? Will he think that you are lacking independence or not? Just check it out. Perspective. Here the perspective is from third party who is a reasonable informed third party. Remember, in exams straight away they'll ask you this for 4 marks question. Write about evaluation of threats to independence. Many students, what they will write and come, they will write all 5 types of threats and come, but actual answer is this. The actual answer is this: evaluation, the reasonable and third party test. What is a reasonable and third party test? A third party who weighs all facts and circumstances, need not be accounted, but has a relevant knowledge and experience, and he can evaluate your independence, impartially. Finally, you understood a third party opinion also have taken like now see whether threat is there. Yes, third party also told yes, it is affected independence. See whether can you eliminate the circumstance because of which threat is created, or can you apply safeguard to reduce it to acceptable level. If nothing can be done, decline the work, do not accept, withdraw from the relation, end the relation, withdraw, resign from that audit. Next, sometimes if a threat cannot be eliminated or reduced, the only solution is decline or withdraw from the professional activity. That's it. So that is what evaluation of threats and addressing the threats. Now we need to apply safeguards to independence. What are the various safeguards? Various safeguards. Getting it? These safeguards are nothing but some actions which are taken either individually or in combination to reduce the threats. For example, our firm is feeling a familiarity threat. Our partner is working with the same client for more than 5 years. For example, in that time, at the time, engage another firm or a part of an engagement, appoint another partner, separate partners and teams. Additional time and qualified persons, rotate the partners on a listed audit engagement, separate team for confidential matters, all that, separate team for assurance work, separate team for non-assurance works, all that. These are all various safeguards which a firm has to take. Getting it? Next, then we have a concept called NOCLAR, non-compliance with laws and regulation. You know what exactly NOCLAR is talking about? First, we will see only important aspects in NOCLAR. NOCLAR is talking about basically one thing, very simple. If you are an auditor of a listed entity, which has a net worth of 250 crore and above, then you found some non-compliance in law. By the way, do not confuse this with SCA 250 standard. Often students confuse between NOCLAR and SCA 250. I'll come back to it. SCA 250 is applicable only in the context of audit of financial statements for all types of audits. Whether you're doing a partnership firm audit, whether you're doing an LLP audit, private company audit, listed company, unlisted, government, doesn't matter. Whereas NOCLAR is applicable only for listed companies, that to audit works, where net worth is more than 250 crore. Now, what is your responsibility? By the way, NOCLAR is also applicable for employee. NOCLAR is also applicable for a senior professional accountant of a listed entity who are employees. For example, no, you qualified as a CA, you directly went into one company, slowly you scaled up to a CFO level. You are a senior professional accountant. You are a key managerial person. Simple. Who is a senior professional accountant? He is a chartered accountant and the part of key managerial person. Then for you, NOCLAR is applicable. What NOCLAR is saying? NOCLAR means what? Non-compliance with laws and regulations. What the NOCLAR says? Very simple. The NOCLAR says, steps for reporting under NOCLAR. Just you see that. First, get an understanding of the non-compliance. For example, you found in the course of your audit or in the course of your employment, you found there is a non-compliance by the company with some environmental law. Some environmental law is there is a non-compliance. Address the non-compliance. Okay, what is exactly it is, like what happened exactly, identify, seek legal opinion, see whether any action can be done from your end, check out, and you have a need, decide whether do you have a duty to disclose it to appropriate authority. Most important, do you have an authority, do you have a duty to report? If so, take appropriate steps and all, yes or no, and document all the actions and decisions that you have taken. Very simple. Are they saying directly report it? No. If you find a non-compliance, check under that law you have a duty to report or not. Check out. Sir, the law is silent, sir, don't report. No need to report, that's it. If law and regulation against which a non-compliance happened, and if the company, if there is a non-compliance against with particular law and regulation, and the law explicitly says you must report, then only report it. If the law is silent, you don't have to report. You can keep your employer matters or client matters confidential. No need to report. That's it. That's the logic. What are the steps for NOCLAR? This itself can be asked as a 4 or 5 marks question. Then now coming back. Okay, so coming back. So like so applicability, I hope you understood applicability. To whom, to which companies, and to which chartered accountants it is applicable, I clearly told. No, what is a non-compliance? Basically, non-compliance means an act or omission which is contrary to the prevailing laws and regulations. Remember, personal conduct is not treated as NOCLAR. If a director in his personal capacity made some non-compliance, that is not related to the company, listed company, right? So that is not treated by NOCLAR. NOCLAR does not apply to non-compliance by parties who are not listed. So these, like, what is exactly NOCLAR? Any act or omission contrary to prevailing law committed by client or accountants or top management, other individuals working under the client. Suppose if the non-compliance committed by third party, NOCLAR do not apply. If a non-compliance is done by a third party to the organization, NOCLAR do not apply. NOCLAR will apply only if the client has done, or the auditor, professional accountant has done, top management did, or management has done, or any other individual working under the direction of the client and employing entity, any other employee who are working under the same management, if they do some non-compliance that is affecting the listed entity, then only NOCLAR will apply. In other words, if a third party company creditor committed non-compliance, NOCLAR do not apply. Why? He has committed fraud. Maybe our entity also would have been affected. That need not to be reported. Any fraud happen inside our entity, any non-compliance happen inside our entity, only that has to be reported. That's it. And next, examples of NOCLARs: frauds, money laundering, securities market related non-compliance, banking related non-compliances, data protection, environmental protection, public health, tax, pension liabilities, all that. That's it. Then, so objectives, important fact. Yeah, this is not that important facts about not that important from exam point of view, may not be, but give a single reading if possible, so that if at all suddenly comes also, you don't have to worry. Then what is the difference between NOCLAR and 250? Many times asked. Whenever a question was asked on NOCLAR, generally this is the question. SCA 250 applies to audits. Okay, whether, and SCA 250 deals with whether laws that are affecting financial statements or impacting financial statements. Some impact must be there on financials directly now or later indirectly. But NOCLAR, there is no link with financials at all. It may be impacting financials, or it may be impacting the company, or it may be impacting customers, or it may be impacting laborers, any non-compliance. NOCLAR scope is wider. Stakeholders. SCA 250 does not define generally what is stakeholder, but NOCLAR define investors, creditors, employees, everything. NOCLAR allows disclosure to proper authority if non-compliance causes substantial harm. SA 250 does not contain this provision. That's it. These are the differences between NOCLAR and 250. Then documentation, straight 4 or 5 marks question might be asked. Write about documentation requirement for NOCLAR. You always have to document how management responded to the non-compliance. When you identify non-compliance, you would have informed the client or you would have informed the employer how they responded. What is their initial response? A document. Whether have you taken a third party opinion, reasonable informed third party test? See, from their point of view also, is this a particular non-compliance? How the accountant is satisfied that public interest has been fulfilled. Suppose if some non-compliance is there, you decided not to report on the ground that public interest is not affected. How did you decide public interest is not affected? Because of some so and so non-compliance. Documentation requirements under various standards also document. Significant matters arose during the audit and any conclusions made, document. Document discussions with the management, all these points you should document. Directly a 4 marks or 5 marks question can be asked. Next, membership of the institute. And by the way, document the suspected non-compliances, identified non-compliances, directly document them. Then membership of the institute. Now we are beginning into CA Act. Very simple. Remember guys, just a minute. The moment you become a chartered accountant and clear that advance right at all that pending, when you become eligible for membership, you can apply for MRN. That's called as member registration number. You can also apply for FRN and COP. Both are different. Remember, membership number is different, COP is different, FRN is different. For example, I want to practice on my individually. I don't want to have partnership. I can either practice in my name directly or I can even practice with a firm name. Yes, sir, I'm a sole proprietor. You can have a firm. We will call it a sole proprietor firm. Only when you have a firm, you can sell goodwill. That's the logic. I will tell you sale of goodwill in class number 2. There I will speak little bit about this. Okay, so apply for membership, apply for COP. Now, in order to apply for membership, there are some disabilities. Some CS cannot apply for membership. Okay, who are the members who are disqualified? Section 8 of the CA Act talks about disqualification. You have not completed 21 years of age at the time of application. You are not eligible. Unsound mind, or a CA who is undischarged insolvent, or a CA who is he was discharged, he became insolvent and discharged also, but court gave him certificate. Court has not given him certificate of innocence. Like, you didn't obtain certificate that your insolvency was caused by misfortune, means you did not get any innocence certificate from the court. Suppose if court gave you your insolvency was caused by misfortune, not negligently on your part, it was caused by misfortunate incident, unfortunate incident, so then also still you are eligible to apply for membership. Or you convicted by a court, you are convicted by court of an offense involving moral turpitude or any other offense which is committed in professional capacity. However, technical offenses are not considered. What are they? Technical offenses. Just a minute. Technical offenses are not considered. This technical, not technical. If at all there is a technical offense, no problem. You can still apply for membership. Sir, what is a technical offense? Very simple. Clerical errors. By mistake, without signing, I uploaded some ROC form. Okay, I'm filing ROC forms for a company, or I'm signing balance sheet and P&L. We need to file that balance sheet P&L scanned copy with ROC. Without signing, I uploaded by mistake. That's a technical mistake. These are all technical, because nobody's interest will affect because of this. Or even if something happened to a client damage, it's only very, very minor damage. That's it. Okay. And your name is removed. Your name is removed because you are guilty of professional misconduct. We have something called schedule 1, schedule 2, part 1, part 2, part 3, part 4 of schedule 1, part 1, part 2, part 3 of schedule 2. Like that, we have totally 34 clauses. Okay, in both the schedules put together. Okay, if at all you are liable for any of those 34 clauses misconduct, and if your membership is removed, you can't apply again until the punishment is valid. You cannot apply. And when you're applying for membership, you must disclose any of the disability if you have. If at all you fail to disclose, institute will not encourage you to enter into member. Then, and finally, sir, okay, membership I understand. What are the types of membership? ACA, FCA. Very simple. Sir, I have taken membership of the ICA. Directly you are treated as ACA. Right away you are treated as ACA. Membership you have a ACA. Sir, when I will become FCA? Continuous practice for at least 5 years. If you are in continuous practice for minimum 5 years, you are treated as FCA. And sir, you know, an associate, who has 5 years of membership and is considered as equivalent to 5 years of practice. He is also considered as equivalent to 5 years of practice. For example, you have seen one point, deemed to be in practice. If a CA if a member of the institute who is with armed forces, the number of years is in armed forces, we are treating it as deemed to be practice. For example, I got CA membership and I joined an army under Agnipath scheme, for example. Okay, so Agnipath scheme, I joined army. 4 or 5 years I completed there and I again came back. I can directly apply for FCA because I worked 5 years with army. 5 years is treated as deemed to be in practice. That is equivalent to practice. Or another example, a CA. I have membership. I don't have COP. I directly recruited by one CA firm as an employee. That is also considered as equivalent to practice. Then, and all the fellow members can use directly FCA. Further, there are some occasions, there are some circumstances where ICI can remove your name. What are the circumstances where ICI can remove your particular name? Like when they can remove you? Deceased member, a member who is died, or a member he only requested, please remove, member's request. Member fails to pay the prescribed annual fee. When you're applying for membership fee, you need to pay entrance fee, annual fee. Every year you should pay annual fee. For example, 24-25 financial year related annual fee by 30th September 2024. Year started within 6 months you have to pay annual fee. Not only membership fee. If at all you are a practicing CA, COP fees also has to be paid. And further, a member who is subject to above disability, his name will be removed from the registrar. Or if at all disciplinary committee or board of discipline has taken action against the member, his name will be removed. That's it. Next. See how easy? Yes or no? How easy? Easily you can secure 15 or 18 marks. Believe me, guys. Okay. Then, those of you who have already studied ethics and watching this particular marathon, I am telling you the kind of clarity that you will get is fantastic clarity. And once a member whose name is removed, can I say enter it back? Yes, enter it back. I say can enter it back, and that process is called as restoration. Okay, look now. There is a trick here. There is a small confusion here. Many students will have. Now, for example, my membership is removed by ICA. For example, my membership is removed by ICA. Actually, 24-25 year is there, right? Technically, by due date 30th September 2024, I should pay membership. But I forgot to pay. My membership was removed. 1st October 2024, my membership was removed. See, if my membership is removed, what happens? 5 years continuous service break and all will come. I will not get FCA because membership is cancelled. Automatically, COP also will be cancelled. 5 years, if I am not in continuous practice, I will lose FCA status easily. Suppose this is my 5th year only. Ayo, I missed membership. Don't worry. At least by year end, 31st March 2025, year end before, you pay membership fee, pay condonation, additional fee along with application, your name will be restored from same date of removal. No break in service. Sir, membership removed on 1st October, but I applied for membership again on 28th February, sir. But within the same year, yes, sir. You paid additional fee, yes. Your name will be restored not from 28th February, directly from which date they removed, from the same date they will restore it. Indirectly, when the register is seen later, no break in service, which means you completed continuous 5 years practice. Happily, you get FCA. That's it. And so, application for restoration, application for restoration and removal, both are in the same year. Removal happened and application for restore, both are in the same year. Then effective from date of removal. Restoration will be from effective from date of removal. No break in service. Suppose a member name was removed in a disciplinary action. When it will be restored? Suppose a member name is removed for 6 months by ICA. After 6 months it will be restored. Break is there. And any other case. For example, member paid not within 31st March. After the year is over, he paid membership fee, all that. Restoration will be from the date of actual payment. That's it. Next, if you're not a member of the institute and if you're not having COP but you are claiming to be in practice, or you are not a member but you are claiming to be a member, first time if I say find out, 1,000 rupees penalty. Subsequent times up to 5,000 rupees or imprisonment up to 6 months, which both can also be applied. Then now directly, sir, who is a CA in practice? Then who is a CA in practice? Very simple. Who is a practicing chartered accountant? Practicing chartered accountant is a person who is a member of the institute, who is holding certificate of practice And a person who is deemed to be in practice, he is also a CA in practice, we treat it as. What is deemed to be in practice? First of all, why practice? A member is not allowed to practice without COP. You must have COP in order to practice, and pay annual fee for COP again. Yes or no? Which is due by 1st of April. That is, due date starts from there. 30th September, up to 30th September you have time limit. The due starts from 1st April. Every year due starts means what? Every year from April onwards, membership application, COP, fees related one, IC will accept. You have timeline up to 30th June. Sorry, you have timeline up to 30th September. Then, yes or no? The council can cancel COP under certain circumstances. Restrictions for non-practicing. Members who are not in practice, you cannot accept any work which is usually performed by CS who are having COP. Because CS who are having COP, they will be given special privileges. Obviously, they're allowed to practice, they're allowed to sign, they're allowed to attest, assurance, UDIN. All that is there only for CS in practice. CS who are not having COP, they can't have UDIN number. Typically today, if you want to practice and do attestation function, you require UDIN number, you require UDIN registration. UDIN registration you will be given only when you are having COP. Now, same way, your COP can be cancelled. A CS can, a chartered accountant COP can be cancelled, and however it can be restored again. So if the holder's name is removed from register, or if the COP was obtained by incorrect or misleading information basis, or you are not at all practicing, or you have not paid annual fee by 30th September, that is the last date in any year, yes or no, then your COP can be cancelled. They may ask you a straight question on this. Generally, removal of member, disqualifications of member, all that you will understand, all that you will focus. This many students will not focus. COP may be cancelled under certain circumstances. What are they? If at all this question was asked, many students will not write this because they never read this properly. If your name is removed from members register, if the holder's name is removed from register of members, getting it, or if COP was issued accidentally, inadvertently, or you are ceased to practice, you have not paid annual fee by 30th September, then also your COP will be cancelled. You can apply for restoration. If at all you pay the relevant pending fee by 31st March of the end of the year, your COP will be restored from the date on which it was removed. Means no break in service. Suppose if your COP is cancelled due to non-payment by due date, apply for again COP within 31st March of the same year. Your restoration will be from the same date on which it was removed. So break in service will not be there. Now, members deemed to be in practice. When do we say a member is deemed to be in practice? Very simple. A member is deemed to be. So what do you mean by deemed to be in practice? What is the consequence? If you are deemed to be in practice, you must apply COP. You must obtain COP. And if a member is deemed to be in practice and is charging money for accountancy works, and for auditing and verification works, accounting procedures he is designing for clients, he is presenting and certifying facts, and sees any other services which he is providing, which according to the council only a CA in practice should render, then you are deemed to be in practice. What is the consequence of deemed to be in practice? When you are deemed to be in practice, you must obtain COP. Further, any CA, fellow or associate working under another CA firm or CA, they are also deemed to be in practice for the purpose of training article assistants. Means in my CA firm, I have a CA employee. I can recruit article in his name also on behalf of my firm, not necessarily my firm. Then MCOS services. Many students have confusion on this. MCOS. Many students have confusion on this. What is the confusion they have? Sir, can a CA provide consultancy, other services? Obviously, man, you can provide. What problem for you? You can provide. The question is, can I provide consultancy services, other services to the company where I am auditor? This is the right question that you should ask. You can provide, provided the management consultancy other services do not come under 144 prohibited services. If at all a company is asking you to provide some management and consultancy services, for example, one of the management consultancy services, internal audit and all, they were all there. Quality audit, environment audit, energy audit, some audits were there. Quality, environment, energy, quality audit, environment audit, energy audit, these all generally come under internal audit function. They all come under branch of internal audits. Internal audit is prohibited where you are acting as an auditor for a company. Therefore, these services you can't provide. Sir, a some other client, sir, I am not at all doing audit for them, sir. Can I provide all these consultancy services? Absolutely, your wish, no problem, sir. But CA in practice should only do attestation. Where they said, they didn't say you can only do attestation. You can do attestation is what they said. Getting it? You can provide other services. Consultancy and other services is something anybody can provide on the earth. Whoever is on the land, anybody can provide. Anybody in this entire world can provide consultancy if you are expert in that. No qualification is required, technically speaking, for consultancy. Being a CA, you are very much deserving to provide consultancy. What are various consultancy services? I have highlighted with some keywords. Okay, only those I've highlighted, no red color, only that you study. And remember, consultancy, insolvency professional is also a consultancy work. Administrative services is also consultancy. What is administrative? Administrative work is something where only little judgment is required. No much professional judgment is required. Clerical works, for example, what are administrative services? They may ask you, for example, they may straight away ask you, write about administrative services. What do you mean by administrative? What are the examples of administrative? So word processing services, administrative form filing services, submitting forms as instructed, monitoring statutory filing date and advising the clients. So telling the clients frequently the TDS due date came, please file it, like that. Any services regarding this. And for example, GST practitioner, suppose a CA who has got GST practitioner license and who is filing GST returns on behalf of the client, that will come under administrative service. And finally, remember, most important point, management service is different from management consultancy service. A CA can provide consultancy service, a CA can provide management service, everything. But if you remember 144 Companies Act, under 144 Companies Act, I have given a list also. Management services, that is prohibited. Remember, within bracket what I said, MCOS is different. MCOS is different from management services. Management service is different. Management and other consultancy service is different. Management service means what? Director service. You're appointed as a director in a company, independent director. That will be treated as what? Management service. You're appointed as a consultant to the company where you have to advise on financial decisions of the company. That's a management service. You will give instruction, they will follow. That's a management service. You are deemed to be a director. You are a deemed director. Able to understand? Management service. Consultancy service means what? Array, you are not directing anything to the company. Okay, you are providing consultation to them. That's it. Okay, that's it. Now, so management services cannot be provided to the company if at all you are appointed as an auditor. Very simple. Sir, can a CA in practice do management consultancy? Happily you can provide. Can I provide to the same client where I'm auditor? Yes, you can provide, provided 144 do not apply. If at all you didn't understand, once again repeat this entire discussion, you will understand. Next, then companies, they cannot engage in practice. Simple. No company can practice. A company, if you want to practice, you can only practice individually, or you can practice along with a group of people where you will incorporate a partnership firm, or you will incorporate an LLP, or you can practice in a firm name even though you are an individual. Only these three forms are allowed, others are not allowed. If at all you're violating, if at all you incorporated company and then practicing in the name of company, first violation 1000, next violation up to 5000 rupees. Yes or no? And remember, suppose if at all you want to incorporate LLP, all the auditors must be individual partners. If at all LLP has a partner which is a company, then that LLP is disqualified to become auditor of any company. That's it. Now, member in practice is prohibited using any designation. This is covered under section 7 of ICI, and further remember, the similar one is covered in clause number 1, part number 1, schedule number 1 as well. The same thing is covered in clause number 1, part number 1, schedule number 1 as well. Just 1 minute, let me have water. And I hope you are able to get more clarity now. All the dots I'm connecting. Everywhere, wherever you're having this open ends, in the sense like wherever you're having vagueness, I will break it, and I will break those vagueness. I will patch it up. Don't worry. I will close every vagueness that you're having, your confusion, and eliminate. I'll be happy if you just comment something like, how are you getting the clarity? The appreciation is what makes teachers more, motivated to work. Yes. Yes. So, can a member use? By the way, if at all any of you are feeling this as a little speed, please, you can reduce the speed limit. Make it 0.85x speed. You will enjoy the session like anything. Okay. Next, members can use CA as a prefix. Yes or no? Whether you are in practice or not. CA, no problem at all. You can use CA. CA is a qualification, my dear. I'll tell you one important thing. CA is a qualification. Chartered accountant is a designation. You can use beside your name any number of qualifications if at all you achieved it. CA, CMA, CPA, anything you can mention. But designation, if you are using like chartered accountant, only that can be mentioned. Apart from chartered accountancy designation, you can only use 2 designations additionally: chartered accountant, insolvency professional, registered valuer. Only these 3 are permitted simultaneously usage. Sir, I'm a CA as well as CMA, sir. Can I mention on visiting card name chartered accountant, cost accountant? Not permitted. Sir, I'm practicing there also, sir. Not permitted. Have different visiting cards. That's what the rule says. You know, a member in practice can only use designation chartered accountant. You can add descriptions related to qualification. You add any number of qualifications, you are no problem at all. Yes or no? Can a member mention about his position as a director on the visiting cards and all? You should not mention, because they all amount to designation. Chartered accountant, below managing director in so and so company, independent director in so and so company. Don't mention. Very good. Simple. Members, no, they may practice as CS and CMA, but you cannot use designation simultaneously. However, you can use CMA, FCMA, ACS, FCS, all that qualifications and all you can mention. No problem at all. Then, can a member mention foreign memberships of other foreign bodies? Yes, you can mention, absolutely. CPA Ireland, CMA, all that you can mention, no problem. ACCA you can mention. You know, CPA Ireland, you know, South African Institute of Chartered Accountants of, you know, as chartered accountants, and you can mention chartered accountant of England and Wales. Okay, that and all you can mention, no problem at all. You cannot use the following designations at all: income tax consultant, corporate lawyer, management consultant, cost consultant. These and all you can't use. You can't even use the word certified public accountant. Designation you can't use. That's what they're meaning. And suppose, no, you are not in practice and you are not using any designation called chartered accountant. You can use any description you want. IC will not touch you. Remember, if at all you are not in practice, can I use the word chartered accountant on my visiting card? Suppose I'm a member of ICA, I have a visiting card. Can I mention the word chartered accountant? Never. Chartered accountant word is only reserved for practicing CAs. You can use qualification. CA Ram Harsha, I can mention. Ram Harsha below chartered accountant, I can use only if I have COP. Simple. Then coming to most important provision in the entire this particular first part of the ethics. Okay, before we start schedules, most important provision is maintenance of branch office. Very simple. You know, every CA in practice, they must maintain branch audits. Yeah, thank you Indu for the appreciation. Yes, enough. So, you know, requirement and requirement and in charge of a branch. Very simple. You know, what is this branch office provision intention? You know, very simple. If at all this provision is not there, what I will tell you, what will happen, I'll tell you. Simple. I can go to every city in India. Some tax consultant will be there. I will tell him, consultant, don't use your name because you're not a CA. Use my name. Put my name board. My firm is there. My firm name board you put outside your office. Many people will come to you. Can I let somebody use my firm name? No. Remember, this clause is also there. Clause number 1, part number 1, schedule number 1. So if at all that clause is not there, I will do like this and open branches across India. What ICA is saying now, if at all you want to have a branch office, see, generally if you have COP, you should tell the ICA where is your office. Professional address we call it as. You told one address as a professional address. Now you want to open another office at some other location. Can you open? Absolutely yes, you can open. But that another branch is there, right? It must have a exclusive CA associated with it. Who should be that exclusive CA? He must be either your partner or he must be your paid assistant. That too full-time employment with the firm. Only he can. So if I want to open branches, sir, I want to have 10 branches, sir. Okay, recruit 10 CS, man. Including you, have 10 CS in your firm. Employees, partners, ICA will not ask you. Recruit 10 CS totally with your firm. Each one allocate for one branch. And not only that, wherever, suppose we call this concept as branch in charge or separate in charge of the branch. Now, suppose, just a minute. Suppose, no, I am practicing CA in Chennai. and I want to open a branch in Bangalore, and I want to open a branch in Cochin, I want to open in Mumbai, I want to open in Hyderabad. If I want to open at these places, I can have no problem. I will hire partners or employees in those cities, because the in charge of the branch must reside in that city, must work in that branch for minimum 182 days. He must be either residing there, he must be working there. The in charge must have active association, then only it will be understood. Next, you know you know you can have more than one office without in charge, or a member can be in charge for more than one office. Nothing but, sir, I opened a branch, sir, I don't want to keep in charge. Is it permitted? Three cases. The second office, here second means not exactly second office. Sir, what about third office? Don't ask me. Second office means another office. That's what the meaning, another office. Sir, I want to open a branch, sir, but it is in the same building, sir. My head office is in first floor. I want to open another office in the third floor because space is not sufficient. Now, should I also keep a separate in charge for that another C exclusively? Not required. Sir, another office is there, right? That is located in same city, sir. Not required. Sir, another office, no, it is located within 50 kilometers from the city limits municipality. Not required. Sir, another office is located beyond 50 kilometers from the municipality. It's a branch. It requires a separate in charge who must be a chartered accountant. He must be with you either as a partner, he must be with you either as a member, employee. That's it. Next, further, some CS, they were permitted to open temporary branch office without in charge. After 50 kilometers, I'm telling you, within 50, no problem at all, right? After 50 kilometers, can I open a temporary office? Yes. If at all you are practicing in hill area, in plain areas, you can open office for up to 3 months in a year. For that, there are conditions. A 5 marks question straight can come. So the temporary office should not be open for more than 3 months. Regular office must remain open at all the times, and every discussion, every correspondence will be only with the regular office. And name board of the firm shall be displayed only at the 3 months time permitted period. Is there, right? At the temporary office, that's it. Name board should not be there after 3 months, whatever the permitted period. And before opening the office, ICI you must intimate. A notice must be given to the ICI even after closing it. Further, remember, temporary office cannot be listed on the letterheads and visiting cards. You should not talk about temporary office address on visiting cards. That's it. And can a member display name board at his residential place? Absolutely. Ram Harsha chartered accountant, I can mention at my home, no problem at all. CA Ram Harsha, I can mention, no problem. Can my firm name be mentioned at my home? Mention, no problem. If it is a branch, it is not an office, it is not a branch, then don't mention. Firm name can be used only at branch names, branches at the place of office. You cannot mention it at residential address. Suppose if that is also professional address, then it's a branch, you can happily use the firm name. Firm name cannot be used at residential address, because if you are using a residential address, it amounts to branch. That's it. Then directly disciplinary mechanism. So briefly we will discuss disciplinary mechanism. So what is this disciplinary mechanism is all about? You can make a complaint. I'll show you. There is a site here. DISC, disciplinary ICI, for example, disciplinary directorate. You can open this. Just a minute. Yeah, here you can file a complaint. If at all any chartered accountant in practice or any member of the ICI, if you think they have done something misconduct, something improper, we will discuss what kind of misconducts you can complain. Okay, so you can file a complaint here. You can file a complaint. Some 3,000 rupees you have to pay with GA plus GST. Something is there, including GST 3,000. If you win the case tomorrow, the CA is proven guilty. You will get the refund plus damages, everything. Able to understand? Next. So suppose if the institute has received a complaint, okay, along with fee, like some information they received against a member of the ICA that he is involved in some malpractice. Disciplinary directorate. The moment you file a complaint, it will go to disciplinary directorate. Prima facie, what complaint he will see? Is it guilty or not guilty? He will see. If at all not guilty, he will submit the information to Board of Discipline, and Board of Discipline also says, yeah, it is not a guilty, no problem at all, not a guilty. They will close the matter. Sir, prima facie, prima facie, just 1 minute. Prima facie, it's a guilty under first schedule, sir, or it's a guilty under second schedule, sir. If it is a guilty under first schedule, they will place the matter before Board of Discipline. If it is second schedule, disciplinary committee. There are 3 terms here: disciplinary directorate, Board of Discipline, Disciplinary Committee. When you file a complaint, first it will go to Disciplinary Directorate. Then he will have to forward it to either Board of Discipline or Disciplinary Committee. Board of Discipline, when he will forward, he will say Schedule 1 complaint. Or if the misconduct is scheduled to Disciplinary Committee, then they will accept the complaint and they will do further investigation if member is found guilty. If the member is found guilty, yes, okay, what they will do, they will reprimand the member. Reprimand means what? They will call the member and give warning, and they will remove up to 3 months, or they can levy fine up to 1 lakh. Suppose Disciplinary Committee, Schedule 2 complaint, they investigated further, found guilty. They can reprimand the member, remove the name permanently or for any duration, whatever they think. That is so severe. Schedule 2 offense is very severe. Impose fine up to 5 lakh. Anything can be done. Suppose a member he felt the Disciplinary Committee, Board of Discipline was acted very unfairly against me. I have an option. I can file appellate authority. I can go to appellate authority. Within 90 days. Within 90 days of the order by board or Disciplinary Committee, I can go for an appeal within 90 days. Where I can file? Appellate authority. What appellate authority can do? They can set aside the previous order or confirm it. No, you are liable, they may say, or they may modify, or they may impose or enhance a penalty. You see, they can reduce or enhance a penalty. That is also there. Actually, in my class, I told, I think it is enhancing is not possible, because appellate tribunal, they can only, I think so. Please rectify that. So enhance the penalty, or they can even refer the case back to the Board of Discipline and Disciplinary Committee and pass such other order, whatever it thinks fit. That's it. This question was asked in November 24 paper, 5 marks question. Nobody imagined this question will be asked. I always tell in the class, anything can be tested. This we discussed in class. Next, finally, let's enter into Schedule 1, Schedule 2, the hot discussion on CA final ethics, the hot discussion. Now, first one. Now, we'll discuss Schedule 1, all that. Okay? Like misconducts. Misconducts are 2 types. Professional misconduct, other misconduct. Being a member of ICI, you can do something, a violation with the CA Act. Whatever violations you do, they were broadly classified into 2 types. Schedule 1 misconduct, Schedule 2. Again, the misconduct nature is divided into 2 types. Professionally related misconducts, non-professional, other misconducts. Now, first schedule of CA Act and second schedule of CA Act, they are talking about various misconducts. First schedule has 4 parts, second schedule has 3 parts. In both the schedules, part 1 is dealing with practicing CS. This is how you can remember. Both the schedules, first part is dealing with CA Act. In both the schedules, last part is dealing with other misconduct. When I say other misconduct, just a minute. Yeah, fine. Nandini, actually the schedule, some half an hour plus or minus it will be, going. Yeah, again, 10 o'clock, around 9:30 to 10 o'clock, I'll be again doing the marathon. By the way, those of you who are watching after the live is over, you don't have to worry about the timelines. Okay, fine. So, part 1 in both the schedules is dealing with, a CAS in practice. Part 4 is dealing with other misconduct. Other misconduct means it is applicable for CA in practice or a member of the institute, employment, anybody. And part 3, last but one part in first schedule, part 2 in schedule 2. This is dealing with professional misconduct for members generally. And part 2, only schedule 1 has exclusive part dealing with service. Over. Now totally schedule 1 has 12, 2, 3 and 2. Schedule 2 has 10, 4, 1. Nothing but totally we have 34 clauses. Schedule 2 has 10, 4 plus 1, 15. Here we have approximately 19, 34 clauses we have. That's it. Then directly we'll discuss first schedule. Okay. Except 5, 6, 7 clause, preferably I'll try my level best to finish first schedule in the next 45 minutes to 1 hour. Please be attentive. Okay, now first schedule. What the first schedule is talking about, professional. Or else let us do one thing. Let's go with one trick. I will tell you the easiest way to remember entire these clauses. Often students will have confusion on the clause numbers, all that. I will tell you easy techniques. Don't worry at all. Just a minute. First I will cover part number 4, first schedule. Part number 4, first schedule, other misconduct. Only 2 clauses were there. Now here, no, a small modification. Those of you who received printed book, no, here by mistake, just 1 minute, by mistake professional is there. Please strike off this. Here also you strike off. It's actually other misconduct. It's actually other misconduct. That's it. Just a copy paste error. It's okay. Fine. So what schedule 2 is saying? What first schedule part 4 is talking other misconduct for members generally. You know, clause number 1, you are held with imprisonment up to 6 months. If at all a member is punished with imprisonment, if at all a member is punished with imprisonment, in such a case the member who is punished with imprisonment not exceeding 6 months, you are straight away treated as guilty of professional misconduct. You're straight away guilty of other misconduct. Or clause number 2, your actions are something that brings disrepute to the profession. Then also ICA can take, for example, a CA, okay, he has a very big fight with his wife, for example, okay, and the matter came to the news media channel, all that, for example, okay, a very big rift happened, it came to news channel. News channel is, no, they're not using the name of the person, they're using a chartered accountant. Institute name is being spoiled. They can reprimand the member, they can suspend the member. So a member is treated as guilty if the council believes that you are bringing disrepute to the profession, okay, whether or not related to professional work, doesn't matter, okay. So you are treated as guilty. You know what, in professional ethics, in our question bank, fantastic questions were given, so many questions where generally students do many wrong answers. You can use our question bank, you know, fantastic question bank guys. That's it. By the way, part number 4 is completed. I hope you are clear. Just 1 minute. Yes, I think this is best. Yes. Next, now same way, let's also discuss schedule to part 3, because that is also dealing with other misconduct only. That is also dealing only one clause. What is that? You know, imprisonment exceeding 6 months. Sir, imprisonment you covered, no, just now, that is up to 6 months. If imprisonment is up to 6 months, if at all by any court or in maybe Indian or foreigner, doesn't matter. If at all imprisonment is there up to 6 months, clause number 1, schedule number 1, part number 4. Imprisonment is more than 6 months, directly schedule number 2, part 3. Only one clause is there. That's why there's no numbering for this. So only one clause in part number 3. So if at all any civil or criminal court imposed imprisonment for more than 6 months, straight away other misconduct under schedule 2. That's it. Now let me now discuss. Let's now discuss. I'll do one thing. Okay, part number 2 we will discuss schedule number 1. Part number 2 schedule 1, because, you know, easy part we are finishing first, not this. So schedule 1 part number 2. Yes, first schedule part number 2. This is applicable for whom? CS in practice, CS in employment, members in service. 2 clauses were there, only 2 clauses. You know, a CA who is an employee, he should not pay his salary to anybody. If a member of the institute is treated as guilty, if at all he is paying or allowing to pay or agree to pay any part of the emoluments, that he is receiving, he is straight away treated as guilty. And you know, you can share it to your relatives, all that, no problem. Here the point is what, you know, if at all a CA secured a job in a company through job agency, to them you are paying any commission and all, that is prohibited. You should get a job based on your professional capability, not by any deal. That will harm reputation of the profession. If at all you do this, no, ICA will also consider that as an other misconduct. Same way, a CA, no, you are in employment, and on behalf of the company, see, if you are in employment, no, you are agent of the company. You know, company asked you, CA, can you arrange some lawyer, because you have friends lawyers, no? Can you arrange for a chartered accountant? We want stat auditor. Like that, they're asking you lawyer and chartered accountant or broker and all, they're asking you to engage. You are talking to somebody and bringing a nice lawyer for the company, all that. But you know what you're doing? You are charging commission from them. You didn't tell the company. Unauthorizedly, you are charging commission from them. If a CA is accepting or agreeing to accept any fees or profit from lawyer, CA, or from any company or a firm or persons who are dealing with the company employer, some commission or gratification you are doing, you are getting it, you are treated as guilty. This is to discourage kickbacks. This is to discourage frauds by CS who are in employment. You should not accept. Okay. If at all client told you, no, you get it, no problem. Authorized by the client, no problem. If at all they didn't authorize, later they found, they can complain to ICI, and under clause number 2, the ICI may treat you as professional misconduct even though you are in employment. So clause number 1, don't pay your monies to somebody unauthorizedly. Don't take money unauthorizedly from client, vendors, third parties and all. That's it. You know what? For CS who are in employment, they can't accept this referral fees and all. But CS in practice can accept referral fee. CS in practice, they can accept. We have clause number 3, part number 1, schedule number 1. As per that, a CA in practice can accept referral fee. So unfair, no? For members in service, not permitted, but practicing is permitted. You might feel like that. No. A member in service, you are an employee of the company. Being an employee of the company or agent of the company, agent must be truthful to the principle. On that logic, it is a breach of trust. That is why this is so severe. A CA in practice, I can charge referral fee from another practice because we both are principal to principal. So that is no problem. There is no problem on that. That's it. Next. Just 1 minute. Now we'll begin directly. The part number 1. Just 1 minute. Let me have water. Yes. So part number 1, first schedule, which is applicable for CS who are in practice. Just 1 minute. Yeah, it is applicable for CS who are in practice. First clause, what it is saying, straight away first clause you see, a chartered accountant in practice is deemed to be guilty if you are allowing another person to practice in your name. You are a CA in practice, you are allowing another person to practice in your name. Indirectly, you are opening a branch without permission of ICI, without a member in charge. You are straight away guilty. Suppose other person is also a practicing CA and he is a partner of you or he is an employee of your firm, then no problem. Sir, my partner only is using my firm name, sir. My employee only using my firm name, sir. That's a branch office, sir. Then no problem. Simple. Clause number 1 over. Sir, you are allowing somebody who is not a CA at all, disqualified. I mean, you are treated as guilty of professional misconduct. That's it. Next. Sir, I'm not allowing anybody to use my name, sir. But you are sharing your profit to a non-member. Second clause, clause number 2. A CA in practice is guilty of professional misconduct if they agree to pay, allow directly or indirectly any share of your profit or fees to any person except stated as below. If at all you are sharing your firm fees with somebody, you are sharing your profit with somebody, you are guilty. However, you can share with the following. With the following you can share, no problem, sir. He is also member only, sir. He is my employee, sir. Member, sir. My branch in charge, sir. Sir, he is my partner, sir. He is retired partner. He is a legal representative of deceased partner. As per partnership deed, my partner died. To his legal representative, I am paying share of profit. Under partnership act, it is permitted. You can't say it is prohibited. So that is why. Or I am paying to another member of professional body. Or I am paying to a member has recognized qualification. Sir, he has a recognized qualification. I got his services, sir. I'm paying him. What's wrong in that? Who are members of recognized qualification body? CS, CMA, bar counsel, lawyers, architect, actuary, engineer, MBA. You can pay them. No problem at all. You can happily pay them. No problem at all. Engineer and MBA, you can pay them. This is not a violation. Further, just a minute. Yeah. Further, sir, can I share profit, goodwill on death of partner or proprietor? For example, a partnership firm is there. As per partnership deed, if any partner died, CA partner, his family members will get for next 10 years share of profit of the firm as usual. Whatever partner share is there, that family members also will get for next 10 years. No problem. In a partnership firm, it is permitted. Sharing of permitted with legal representative is absolutely permitted. Absolutely permitted, no problem. Proprietorship form, proprietorship forms. What about proprietorship form? Very, I mean, simple. Proprietorship form. Hey, proprietor died. That's it. Firm is gone. However, I told you. Remember, suppose I want to practice individually alone. I can practice directly in my name. Ram Harsha, I'm a chartered accountant. I can practice directly. I can sign with my name. But don't do that. Tomorrow when you are practicing, use a firm name. Apply to ICI firm registration number. So you will get a firm Ram Harsha and Co. Ram Harsha and Associates. Single person only. It's a firm registration number. Sir, firm means partnership firm. No man. Firm means organization. Firm means entity. Firm means concern. In income tax only, firm means partnership firm. Normally, firm means what? Anything. Sole proprietary firm means what? Sole proprietary firm only. Yes or no? Yeah. So if at all you are having a firm name, no. Even if something happened to the CA, he died. The firm name has a goodwill. That firm name can be sold to another CA by legal representatives and get goodwill amount. That is permitted. You know, sale of goodwill is permitted in case of sole proprietary firms only. Again, partnership firm, they can't sell goodwill. Partnership firm, they can sell goodwill to another CA for CAs when all the partners died on the same day. Then they can sell. Now, conditions for sale of goodwill. Who will sell the goodwill? Proprietary concern related legal representatives can sell goodwill. Legal representatives, they must get permission of the council within 1 year from the death of the proprietor. And sell the goodwill within 1 year. Firm name, until the goodwill is sold. Firm name, for 1 year they will not remove. IC will not remove. But remember, the moment the proprietor died, IC will remove him from register of members. And suppose and further, finally, whoever is purchasing this firm name, he can still use the firm name without any problem. No problem at all. And remember, suppose if legal heir is under dispute, for example, some funny example, if the CA has 2 wives and he has 2 children, I mean, with wife number 1, wife number 2, he has children, for example. Legal heir is under dispute. Who is correct legal heir is under dispute. Until dispute is resolved, ICA shall hold that. Okay, they should not remove it. Once dispute is resolved, 1 year time limit will be counted from the resolution of the dispute. That's it. Sale of goodwill, clause number 2, over. Then clause number 3. A CA in practice, I should not accept any fees from others unless they are my clients. That's a different story. Can I accept from somebody else any profit or share? My client asked me, to refer me one lawyer, or my client asked me to refer one builder. One of my client is a construction contract builder. I referred him. Now, since my builder is getting some business, I asked the builder some commission. I took commission without knowing to the client. I am guilty. Straight away, I am guilty. Because builder is not in the authorized person list. Simple. Can I accept a profit or fees from somebody else? Not permitted. However, from another member, you accept? Yes. From a partner, can you accept? Yes. From retired partner, your retired partner is referring some client. Okay, he retired, but he's referring to you some client. You can charge referral fee. Yes or no? Or you're referring them, or he is referring you. Whatever it is, yes or no? Legal representative, retired partner is that you are referring some client to him and he is paying you some fee. Permitted. And member of professional body, member of recognized qualification, to all of them I can share. Sorry, this is about sharing them. This is about sorry, I'm correct only. Accepting from them referral fee. So from them referral fee and all accepted, no problem at all. This is something, I told you, members in employment cannot accept referral fee because you are an agent of the company by default. That's it. Next, clause number 3 is over. Clause number 4, sir. Clause number 1, sir, I should not allow somebody to use my name. Clause number 1, I should not pay to somebody. Clause number 3, I should not receive from others also. Clause number 4, I should not allow another person. I should not take another person into my partnership firm. I should not enter into partnership with non-members. Sir, with whom I can enter into partnership, sir? I can enter into partnership with any other chartered accountant in practice. Remember, a CA in practice cannot enter into partnership with anyone other than CA in practice. Means a CA in practice can only form partnership with another CA in practice. Others are strictly prohibited. However, exceptions. Company secretary, you can enter into partnership. Cost accountant, you can enter into partnership. Advocate, engineer, architect, actuary, you can enter into partnership. No problem at all. No problem at all. Getting it? Now, but you know what? Multidisciplinary firm. What is a multidisciplinary firm? What is a multidisciplinary firm? Just a minute. I think this is the issue. I think now it is working. Sorry. So a CA. Just a minute. I think some issue is there with the pen. Yeah. So a CA in practice, just one. So Yeah, fine. A CA in practice, no, is not permitted to form multidisciplinary firm. Multidisciplinary firm means what? In a firm, no, CS will be there, cost accountants, lawyers, everybody will be there. That is called multidisciplinary firm. That is not permitted. Multidisciplinary form is not permitted right now. So just now you said you can have partners, some company secretary, cost accountant, original act says it is permitted. But right now guidelines are not yet ready, so you cannot form. Now directly many students will read 5, 6, 7. Never do that. 1, 2, 3, 4, 12 you should read immediately. Then you should read 10. After that remaining classes you can read. That's how you need to do. Okay. Class number 12 you come. CA, no, you should not allow to sign somebody. You should not allow somebody to sign unless he is a partner having COP. That is clause number 12. Clause number 12. You see, clause number 12. A CA is treated as guilty if at all he is allowing somebody to sign on your behalf. If at all somebody is signing on your behalf, if at all you are allowing somebody to sign on your behalf, you are treated as guilty. But you know, you are allowing whom? You are allowing some non-CA, or you are allowing somebody who is not in practice, or he is not a partner. Means whom you can allow indirectly, sir, he is a CA, sir, he is having COP, sir, and he is also my partner, sir, he is signing it, no problem. He is not a partner, you are guilty. He is not having COP, you are guilty. He is not a CA at all, you are guilty. Sir, he is a CA having COP and also partner, sir, he is only signing on my behalf, sir. Is there any problem? No problem. Sir, what about some routine issues and all? Routine matters anybody can sign, no problem. From routine matters can be signed by anybody, like issuing queries to the client, observations forwarding to the client, stamping of vouching, no, our articles and all do vouching, they will only sign, no, and correspondence with the client, acknowledging records, acknowledging receiving of records, bills, our accountant can sign, our admin staff can sign bills when they're raising bills to the client. Routine tax practice matters, any other administrative task, our anybody can refer. But if it is attestation, authentication, assurance, report, certification, only I can sign, or my partner who is also CA with COP, only they can sign. That's it. And further, when you are signing, no, you have a name disclosure requirement. When you are signing financial statements, financial statements, which requires a disclosure, members must disclose their name. There is no statutory requirement for the, there is no statute requirement. If there is no statute requirement, firm name can be used. 700 mandates we already saw in reporting requirements, how to use MRN, FRN, all that is sufficient. That's it. So 5 clauses we completed, 1, 2, 3, 4, 5, 1 is 12, up to that we completed. Now let's look at clause number 10, then we'll go to clause number 11. Okay, clause number 10, you are prohibited to accept fees as a percentage of profits of the company. As a percentage of profits of the company, you are prohibited to accept. Like, what is this? A CAP is treated as guilty if he is charging, if at all he is charging or accepting fees or whatever it is as a percentage of profit, or which is contingent upon findings. You are accepting some work where if you find something, you'll charge a fee. Such a kind of offers you should never give to client. However, there are some exceptions. What are the exceptions? Sir, you are a receiver or liquidator, no problem at all. You are auditor of a corporate society, no problem at all. A receiver or liquidator can charge his fees as a percentage of assets realized. A corporate society auditor can charge the fees as a percentage of paid up capital, working capital, gross or net income and profit. Remember, society auditor is permitted to accept profit only as a percentage of these three. You cannot accept percentage of fixed assets. You cannot accept percentage of paid up capital is permitted. Okay, paid up capital, working capital, gross profit or net income or gross income. That's it. You can charge fees as a valuer under direct tax and indirect taxes. For example, under direct taxes you have some duties and all, right? For valuation duties, there you can charge percentage of valuation. Management consultancy services, you are providing some consultancy to the client. Client has saved a lot of money because of you. In that benefit client got, you can charge fees as a percentage, no problem. Fundraising services, you are providing clients some fundraising, like bank loan he want, you are speaking to bank, negotiating everything, and then you got some funding to the client. 1% you can charge, 2% you can charge. I mean to say percentage you can charge. Debt recovery services, you can charge percentage. Cost optimization, you are saving cost to the client and you are showing some benefit to the client. percentage of the benefit client got, you can charge. Other services and all, you can charge. What is other services? Insolvency. You are acting as an insolvency professional, you can absolutely charge, no problem. Or, sir, you are providing non-assurance services to non-audit client. You are providing non-assurance service to non-audit client. This was asked in the recent one of the May 24 and November 24, November 23 as a 5 marks question. For example, no, the CA was requested by one company to defend in ITAT, income tax appellate tribunal. The company has received 10 crore some demand notice. The CA took up that case and he is going to ITAT, and the CA is charging fees from the client as a percentage of demand reduction. Is it permitted? Yes. You are not doing audit for the client. It's a non-audit client. You are providing non-assurance, something called representational services. You can absolutely charge, no problem at all. Clear? Class number 10 is over. Class number 10 is over. That's it. Almost 1.5 hours itself we completed major clauses. Okay, now clause number 11. What is clause number 11 is talking about? This is one clause I can tell you guys, many students will have confusion. Many students, I will break it down very simple for you. Can a CA do, see, you are a CA in practice, can you do any additional occupation? For example, you take me, I'm in teaching, yes or no? Can I do an additional occupation like this? Absolutely yes, no problem at all. But you need to get a permission of ICAI. If at all general permission it is not there, you know, here now they have given a list, you know, you need to interpret one point. No permission is required, right? In this clause number 11, the list is divided into 2 types. Certain activities, no, I don't require permission. Certain activities I require permission. Never try to remember both. One you remember. Which one? No permission is required, right? This alone you remember, enough. What is it? This is exhaustive. This is exhaustive. You know, there is one practical question is there. There is one practical question, I'll just tell you. You know, here no, add one more point add. Acting as equity research. Acting as equity research advisor. Acting as a equity research advisor. That is permitted. You can do research in equity and advise to your friends and all. That is not an additional occupation, no problem at all. You can do equity derivatives. You can do equity derivatives or currency derivatives. No permission is required. These are all practical question based. I'm just telling you here. Add this in your list if at all you don't have. You can be in equity derivatives. You can trade in equity derivatives. You can trade in even currency derivatives. Further, you know, suppose you are doing in commodity derivatives. You are doing in commodity derivatives. It must require, it is compulsorily required, a special permission is required for commodity derivatives. Derivatives are 3 types: equity, forex. Currency derivatives are nothing but forex. And the third one, commodity. Commodity require permission. Currency derivative, equity derivative, no permission is required. That is one of the ethical standard board decision which is there in the practical question. That's the reason I'm telling you to write it. Now, so what is the clause says here? A CA is treated as guilty if at all he is engaging in any business or occupation in addition to chartered accountancy in practice. You are straight away treated as guilty, yes or no? And if at all, if a business or occupation is permitted by ICA, if a business or occupation is permitted by council, no problem. You can also be a director in a company, not being an MD or whole-time director. Not being MD means what? You can be director simplicitor. Director simplicitor means what? Non-executive director. That is also permitted. Directly the clause itself says you can be a simple director in a company, non-executive. But managing director, whole-time director permission is not there. Further, you know, a CA, a CA in practice is allowed to act as following. Except on a full-time employment. You cannot take up the following on a full-time basis, but you can take them on a part-time basis. A CA can act as a liquidator, trustee, executor, administrator, arbiter, receiver, advisor, or even settler of a trust. Settler of a trust is also permitted. Settler in ethical standard board decisions at the last page of ICA, it is there. You can act as a representative for costing, financial, taxation matters, no problem. You can take up any appointment made by central government, no problem. You can take up any appointment made by state government, no problem. Court, no problem. Some legal authorities appointing you, no problem. Okay, or you can act as a secretary in any professional capacity. Some, for example, no, there is a Hyderabad Chartered Accountant Society, Bombay Chartered Accountant Society, Chennai Chartered Accountant Society. There, because you are a CA, you were given a secretary position. In professional capacity, you are taking as a secretary. You are taking as secretary of ICA. No problem at all. Yes or no? Provided you are taking additional work, right? That is not on a salary come full-time basis. That is like a professional designation. That's it. No problem. ICA has given a general list which is exhaustive. I told you to add 3 points in that. What are they? Equity derivatives, forex derivatives, and you can be equity research advisor. No problem. Actually, when general permission, nothing but what? You don't require any permission. If you remember this, that's enough. No, remaining all other require special permission. You know why? This is inclusive list. Special permission is inclusive. Immediately some students, sir, is there anywhere in the ICA book this is said, or is there any notification on this? Common sense here. Last point, you see, any other business which council consider necessary, permission will be granted. Any other business means what? If at all you go and apply to council for some additional occupation which is not given in special list, which is not given in special permission list, they may give you permission, which means special permission list is not exhaustive, it is only inclusive, it is only illustrative. Now, what are general permissions? Very simple. Sir, I can join under another CA in practice. No problem at all. Happily go. Can I have a private tutorship? Right now what I'm doing is private tutorship. For example, I'm teaching CA students all that privately on my own up to 25 hours in a week. No problem at all. I am authoring some books and articles. No problem at all. I am holding life insurance agency. Prohibited. Sir, permitted? No. Only for renewal commission purpose. Suppose if I'm holding life insurance and now also I'm selling policies to my various clients and all, not permitted. Sir, I want to continue, sir. What can I do? Get permission from ICA and go ahead. Okay, na? Permitted. Attending classes and appearing in an exam, whether you're going a foreign university or you are studying abroad, you're studying in India, any course that you're studying, attending coaching classes, that is not an occupation, no problem at all. Or you can be an MP, MLA, MLC without any permission of ICA. You can be a honorary leader of a charitable education or non-commercial. You can be in a honorary leadership. Honorary leadership means what? Non-executive authority. Honorary leadership means non-executive role. You can be a mentor to them. You can act as a notary public, justice for peace, special executive magistrate, no problem. You can do part-time tutorship within the institute. ICA is asking you to take classes or tutorship. You can do that. You can value papers, you can do a paper setter, you can be head examiner, you can be moderate for any examination, not necessarily CA exams. Sir, some IIT institute, they called me to set some paper to them, sir, on a finance paper. For example, they have some certification course on finance also for IITs to impart them some basic knowledge. So they asked me to set some finance related paper. Okay, I went and setting a paper to IIT, no problem. Editorship of professional journal, no problem. Remember, retail reports not permitted. Retail reports, retail journals which are not professional journals, they come under special permission requirement. You can be a surveyor and loss assessor for insurance companies, no problem at all. Just a minute. You can be surveyor. You can do agriculture land, no problem at all. You can have an agriculture land and do agriculture, no problem at all. Now, what are all permission is required? Sir, I want to be a managing director, whole-time director, permission is required. I want to take up some employment, sir, in some non-business entity, or I want to take up employment in some business entity, I need permission. This A point and D point, I'll come back to it later. This is where many students have confusion. I will remove your confusion like anything in this class. See, okay, can I have ownership in education institute? Prohibited. Get permission if you want to have ownership itself. Can I teach in some other education institute other than ICA coaching institute? Yeah, you can teach up to 25 years. ICA will give, council of ICA will give permission. Sir, one point here. Sir, in this chapter, no, at many places council will come. What is council? They are nothing but board of directors of ICA. Council is nothing but what? Board of directors in ICA. In ICA, whoever is board of directors, who are board of directors in ICA, nothing but council. How many? 32 elected members will be there, 8 nominated members will be there, total 40 council members will be there. These are the council members who run the ICA. And ICA has many committees. One committee is Accounting Standard Board, Auditing and Assurance Standard Board, Peer Review Board, Tax Audit Review Board, Financial Reporting Review Board. These are all non-standing committees of ICA. You might have heard about Auditing Standards Board. What is Auditing Standard Board? Nothing but committee of ICA. In that particular Auditing Standard Board, council members only will be again members. This is just like Audit Committee, Risk Management Committee, CSR Committee, Corporate Governance Committee, Remuneration Nomination Committee, Stakeholder Relationship Committee. Yes or no? Just like that, in ICA has some 40 committees they have. Okay, that's it. Now, can I be an editor of a journal other than professional journal? You can be. Retail journals and all, retail reports and all, you can publish with special permission of ICA, no problem at all. Okay, now look at, sir, I want to work in a business concern, sir. And in that, no, my relatives and all do not have any interest, sir. Okay, apply to ICA, get permission. Sir, relatives has interest, sir. What about that? That also apply to ICA, get a permission. I told you, this list is only inclusive, not exhaustive. You can apply for any other scenario to ICA. If they give permission, you can happily do it. Further, D point you see. This is where many students will have a confusion. D point you see. What is this D point is saying? Can I have interest? Array, interest they are saying. They are not asking you. They are not saying working. Interest, ownership in a family business concern. Sir, my grandfather has one rice store, sir. Rice mill is there, sir. He died, sir. I inherited now. I'm not engaging, sir. But you are a proprietor of the rice mill. By default, in case of a proprietary concern partnership from LLP, you are treated as actively working. That's a fundamental assumption. 1 point. Sir, can I have shares in a company? Absolutely. Sir, I have 90% shares in one company. No problem. That's not an occupation. You are a shareholder. You are not a managing director. No, you are just a shareholder. No problem. Sir, I want to have 10% ownership in a partnership firm, sir. What about that? Prohibited. Sir, I want to have ownership, sir. In company permitted, in partnership, why it is not permitted, sir? In a partnership firm, you are basically treated as active partner. Fundamentally, they will assume that you are an active partner in a partnership firm, LLP, AOP in all these cases. That's why in order to have ownership itself, ICA requires you to get a permission. Further, you should not take up any, you should not be actively associating. Even, for example, here you see, they have given one clarification. A member of the institute can acquire interest, ownership in a proprietary concern, partnership firm, or in HUF. It is necessary for you that you got this ownership because of inheritance, succession, all that. Getting it? And it is also necessary for the member to show you are not actively engaged. Suppose you want to actively engage into partnership firm activities also, additional occupation. Get permission. That's it. Over. Now, the auditor of a subsidiary company cannot accept director of a holding company, and even vice versa also, no problem at all. Okay, independence. Okay, that's it. Can I be a signator or promoter to a company? Just a promoter, sir. I'm not actively involving. I want to be a signator or I want to be a promoter to memorandum. No permission is required. That's it. Clause number 11 is completed. Clearly, I spoke about the logic, and I hope I have removed your confusion in the clause number 11. That's it. So, daily, whoever is attending for the live, daily the schedule is going to be evening 6:30 to minimum 7:30 or minimum 8 o'clock. Again at 9:30 or 10 o'clock I'll start up to 11 o'clock. So 2.5 hours I will be doing revision. That's it. So ethics, class number 11 is over. That's it. Now, so I will take a break. Okay, let's continue again after the break. That's it. Okay, so what are the classes we completed? Just revise it. 1, 2, 3, 4, 12, 11, 10. Almost 7 clauses we completed. In 12 clauses we have: 1, don't allow somebody to use your name. 2, do not share profits to others. Do not accept profit from others. Do not form partnership with others. Clause number 4, do not let others sire. Clause number 12, do not accept fees as a percentage of profit or contingent or based on finding. Clause number 11, do not engage in other occupation without permission of ICA. If at all you do any of this, guilty of professional misconduct. We will revise remaining clauses and let us do one mind mapping. How to remember all the clauses? Mind mapping we will do. Remember, if you intensely study, you don't have to, there is no memory technique. The only memory technique is revise it thoroughly, understand it thoroughly. That's the best memory technique. Don't believe if somebody says memory technique is there. There is no memory technique. Understand. Memory is a byproduct of understanding. That's it. Okay, so we'll take a break and continue in the next session. So let's continue the discussion on the the pending clauses. So already we started with professional ethics and we have completed, technically speaking, more than half of the chapter. In the last 1.5 hour, we have already completed more than half. Let's now continue the remaining clauses. What are the clauses that we completed already? Clause 1, 2, 3, 1, 2, 3, 4, 12, 11 we completed. Totally 6 clauses we completed. 12 and 11 also we completed, right? Now let's understand even 10 also 10 also completed. 7 clauses we completed. Don't worry, at the end of the chapter I will do revise all the clauses and establish one mind mapping within your mind. Okay, yeah, clause 10 also done. Yes, correct. So now let's begin with the next clause, that is clause number 9. Where a CA is treated as guilty of misconduct if at all he is accepting audit of a company without checking compliance with Companies Act. Very simple. A company approached you to conduct audit of that company. As a stat auditor, they want to appoint you as an auditor. You blindly accepted without checking anything. You are treated as guilty. And for your information, you are supposed to check this as per even SQC. In fact, as per SQC standard, acceptance and continuation of client relationship, this is something that you must verify. Yes or no? Without verifying SQC compliance, how did you accept a client? Which is absolutely a failure. So, if at all you accepted a company without checking SQC, it also amounts to gap failure. When it amounts to gap failure, clause number 9, part number 1, schedule 2 also will attract. Please be clear. In exam, in professional ethics, you must always write all the relevant clauses applicable, because sometimes when the same question be asked in the exam, they may also talk from SQC point of view as one more point in the suggested answer. And that time, if you do not write about that clause number 9 gap, where if you do not recollect SQC, obviously you will do mistake. And always the incoming auditor must verify with the company that the correct procedures are followed. So whenever a company appointed you are the incoming auditor, the previous one is outgoing auditor. You should ensure whether company has followed correct procedure or not. And you know what, here you need to verify certain points, basic points you need to verify. What are the things that you need to verify? Board resolution, minutes of the general meeting, notice of general meeting, whether central government approval is there if at all outgoing auditors was removed by the company before expiry of the term, qualifications, disqualification, certificate you should get a management that they have complied with all the above sections. It's a requirement in Companies Act also. You need to get a certificate from the management that they have complied with all the sections, and you need to communicate with outgoing auditor as per clause number 8. That's it. We'll discuss clause number 8. And in ICI book, they have given in page number 19th chapter. In ICI book, go to 69th page in the 19th chapter and 73rd page. In these 4-5 pages, there is a discussion about different scenarios. Suppose government company first auditor resigned and you were appointed under casual vacancy. What points you need to check? Suppose government auditor, subsequent auditor resigned, you appointed under casual vacancy. Non-government company auditor was resigned. How do you verify? Like the different permutations and combinations of Companies Act, change of auditors, that and all was tested. You need to verify that. And remember, there is another section which is 140 subsection 4. Suppose if a company is appointing other than this point sorry, this point is something which many students don't understand. Very simple. Here 140 subsection 4 is talking about what? Very simple. Company sent an AGM notice. Listen to the carefully. If you are having a doubt, repeat it once again. If at all you feel that I'm talking at speed, 0.85x speed you watch. Okay, that rather than standard speed, reduce the speed, you will understand everything. Now, company sent an AGM notice. What notice contains? Already our existing auditor is there, 5 years over, we want to appoint another 5 years. They sent a notice. Now shareholders, they gave a special notice to the company saying this auditor we should not appoint. Fine, that special notice we received, right? Objection of shareholder, that also company has to forward to everybody. Now on this particular special notice, our auditor, whoever is there at existing, we want to appoint him, he also want to continue, right? He gave a written representation. That representation also circulated to all the members. Now I'm sorry, yeah, now the members are having 3 documents. AGM notice is there, special notice is there, written the auditors, whoever is there, his written representation is there. They will come to AGM and decide. Suppose if they believe company, then they will appoint the same auditor. Suppose if they believe, shareholders predominantly believe special notice, who issued special notice, then they will not appoint the retiring auditor. Whoever is auditor is then who is under reappointment, the shareholders may not appoint him. That time management will have a plan B auditor, so that auditor will be appointed. That's it. Now, whenever, where an auditor, where I'm sorry, where an auditor, even though he is willing for reappointment but not reappointed because of a special notice and all, he shall file a statement with the ICA, yes or no, which the company has to send among the shareholders also. The written representation you are giving to the company, right, for circulation, that written representation copy shall also be filed with the institute. It shall be obligatory for incoming auditor before accepting appointment to obtain a copy of the communication from the company, like whoever outgoing auditor gave a written representation, right? For example, shareholder special notice won. That won actually. The reason for which special notice is given, that ultimately won the game. In the sense, the retiring auditor was not reappointed, a new auditor was appointed. The new auditor has to see the written representation and consider the points that are there. That's why anyhow, whether a retiring auditor not reappointed, or an auditor resigned, or an auditor was removed, or an auditor retired in the AGM normally because expiry of term is there, in all these cases, the incoming auditor must communicate with outgoing auditor. That's what clause number 8 is talking about. And ethical standard board has a power to call for such other information as it may require from the incoming auditor as well as outgoing auditor and the company, and they can even make a report to the council if at all it considers necessary. Remember, I told you what is council. 32 members will be there, 8 nominated members, 32 elected members, totally 40 council members will be there. And these council members will be forming part of peer review board, various other boards, accounting standard board, auditing standard board, like that, so many. Yes or no? And next, so with this, clause number 9 is completed. Very simple. Okay, clause number 9 is completed. Inside this, there is one more point. There is one more point: unjustified removal of auditor. They may ask you in exam, write about guidelines issued by ICAI regarding unjustified removal of auditors. They may ask you like this: what are the guidelines issued regarding unjustified removal of auditor? They may ask you a specific question like that. In such a case, simple, where the auditor resigned, he shall send a communication in writing to board of directors along with reasons. Further, he should communicate it to the institute. Further, if an auditor is not offering for reappointment, like company want to reappoint you, but you're not willing to get reappointed, why you don't want to get reappointed? You need to communicate to institute. Further, the incoming auditor is there, right? You are not reappointed. You resigned or you are not reappointed because you only resigned from the company. You only did not continue. Yes or no? Further, the further incoming auditor, it shall be obligatory on the incoming auditor before accepting appointment to get a copy of the communication which resigned auditor gave to board. Or the auditor, he is not willing to go for reappointment, right? He would have given some notice to the company, he would have given some letter to the company. That also the incoming auditor must consider before accepting an appointment. These guidelines were given. These guidelines were given as a part of unjustified removal of auditor. If at all previous auditor was unjustifiedly removed by the company, on that some guidelines were given. That time itself, various other guidelines were also covered. Resignation guidelines were covered there only. 140 subsection 4 guidelines were covered there only. ESB related powers guidelines also covered there only. So entire this unjustified removal of auditor is a very big guideline. Further, in clause number 8, you might have seen, suppose if the previous auditor was removed in an unjustified manner by the company without giving a proper opportunity of being heard, incoming auditor should not accept the audit. In fact, in council guidelines, one point is there: undisputed fee is not paid or retiring auditor was unjustifiedly removed, incoming auditor should not accept that particular audit. So I hope you are aware of it, you remember that. Yeah, that's it. Next, clause number 8, very important clause and very simple clause also. What is clause number 8? If a chartered accountant accepts the position of an auditor previously held by another chartered accountant without communicating him in writing. If at all a chartered accountant is accepting another auditor position, simple, this particular clause number 8 is applicable for all types of audits: internal audit, concurrent audit, branch audit, central audit, stat audit, non-stat audit, voluntary audit, any audit, tax audit, any audit, but does not apply for special audits. Or a special audit itself means very rare it will be there. That too under some laws and regulations. Cooperative society has special audit requirement. There is no other law that we deal with that requires special audit. Okay. Fine. Simple. Last time the audit was performed by chartered accountant in practice. Now the company is approaching you and they are now appointing you. Do not accept the appointment without first communicating him in writing. You must communicate him on a prior basis in writing and then only accept the appointment. Why you need to communicate? What are the reasons? A professional courtesy alone is not the reason for communication. The objective of the communication is to protect independence of the members. The incoming auditor should inquire other reasons why they should not accept the appointment. Why? Is there any other reason? So only if I communicate with previous auditor, I will know why the company is changing the auditor. Generally, common reasons for a company to change auditor. Directly a 4 marks question will come. What are the common reasons? Give you examples why a company change will auditor. Basically client has a right to choose their own auditor. That's client's discretion. Yes or no? Because of clashes between the auditor, dissatisfaction, death of the auditor, venue change of the auditor, all that. And the retiring auditor, always, whenever a company is willing to change auditor, you should always accept with a good grace. Okay, then suppose sometimes fees dispute, that could be the reason. The auditor might feel not enough the audit fees, or company might feel they are paying over fees. So is some issue, fees issue. This is common reason. Yes or no? But it does not constitute a professional reason for rejecting the new appointment. For example, company is not paying me enough fee, and now they found another auditor where the auditor can do at service at a lesser price, for example. Okay, and the auditor this auditor, he should not reject it. Further, there are some guidelines for there. If at all the incoming auditor is accepting an audit for a fees lower than the outgoing auditor, is there any independence compromise? Why there is such lower fees accepting? There must be substantiate reasons. Getting it? Generally, you should not accept the audit at a lower fee. So that is also one more point. Okay. Further, if statutory audit fees is unpaid, for example, sir, previous auditor fees not yet paid by the company, sir, can I accept the appointment? You can accept it, but the council guideline says you should not. In reality, generally we accept, because the outgoing auditor in the company has a very good relationship, for example. So that is their matter of contract. We generally accept. But if at all fees is not paid, get NOC for that also. Sir, can I accept the audit because your fees is pending? Can I accept? Yes. If at all he give an NOC, proceed. But basically, as per council guidelines, you should not accept the audit. Further, remember, your incoming auditor, your position you should maximum use and help settle the dispute regarding fees. Okay, whatever outgoing auditor fees is there, right, pending from the company, settle that as much as possible. And remember, this type of clause 8 communication is required for all types of audit. Mandatory communication when the previous auditor is a chartered accountant practice. Sir, previously it's a non-stat audit, sir. Previously CA did not perform, sir. Now company appointed me as an auditor who is a chartered accountant, sir. Should I communicate with a non-CA also? It is a good practice to communicate. Whether you communicate or not is your choice. But with a CA in practice, if at all previously held the audit position, you must communicate. Next, what about government audits? This specifically was asked as a question in the recent November 24 or May 24 exam. Now, specifically government companies and banks, specifically for government companies and bank, if there is no enough time to wait. See, generally what this standard says, get NOC. A company appointed you. previously some other auditor was there. Get NOC from him. If at all he gives NOC, happily accept and proceed for no problem at all. Okay, suppose government did not give you enough time. For example, they gave you appointment letter, 15 days time only they gave you to accept. You sent a mail to previous auditor. He is not responding to you. You can give a conditional acceptance. Final acceptance is depending upon objections raised from outgoing auditor. Mention that in the acceptance letter. And in the acceptance letter, you should clearly specify that acceptance is subject to professional obligation from previous auditor and will be finalized after considering information all that from them. Getting it? Then all that is very easy. Then objective of communication with the retiring auditor. Very simple. Why you need to communicate? What is the necessity? Maybe previous auditor would have given some qualified opinion, or he is not wishing to continue due to some business issues, all that. So ask why you need to communicate. Ask them, only then you will know it. A retiring auditor may share insights about clients' accounts, which incoming auditor must consider. You must carefully consider all facts before deciding acceptance of that particular audit. And if at all he is not responding without a valid reason, or he is not responding without a reasonable period of time, you can proceed accepting the client after waiting for reasonable period of time to avoid deadlock. Suppose if at all the question is regarding government entities, then you must write this point only. Getting it? For government entities and all, if there is no enough time bound, okay, so conditional acceptance, that and all given only in the context of government entities, conditional acceptance point. Whereas for non-government entities, there is no such timeline, all that is given. Conditional acceptance situation is discussed only for government entities. Be careful. Next, method of communication with retiring auditor. How you can communicate? Sir, I just posted him, sir. Our article went to that office and just gave to somebody this document and then came, sir. No, certificate of posting alone is not sufficient. Rajasthan High Court said certificate of posting is not sufficient. It is not a proof of delivery. Then what is required? The following methods of communication is permitted, which is a positive evidence of delivery: registered post acknowledgement due, hand delivery, email acknowledgement, email also to who, to which mail ID you should send? Registered mail ID or last known official mail address. Registered mail ID means mail ID with registered with database of the ICA. To that mail ID you send. That is also treated as a proper delivery. Or last known mail is there. Like, so for example, the incoming or the outgoing auditor, with the company, he communicated through some one mail ID. That is also permitted. Last known mail ID, that is also permitted. And you ask UDIN portal also, or when you are communicating with retiring auditor, right? You put your UDIN on communication. He is giving NOC, right? He may also put UDIN on NOC. So that's their choice. Okay, UDIN. But better you communicate with UDIN. Able to understand, better you communicate and ask him also to give UDIN. That's it. Further, suppose we communicated, we sent a registered post with acknowledgement due, but office was locked. We assume that it is deemed to be delivered. Sir, the address is there, right? Registered address. Office itself is not there, sir. It is deemed to be delivered. That's it. Easy. Clause number 8 is over. Once again repeat it, you will understand. Under clause number 8, very simple. You just have to get NOC. That's it. Next. Then we have clause number 5, 6, 7. Once these 3 clauses are completed, entire this part number 1, schedule number 1 is completed. Okay. Then what 5, 6, 7 clauses are talking about? What clause 5, 6, 7 is talking about? Clause 5, 6, 7 is talking about what? Clause number 5. Prohibition on securing professional business. What is it? A CA, you are treated as guilty of professional misconduct if at all you are securing professional business through some other person who is not an employee, who is not a partner. Indirectly, what are they saying? Suppose if my employee is bringing a client, I can take it. If my partner is bringing a client, I can take it, provided, again here, one implied assumption. They are bringing your client, they are bringing you the client by following advertisement guidelines. Your partner is bringing the business by following council advertisement guidelines. It should not violate of clause number 6 and clause number 7. Or if at all CA is securing business by means not open to a chartered accountant, then you are treated as guilty. If at all you are getting clients through some non-employee, non-partner, if at all employee partner is bringing, no problem. Other than employee, other than partner, if somebody else is bringing you the clients, some agent you appointed, an agent you appointed, a marketing agent you appointed, if at all he is bringing you the clients, you are treated as guilty. Or you are getting a clients by means not permitted. What is a mean which is not permitted? For example, as a chartered accountant in practice, I should not do YouTube videos and gain popularity, and get clients. Practice related YouTube videos and all, I'm prohibited to do. Don't say me, sir, but so many videos are there on YouTube, many CAs and all appearing. They are saying CAs, phone numbers, everything they are giving. Reality is different, theory is different. For you should write only this answer in exam. Okay, we are discussing entire this ethics for your information, students. We are only discussing this from exam point of view. Reality is different. Okay, I know, I hope you know the reality. You are all articles, right? You might have seen already so many incidents. Okay, so that's a different story. Next, the institute ultimately objective is what? You must seek professional work with talent, skill and reputation. Canvassing is prohibited. Canvassing is strictly prohibited. That's it. This quote and all is too much. It's like a double meaning quote. Okay. Fine. Next. Clause number 6. Prohibition on solicitation. So clause number 5 says what? By a non-member, non-partner, you should not get a client. By means not open to CA, you should not get a client. Indirectly, what are the means not open to CA in clause number 5? Clause number 6 is talking about that only. Clause number 7 is talking about that only. What clause number 6 says? Clause number 6 is saying what? prohibited. Chartered accountant is prohibited from soliciting the clients through circular, advertisement, personal communication, interview, or any other means. Any other means means what? Website, e-commerce, third party platform, so many means were there. Yes or no? Interviews, conferences, these are all other means not permitted. Whether you call it a circular, advertisement, personal interview, any means is not at all permitted. And remember, you can happily request exceptions. You can happily request from another CA in practice the work. You can even respond to tenders. Remember, you should not call the prospective client and say that I am a CA, sir, I can offer. You should not offer. Sir, they called you, you can respond. Sir, a company opened a tender, sir, they openly gave a public notice, tender. Can I at least respond to that, or that is also prohibited? Prohibited. If at all that work is exclusively reserved for CAs. You know, I'll show you. Wait. Tender guidelines. Tender guidelines. Original rule. Member cannot respond to tenders which are exclusively reserved for chartered accountants. Array, that work can only be done by CS. For example, a company gave a public tender stating we are looking for statutory auditors. Okay, whoever is interested can make application to this. Array, that's the only work reserved for CS. You should not. He should approach you. Suppose no, the fees is clearly prescribed. The fees is clearly prescribed in the we are looking for chartered accountants as a stat auditors where the fees is with 10 lakhs plus 2 lakhs allowances. 12 lakhs. Fees is fixed already. Now you can respond. Suppose his fees is not fixed where negotiation will take place. There you should not respond. Suppose a company posted a public notice. We are looking for internal auditors. The following candidates can apply. CS with practice, cost accountant, company secretary, MBA finance. Oh, this is not exclusively reserved for CA. This you can respond whether fees is there or not. The tender is open to any other professional. So tender document you can respond if it is exclusively reserved to CA provided fees is quoted. Sir, the tender document, no, the tender is for anybody, sir. Anybody can respond. Then you also can respond. That's open. Company only openly posted. Yeah, that's an open offer to you also. So you can respond. Without company posting an offer, it may be a public offer or it may be a private offer to you. You should not go and approach. Either some private offer must be there to you or a public offer must be there to you. A public notice or privately they would have requested you. Then you can respond. You can't voluntarily on your own go there and then request them, sir, I'm an auditor, I have so much of experience. No, you should not do that. Next. And you know, further in tender guidelines, this is actually continuation. Within the tender guidelines regarding EMD security deposit is there. In EMD, the council does not interfere with EMD or security deposit unless there are complaints or exorbitant deposits. Generally, we have one practical question. We have one practical question. In the question bank, if you go and check, you will find it. You know, EMD security deposit is accepted in non-audit services generally. Non-audit works only. Generally, if the work is not reserved exclusively for CSO, and if a government organization want to give you one service and they want an EMD, earnest money deposit or security deposit and all, we give only in case of non-audit services, not in audit services. That was actually the original council guidelines. Okay, in that particular practical question, it is there in the question bank you can find. And you know, you must maintain cost sheet, you must maintain details of persons involved, and the cost sheet must be made available if the institute is asking for any information. If at all institute is asking any information and you did not maintain the information, you fail to supply the information called by the institute, you are treated as guilty under part number 3 clause number 1. Failing to respond to the institute, you are treated as guilty in part number 3 schedule number 1. It's a professional misconduct by members generally, that there you will be punished. Fine. Next. Can I see a published books and articles? Absolutely, you can mention. You know, you can mention that you are a chartered accountant. Even firm name can be included. You see, now this is the culprit point. This is one, you know, culprit in the sense, some places they will say firm name can be included. At some places they will say firm name cannot be included. I will show you where firm name cannot be included. Sir, can a CA give greeting cards, invitations, like he's going for, he's having a marriage, sir. He want to distribute marriage cards to family members, friends, relatives, all that. Can he? Absolutely. In that, you can even use the word designation. Even firm name can be used. No problem at all. Yes or no? Okay. But remember that greeting card, marriage invitation, ceremonies and all, you can only give to clients, relatives, friends. Publicly, you should not distribute. On an open social media channels, you should not post. I know. You might have seen your friend is posting about his marriage, all that's practicing CA on social media. We can't do anything. That's why I told reality is different. This is different. Next up. Can a CA advertise celebrations? No. However, Silver jubilee, golden jubilee, diamond jubilee, all that, no, it can be published in a newspaper where it's only a statement of fact. Next, can I see a sponsor in sports event, cultural events? You should not. But ICI will organize some events, right? That you can sponsor. You know, in that, no, individual name, CA member name can be given, but firm name or CA logo cannot be used. You see why? Are you know, like you see in a book, no, that you are publishing, which is open for everybody in the market, there your firm name can be used. Whereas within the institute I am sponsoring, you know, institute means institute organizes cricket. As a CA in practice I am sponsoring. There I should not use my firm name. What is the logic? That's a problem. This kind of inconsistency. See, now I will tell you the logic. These are all not rules, man. These are all not rules. These are various judgments given by disciplinary directorate, disciplinary committee, board of disciplines in various years in different scenarios. So is it 100% always true? Sir, I'm sponsoring one particular cricket event, sir, in ICI. I told branch manager of ICI particular, you know, council, regional council is organizing, sir. I only sponsor t-shirts, everything, entire that branch related, empire cost, everything, I only sponsored, sir. My firm name is also mentioned on the t-shirt, sir. They accepted it. Nothing wrong. Nothing wrong. What is given in the book is different from what really is done. In reality, it is permitted also. Technically speaking, ICI don't have any objection. Okay. This is a judgment based on one particular case where some other mistake also there. But that full matter, no, in the ethics book, they will not give full matter. That's a problem. That's a mistake in ICA book. These are all mistakes, technically speaking. But what to do? The same answer will be given in the suggested answer. That's the reason the same mistake we should also carry. Fine. I hope I told you enough reason clearly. If at all you did not understand why in ethics some inconsistencies were there, you please once again watch this particular last 5 minutes. Next. Sir, a new client is there, sir. He's asking me my firm profile, sir. Can I share it, sir? You can share. You can share. But don't share without he asking. Unless as a response he asked you, you are responding, that is permitted. Without he is asking, don't share it. Next, sir, in television and for some movies, no, we are we are the one who maintains it. The producer want to give our name also, sir. You know, he want to keep everybody's name, whoever assisted in the movie. Can he give about our names also? Yes. Just like how other names come, your name also should come. Your name should not come like a superstar, mega star, like that. Your name should not come like, you know, very big, you know, glowing lights. Special attraction should not be there. That's it. Next, all that is fine. And again, for example, another member, no, another your friend is there who is a CA. He introduced his client to you. You should not grab it. If at all that client approaches you, Are, I'm not satisfied with your friend. I want to come with you with, and I want to come, you know, to your, I want to become your client. You have to handle all the works for me. Like that he's saying. You should first get approval of that particular friend. You know, you should tell him that, sir, please inform my previous your previous CA is there. Please inform him. That's a professional courtesy for us. Then public interview. Can you give public interview? When you are giving public interview, do not publicize or do not highlight your achievements and all. Only response can be given. The interviewer asking something, you can, yes, you can just only give a factual response. And advertisement in box numbers. Very olden days, this box number culture is very popular. In advertisement, suppose in newspaper, one advertisement we give. What advertisement? Best CA firm in Chennai, best CA firm in Bangalore, best CA firm in Hyderabad. Okay, a best firm in South India having branches in 4 cities. Okay, is offering IT return services, tax audit services at 9999, 9,999 rupees only. Limited period offer. For details, contact box number, post box number 1519. Contact post box number 5559. Like that we mentioned, for example. Now, like anybody, whoever sees that advertisement, he will contact the newspaper company. Sir, there's some advertisement I saw. Then the newspaper company will share me. This concept is called as box number advertisement. That's it. Educational video. Can a CA in practice make educational videos? Absolutely, he can make, no problem at all. But you should not make reference about the firm where you are a partner. At some places you can say firm name can be given. Books and all I can give my firm name. Suppose I wrote a book, tax, income tax book. In that I can talk about my firm name, no problem. But when I make an education video on YouTube, I should not use firm name. What is this? In my marriage card, wedding card, everywhere I can use my firm name. At some other places I should not use. What is this? Now immediately some student, sir, class number 6 is over. Sir, what about website guidelines? What about some other guidelines, website and all? That and all we will discuss as part of council guidelines at last. Okay, we'll do one thing. Now itself we'll go ahead. Now itself. Why to delay? Okay. In the same book, come back to the last. Come back to the council guidelines. Just a minute. So yeah, council guidelines started. Council guidelines for advertisements. Okay, so there is a separate topic for us in our book. It is 20th concept in professional ethics topic. So can a member advertise through write-up? Yes, you can advertise. Write-up is a very old method, where write-up is an advertisement in a newspaper, where we simply mention one box. Inside that box, our name of the firm, who are the partners, brief details will be there. That's it. Okay, so write-up can be permitted. Write-up is permitted. Only thing is what, you should not use all this, do not include achievements, monograms, catchy words and all, not permitted. Write in such a way that does not bring disrepute. You should not contain, we are very good firm compared to many other CAs. You should not say that. Okay, you should not have exaggerated claims. So you, honesty and truthfulness must be there in the facts that you are disclosing. This is called write-up related guidelines. Okay, and font size should not exceed 14. All that is fine. What are the permissible contents of write-up? There is a discussion in ICA book, 129 pages are not required from exam point of view. So any 1 or 2 points which we skipped in this particular material, we gave a reference. We skipped it only because it is not required, unnecessary. Next, and by the way, remember, is in the professional ethics only like this it's there. In rest of all of the chapters, the goat notes, whatever the goat notes that I am using, rest all the chapters, 100% syllabus is covered. Even this also we covered literally 95%. Yeah, 99% we covered technically. Can a CA firm have a website? Obviously, no problem at all. But the website should work only on pull model. The moment I say best chartered accountant, my website is coming up. It should not be like that. It should only work on pull mode, but not a push mode. Pull mode means only when the member types full address name, it should open. Okay. Then website should not contain any solicitation. Okay. You have selected the right CA firm. Become our client. Experience, top-notch audit quality. That and all should not be there. Website address should not be distributed via email, bulk SMS to anybody. You cannot use circulars, ads. Web address, you cannot, website cannot be included. Of course, website name can be included on stationery, visiting card, all that is permitted. Sir, what are other things? Can I disclose client names and all on the website? Never. Required by only regulator. Suppose if a regulator says you must disclose, then only disclose it. That too, if at all you are disclosing because of regulatory requirement, see that it is only those requirements, whatever the law and regulation says, only those details you mention. Further, at the end, you must give a disclaimer stating that the disclosure is because of the requirement of so and so regulator. Getting it? Then the website can contain passport photos of the partner. You should not contain partner went to do some foreign trip, foreign photos, family member photos. No, you should not contain. It may include details of articles, professional updates, bulletin records, education videos, all that. Chat rooms can also be provided, but maintain confidentiality. You can maintain your you can link your website to social media pages like Instagram and all. I can link my website, no problem. I can give online advices also if at all a client is requesting. Okay, no banner ads in the website and all. Google ads and all should not come. Very important. Okay, it must reflect dignity of the profession. However, link to ICA, regional council, income tax law, all that can be given. Yes or no? And website information must match with ICA records. ICA has whatever data about you, the same should be there. And website should be close to firm's name. That's why many of your firm's name website you see BSR & Co. For example, bsr.com, bsrandco.com, like that will be there. Okay. Can a CA register on a third-party platform like Urban Company? Of course, right now Urban Company does not allow. Just like Amazon and Flipkart, some service-related apps were there. Can I register? Prohibited straight away. Sorry. That is regarding aggregator model. Yeah, application-based service providers aggregator. Can I see a register in an aggregator? No. You cannot. You cannot register. Members cannot list themselves where other categories of businessmen and all were there. Sir, for example, there is an app, sir, which is only exclusively for CS, sir. ICA has not yet given any guidelines on that. That's it. Next. Now, can a CA provide services in a third-party platform? For example, Clear Tax, Taxman. There are many other consulting websites were there. In that, some expert advice will be given. Like any public, if they have a doubt, they can open that website and then make a request about the doubt which they have. Experts will reply. That's what the advertisement will be. They don't say chartered accountants will reply. They won't say that. Are you getting it? Sometimes, suppose a CA is replying. Suppose you are replying from back end. You are replying. you can mention your name and designation that you are a chartered accountant. I think that can be mentioned. Okay, but contact address of the CA should not be provided. Phone number cannot be provided. Website, your website address and professional achievement cannot be provided. Getting it? And the name of the chartered accountant firm would not be permitted. Firm name can be permitted. You can state that you are a chartered accountant, no problem. That's it. Okay, next. Sir, can I publish about my firm name, my name in a telephone directory, all that? Absolutely, yes or no? So, but it should only come under CA's section in the directory. Okay, and the telephone directory must belong to the same city where you are actually practicing. It is listed alphabetically, and your name should not stand out. Okay, especially all that. Next, directories for limited circulation, that is a normal thing. Can I publish name and address in advertisement? Okay, yeah, you can advertise for recruiting staff for your own office, or on behalf of client you're recruiting staff. For that also you can advertise, or for sale of business or property where you're acting as a trustee, liquidator, receiver. In that case also you can do that. In all cases, no, it should not be prominent than usual. If you're requiring articles, it should be like a classified simple advertisement. Okay, member's name or firm name should not appear in bold type. Firm name can be there, but bold letters, highlights and all should not be there. Next, you should avoid phrases like a well-known firm, all that. You should not include any promotional content. That's it. Advertisement guidelines are completely done. Now let's go back to clause number 6. Now let's go back to clause number 6. Yes, sorry, clause number 7. Clause number 7. Sorry. Once clause number 7 is over, so part number 1 will be over. Major ethics syllabus will be over. Then we'll be left with very few topics. Very few topics. Yes. Just a minute. So, just 1 minute. I'll have water. I hope you are able to get more clarity on ethics. Another 1 hour will wind up this ethics chapter. Yes. And clause number 7, that is also linked with the 6 and 5. Remember, when 6 clause is applicable, 5 and 7 most of the times applicable. Very simple. 6 is applicable when you're doing something that is indirectly a solicitation. Clause number 7 is specifically applicable especially when you are advertising professional attainments, or when you're advertising the services that you offer, or when you're using designation other than chartered accountant on professional document, visiting cards, whatever. But remember, you can mention a degree from a university, membership of ICO, of course mention, or any other institution related membership which is recognized by central government, that can be mentioned. And remember, a member can mention as insolvency professional registered valuer on all professional documents along with chartered accountancy designation. I already told, section 7. Write up related is already discussed before. Prohibited designations, it's a very simple thing. Corporate lawyer, nothing, you can't use anything. Next, very important, foreign qualification. Can a member mention titles of membership of foreign institute? Generally, many students think that I can mention, many students think that we can mention any qualification. No, only 3 foreign qualifications you can mention. SAICS, South African Institute of Chartered Accountant, CPA Ireland you can mention, and Institute of Chartered Accountants of England and Wales, ICAEW, that you can mention. Next, you should not mention date of starting your practice. You can mention year of starting the practice on this one, letterheads, website, all that can contain year of setting of practice. Next, just a minute. Yeah, hello, yeah. Next, now, can a member practice as a company secretary or cost accountant? If at all they permit you, yeah, you can practice. Get permission from ICA, get permission from them. You can practice everywhere, and even then you will be considered as full-time practice under ICA. not an issue. Okay, then can we give a notice about examination success of our article students or employees? Yes, you can give, not an issue. Okay, but undesirable publicity you should avoid. Press notices about individual examination success should avoid undesirable publicity. Undesirable way you should not. You can give a basic notice that, you know, we congratulate our article so and so. A well-known firm is congratulating article, that is not permitted. Okay, you can include basic candidates like candidate name, examination passed, what is the price, firm name, town, that's it. Then can a CA appear on electronic media, social media, all that? Yes, absolutely, you can use, not an issue. You can give lectures also, you can even describe that you are a chartered accountant, you know, but generally firm name should not be used. You should not even make exaggerated claims. Next, publicity for appointment and views. Publicity is allowed for appointments to important position, views on important matters. Members may mention their membership. Here you are getting publicity for the institute and its members. Firm name should not be referenced. For example, no, our firm partner was recruited by one central government body. In SEBI, he became a director. By recognizing his service, government gave Padma Shri, or government gave something, and I want to congratulate him. Here I want to publicity. I want to do some publicity. You can do, which is something good reputation to the profession. Again, it should not be like an advertisement of your firm, should not be there. It should be like, we chartered accountant fraternity should flourish because of the advertisement. So that way you can do, not an issue. Next, can a CA organize training courses for staff, client staff, all that? You can conduct. Okay, but but you should not give undue prominence to their name in the related booklets and documents. Can a CA write articles in a newspaper, all that? Absolutely, you can even describe that you are a chartered accountant. Sometimes even firm name is also allowed, not an issue. Signboard. Sir, can a CA have a name board outside the office? Big name board, I want to be very big flexi. Not permitted. Okay, members can use any color, good taste when deciding the size of the signboard, but it should not be too aggressive. Glow signs not permitted. Name board, no, with a chartered accountant, that is allowed. Yeah, allowed. At firm name you can mention happily. At residential place also you can mention only chartered accountant. Firm name should not be there at residential place. We already know this. Then, you know, you are a director in a company, and the company, you know, is publishing a prospectus about prospectus, in that they are including your name, and they are also mentioning that you are a chartered accountant. You know, see that good judgment is used, and request approval before, you know, you tell that the company that, dear company, before you publish a prospectus, get my approval once, show me how you are including my name. Okay, because the firm name and all should not be included in the prospectus. My firm name and all should not be included. I'm a director, you just mentioned, and you can also mention that I'm a chartered accountant, no problem. Next, CA firms, no, you can register with a network. Logos, we have a logo related guidelines, council guidelines is that there will discuss in depth about logo. Okay, here I didn't discuss logo because already in depth discussion is already given. And remember, CS cannot use any logos, you know, which are to ensure compliance. Logos, monograms, display materials are prohibited. You cannot use any logo. Yes or no, that's it. And what are the common CA logo? You can have a common CA logo, no problem. What is a common CA logo? We will discuss in the council guidelines. Appa, that's it. Part number 1 completed. You know, part number 1 completed. So what is part number 1? 1, 2, 3, 4, 5, 1, 2, 3, 4, 12, 11, 10, 9, 8, 5, 6, 7. These are the classes we completed, clauses. So what is clause number 1 says? A CA in practice is guilty if at all. Okay, let me do one thing. Why to waste time? First let us finish remaining points, and then we will do a mind mapping, clause number, all the tree collection. Next, directly I'll move to, if you remember part number 2 I already completed, part number 4 I already completed, just part number 3 is pending. Part number 3 alone is pending right now in schedule number 1. Part number 3 is pending. What is part number 3? Guilty of professional misconduct. Yeah, professional misconduct for members generally. Professional misconduct for members generally. So what is this? A member, no. Yeah. A member, no. A member of the institute, whether in practice or not. You are actually not a FCA, but you are showing as an FCA to the public. You are treated as guilty. Actually, we have already saw this point before. A person who is not a member but showing himself as a member, a person who is not in practice but showing himself as a practice, 1000 rupees penalty first time, 5000 second time. Their guilty is not there, technically speaking. Okay, but that will also be treated as guilty under schedule number 2. I will discuss later. Next, you know, so here what is this clause number 1 is talking about? Actually I'm not in, I'm in practice, I'm an ACA, or I'm not in practice, but I'm showing to public as an FCA. I am not an FCA, but showing as an FCA. Clause number 1, part number 3, schedule number 1, violation. Then next one, clause number 2. Sir, ICI, Institute Council, committees, disciplinary directorate, quality review board, appellate authority, board of discipline, disciplinary committee, they are calling for some information, sir, but I'm not giving. I am not supplying the information called by them. You are treated as guilty. Remember, you are only not supplying. You are not supplying. Suppose if you give wrong information, false information you supplied, then it is scheduled to clause number 3. I think clause, just wait a minute. Just wait a minute. You know, generally I will discuss this there. You know, if at all you are giving wrong information to ICI, then that's a schedule to offense which is even more severe. Schedule to offense even more severe. There I will connect you. There I will connect you. Now look at this. So what are the council decisions? This is nothing. This is not a big deal. Okay, this is not a big deal. Giving false information. Sir, I am giving false information. Sir, just now you said false information schedule to false information to ICAI Institute, all that, yeah. Okay, here I'm giving false information to others. Here we are giving false information to others. So others means what? A member shall be treated as guilty if at all he is providing knowingly any false information, while asking work from another CA, while responding to tenders, or while advertising through write-up, or information you are giving something you know that it is false, so you are misleading people, then you are treated as guilty under clause number 3 of part number 3 of first schedule. That's it. Entire this particular schedule 1 is completed. Now I will discuss schedule 2. I will discuss schedule 2. By the way, part number 3 has 3 clauses. 1, you are not an FCA but acting as an FCA, guilty. Part number 2, ICA is calling for information you are not giving. Part number 3, you are giving wrong information to others. Now let's look at part number 2. Okay, part number 2. This is part number 2, schedule number 2. Members. A member is treated as guilty if at all you are failing to comply with the CA Act and any regulations thereunder. If at all you are not complying with the Act and regulations, you are treated as guilty. Suppose I open a branch office. After 50 kilometers, I didn't appoint a separate in charge. Naturally, CA Act is violated. Clause number 1 will apply. Part number 2 of schedule number 2 will apply. You know what? Any offense you do, schedule 2 will attract. Any offense you do, all these days, I don't know how many of you have this clarity. Any mistake you do in CA Act, any mistake, sir, I did advertisement, sir. Clause number 6 violation, part number 1, schedule number 1. Not only that, you indirectly violated clause number 1 also, because that's a violation of CA Act and regulations thereunder. So if you're violating with CA Act and regulations thereunder, naturally clause number 1, part number 2, schedule number 2 also will attract. Write this also in exam. Whenever you are writing, which means every guilty case, other misconduct, a professional misconduct, branch office provision, or some other provision, a COP provision, doesn't matter. Any guilty case, naturally schedule number 2, clause number 1, part number 2 will apply. Mention that also in the exam as an additional point. In one of the question in ICA book itself, they gave this particular reference. One actual clause, some clause number 11 is violated, but they also mentioned clause number 1 because you are failing to comply with CA Act. So better you write this part number 2, clause number 1 in every guilty case. This, I think many of you don't know this. If at all you discovered this point for the first time, give me appreciation, like, just comment it. Okay, I'll be happy to see. Next, remember in part number 2, in schedule number 2, part number 1, there is one first clause is a schedule 2. We have not yet started part number 1, schedule 2. Okay, in that clause number 1, that talks about confidentiality for practicing CS, whereas part number 2, clause number 2, part number 1, clause number 1, part number 2, clause number 2, this is talking about confidentiality by members in employment. Suppose you are a member in employment, you also have to maintain confidentiality. That's it. Then, however, if at all you are leaking, you are giving company data to third party, employer data. If at all consent is obtained, no problem. Okay, this clause follows principle of agency. Very simple. You must keep information confidential. Remember, I told you one point. Clause number 3. What is this? If you recollect once, schedule 1, part number 3, clause number 2, clause number 3. Fails to provide information to ICAI. False information to others. These are all schedule number 1. Whereas here it is what right now, part number 2, clause number 3, schedule number 2. What is this talking about? False information to ICAI. Sir, if you are giving false information to ICAI, schedule 2 of it. They are asking information, you are not responding. Schedule 1 it is. Okay, so schedule 1, part number 3. See, failing to give information. No, it may be a member in practice or may not be a member in practice. So automatically part number 3 will apply. Yes or no? You did not mug up. It is part number 3. Part number 3. In that, clause number 2 is talking about failing to give information. Clause number 2 is talking specifically about failing to give information to ICAI, giving false information to others. Whereas schedule number 2 talks about giving false information to ICAI. Sir, I am giving false information to ICAI, sir. Schedule number 2. False information, who will give? Only practitioners can give. Members cannot give. Anybody can give. So automatically part number 2. And giving false to ICAI means it's a professional activity. So automatically part number 2. And part number 2 has 4 clauses. First clause is talking about, what is the first clause? Failure to comply with CA Act. Second clause is talking about employees. Third clause is talking about giving false information to ICAI. That's it. So giving false information to institute, council, committee, board of discipline, you are treated as guilty. And yeah, here they have given some points. Here they have given some points. Okay, here one of the member failed. A member made a false statement. Said, this particular clause number, this particular clause number 3, part number 2, schedule 1 apply. A chartered accountant claimed to be a partner. Okay, he claimed, which is a false claim. Automatically clause number 3, part number 2, schedule number 1. Failed to reply to institute in spite of reminders. That is also treated as guilty under schedule 2. But actually first clause might apply, because here you are failing to give information. So according to me, it is first clause. Here it's a wrong point which is given. And you received money of the client. You defalcated. Embezzlement of the client money. Disrepute to profession. If you do defalcation of money received, no, it might also attract schedule number 1, part number 4, clause number 2, bringing disrepute to the profession. That's it. Schedule 2 also majorly over, except part number 1, which has 10 clauses. If those 10 clauses are completed, we will do one brush up of all this 34 clauses. Then we'll go to council guidelines. Only important guidelines I will cover next. Okay, now schedule 2, first part. I will briefly discuss this. No much complication. First part, a CA in practice, guilty of professional misconduct if you disclose information relating to client. Exception, consent of the client is there, no problem. Required under law, compulsory to disclose, no problem. Or you have a duty to disclose with the peer reviewer all that as part of standards complaints, no problem. Can a CA disclose working papers? You don't have any duty, but you may give portions thereof to others. That's your choice. Then if there is a legal compulsion, you can disclose. Legal requirement is there at that time and all, you can disclose, no problem and all. Okay, then can you hide unlawful act? Your client made some non-compliance with law, severe non-compliance. In the law, you don't have any duty to report that. Then you can be quiet, no problem at all. Then fraud reporting, if at all, if there is a duty for you to report fraud, ignore confidentiality, report to central government. That's it. Clause number 1 over. Clause number 2. What is clause number 2? You are guilty of professional misconduct, a CA in practice. By the way, schedule 2 part 1 is only talking about CAs in practice. A CA in practice is treated as guilty of misconduct if at all you are certifying or reporting on financial statements which are not examined. You didn't examine, you are certifying. Array, without examining, how will you certify? Which are not examined either by you or your partner or employee. Technically, your partner, if they review and you sign it, not an issue. If your employee verified it, you again should review. SA 220, the engagement partner must and should review documentation of the engagement team. if at all your employee verified, okay, and you didn't review, that amounts to gap, clause number 9 violation in the same schedule, part number 1. Okay, fine. Another CA in practice, nothing but for example joint audit is there, for example, by the way, another CA means here joint audit discussion. I mean, except joint audit means, see, in joint audit, no, I will verify financial statements. For example, I'm certifying balance sheet P&L, but full balance sheet I didn't audit. Joint auditors have audited major amount, for example. Okay, does it mean I'm signing a report without examination? No, no, no. So this clause do not apply for joint audit cases. You can't apply this clause and say guilty. That's it. Next, and a CA is prohibited if at all you are allowing your name appearing on a report that is dealing with earning estimate like projection and forecast. You are prohibited to give your name on projections and forecast. However, exception is there. You are not guilty if you clearly mention source of information, if you clearly mention forecast and assumptions clearly, and a fact, you clearly mention that I don't know whether they are really achievable or not. I did not verify, I did not vouch their accuracy. You mentioned these 3 points, then you're not guilty. Then clause number 4. A CA is guilty of misconduct if at all you are expressing opinion on financial statement where you or your firm or your partner has a substantial interest. Obviously, self-interest threat, simple. Here no, members' independence. So what is members' independence? Members should interpret independence more strictly than law. That's what I told. Sir, my grandfather is a director in a company, sir. Relative is not there in the relative definition, does not cover grandfather, sir. So can I accept the audit? Understand the law. You interpret strictly than the law. Principles you should interpret. Independence has to be interpreted beyond the law. Yes or no? So avoid situations where your independence will affect. Avoid situation where there is a conflict. Maintain independence. Applies to all latest functions. So what, how do an auditor has to check? Very simple. A CA is prohibited to accept audit of any entity where he or his partner or his firm has substantial interest. Give you examples which a CA has to consider to check his independence. Straight question might be asked 5 marks. I don't know how many of you observe this kind of answer. Next, the remaining are not that complicated. Okay, you can read them, not an issue. You please remember, this marathon is only a guidance purpose. Okay, whatever I am, many points I will not be covering because of the time constraint, all that. You should not be ignoring them. You should cover 100%. I am giving you major guidance. Now it is your turn to read after finishing this particular marathon. Then, failure to disclose a material fact known to a CA. Nothing but, something is not disclosed in financials. A material thing, I'm auditing company financials. Financials are omitting something. Non-disclosure means what? It's a material misstatement. And what happened? You know that something is missing, but you also did not report it. A CA is treated as guilty if at all he fails to disclose a material fact known to him that is not disclosed in financials. You're treated as guilty. And exception, if at all the financials are prepared for internal purposes, third parties and all is not affected, no problem. Remember, often many students do not have clarity between schedule 1 and schedule 2. Schedule 1, if you see, I should not advertise, I should communicate with previous auditor, I should not charge fees like that, I should not allow somebody to use my name, to whom I can share profit, who can use my name, whom I can let to sign on my behalf. This is about your way of practicing, how you can practice. Schedule 2, you see, client information you should not leak. You should not certify financials without verifying them. If at all you certify, many people will affect. If at all something is wrong, many will affect. You should not give projection. If at all based on your projection banker give a loan, they will lose money. Clause number 4. Yes or no? So again, clause number just a minute. Yeah. So I mean, yeah, you should not sign projections. What is the purpose of why you should not sign a projection? If at all you sign a projection without clearly mentioning all the assumptions and all, without clearly mentioning all the facts, banker might give a loan to the company, and which company might default, and you are prohibited to give opinion on a company where you are having substantial interest, and you should not disclose client related information too. You should not disclose client related information. I mean, something is missing in financial statements and you know it, and you are silent on it. A CA is treated as guilty if he fails to report if he fails to report a material fact known to him which is not disclosed in financial statements. You are treated as guilty. Clause number 6. You are again treated as guilty if you fail to report a material misstatement in financial statements known to you. Sir, financials are having a material misstatement. You know it, but you didn't report it. You didn't give a modified opinion. Why? You are treated as guilty. Remember, misstatement definition includes non-disclosure. If clause number 5 and part number 1, schedule number 2 apply, naturally clause number 6 also will apply. Please make a note. Further, clause number 7. What is clause number 7? I'll come back to clause number 7 at last. Clause number 8. You are treated as guilty of misconduct if you fail to obtain sufficient appropriate which is necessary for expression of opinion. You gave an opinion, but when we see your documentation, you didn't gather evidence. Without obtaining evidence, you gave an opinion. You are guilty. Indirectly, without examining the financial statements, you are certifying. So if clause number 8 attracts, generally clause number 2 also attracts. And if both clause number 2 and 8 or any of this clause attracts, without examining, how did you? Without getting evidence, how did you sign? How negligent are you? Clause number 7 also will attract. Gross negligence. Then clause number 9. You failed to comply with the gap when you are performing professional works. Failed to comply with gap means what? SQC you failed, SES you failed. When you are performing works to clients, no, you failed with standards on auditing, standards on review, something. You didn't follow standard, you didn't follow SQC, you didn't follow generally accepted auditing principles. For example, no, for listed companies, SEBI mandates peer review certificate. Peer review certificate must be there for the firm. Without you having peer review certificate, you accepted SEBI audit, listed company audit. You are straight away treated as guilty under clause number 9 because it's a gap violation. It's a gap violation. So, what constitute gap? You can find it on engagement and quality control statements and guidance notes, all that. Then, so a CA is treated as guilty if at all you are accepting an audit without complying, without checking compliance with the gap. And finally, clause number 10. What is clause number 10? If at all client is giving you money for depositing income tax, for paying to ROC, for paying to GST, all that, you should keep that money in a separate bank account, must and should. Amount received from client must be kept in a separate bank account and shall be utilized only for the purpose for which is used. Only one exception, if at all you are spending it in a short amount of time, no problem. Otherwise, keep it in a separate bank account. Suppose, sir, client paid me money, sir, that's my fees, sir, that's an advance, sir, then this clause will not apply. Money received for expenses to be incurred in a short amount of time, no problem. Money received by you as a trustee or executor liquidator, no problem. Actually, even as a trustee liquidator, if you're getting any money, no, that also should be that also should be kept in a separate bank account. That's it. Fine. So technically entire all the clauses in ethics is over. Finally, one clause is there, clause number 7. What is clause number 7? Is talking about gross negligence. A CA is deemed to be guilty of misconduct if at all he does not exercise diligence or he is grossly negligent. You are grossly negligent. You are not exercising diligence at all. You are deemed to be guilty of professional misconduct. Now, technically, just like you, I also forget naturally the clause numbers. But let me try right now what are all the clauses that we covered. Then we will go to council guidelines. Okay. Now we will go to council guidelines. Now, schedule number 2. Okay. We will see. We will try my level best. Okay. Yeah. Because I'm doing at the night almost this particular video. I'm doing at night 11 o'clock. I hope my brain will be sharp. Yeah. We'll see. We'll see. Not an issue. Next. Part number 1. Schedule number 2, which is applicable for CAs in practice. Clause number 1. What is clause number 1? Is talking about confidentiality. A CA in practice is guilty of misconduct if at all he discloses client's information without his consent or where there is no requirement in law. Clause number 2. Without examining you have signed, you have given a report, you have certified financial statements without examining by partner or employee, guilty. Clause number 3. Clause number 4. Clause number 4. A CA who has a substantial interest in an entity and if you certify that entity financial statements, you are guilty. You are signed projections, forecast and all that, you are treated as guilty. However, you are not guilty if at all you mention assumptions, basis of information, fact that you did not vouch accuracy. Clause number 5. You know a material fact, okay, and that fact is not disclosed in financials and you failed to report this, you are treated as guilty. Clause number 6. You know a material misstatement in financial statements. You know that there is a mistake in financial statements material. You know it and you failed to report it. Clause number 7. grossly negligent. You are not at all careful. You are not exercising diligence when you are performing the work. You are grossly negligent. Clause number 7. Clause number 8. Without obtaining sufficient and appropriate audit evidence, if at all you are reporting on financials, guilty. Clause number 9. Clause number 10. Failure to comply gap. Failure to comply with the gap, you are treated as guilty. Clause number 10. Client money should be kept in a separate bank account. That's it. Further, part number 2, schedule number 2. Thank God, all the 10 clauses I'm remembering. Okay. Clause number 1, clause number 2, clause number 3, clause number 4. Clause number 4, defalcation of money. Clause number 3, false information to ICAI. Suppose you are failing to inform. You are failing to inform ICAI. Then it is clause number 2, part number 2, part number 3, schedule number 1. Sir, I am giving false information to others, sir, not ICAI. Then clause number 3, part number 3, schedule number 1. In schedule 1, part number 3, only 3 clauses were there. What is the clause number 1? You are not a fellow, but acting as a fellow. Over. Schedule 1, 3 clauses are over. Mapping done. Then now schedule 2, part number 2, clause number 1, clause number 2. Clause number 2, employee CA disclosing, sorry, not this. Yeah, correct only. Employee CA disclosing confidential information of the employer to third party without his consent. Clause number 1, CA Act regulations, you are failing. That's it. 10 over, 4 over, schedule 1, one part is over. Now part number 3, by the way, yeah, it's okay, fine. Part number 3, imprisonment exceeding 6 months, you are treated as guilty. Court or civil court or criminal court, whoever it is. Okay. Then now we will discuss schedule number 1. Schedule number 1, just now I showed part number 3 over. Part number 4, other misconduct. Okay, so inside that clause number 1, clause number 2, up to 6 months imprisonment, you are bringing disrepute to the profession, clause number 2. Correct? Next, okay, part number 3, part number 4 over. Part number 2, schedule number 1. This is applicable for member in service. Clause number 1, you are allowing to pay your salary portion to somebody, a job consulting company like that, guilty. You are accepting referral fee and all from lawyers and all of the company. You are an agent. You are prohibited to accept. Guilty. Clause number 2. You are accepting as an employee. Over. Then, part number 1, schedule number 1. We have totally 12 clauses. Clause number 1. A member is deemed to be guilty if at all he is allowing somebody to use his name. However, you can allow somebody if at all he is a partner or member and practice. He's in practice and is associated with you as a partner, or he is an employee of the CA firm. They can use your firm name, no problem. Clause number 2, a CA is prohibited. A CA is treated as guilty if at all he is sharing his fees to somebody who is not a member. Exceptions, another member, another CA, a recognized body, recognized qualification, retired partner, legal representative, sale of goodwill, all that I hope you are able to recollect. Clause number 3, a CA is prohibited. A CA is treated as guilty if at all you are accepting any fees or profits from non-members. However, exceptions were given, no problem. Clause number 4, a CA is prohibited. A CA is prohibited to form partnership with anybody else. However, you can form partnerships with another CA in practice, a member of recognized body, a member having recognized qualification, all that you can form. Provided right now multidisciplinary firm guidelines are not yet given, therefore it is not permitted. Clause number 12, a CA in practice is treated as guilty if at all you are allowing somebody to sign on your name, on your behalf. If at all you allow somebody to sign on your behalf, you are treated as guilty. However, routine correspondence and all, no problem. Clause number 11, a CA in practice is treated as guilty if at all you are engaging in any additional occupation and all, you are guilty. Clause number 10, a CA in practice is treated. Clause number 10, a CA in practice is treated as guilty if at all you are accepting fees as a percentage of profit, or you are accepting fees which is contingent or based on a finding, you are guilty. But exceptions, so many were the liquidator, settler, trustee, valuer for direct taxes, yes or no, and you are providing some non-assurance service to non-audit client, non-assurance to non-audit, no problem. You are providing Yeah, that is non-assurance to non-audit. Insolvency professional, he can charge, no problem. Yes or no? Clause number 9, a CA in practice is treated to deemed to be guilty if at all he is accepting an audit of a company without checking provisions of Companies Act. Clause number 8, a CA is treated as guilty if at all he is accepting the audit without first communicating with previous auditor. Then clause number 5, 6, 7, a CA in practice. Clause number 5, if at all you are securing professional business by through a person who is not your employee, through a person who is not your partner, guilty, or by means not open to you. What are the means not open to you? 6 and 7 talks about. Clause number 6, a CA is soliciting any client through circular, advertisement, promotion, by any other mean, you are guilty. Clause number 7, a CA is securing business. A CA, no, he is advertises to secure professional business. Yes or no? To secure business, he is doing advertisement, or he's publishing his achievements and all, or he is using some other designation to attract people other than chartered accountancy. You are treated as guilty of professional misconduct. That's it. All 34 clauses I revised. Now here, where you will generally have a confusion, clause number 2, yeah, clause number 3, which part number 3 of schedule number 1, part number 3, members generally. Schedule 2, part number 2, this is also members generally. Here clause number 3, here you are giving false information to ICAI. Remember, you are failing to give information to ICAI. That is schedule 1. False information to others. That is schedule number 1, part number 3, clause number 3. Again, in part 2 schedule 2, there is a one clause called clause number 1. Fails to comply with the CA Act. So these are all the cases where CA Institute is referred generally. Okay, be careful. Only these clauses generally people confuse. Again, schedule 2, part 1, clause number 10. Client money should keep separately. Schedule 2, part number 2, clause number 4. Client money you defalcated, theft, misappropriation. Both are dealing with money only. One is dealing with separate bank account, another one dealing with defalcation. That's it. All the clauses are over. Now let's discuss some important guidelines. Council guidelines we will discuss. I hope you thoroughly enjoyed until now. I hope you're clear on this. Okay. In this, only certain important guidelines I will discuss. You all know a CA has to maintain books of accounts, cash book, ledger, irrespective of his 44AA income tax limits. And a CA can accept how many tax audit assignments he can accept? 60 in a financial year. My dear, it is not per assessment year 60. Suppose 1st April 2024 to 31st March 2025. How many tax audit reports I can say in 60? 60 tax audit related units only I have to generate. That's what the meaning. 60 tax audit reports I can generate. 60 tax audit reports I can sign. Sir, out of the 60, 40 only belonging to 25-26 assessment year, sir. Remaining 20 belong to 24-25 assessment year. So, which means per assessment year can I send 60? No. Full year itself 60. Again, within the 60 count, if at all you're doing any audit because of presumptive section failure is done, income declaring lesser than presumptive, those audits will not be counted. Further, if a CA is if it is a firm of chartered accountants, 60 count is per partner. Further, one partner can sign on behalf of all other partners, no problem at all. Distribution, provided other partners are not signing there again. Then a similar requirement is there for company audits also. Company audits. How many companies a CA can do audit? Maximum 30. However, in this 30, 1% company and dormant company will not be counted. In case it's a partnership firm, then per partner having certificate of practice, 30 will be counted. And remember, under Companies Act, I hope you studied in your CA inter audit or CA intercompany law. A CA can accept, or a CA, by the way, this is 30 and all is there. When for per year? No. It is at any point of time. You shall not hold at any point of time. Right now, today you are practicing it. Today, how many companies you are having position of auditor? It should not be more than 30. As per Companies Act, it should not be more than 20. Sir, which one we should follow, sir? Both you should satisfy. Under Companies Act, private limited company less than paid up capital 100 crore not counted, small company not counted, 1% company not counted, dormant company not counted. Remember, in a private company, 4 companies are not counted. So if at all your existing clients were there, identify how many were there. As per Companies Act, it must be less than 20. As per CA Act also it must be less than 30. Both should be satisfied. Sir, any one act is failing, you should sacrifice the audits indirectly. Simple. Next. Then limitation on fees for other services. Very simple. This is applicable for, this is applicable for listed companies, government companies, PSU companies, or other unlisted public companies whose turnover is 50 crore and above. If at all you are acting as an auditor for these companies, your audit fees must be more than consultancy services fee. I told you, a CA who is an auditor for a company can also provide consultancy to them. No problem at all. But how much fees are you charging for consultancy? Sir, for audit, no. For audit, no. For audit, no. I am charging some 1 crore, sir. But for MCOS to the same company, I am charging 1.2 crore. Guilty. You are treated as guilty. You are violating council guidelines. It should be maximum 1 crore. Consultancy fee shall be maximum 1 crore. Your audit fee should not be lesser than consultancy fee. Self-interest threat, yaar. That's it. By the way, now when you are counting this fees, 1 crore audit fee, consultancy fee, when you are counting this, not only firm fees will be counted. Now CS are permitted to open consultancy company, right? Management consultancy and other company. You are permitted to open management consultancy and other company, right? That consultancy company is providing consultancy service to the client. How much fee they are charging, how much fee you are charging, firm is charging, both total it. Total fees for other services should be less than or equal to audit fees the firm is charging. More in depth about this, if at all my regular class or fast track students were there, I told in the class very clearly how this exactly works. Then again, network firm. This is for what? Just a minute. Again, for example, firm 1, 2, 3, 4. 4 firms were there, which are part of some network called KPMG. I have a client called TCS. This firm has one company also. Okay, some private limited companies there which is providing management consultancy and other services. Repeat this part. No, once you watch, if you do not understand this part, you repeat, watch again, you will get it. This firm one is providing TCS audit, stat audit, where they are charging 1 crore fee. This firm one plus private company, both of them put together also providing management consultancy and other services. Their fees should be maximum 1 crore. Fine. Very good. This we understood right now. Sir, remaining 3 firms are there, right? We call them as network firms, right? They are providing services to TCS, sir. What about this? They can provide consultancy, no problem, but it shall be less than or equal to 3 times of stat audit fee which is charged by firm number 1. Sir, firm number 1 is charging 1 crore, sir. 3 is equal to totally 3 crore. Maximum fees for other services that can be charged by network firms cannot exceed 3 crore. That's it. This is this particular information which I told, no, network firms, that is there in the network guidelines. Okay, that's it. Technically speaking, major portion I have covered here. Major portion I have covered. Now, sir, can a member in practice, can he be indebted to the company where he want to be an auditor? Prohibited. Of course, up to statutory limit. For example, in Companies Act, up to 5 lakhs is permitted, no problem. Sir, I am doing audit of a partnership firm, sir. In the partnership law, there is no limit, sir. Then 1 lakh limit is applicable. Can a CA receive fees on a progressive basis? Absolutely yes, no problem at all. Next, UDIN. UDIN, I hope, very easy topic. Guidelines for networking, I'll come back to it. Logo guidelines. Sorry. I hope you're all aware of it. The institute has brought something called a new logo, CA India, and blue color symbolizes creativity, integrity, knowledge, trust. Tick that indicates wisdom, value of the profession. India shows our commitment to Indian economy. You should not alter this logo. Same dimensions you must use. You can make a logo bigger, but dimensions, proposition should be same. That's it. Color palette also, the same colors you must use. You should not change the colors also. Then logo guidelines are over. Guidelines for corporate form of practice. Very simple. What is this? Can a CA be a managing director, whole-time director in a company? Yes. Which company? Management consultancy and other company. CS, firms, they can incorporate a company also. The same partners will be directors and shareholders. You can have 100% shareholding, no problem at all. that company should engage only in consultancy and other services, should not engage in any other activity. That too, that company must be approved by institute, name must be registered. Remember, you cannot practice in the name of the company, attestation and all. A body corporate is disqualified, no, in a company. Exactly. Next, ethical compliance. The company must also comply with clause number 6 and 7. The company cannot accept any internal audit, bookkeeping, 144 services where you are actually auditing or acting as an auditor. All that's it. The company can only engage in management consultancy and other services. Finally, one last topic, network firms. If this is over, ethics revision is over. Guidelines for networking. What is a networking? Network is nothing but a structure. Okay, it's a large structure aimed at cooperation. Okay, third party generally feels that all of you are related to one particular brand. That's how it's called as a network. What do you mean by a structure? A network is a structure is deemed to be a network. A group of firms is deemed to be a network when they're doing some profit or cost sharing. Common ownership is there, common quality control is there. Okay, common business strategy, most importantly common brand name, common quality control, sharing significant professional resources. These are most important points. So they may ask you a 4 or 5 marks question. What do you mean by significant professional resources? Means common systems they are sharing, common staff, partners and staff, technical department is there, audit methodology, training courses is there. How a network can be? It can be either a company, it can be LLP, it can be partnership firm. You know what? Network, no. Firms will use the word ENCO associate. Network can use only the word affiliates. And remember, a firm is allowed to join only one network. It may be Indian network or it may be international network. And again, multiple firms which have common partners, these firms, all of them should join again only the same network. That's it. Network name registration not required from exam point of view also generally, but we don't know. Considering the exam pattern now, anything can be asked, but that's an easy question. Ethical compliance. For the firm performing stat audit, it follows earlier guidelines. For other firms in the network, other network firms, they are not stat auditors of the company. The non-audit fee cannot exceed 3 times the stat audit fee. We know that. Just now we saw. Yes or no? Then network must establish bylaws. This itself can be asked as a 5 marks question. Like, what are the bylaws? Committee formation must be there, membership fee for the network, identify a partner, dispute settlement process, developing material, newsletter, softwares, all that. These are the bylaws which a network has to. This question can be asked as a straight 4 or 5 marks question. That's it. Entire ethics is over. Finally, some ethical standards board decisions were there. Okay, these decisions you read, again I told, right, many of these decisions are contradictory. They are not very clear. But I told you, these are all various judgments. These are not exactly 100% rules. These are just judgments given. Okay, that's it. Then in this, something I felt is ASM. It's okay. I think this is something that you can do on your own. Not a big deal. Not a big deal. Okay, just read this on your own. You will get it. That's it. Almost within 3 hours. This is I mean, totally 3 hours to be spent on professional ethics, and I think I gave you amazing clarity. Okay, and yeah, somebody's asking related services, assurance services. Yes, I'm doing every day. I'll be doing, and I'll be merging entire this video again. I will post it. That's it. Okay, continue watching, continue learning. That's it. All the very best. Okay, now we'll begin SA 450. So evaluation of misstatements identified in audit. Evaluation of misstatements identified in audit. Technically, this particular standard is something linked with many other standards. You see what they're talking about. First, they're first giving you meaning of what is a misstatement, which we already discussed in the very first chapter. Like when we are discussing audit reporting itself, we understood. Then whatever mistakes you identify in audit, right, accumulation you will do. What mistakes you will accumulate? Those mistakes which are not clearly trivial, nothing but about triviality level. If any mistakes were there, that you will accumulate. Then how do you consider identified mistakes? Here you will compare it with materiality levels, performance materiality level, all that. Then you need to communicate management. Whatever mistakes you identify, why you are communicating to the management the mistakes you identified, so that they will correct it. They corrected some of the mistakes, and some mistakes they have left uncorrected. Uncorrected misstatements, if at all there, what is its impact on the financial statements? What is the impact of uncorrected misstatements on financial? Generally management, no, we have seen at many at 2000 series or somewhere also we have seen, when uncorrected mistakes were there, management, one common reason why they tell, what they tell is that these are immaterial, sir, why should we correct it? Let it be like that. They're not material mistakes, immaterial mistakes. Then get a written representation that the uncorrected misstatements according to the management are immaterial, and you also see whether are they really immaterial as per your level of as per your materiality level. See whether that is immaterial, get a representation, and finally, document the mistakes identified. That's it. So simple the standard is. You see, what is a misstatement? When do we are bothered about a misstatement? What is its impact? As audit progresses, how to treat the misstatements and how to communicate them to the management, what to communicate, and if at all management considered our communication and corrected certain mistakes and not corrected certain misstatements, what is its impact on the audit? And finally, what is its documentation? Simple, very easy standard. Now look at, but there is a difference between, in this standard what they use the word is uncorrected misstatement. There is another misstatement called undetected misstatement, which we have already seen. In adverse, in disclaimer of opinion and qualified opinion, this point will come. Second part of the qualified opinion definition, you see, we give qualified opinion if auditor is unable to obtain sufficient appropriate evidence and concluded that the possibility of undetected misstatements on the financial statements, if any, could be material but not pervasive. If it is unpervasive also, we give disclaimer. So no, possible effect of undetected misstatement. Undetected means we don't know, we are only estimating a possibility. I did not get evidence. If at all on an item where I did not get evidence, what if that item went wrong completely? Okay, I don't know whether it's right or wrong, but I assume in an unexpected scenario, in a worse scenario, what if it is wrong? What is its effect on the financials if it is wrong? Undetected misstatements, possible effect on financials. That's how we use. So undetected misstatement means what? Most of the times generally projected misstatements. Undetected misstatement is something called projected misstatements. Misstatement word in our CA final, or in entire standards, there are almost 10 to 11 ways the word misstatement is used. Misstatement, basic definition: risk of MMS, undetected misstatement, uncorrected misstatement, projected misstatement, tolerable misstatement, expected misstatement. Okay, then we have 2 or 3 more types also: tolerable misstatement, projected misstatement, expected misstatement, undetected misstatement, uncorrected misstatement, risk of material misstatement. We have some 2 or 3 more also. At some 2 3 almost 10 items will come close. Okay, so various, and all of this has different meanings. Risk of MMS is different, tolerable MMS is different, expected MMS. For example, in projected misstatement, tolerable misstatement, expected misstatement, these 3 words are generally used in SA 530. In SA 530 we use these 3. And uncorrected misstatement, corrected misstatement, uncorrected misstatement, undetected misstatement. Undetected misstatement also we use in SA anomalous misstatement, non-anomalous misstatement too. Anomalous misstatement, non-anomalous. Total 10 types. Statement word is used almost in 10 different contexts. Anomalous, non-anomalous, projected, expected, tolerable. These 5 misstatement terms were used in sampling entire 530 standard. The various, suppose if I find a mistake, but that is something exceptional in nature, that is called as anomaly, anomalous misstatement. Non-anomalous misstatement means, suppose if I find a mistake which is also possible in remaining population also. I found a mistake in sample, and I strongly believe that pattern would have been repeated in population also. That is non-anomalous, projected misstatement. Generally, how we project, we project based on non-anomaly. We project based on non-anomaly. Nothing but, if at all I find a mistake in a sample, I just first I should assess whether that mistake is something, repetitive or non-repetitive. I'll evaluate. If a mistake is repetitive in nature, repetitive means what? It is not only present in sample, That mistake might also be presented in population. Suppose if processes went wrong in a particular transaction, the process itself, the control itself designed wrongly. In such a case, in every transaction that mistake will appear. So here I apply projection. Projection I apply only in case of repetitive. But in reality, the mistakes that we find in audit are mostly anomaly in nature. Most of the mistakes that we find in audit are anomaly. They're not repetitive in nature. They don't have any pattern. More than pattern, I can say they are not representative of population. They are not representative of population. Like I found a mistake in sample, and the mistake is only in the sample. It will not be there it will not be existing in the population. So they're not repetitive in nature, most of the mistakes. That's why in reality we never do projections. Have you done any projection in audits, any of you? Projection of misstatements? No. You just see if at all any mistakes is there reaching performance materiality level, then you're worried. That's it. You don't do any specific projection and all. Performance materiality is a limit for detected misstatements. Performance materiality is a limit for detected misstatements. And between performance materiality, overall materiality, some margin will be there. That is a margin for undetected misstatement. I don't know how many of you know this performance materiality definition. Performance materiality is a level set by the auditor lower than overall materiality level for financial statements that reduces the possibility of undetected, uncorrected exceeding overall materiality. That's the definition. If applicable, performance materiality also includes specific levels of materiality. Overall materiality can be general, overall materiality can be specific, performance materiality can be general, performance materiality can also be specific. Specific means what? For a particular class of transaction, for a particular class of balances, for a particular event, specific levels. General level means what? Irrespective of all that, generally for financial statements, what is material? So that is overall materiality. Whenever we discuss materiality, we mainly talk about overall materiality. 0.5% of turnover, for example, is an overall materiality level. For example, a company has, let us assume 1 lakh crore is there. Okay, 1% means 1000 crore, 0.5% means 500 crore. So overall materiality means 500 crore for a company whose turnover is 1 lakh crore. In that company, if at all total misstatements according to me is more than 500, then I assume that the financial statements are materially misstated. But if that misstatements are exceeding 3000 crore, 6 times of performance material, 6 times of overall materiality, or 5 times of overall materiality, some auditors are even more aggressive, 10x. They may also use what? 10x. Some auditors might feel 5% of turnover is a substantial item. Remember, it's not part of capital. Turnover is very big always. 5% of turnover for some companies, turnover may not be benchmark. For some companies, capital could be the benchmark, which is more representative of the company size. For banks and all, deposits and advances is a benchmark, right benchmark. So we have this discussion in 320, entire benchmark discussion, which benchmark should be chosen, and how should we derive materiality based on the benchmark. Should we select current year benchmark or last year benchmark? There are so many. Suppose if the company business is very volatile, this was asked in CA final once, 4 marks 5 marks question in materiality, where we don't have the content itself in the book. Content itself is not there in the book, but they asked a practical question. The company do not have a stable profit. Every year they don't have a stable profit, stable turnover, the operations are volatile. And can profit be chosen as a benchmark? No. Some other benchmark should be chosen which is non-volatile, which is more representative for the company. If at all a company newly started, insurance company, materiality level is not decided based on turnover, because newly started insurance company may not have business. Capital with the capital. Capital is the right benchmark. NBFCs, newly started, much of transactions not there. Capital is the benchmark. Already operations are very aggressive, then advances given, it could be the benchmark. Which is more representative for the company, which is the more representative attribute in the financial statements, which will be better representing this company. For example, State Bank of India, capital is very nothing, capital is in comparison to deposits, advances which they accept. So materiality level we decide based on advances, deposits. So in every company, what is the right benchmark is auditor's professional judgment. So we have a discussion on benchmark selection and materiality. I'm actually covering materiality standard technically. We don't have in our syllabus CA final. But if you understand that materiality standard, this will become easy, and remaining 530 standard also discussion becomes easy. Now, we set right now I told, right, like you know, what is that I told, you know, what is the materiality, overall materiality? Right now we understood that it is 500 crore. This is nothing but 0.5% turnover, 0.5% of turnover. Okay, now we will set something called performance materiality, which is 300 crore. This number is auditor's judgment. He may keep higher performance materiality or he may lower it. The gap here, the gap, if the gap is very low, the auditor's risk assessment is very low. If auditor is assessing risk, then the gap between overall materiality and performance materiality will be very low. If at all I'm expecting very low risk, am I expecting more mistakes? Suppose in a particular enterprise, overall my risk assessment is low. Does it mean I am thinking like there are many possible mistakes? Or no, less mistakes are less mistakes, which means undetected misstatements will be higher, lower. Undetected misstatements low. When I think the risk of MMS is low, undetected misstatements is low, the gap between overall materiality and performance materiality reduces. Means performance materiality will be very closer, 400, 450 crore, because according to auditor, risk itself is not. I will tell you what is performance materiality again. Suppose if I feel the risk is very high, then I will keep performance level at a very low level, 100 crore only I will keep. Overall materiality 500. I will keep performance level just at 100. Performance means what? You know, in performing the audit, if I find any mistakes. While performing the audit, if I find any mistake, and we perform audit on samples. So no, we perform audit on samples. If at all I find any mistakes, which is more than 100 crore, find out, detected, definitely the undetected misstatements would be more than overall level. Definitely what conclusion I'll take? The undetected misstatements is overall, beyond overall level. Immediately I'll go to the management and tell, see, we found mistakes which is beyond our performance materiality. We presume that the financial statements are more than overall materiality. Then what management reply, you know? No, sir, we don't agree. You prove mistakes which is more than. Real mistakes you find out, tell me. You find out real mistake. You can't say just based on some mistakes, some are repetitive. You cannot apply your own analysis and then say me overall materiality class. Show me how much mistakes you found. 150 crore worth of mistakes only you found. No, performance materiality is 100. And as per your standard, you are saying that if a detected misstatement is more than performance materiality, there is a high possibility that total misstatement will be more than overall materiality. That is what you are saying. Detection itself is this much. Undetected could be how much? It is definitely more than overall level. That is what you are interpreting. Yes or no? You're able to comprehend that? Comprehend this? So I went and told management reply, no, we don't agree with your statement. You want to increase your sample size. You only selected 100. Based on that, you are coming into this conclusion. It is not correct. You take another 100 samples and do that. When the mistakes that we detected, if at all they are approaching performance level or if they are crossing performance level, generally in reality what we do, you know, we increase our audit procedures. We extend our audit procedures. Why? You know, based on the detection what we found, we can't conclude on the financial statement. So we increase the sample size. We will see whether does the increase of new samples be selected, right? Whether that is also reflecting same pattern. Suppose we selected extra another 100 samples. Now I did not find any mistake. Then management's point is correct. This is how we do audits. Okay. So here now you find a mistake, right? For example, you need to analyze the mistake. Is this mistake is anomaly, non-anomaly? If it is non-anomaly, you will project it. You will project it. Projection means what? For example, out of 100 samples, I found 2 mistakes. I will quantify it more importantly. Out of 100%, out of 100, but the value of samples I selected is almost, let us assume 10,000 crore. The value of turnover I verified through sample is 10,000 crore. All big invoices. Within that, I found a mistake of some 10 crore. How much would be the mistake in the 1 lakh crore? That's called projection. This projection is called as non-anomalous projection. We rarely do this. Because in reality, the mistakes that we find, 99% of the cases, the mistakes that we find are only transaction specific mistakes. They are not process specific mistakes. Maybe if it is a process specific mistake, they don't affect the transaction. Some mistakes that we find which are process mistakes, process is wrong, process went wrong, but there also that is only specific to that transaction. That is not representative of population. So that's the difference between overall level, performance level. Now let us understand triviality level, because in this entire standard, the major point is, the beginning point is what? Triviality level materiality. Triviality level materiality. Overall level, performance level, triviality level. Now, I told my team, you know what I told my team, materiality, our materiality level is 500 crore. Our performance materiality level is 300 crore, let us assume. That's why you might find statement, audit risk and materiality or inverse relation. Which materiality they are talking? Mainly about performance materiality there. Mainly they're talking about performance. Have you heard of this? If risk increases, materiality decreases. Means it decreases 200 crore, gap increases. Nothing but what? Gap increases. Able to understand? Overall materiality is always same. The relationship between audit risk and materiality is which materiality? Performance materiality. If auditor is predicting risk low, materiality will be higher. Which materiality will be higher? Performance materiality will be higher. Fantastic explanation. Till date I never explained this level. Maybe I don't know. Sometimes brain is super active. Okay. Yeah. So this is first of all stressful thinking. We're thinking very stressful. It's okay. Today it's going very smooth. Same video I'll put in intro. Fine. So yeah. No, I need to discuss for them, and still 320 is there for them. Okay, there's almost 1 month gap for them. After your class is over, I need to discuss for them. 3 chapters pending. EVO fast track for CA into audit. So there I'll put the same video. So you understood that audit risk versus materiality inverse means which materiality that mainly talking about? Performance. Now I told our team in the initial discussion that this is the materiality level. One of my article, no, he's doing purchase vouching, all that. He found one mistake worth of 150 crore and he ignored it. When I asked why you ignored, sir, you only said no 500 crore materiality level, so I ignored it. No, you should not ignore every mistake that you identify, gather. Okay, then he decided. He went again, started vouching. Now he is finding mistakes worth of 2000 rupees, 500 rupees, 25 rupees. That also is gathering. Hey, again he's showing me all the mistakes. No. Again, small mistakes. These are very even, very small. No. They don't accumulate. Sir, I'm unable to understand, sir. Which one to gather, which one not to gather. If I ignore, you're saying it is important. Again, if I consider, you're saying it is unimportant. Which one I should? So I need to define one more level called triviality. Trivial means what? It is less than materiality. It is less than materiality, but something to be considered. So I will keep a triviality level of, let us assume 500 crore, 300 crore means triviality level will be 50 lakhs, for example. Triviality level is what? 50 lakh. If you find any deviation in a voucher by certain amount, or if you find any mistake in any particular transaction that you are verifying, if it is below 50 lakhs, ignore it. If it is below 50 lakhs, ignore it. If it is beyond 50 lakhs, accumulate. Just accumulate and keep. Accumulate means what? Note down. Take a note of it. Make into your observations. Accumulation is done. Now, total of mistakes that you find which are beyond trivial, I will total it. That's why you see materiality will be considered sometimes in aggregate. Individual or aggregate. Yes or no? At many places you see, even in our qualified opinion everywhere also, where the financial statements are not free from material misstatements, individually or in aggregate. Aggregate means what? All mistakes which are beyond triviality level, we will aggregate and we'll see. If it is more than performance level, we assume that overall materiality is also crossed. In sample itself, mistakes I found is more than performance level. Imagine total mistakes in the population could be more than overall level. When I go and tell this to the management, they will again tell me back, no, increase your sample size. Upon increasing the sample size, again you got the same conclusion. No sir, pakka overall material mistake. Again I increased 100 extra samples. Again same result I got. In fact, now mistake is much more bigger. Management is not agreeing. No. Go and verify 100 more. Now you ultimately found out that the total mistakes that you found is crossing overall materiality. You will conclude that there is unexpectedly high risk in this. This is also one situation where we call exceptional circumstance, where auditor has encountered an exceptional circumstance where he is unable to decide whether financial statements are right or wrong. There you are unable to get confidence. You decided to give disclaimer. First you withdraw. Withdrawal is possible. If withdrawal is not possible, you just reconsider. If withdrawal is not possible, you give a disclaimer of opinion. If at all you are finding mistakes, every time you are increasing sample, you are finding mistake. Every time you are increasing sample, you are finding mistakes. You concluded that the financial statements are materially misstated. You decided to give one adverse opinion because you have evidence here. Yes or no? But management will not agree. Sir, based on mistakes, you can't give. Show me pervasive. Prove me that it is pervasive. Prove me that mistakes are more than 5,000 crore. Then I'll agree. You only found 600 crore worth of mistake, not 5,000, 6,000 crore worth of mistake. Now here, see, pervasive is like a next level materiality, nothing but. Pervasive is nothing but what? Next level materiality. Pervasive is also material only, technically speaking. That is beyond materiality, substantial. So again, here also I need to tell the management. Again, I need to increase audit sample, and I need to find out whether total mistakes are crossing pervasive. But which is difficult for me. How many I'll verify? Already 300 vouchers I verified. Time is expired. Time is already going on. Like, we need to give report. I will decide to give here adverse opinion. If management is not letting me, I will withdraw. Able to understand? I will withdraw. Or I will safe side. Another option is what? I'll disclaim. I'll not give opinion at all. Another option is what? I'll not give opinion. Sometimes auditor will deny opinion, will disclaim opinion in a scenario where adverse is also required. Optionally. In a scenario where adverse is required and management is not accepting, then I'll do one thing. I'll not give opinion at all. And I'll tell reasons below. Denial of opinion is better than adverse opinion, obviously. Company can substantiate to the shareholders much more better. Auditor denied opinion because of some audit issues, procedures issues. He denied opinion again. If adverse is so severe, technically speaking. Denial of opinion is not severe. Technically, denial of opinion is not severe. He has not given opinion itself. He didn't. What can I do? He gave his reasons. I'll give my reasons. Management, they may argue with the shareholders. If they give adverse opinion, then that is something very more dangerous. Able to understand? That's it. So, triviality level understood. Everybody understood triviality level? Yes. When you're doing audits, in all the purchases working, sales workings, all that in trade receivable everywhere, the first sheet which in almost in every audit is materiality sheet only. First sheet is materiality sheet only. Okay, some automatically it will come, materiality numbers and all, you don't have to compute. Automatically formulas will be there. Mostly 0.5% of turnover, mostly percent of turnover. That is accepted benchmark. Some auditors their very risk appetite is very low, so they will think 0.3%. But all risk acceptance of the auditor is at high level. They may even go for 1% of the materiality. Why 0.5% is of turnover is material? Schedule 3 division 1 or division 2, that gives 0.5% of turnover is also material. Yes or no? Something, any income or expenditure which is more than 0.5% or 1%, some number is there. Based on that, we consider that is material according to law. Based on that, we consider that is material according to law. Clear, everybody? All of you? Now let's begin 450 standard. So, evaluation of misstatements identified during the audit. So, misstatement means what? It's a difference between, you just see the items, reported financial statement item and reported financial statement item, and you see, and also I have highlighted in a different color but not visible clearly. Okay, and required for the item to be in accordance with financial reporting framework. What is reported and what is required as per applicable framework. If both are not matching, that's a misstatement. And misstatement can be in the form of amount, classification, presentation, disclosure. This we already know. Uncorrected misstatement. Uncorrected means what? These are the misstatements which auditor has accumulated during the audit that have not been, which are not been corrected. These are not corrected by the auditor yet. Then accumulation means what? What do you mean by accumulation? Straight 4 or 5 marks question will ask, because in the standard, accumulation topic is very important. What auditor has to accumulate? The auditor shall accumulate misstatements identified during the vouching process, during substantive procedures. Whatever, when you are performing substantive procedure, you tell your team accumulate mistakes. Which mistakes? Those mistakes other than that are clearly trivial, except those that are clearly trivial. Are they trivial? Ignore it. Beyond trivial, consider it. Trivial means what? Negligible. Trivial means exactly what? Negligible. Are you getting it? So, see, immaterial is a different context. Negligible is a different context. Beyond negligible, if it is there, if the mistake is beyond a negligible amount, that we will consider. If it is a negligible amount and below negligible amount, we will ignore it. Triviality level, if you want to clearly give some meaning that something we can correlate with, means negligible. That is clearly negligible, ignore it. Other than clearly negligible means that is something beyond negligible amount, consider it. Accumulate it. Accumulate. Now, clearly trivial is not another expression for not material. Remember, immaterial means what? Mistake is less than 300 crore. It is immaterial. But you cannot say that it is trivial. So don't confuse between, very simple, triviality. Triviality level means what? For example, in our example, I told you, what is materiality level? 500 crore. But this we don't consider when we are performing audit. For performing audit, we only consider 300 crore. While performing audit, 300 is only our materiality level. Technically speaking, overall level is 500 for financial statements. This is for decision making. But for performance level, 300 crore. Triviality level is what? 50 lakh. Now, just because, I found a mistake worth of 1 crore. Okay, it is immaterial. Just because it is immaterial, can I say it is linked? I mean, can I say it is not trivial? No. Triviality level is not another name for immaterial. Immaterial is different. Triviality is different. A mistake can be less than material level. It may be less than a significant. It's not a significant amount, but it may be a trivial. It may be more than negligible amount. Able to comprehend? So no. So look at, clearly trivial is not another expression of not material. Correct? Because materiality 300 crore, 200 crore mistake we found. It is immaterial. But we cannot say that it is, we cannot say that it is not clearly trivial also. So triviality level means what? Triviality level is not another expression for immaterial. So triviality level is different, materiality level is different. Both are different. Triviality level is altogether different. You don't compare it with materiality level. Are you clear? An amount which is less than material sometimes may be more than trivial, sometimes may be less than trivial. So is there any nexus between triviality and materiality? Generally speaking, no. There is no nexus. But triviality level is decided based on PM level. Based on performance level only we decide. How do we decide triviality level? Maybe I can say 5% of materiality level. How do we decide triviality level? 5% or 10% or 2% of materiality level. That's how triviality level is formed. Able to understand? Next, what is the number you follow? Triviality level, any idea? 3% of materiality level, PM level, performance. Yeah, that's it. So that's how they apply. 3% of performance materiality or 5% of performance materiality is what they keep it as triviality level. Yes, next. And remember, matters that are clearly trivial will be wholly different order of magnitude than materiality as per 320, and will be the matters are clearly inconsequential, whether taken individually or in agreement, and whether judged by any criteria of size or nature or circumstance. Any mistakes which are clearly trivial we ignore. Clearly negligible. Remember, clearly negligible is not another name for immaterial. I told you. An amount may be immaterial but beyond negligible, beyond trivial level. Yes or no? So just because it's an immaterial level, you cannot straight away tell them as they're trivial level. No. Many mistakes that we find may be beyond trivial level but less than performance materiality. So from materiality point of view it is immaterial, but from triviality point of view they're considerable. Able to understand? Considerable misstatements, not negligible misstatements. So matters that are clearly trivial will be wholly different. Okay, wholly different order of magnitude than material. They're completely different from materiality, and these are the matters that are clearly inconsequential, means they're not at all relevant to be considered. Okay, either individually or aggregate, whether judged by criteria, by size and nature or circumstance. Nature of mistakes, it may be fraud, maybe it's fraudulent reason. Obviously in every company frauds will be there. Which type of fraud? Suppose you are working in a supermarket, your employee is eating chocolate. Okay, that's so some bar is there, so a 5-star bar something, he's eating it. That's a theft of asset. Technically speaking, that also you need to identify. Exactly. Okay, so they're altogether different. So nature is fraud only. Generally in materiality discussion, no, materiality is not only by quantity but also by quality. One point is there. If at all a mistake is small amount, immaterial amount, but if it is intention is fraud, again auditor has to consider material. Triviality means what? We don't consider under what circumstance it happened. We don't consider what nature it was. We don't even consider the amount. The amount, nature, circumstance, all the three. If at all the amount is less than that by default, we directly consider that as triviality level. In every organization that petty theft sound is common. So petty theft and all we don't bother much. If at all the volume of petty theft is so high that is affecting the profit of the company, then only we consider that as again trivial, beyond triviality level. Understood? Next, when there is uncertainty about whether one or more items together are clearly trivial. Suppose you are getting a confusion. There are so many items, I'm worried. Is it negligible or together not negligible? If at all you are getting a doubt, consider that as beyond negligible. If at all, see, if it is negligible, you don't have to think much. If it is negligible or non-negligible, you are getting a debate. Consider that as beyond trivial, beyond triviality level. Then the matter is considered not to be clearly trivial. So a matter is considered to be clearly trivial means what? They're clearly negligible, you can ignore it. Not to be considered as clearly trivial means what? They're not negligible, you should consider it. So when a dilemma comes, when you find a particular mistake, either because of nature or circumstance or amount, either because of any of these three reasons, you want to consider that. You are unable to decide, should I accumulate it or not accumulate it? If you are in a dilemma to decide to, whether to accumulate it. Don't ignore it. Which I should not accumulate? Those which are clearly trivial or less than trivial, do not accumulate. If at all you are in a dilemma to decide whether they are negligible or not, trivial or not, consider this as beyond trivial. Consider that as immaterial. So indirectly speaking, triviality level, immaterial, it's very simple. Materiality to triviality level, we call them as immaterial items. Technically, even triviality below also, we can call them as immaterial, technically. But more better, right? Performance materiality between performance materiality and triviality level, we can call all these items as immaterial items. All immaterial misstatements which are beyond trivial shall be accumulated. Any item which is immaterial and which is not even trivial in nature shall be ignored. Clear? Next, categories of misstatements. So factual mistake. Factual misstatement means what? No doubt it's a mistake. Whether I see or somebody else see, every one of us will unanimously agree that it's a misstatement. Judgmental misstatement. For example, accounting estimate according to me chosen by the management is unreasonable. So here a misstatement is there in accounting estimate. According to me it is misstated. According to me that accounting estimate is not right. Some other auditor might convince that this is right. These mistakes are what nature? Judgmental. Differences arising from judgments of management concerning accounting estimate where the auditor considers unreasonable, or selection or application of accounting policies where that auditor considers inappropriate. Accounting estimate chosen by the management, according to the management, that is reasonable, but for my point of view it is unreasonable. Another auditor might also get a different conclusion. These mistakes are what? I'm not saying that's a factual mistake, I'm not saying it is a real mistake, I'm saying it is a possible mistake. Judgmental misstatements. Estimates related were judgmental. Misstatements is a judgmental category. There is another mistake called projected misstatement. The auditor based on misstatements identified in audit sample, projection, you see, projection to the entire population from where samples were drawn. Based on mistakes you identified in sample, you will have to project to the total population how much is the total mistake. When you're projecting like this, that's a projected misstatement. Projected misstatement is nothing but undetected misstatement. Projected misstatement is nothing but undetected. I'm projecting this much mistake would be there, but have I detected? Did I detect that amount actually? No. So undetected misstatement is technically a projection in nature. Technically a projection in nature. But how do we project it? It's okay, 5:30 standard discuss about it. If at all possible it is there I will tell you. So the auditor's best estimate of misstatements in population involves projection of misstatements identified in the sample to the population from where sample is drawn. That's it. Rest of the standard nothing. This introduction is only complex. Now, how do auditor consider identified misstatements as audit progresses? How do auditor consider identified misstatements as audit progresses? The auditor shall determine whether overall audit strategy and plan need any revision when you identify. For example, the nature of identified misstatements and circumstances of their occurrence indicate other potential misstatements. At all, based on the audit processes you perform, you found some mistakes. The nature of mistake is like a fraud. You felt very strongly that at some other areas also frauds might be possible. Then what you need to do? You decided to finish audit today and you found today fraud. You need to revise your strategy. You need to revise your audit plan, audit procedures. All these days you're only doing compliance based audit strategy. Now do more substantive testing. Change your strategy. Increase your sample size. Allocate more resources. Revise the plan. Are you getting it? Next, the aggregate misstatements accumulated approach materiality. Aggregated accumulated misstatements approach materiality means which materiality level? Performance materiality level. total mistakes that I aggregated, no, they're approaching materiality as per 320. So they may ask you this, they may ask you as an MCQ. How they'll ask you? Under following two circumstances, or they may ask you straight theory question also, 3 marks. Under which circumstances as per SA 450 the auditor has to revise audit strategy and audit plan? Under which circumstances you should revise the strategy and plan? If based on nature of mistakes identified, they indicate that the circumstances under which the mistakes occurred, the nature of mistake that happened, it indicates that other potential misstatements might exist. For example, I am verifying one accounting estimate and I found significant management bias in that estimate. Significant bias is there. Means management is completely choosing an accounting estimate according to their own benefits, their own merits. Okay, they have some plus, so they choose, ignoring the reality. They did not consider reality. Accounting estimate should reflect your real business. It should not be based on your own interest. I found a bias, which means this bias might have been present even in other accounting estimates where and all were there. Correct? Which means in sample I decided to verify 3 estimates and 1 estimate I found a bias. So naturally I should also verify now all the estimates. I decided no, oh my god, so many were there, so let me verify many more other misstatements. There are many other significant estimates were there, let me verify them. So the auditor decided to verify them. Automatically you need to change your plan, you need to change your strategy. Then, or the mistakes that you aggregated, right, accumulated, right, the mistakes that you accumulated, right, they are reaching performance level. Oh my god, when they're reaching performance level, generally what you will conclude, that the total mistakes which I have not yet identified plus identified put together is exceeding overall level. You will conclude when the situation happens, you will conclude what? You will conclude that the total misstatements is beyond population, for which management will beyond overall materiality, for which management will not generally agree. Sir, we don't agree. Based on 100, you can't say this. You take another 100 and tell me. So if management is insisting me to select more samples, yes or no, automatically my audit strategy plan will revise. That's it. Able to understand? If total accumulated misstatements are approaching materiality, or the nature of mistake identified and the circumstance under which I identified the misstatements reflect me that some other misstatements might exist in some other area, in these 2 cases, getting it, my audit procedures will affect. Very simple. You identified mistakes, generally audit plan will affect. Your audit strategy and audit plan will affect if you find a misstatement really. Because if you do not find any misstatement as per plan, you will happily proceed. The moment you started finding mistakes, you will decide about, should I increase the sample size or not? If at all you decided to increase the sample size, automatically your audit plan, nature, timing, extent of audit procedures planned will affect. That's it. Clear? Now, in these cases, when you find mistakes, when you identify mistakes, generally you will also take management help. You will ask management, sir, in 100 itself I found these. I want your internal auditor's assistance. I want some 5 team members of your internal audit. We want to verify in-depth entire purchase. We don't want to take risk. Request the management. The auditor may request, in a scenario when he identified mistakes, he may request management to review once again transaction balances, disclosure, to understand the cause of the mistake. Sometimes we may not be able to decide, is it repetitive or non-repetitive, we don't know. So we'll ask them. We are in a dilemma whether the similar mistake is there in the remainder of the population. I'm in a dilemma. Management also, don't worry sir, we will have internal audit department, let's make sure accounts are also correct. And I felt management is with integrity only. They also don't know that these mistakes were happened. Based on that, internal auditors were there. They review all that, whether these mistakes are repetitive or not. They will once again review and perform procedures to identify actual mistakes and make adjustments to financial statements. So request management to review, request management to perform procedures. Management has to perform to identify what is the actual total mistake, and therefore make adjustments to financial statements accordingly. We'll ask management, please identify actual mistakes and please make adjustments to financials. If management has identified as per the instruction of the auditor and corrected the misstatements after auditor's request, you just perform additional procedure to ensure that once again there are no material misstatements. Remind, you once again take sample, redraw once again sample, apply random number tables again, once again draw the sample. Now you see, are you able to find a mistake? Then the auditor shall communicate. So this is regarding communication, by the way. So what are the considerations? What are the considerations? As audit progresses, you are identifying mistakes. First consideration, should I revise my plan? Second consideration, I should take help of management so that they will review once again all the transactions and let me know what is the actual mistake in the financial statements or population, and so that I can request them to correct it. If they corrected it, if they corrected the misstatements, they identified and corrected the misstatement, I will have to perform procedures to ensure that there is no misstatement. This they can ask you. This they can ask you as an MCQ. How they'll ask you, which of the following statement is true? Option 1. If management has identified misstatements and corrected misstatements after auditor's request, the auditor has no further duty to do. 2. The auditor has to perform additional procedures to ensure that there are no material misstatements. 3. The auditor has to verify the financial statements whether financials are free from MMS. Like this, 4 options I'll give you. Only those who are observing this entire context can only write that answer MCQ, can understand the MCQ first. Yes or no? Tell me, when I identify mistakes and I told management, please you also do further procedure and you also identify some mistakes. They identified and corrected also. Sir, whatever you did, whatever you told, we identified and rectified. Will you close the matter there? You will have to verify once again whether whatever management told correct or not. That's what additional procedure. Yes or no? Next. Then communication of misstatements identified. Technically speaking, this is something that must come at the before. Then consideration of misstatements should come later, technically. But it's okay. Communication. Here they are talking about communication related responsibility as per 260. Okay. And the auditor shall communicate all misstatements accumulated during the audit to the appropriate level of management. This enables management to evaluate or disagree if necessary and take corrective action. When you say some mistakes are identified by you, according to you it's a misstatement. Management will have their own explanation. They may disagree with you. For example, especially with respect to accounting estimates, these are judgmental mistakes, right? Most of the times management will disagree with you. Judgmental matters, they'll disagree with you. And the auditor shall request the management to correct it. Why correction? Correction helps maintain accurate records and reduces risk of MMS caused by cumulative uncorrected errors. Yes or no? Uncorrected errors and all will be corrected now. Therefore, misstatements reduces. Risk of MMS will reduce in financials. Suppose if management refuses correction, understand what is the reason. They'll give you some reason. Sir, this is immaterial, sir. Maybe for you it is material. For us it is immaterial. This already management, everybody knows. Okay, so this and all immaterial. Take that understanding in evaluating whether financials are free from material misstatement. Take that in evaluation of financial statements whether they are free. If you think according to you financials are materially misstated, then modify the opinion as per 7. Able to understand. So they may ask you, write about communication and correction of identified misstatement, a 4 or 5 marks question. Write about communication and correction of misstatements, a 4 or 5 marks. So communication and correction of misstatements means what? So the auditor shall communicate misstatements accumulated during the audit to appropriate level of management, and so that management can take a corrective action. Suppose if management corrected, this ensures that financials are free from MMS. If management refuses to correction, ask why are they refusing. Take those reasons. Assess those reasons whether ultimately financials are free from MMS according to you or not. Once again assess. You decided it is not free from MMS. Communicate once with those charged with governance that you are going to modify the opinion. Give a draft audit report to them, and accordingly, finally give an audit report. That's it. Then like that's what management did not correct, right? I requested them to correct and they did not correct, right? Now you need to evaluate, right? Here that's what they're saying, right? Take that understanding in evaluating whether financials are free from MMS. You need to evaluate impact of uncorrected misstatements on financials. You need to evaluate it. How do you evaluate? Evaluating effect of uncorrected misstatements. Re-evaluate materiality levels once again. Okay, now you are in decision making. So don't be in a hurry. You already decided materiality level. See whether that materiality level apt in this company. Check out once again. First confirm whether materiality is still appropriate based on the actual results. Because very simple. You might have seen one point in 320, revision of materiality. If auditor estimates risk higher than the original risk, the auditor reduces the materiality. That is what here they are saying. Suppose if you find mistakes, Based on these mistakes, you understood that, oh my god, there is high possibility is there, high risk is there. Let me not keep my performance materiality at 300 crore. Let me revise it to 200 crore or 100 crore. Okay. And materiality of uncorrected misstatements. Materiality of uncorrected misstatements identify. The uncorrected misstatements are material considering size of the mistake, not only the size, sometimes nature of the mistake and circumstances of their occurrence. Circumstances in which they occurred. You see, in entire material, I highlighted those keywords in such a way. You just highlight the colored words, you'll get the meaning. Most of the entire, that itself is a fast track material. Again, you can use it as a fast track material. 95% accuracy I maintain there. This particular whatever highlighting. Only read the highlighted word, you'll get the meaning. So what auditor has to consider? Determine whether uncorrected misstatements are material considering size and nature of the misstatement and circumstances of their occurrence. For example, circumstance of occurrence means what? When staff is changing, rotation of duty is there, their mistake happened. So that is not something frequent everywhere. You cannot say, very simple, sir, manager is changing, sir, that time he made some fraud. Can I say one fraud is there in the sample which I selected? Can I say same, if one fraud is there in 100 samples which I verified, and can I say in the 10,000 population 100 frauds will be there? I can't. Circumstance, why? When it is happened, manager when changing duty it happened. So that's a non-repetitive mistake. Are you getting the point? Circumstance. Nature is fraud, I agree. Circumstance, when it happened, when there is a rotation of duty. Branch manager of a bank, when he's changing the duty, he signed so many loan applications and sanction got commission. Or no, when he's changing the branch, because anyhow he's no more associated with the branch or he's retiring now. Who knows? Able to understand. So circumstances. So that you need to consider when you are evaluating misstatements, which are uncorrected. Look at the size, not only the size of the mistake. Look at the nature of mistake, fraud, intentional, unintentional, which circumstance it happened. Okay, in relation to a specific transaction account balance disclosed. That's a general point. So, auditor has to evaluate size and nature of the misstatement in relation to specific, a transaction, all that, and circumstance in which it occurred. The effect of prior period uncorrected misstatements on the financial statements as a whole. You might have found out some last year prior period related misstatements that you discovered now, right? What is its effect? Current year misstatements impact how much, plus prior period misstatements impact how much, you need to evaluate. This is called evaluation of uncorrected misstatements. Finally, what is the impact of uncorrected misstatements and their impact on the audit report? Communicate it to top management. What is the impact of uncorrected misstatements and what is their impact on the auditor's report? Communicate. Request correction of uncorrected misstatements. Tell them to correct once again. Sir, I told management, sir, they're not correcting. At least you tell them. Audit committee. What is the effect of prior period misstatements on the current year financial statements? So what is the effect of prior period? If you recollect, the auditor has to get a specific written representations regarding prior period items. Regarding prior period item, we should get a specific representation. At some place we saw this. At one discussion we saw. Where is it able to recollect? At one scenario we specifically saw prior period items related misstatements in 710, only 710 only. See, 710 I know that, but is it discussed in 710 or in some other standard? The auditor has to get a specific representation. Yeah, 710 only, I guess. Comparative information procedures. You see, in comparative information 710, right? Fifth provision. E point inside that last point, that is. Obtain specific written representation about prior period items. You see that? In SA 710 it is there. Are you getting it? So, discuss effect of prior period misstatements in current period. What is its effect? It will have obviously some effect. That's why we ask management to rectify them. And the rectified prior period items, get a representation specific to prior period items, that all prior period items are identified and adjusted and accounted accordingly. You clear? Of you. So, the auditor shall communicate with the top management. What you need to communicate about? Uncorrected misstatements that you identified individually or an aggregate, and what is their impact on audit report, and you will request them to correct, and you will also ask them what is the effect, and finally you get a written representation. Obtain a written representation that uncorrected misstatements are immaterial to financial. Suppose you also felt Uncorrected misstatements are immaterial only. They're small, minor mistakes. Okay, because we identify so many mistakes which are immaterial. They may be more than trivial nature. They may be more than trivial. We accumulated, but they are nowhere near to performance materiality. The total misstatements that we identified in audit, no, they were nowhere near to performance materiality itself. They're not at all near. So we concluded that aggregate of all the misstatements that we identified is immaterial in nature. We concluded that. Management also said immaterial. And when I asked them, sir, why even to keep this rectified? Sir, they're immaterial. Why to correct it? It's unnecessary, no? So in that case, management also believes that this is immaterial. Get a representation. And according to you, you decided immaterial. On what basis you document? Your performance, your materiality documentation is there. That itself is enough to prove this. Able to understand? Next. A summary of these items shall be included or attached to the representation. What are all misstatements that management feels immaterial? List of all the mistakes. Do that representation, give an annexure and get it signed. That annexure and representation both has to be signed by finance director, CFO, somebody, and then document it. Simple. Clear? Everyone? Next. Finally, documentation. This itself can be asked as a 5 marks question. Documentation. So what auditor has to document? The audit documentation must include amounts below which misstatements are clearly trivial. Nothing but, triviality level you should document. Obviously we will document. Overall level, performance level, triviality level. All the three we will document. In every vouching aspect it will be there. In the first sheet, purchases, first sheet, all the three will be there. Sales, first sheet, all the three will be there. In the working papers. Okay, next. Document all the mistakes accumulated during the audit and indicate whether they have been corrected. Prepare a summary of mistakes identified, corrected or uncorrected. Make a list. The auditor's conclusion, whether uncorrected misstatements are material and basis for that conclusion. You concluded some mistakes which are uncorrected. Whether are they material or immaterial? How did you conclude it? And basis for that conclusion. Nothing but document materiality levels. Document all the materiality levels. That's it. 450 is over. Are you clear? 450 is over. So what are they talking about? Write about accumulation of misstatements. Many students may miss to write this point and this point. They will generally miss these 2 points. Fine. The auditor, what he need to do, shall accumulate misstatements identified. This question was asked in CA Inter, by the way. They asked this in CA Inter, right? I think so. We'll see that once. If at all there, we will see how whether we can answer that question or not. Accumulation. No, it is not there. I think in MTP it might be there, probably then. Fine. So accumulation means what? The auditor shall accumulate misstatements except those that are clearly trivial. Those which are clearly trivial, don't accumulate. Clearly trivial, by the way, is not another expression of not material. They may give you clearly trivial is another expression of immaterial. Wrong. That statement is wrong. Immaterial may be more than trivial level. Okay, then you understood now why I discussed that entire 320 intro. Without understanding that, you can't comprehend the standard. I was actually worried to start the standard now, or after discussing 530 shall we discuss this, all that, but it's okay, we are able to manage it, no problem. Next, matters that are clearly trivial, no, they are wholly different from materiality. They're completely different from materiality, and these are the matters which are inconsequential. Inconsequential means what? Irrelevant altogether. And in aggregate, whether you judge them based on size, based on nature, based on circumstance, in whatever the parameter you judge it, they are immaterial. Sorry, they are clearly trivial. Able to understand? So immaterial is different. Clearly trivial is altogether different than materiality. Whether you judge them by size, circumstance, or nature, doesn't matter. And when there is an uncertainty, suppose you're in a dilemma, whether are they clearly trivial or not trivial, the standard straight away says consider this as a not clearly trivial. Means consider that as beyond triviality level, accumulate it. You're in a dilemma whether to accumulate it or not, accumulate it. You are confident, clearly trivial, don't accumulate it. Simple logic. Category is very simple. Consideration. when you identify mistakes, no, you need to consider. As audit progresses, you are identifying mistakes. What you need to consider, should I change my audit plan? Because all these days I'm an assumption that financials are free from MMS. Now I'm finding mistakes. How many will be there in the undetected items, unverified items? So see whether you need to revise the strategy and plan. And if aggregate misstatements are approaching materiality level, revise your plan. Nature of identified misstatements and circumstances indicate that some other mistakes might exist. Revise your plan. Request management to do a detailed review and request management to perform procedures to identify total misstatements and ask them to make adjustments. If management identified and made all the adjustments as requested by you, just perform additional procedures whether they made all the adjustment correctly or not, and ensure that the financials are free from MMS. And you should communicate on a timely basis. The auditor shall communicate all mistakes accumulated to appropriate level of management on timely basis. Significant finding in audit. This is nothing but. And even if you remember, in 705 we have one requirement. Suppose if an exceptional circumstance you encountered and where you felt that it is not possible for you to continue, you decided to withdraw as per 240 standard, for example. When you decided to withdraw, before withdrawal, you must give a list of mistakes identified by you to the manager. Remember that point? 705. You see 705. In 705, enable management imposed limitation will be there. In 705 last, management imposed limitation is there, you see. In one of the MCQ they asked, which of the following is the duty of the auditor upon withdrawal? Option A, auditor has no further duty. Option B, auditor has to communicate misstatements identified to the management till the date before withdrawal. Option C, if you never observe that, you will never select the right one. You see 705, it is there. What is the topic number? Diagram will be there. Diagram also given, no? 705 below. 705 at last, ma. 705 at last. Management imposed limitation. Last topic in 705. That's it. Diagram is not there. It's okay. It's there in C into book. G point, you see. Before withdrawal, communicate identified misstatements to management. It is there. You need to communicate whatever mistakes you identified to the management even when you are withdrawing. Until that you did some audit, right? Tell whatever mistakes you found to the management and then resign, no problem. Clear? That's a duty. So communication of misstatements identified will exist even in case when the auditor is withdrawing from the engagement. Next, the auditor shall request management to correct misstatements. Correction helps to maintain accurate records. If management is refusing, understand the reason. Take that understanding in evaluating misstatements on the financials. So what do you mean by evaluating misstatements effect on the financials? Which misstatements? Obviously uncorrected. Uncorrected means what? Identified. What is the impact of identified uncorrected misstatements on the financial statements? Once again, see your materiality level proper, or is there any requirement for you to revise, lower it or increase it? Generally, materiality level, when do we revise? When risk is changed, when risk assessment is changed. If risk assessment does not affect my risk assessment, initial risk assessment, now also risk assessment is same only. I don't think risk is increased, all that. So in that case, materiality level we will not touch it. If at all you expected risk is more. Generally, when do we expect risk is more? Frauds. When auditor is finding frauds, then we revise our risk assessment to higher the overall risk assessment, and we decrease the performance materiality to even more lower, where the possibility of giving modified opinion will be higher. Able to understand? Materiality. Determine whether uncorrected misstatements are material either individually or either individually or in agreement or in aggregate. How do you consider? Based on what you will consider materiality? Based on size, nature, circumstances. When you are considering materiality of current year misstatements, also consider prior period misstatements and their impact. So the effect of prior period uncorrected misstatements on relevant class of transactions, disclosures and financial statements as a whole. And auditor, please communicate. What auditor has to communicate? They may ask you specifically. Communication with those charged with governance. Specifically they may ask you, okay, write about communication with those charged with governance as per 450. Many students by mistake they will go and write communication answer. Communication to top management, only 4 things you should communicate. What? Uncorrected misstatements and their impact. Request correction for uncorrected misstatement. This is you. When you will request to top management to correct, when management refuses to correct. Are you getting it? So communication of misstatements identified is here we are communicating to management. Remember, whereas what you need to communicate to top management, you don't have to communicate each and every mistake to top management. When you will communicate to top management, when management fail to refuse, when management refuses to correct it, and discuss the effect of prior period statement on the financial statements. All these are literally speaking uncorrected misstatements which are not corrected by management. Now I am seeking help of top management. and get a written representation that whatever incorrect top management will, sir, they're immaterial, sir. That is the reason why our team would have told you this. So they're immaterial. Okay, give representation. Okay, get representation from management and TCWG wherever possible, or if both of them, okay, that uncorrected misstatements are immaterial, and summary of these mistakes shall also be attached. Finally, document what is the triviality level. What is the triviality level? Document. What are the mistakes that you accumulated? Document. What is your conclusion on the uncorrected misstatements? Are they material or immaterial, and what is the basis for the conclusion? Document. Over. 450 is over. Easy. That's it. Then 520 audit strategy chapter. Okay, 520 we will cover right now. Just we'll record it as a separate video. 450 is clear, confident.